8%. There was an interim dividend of 6 rupees per share. Additional news, and this actually is why you might see some negativity today. It's ARM and the company has received a tax amount of 336 crore rupees from the Mumbai tax body. But I just want to highlight this Jefferies note on 361 because they have a positive view if you look at it from a longer term. They've maintained a buy and hiked the target price to 1300 from 1190. They say in the March 26 quarter, profit ahead with better carry income. They see a normalization ahead. Net flows returned to normalized levels, but mark-to-market losses led to a 2% quarter-on-quarter fall in AUM. That's assets under management. Between FY26 and 29, they see a 15% CAGR in revenue and 18% CAGR in PAT. So depending on how you want to look at this stock, but for today, it's not looking very positive after its numbers. Nestle, you have to end with a sweetener. So that's why Nestle at the end of it. It was start of the show yesterday, but a whole slew of brokerages. I've just picked 2 or 3 which I found interesting. Jefferies has maintained a hold and hiked target price to 1,325. In fact, most brokerages, pretty much all of them have hiked their target prices. Some have upgraded as well, but most have hiked. They're saying it's a strong end to FY26, delivered a strong Q4 supported by double-digit volume growth. Ad spends rose by a sharp 50%, signaling a growth mindset. Despite this, EBITDA margins expanded to multi-quarter highs, even while gross margins contracted. Growth was broad-based across categories and channels. Management remained focused on driving penetration-led volume growth, investing behind brands and capacity and leveraging technology. So they've retained a hold because of stiff valuations. Investec has upgraded to a hold from a sell, hiked the target price. They're saying the sweet momentum continues. They await more compelling valuation and continued guidance of this growth momentum. So that is one point to make. And this is not a company which does a call. We'll, of course, look forward to our conversation with the management. Citi or Nestle has maintained a buy and hiked the target price. They say it's an all-round beat. Citi is one brokerage which is a little more tolerant of the valuations because they say they believe growth momentum is sustainable over the near to medium term, supported by brand strength and execution. Despite 20% stock rally over the past month, they expect earnings trajectory to support premium valuation. So at least Citi thinks there is more to come.
Yeah, and certainly, and the rest of the pack is going to be watching as well with bated breath because some taste of that sweetness was felt across the board. I'm going to start with a not so good set of numbers, and Silent DLM is a counter that has failed to deliver all through FY26, and this continues to be the case in the fourth quarter as well. Though there are signs that are pointing to things looking better in FY27. Let's take a look at why I'm saying this. The company has seen another quarter of deceleration on a year-on-year basis, but remember that the year-ago period is actually the highest of the base that you've seen at any point over the last 1 year on multiple factors. There has been a significant improvement that is visible on a sequential basis in revenue as well as margins. That was the highest recorded in FY26. The order book stands at 2,416 and execution is showing signs of some improvement. The Q4 earnings affected by a 68% degrowth in the defense segment because of a large order that was executed. Now, there was also a sharp reduction in material costs that aided margin, and their finance cost has dropped by 34%. However, the PAT has been bolstered by other income, which is on account of forex movement. So some parts of what you're seeing in the earnings snapshot has benefited from that forex movement. The revenue has seen a downtick of 14%. The EBITDA is down by close to 25%. The margin has contracted quite sharply, both actually not on a sequential basis, but on a year-on-year basis by as much as 170 basis points. So don't be surprised if this sees a little bit of a downtick, particularly in trade, because it saw an uptick of 3.5% in trade yesterday. Tata Elxsi is not so easy to call. I've given it a thumbs up because on the margins front, it's actually outperformed. But here too, there are certain benefits that they have seen. I'll take you through it. The revenue growth has been driven by media and communications, and you have significant margin expansion that has aided the bottom line. The operating revenue, though, only increased by 1% sequentially in constant currency terms. And you've seen an attrition that has gone up to 15.8%, which is the highest at any point over the last year, in fact more than a year. Because the year ago period stood at 13.3%. Take a look at the snapshot. You have an uptick of 4.2% on a sequential basis in revenue. You have EBIT that has risen as much as 11% and the margins are up 140 basis points. This is what stood out to me, the margin picture. But otherwise, it's not the strongest quarter in terms of revenue execution. BEML, this is a clear win. A major defense order coming through to the extent of 590 crore rupees is coming from the Ministry of Defense. The contract involves the supply of trawl assemblies. This is set to boost its near-term defense pipeline execution. So, clear positive for BEML.
Interesting. I have to admit I don't have very great news either on the results front. And starting off with, well, maybe HCLTech could be the accident of the day. Maybe transformers and rectifiers could be the accident of the day as well today, frankly, because multiple disappointments out here. So first one, FY26 missed guidance across key metrics. The execution was at rupees 2,500 crores. The guidance was 2,600 crores. EBITDA margin was at 15.3 versus guided 16 to 17% range. Book and inflows. The closing order book ended at 5,000 crores. The expectation was 8,000 crores because Q4 order inflows plunged 47% YOY, and the backlog is now at 2 times sales, which frankly limits visibility for Tata. So yes, bad news. The guidance too, at revenue guidance, is 3,250 crores, which is growth of actually 29.5. I've done a mistake there. It's not 27.5, 29.5%. But be that as it may, it's not a rah number. 30% is good. Nothing dramatic compared to what they've done in the past and being spoken about. EBITDA margins at 15 to 17%. Well, in line, but nothing blockbuster either. So I would suspect that because of the misses that Tata has done, it could well turn out to be a stock that corrects a bit today. Watch out for that one. Persistent, you could argue it actually did everything right, but there were no fireworks, and which is why, because of the valuations, it might actually come off a bit today. So what did they do? Revenue grew about 3.4% constant currency quarter on quarter, 16.2% YOY. EBIT margin about 16.3%, down about 40 basis points QOQ. The total contract value, or TCV, at about 600 million, up about 16% YOY. ACV at 445, which is also very good, 27% YOY. And the management reiterated the $2 billion run rate target by Q4 FY27. So in some sense, it ticked all the boxes. But it is that one stock that literally hasn't fallen, right? Multiples still about 37, 38 times. Think of it, Coforge after the corrective move, 21, 22, 23 times. The others are cheap as well. And IT necessarily, because of HCLTech, will have a dull day today. So you might well see persistent correcting too. And whether, I wonder if IT therefore drags the indices lower today as well. HCLTech, Tata Elxsi, persistent, and HCL being the howler. Let's wait and watch. Last but not the least, the accident of the day yesterday, if you will, on the large cap space, SBI Life. I just thought the Morgan Stanley note pointed out a few things which were worth pointing out. So just bringing it up for the viewers. They maintain an overweight with the target price of 2,375, by the way. They say investors are asking about the potential regulatory risk to SBI Life from the introduction of mandatory open architecture for banks. They are not trying to second guess the regulation, but they outline key points which suggest that the risk of adverse outcomes is limited. Why do they say so? They say in the recent draft norms, RBI has not mandated open architecture, part 1, requiring a choice by provider. And they have noted that at a press meet in February 2026, the RBI governor said instances of mis-selling are low, but emphasized the need to safeguard individual customer interests. And according to Morgan Stanley, SBI Life's mis-selling ratio is consistently amongst the lowest in the industry, and the parent subsidiary structure gives the bank better control over sales practices. You could argue that is true, but we know accidents can happen as well. Effectively, Morgan Stanley is saying that yes, there are concerns over this for life insurance firms, but they believe SBI Life, the adverse outcomes are probably limited. So they are constructive here.
So if you have so many accidents, it's a bit of a crash site, isn't it?
For the space at large, yes.
You've talked about 2 potential accidents and 1 accident from yesterday.
Acha, in my list you have said.
Yeah. You have Tata, you have HCLTech.
Yeah.
Today's accidents and SBI Life from yesterday.
And we have several negatives in our list.
Yeah, signed DLM too.
Signed DLM. So, I mean, it's also telling you that, especially in IT space, the clouds are definitely there.
You know, I'm actually wondering about Tata Elxsi as well. I nudged it towards the thumbs up because I wanted some positivity. But having said that, I don't know if the street is going to look at the revenue growth and say 1% in constant currency terms is not necessarily enough to give it a big...
I would argue, yes.
Yeah, okay. Since we're talking about HCLTech, IT will stay in focus as earnings continue to roll in ahead of more numbers coming in as well. Let's listen in to what the HCLTech management has said.
Have you seen any sort of cannibalization for legacy revenues yet? And how do you see the volume to sort of offset that issue?
Yeah, I think we have talked about it. We will see a deflation in some of the existing revenue streams. And based on our portfolio, AI deflation could be 2 to 3% a year. But we have launched a lot of new AI services, which is what we call as advanced AI, which has got 5 broad category of services. One is AI factory, physical AI, semiconductor design for inferencing, then AI-led marketing services, and IP and platform. So these 5 are what largely contributes to our advanced AI revenue. And as you can see, it's grown 6 or 7% sequentially. We think this is a strong revenue stream. It should grow 25-30% year on year. This will really become a big growth driver. And we have a disproportionate emphasis among the leadership to really drive the advanced AI revenue, while of course doing all the right things like AI transformation in our existing customers to transform our traditional revenues into more AI-led operating model.
Okay, Sandeep Agarwal, fund manager at Sovilo Investment Managers, is joining us now to talk about HCLTech. Let's talk about Persistent as well while we're at it. Sandeep, are we being harsh when we're saying HCLTech could be the accident of the morning in the way the stock will react and saying that the numbers were disappointing?
Good morning and thanks for having me on the show. So, Tamanna, if you recall in previous so many conversation, I have been saying that we are very positive on IT services, but not on ER&D. So ER&D is also called alternatively product engineering services. So while HCLTech has very low exposure to product, but they do have ER&D exposure. And if you see the fine prints of the number, that is where the problem is. So, I am more worried about companies which have 70, 80 or 100% of ER&D exposure. And since we run a PMS, I will not name them, but I think that massive risk is there in terms of revenue growth for all ER&D companies. What we like and we continue to like for next couple of years will be the IT services space, the traditional IT piece, which will definitely undergrow by 4-5% the ER&D. But the thing is that what the multiple ER&D companies are getting, they are like 4 to 5 times of the IT services, which is not fair. So, and secondly, remember that the day Russia-Ukraine things cool off, then these ER&D companies which have benefited immensely by gaining market share from the incumbents there, they will have a tough time for at least 10 to 12 quarters. So I am very negative on a whole ER&D space, and I will only become positive either they come to PEG ratio of 1.5 times or, after 12 quarters of Ukraine-Russia war cooling off. Having said so, for HCL, I think except for the ER&D, there is no big disappointment. Remember that what the street was talking about 2 months back, that the industry will decline by 5, 10, 20, 30 random numbers were coming in. And now if you listen to HCLTech management also, they are saying that we will see 2-3% deflation. And my view is that you should be a little more aggressive there. I count 3 to 4% deflation. So net growth in dollar terms will be 4-5% or 6% for the large companies and then rupee benefit. So we are in a 13-14% EPS CAGR for 2 years for the IT services firms in the large names. And I think that from that perspective, 1-2 day here and there, but broadly the traditional IT services businesses will do phenomenally well in my view.
All right. So, Sandeep, point taken, and you've described that well. I'm just asking, in the bigger companies, relatively speaking, you said that HCLTech has a sensitivity to this pocket where you think that there will be a high degree of underperformance. Is there anybody else that is vulnerable? And what is the extent of HCLTech's vulnerability? I'm asking because in FY27 as well, you would have to account for that, right?
No, so I think, what they have given in guidance, 1.5 to 4.5, broadly, you can take the upper end of the guidance. That is what I think, because see, what happens is that the exposure for HCLTech is maybe 3-4% higher than the other large caps, but it is not like, some of the R&D companies which are like 60, 70, 80% exposure. So to the best of my knowledge, it will be mid-teens to low than mid-teens, and that is a higher exposure than other large IT firms. But at the same time, it is much lower than the pure R&D companies. The thing is that the stock, both HCM and HCL, has massively outperformed in last few months the other large cap names, and that is the reason there will be some normalcy to return. But broadly, I am not so much worried about IT services businesses. As I said, 5-6% plus 7-8% delta from EPS for 2 years from currency, total 13-14% story, and you are at broadly that multiple. So I don't see much downside is in the fairly reasonably priced large cap IT names and also mid and small cap IT names. I am worried about insanely priced stocks which are running on high growth from ER&D, and that ER&D growth, I think, is partly due to that war, which once then and market share gain from an incumbent, that will definitely reverse. I don't know when, but it has to reverse at some point of time.
Okay, Sandeep, one more big one to go. Infosys. What are you expecting? And today newspapers are reporting about possible leadership change as well. If there is a bit of a negative reaction, do you think that it's a good time to maybe shore up some positions, or you'd stay away from some of these right now?
So I will not give any stock specific call, but let me tell you that I have again told earlier also, and again I'm reiterating, IT index as such is a very good investable idea at this level. You will make at least 13-14% for 2 years, which is a very good return from such a large index and liquid index. So I think the IT index itself is looking very, very good to me. And I think all the negatives, and I would say more than the negatives, are priced in. You go and refer to last 2 months notes of various analysts and journals. They were all talking about 20-30% revenue decline over a period of time. And I think that it will not be more than 3-4% negative impact, and there will be growth. So all the companies will be broadly close to what HCL is reporting, barring 1 or 2 which has their own set of problems.
Okay.
So I don't see such risk in this name.
Okay. So the negatives are priced in. All right. Sandeep, thanks so much for joining us this morning. Pleasure speaking with you.
Thank you.
All right, let's go straight to somebody who tracks this very closely, actually. He's joining us in studio. Of course, you know who that is. We got Parag Parekh, I was going to say. Parag Bhai. I'm so sorry. I'm used to saying this on my other show. But Parag Bhai, as well as Kush Bora, joining us in studio. Parag Bhai, you've seen the numbers, and you saw the commentary that we were talking about right now. HCLTech was described very ably, I think, by Puneet as horror. Do you think that that's apt, or do you think it's excessive?
No, I think the stock might fall significantly because the guidance expected was much higher.
Yeah.
It was around 3 to 6 expectation. The expectation rate has come at 1 to 4. So definitely there's a deflationary thing which is affecting IT services companies also, and of course, as Sandeep was saying, the ER&D companies. So luckily we have brought our exposure down during the recent outperformance when in the March, when Nifty fell 10% and IT was not falling. So luckily we have brought the weightage significantly down. We are at just 5% in our portfolios. But definitely it is disappointing to see if Infosys also gives such a muted guidance, then definitely we will not see significant outperformance from IT sector at least.
So those people that had tried to buy the dip in IT will obviously be bearing the brunt at this point. And even though Sandeep is talking about the fact that it is priced in to a large extent, more than priced in, that doesn't mean that the stocks won't react negatively right now.
Yeah, so negative reaction will be there for 1 week, 10 days. And for 1 week, 10 days, you can expect a 5 to 7% for a large cap. I would say large cap IT names. Some of the smaller ones might be Roger, even more. But I would say that then going ahead, let's see, because see, one tailwind is the rupee is weak. That provides the EPS growth, as Sandeep was also highlighting. But if your core business is slow, I think market will not re-rate the multiple upwards.
If for all said and done, what this quarter has proven that the AI fears are real. Because you've seen a deflationary impact everywhere.
And HCLTech has clarified it. Right?
Yeah.
There is an impact. Also.
Yeah. So it's no longer in the realm of speculation, ho sakta, nahi ho sakta. We know that there is a problem. Now, how much they can recover from here is what the question is. Kush, on index, again, I think we're going to see maybe a bit of profit booking today, you think?
That's a good sign.
Yeah.
That's a very good sign. In fact, when we say buy on dips, अब जब dip आता है तब buy करना चाहिए, right? So this is the dip that we might just get that opportunity to get in. See, for the past 4 days, 5 days, we've been seeing consolidation here with a positive bias, consolidation here with a positive bias. कल finally वो breakout आया, correct? We can argue क्यों आया. I have a theory, 2 reasons primarily. One, a technical factor, it was a weekly expiry, which sort of pushed, the call writers, a little towards the corner. And secondly, I think it was a delayed reaction to ICICI and HDFC Bank earnings. अगर आप ICICI और HDFC Bank के levels देखोगे, तो exactly वहीं पे आए हैं जहाँ पे हमने बात की थी कि यहाँ पे आपको profit book कर लेना चाहिए 1 day after the results, correct? So I think this was more of a delayed reaction. But this is a healthy one. What I'm more interested in is what do we do from now? Because the resistance levels are taken out. Now, if the team can quickly fire the Nifty chart, and I want to say, by the way, congratulations to your entire production team. The little things matter. I don't think your viewers can tell right now. लेकिन अगर आप देख रहे हो आपके charts, आज आपको 50 DMA, 20 DMA के वो lines दिख रहे हैं. 200. और normally मैं सिर्फ बोलते रहता था. आज आप देख पा रहे हो कि 50 DMA on the Nifty has been taken out. This is the level that I was talking about, around the 24,500 mark. So, by the way, kudos to your production team.
Next time we'll have you on the wall showing this, Kush.
Yeah.
Looking forward to that.
And I know for a fact that they are working on a few more interesting ideas. So that plus this on the I'm not going to reveal anything right now.
But speaking of levels, and since you're talking about moving averages, yesterday the point that we retreated from the Nifty 50 was the 200-day exponential moving average, wasn't it?
No, in fact, Alex, the 200-day moving average, the team's got it right there. Right? Comes fairly high. In fact, for me, the next target on Nifty is the 200-day moving average, which is actually 25, 145, 150, if I'm not mistaken. So first, padao will be 24,800. 25,000 thoda psychological hai, but the next immediate target will then be 25, 145, 150, which is the 200-day moving average. So that's the level that I'm aiming for. Now let's talk about the positives. Where we are. Nifty's RSI has broken above 60, at least from the modifications with which I track. Right now, it might, at some readings appear like slightly under 60, but for, the readings that I have set up, it's crossed 60. That's a positive sign. FII positioning that we've been talking about has again moved up to 23% on the long side for indices, which is also a positive. So I think this momentum could well continue. Supports have been shifting higher, and now from an immediate perspective, they are placed at about 24,400 and 24,200. So yes, you can hold your positional longs. This dip that the GIFT Nifty is suggesting, if we do get of about 100, 150 points, should be taken as an entry point. Now, the caution part, PCR for Nifty is 1.35 overheated, stochastics overheated, so thoda pullback banta hai, but I think this gap down will perhaps take care of that. So yes, buy on dip strategy continues. If we could just quickly have the Bank Nifty set up. Remember, Alex, we've spoken about how the Bank Nifty's outperformance on the way will be stronger, right, compared to the Nifty's move. We're seeing, a proof of that. Now, for Bank Nifty, the structure is actually even better. Very close to that 50-day moving average, 200-day moving average, still, some distance away. But once we take that out, the move towards 58,800 opens up on the Bank Nifty. So yes, both the indices, very well set up. Buy on dips is the texture. Keep your stop losses in place because of the geopolitical issues, nothing else. On the whole, I think the setup is nice. If you do get any kind of dip today, should be taken as an opportunity to go long.
Individual stocks that you like this morning?
Yeah, I'm going with all longs and one update. The long calls are Delivery, GNA Axle and Data Patterns. Right? Delivery, by the way, is almost there, from the levels just before the war started. So the recovery on this one has been quite magnificent. GNA Axle just there or slightly above. above. So, good texture on both of these. So, delivery for targets of 484, 495 with a stop loss around the 462 mark. GNA Axles, 458, 470 targets, 440 is your stop loss. And a defense touch to the entire, stock selection. Data patterns, 3600, 3700 are your targets. 3425 is where you keep that stop loss. And yesterday, we spoke of how some of our stocks are hitting that 10% mark on intraday. Sorry to say we fell short, but Deepak Nitrite still went out and hit that 7.5% uptick. So yeah, sorry to disappoint.
Okay. What about Zentech? Because we saw a lot of movement. It's not just data, but you saw quite a few defense stocks moving.
So, there is traction in defense, I'll not deny. There have been days when defense has been the top performing sectoral index.
Yeah.
My concern is that you are starting to see profits being taken off the table at higher levels. In fact, yesterday in my studies, in my screening, I saw a lot of small and mid-cap stocks which have a very tall wick, which is to suggest that day high hit किया, उसके बाद बहुत ही sharp profit booking आया है. तो momentum strong है, लेकिन profit booking ऊपर से आ रही है. I think that's the strategy that even you should adopt. As far as Zentech goes in particular, there is a good possibility that this momentum could continue, but I would book partial profits and hold the rest with about 1680 as my trailing stop loss.
Okay. We'll take a very short break. More ideas on the other side, top trading strategies and a lot more. Stay tuned.
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
All right, welcome back. Let's start with an NDTV Profit exclusive. The government is considering a revision in voting right cap in banking. This may lead to a positive impact on the IDBI divestment process as well. Rishabh Bhatnagar joining in with more details. Rishabh, what is being expected by the government panel?
Absolutely. So this is the high-level Vikasit Bharat banking panel that the government is yet to constitute. But what is expected to be among the top priority or the top agenda items for them is a review of this 26% voting rights cap that currently exists in banks. So the current gripe is, of course, that foreign investors can buy up to 74% equity in banks, but their voting rights remain capped at 26%. So there is a lot of non-alignment there, and that's what banks have a gripe with. This has been a long-standing demand for this to be reviewed, and what we are hearing is that this could finally be taken up by this particular high-level panel that the government is looking to appoint. This is something that foreign banks have also been seeking. This has been one of the hurdles in the entire road to the IDBI bank privatization as well. And what we're seeing is that this will require some sort of legislative amendment, and this could be picked up in the next parliament session as well, is what we're picking up. Now, this particular voting rights cap issue is also expected to be among the terms of reference of this panel, and which is expected over the next 3 months or so, along with the constitution of this panel. So that's what we're picking up. It's going to be a major one to track in the upcoming parliament session. And this panel essentially is aiming to sort of attract more and more strategic capital. It's aiming to get at least 2 Indian banks into the global top 20 banks. So this is going to be a big sort of development that we'll need to track as and when this panel is constituted and this amendment is brought forth.
Important story there, Rishabh. Thank you so much. And coming at a time when the banking sector is actually opening up like never before, that there is government push to make and create world-class Indian banks and attract foreign capital becomes very crucial. This is a space that you track very closely, Parag. By any commentary on this exclusive story that we have broken this morning? It's very positive for banks.
Yeah. So basically, for PSU banks, this particularly matters a lot. And of course, all other banks, because in RBL we saw such a big infusion. So I would say that everything is going good for banks, luckily. This is positive. We have seen results of ICICI, HDFC. I'm expecting Axis also to be good. Okay. So basically, I feel that banking is, and plus on the other hand, you have a IT which has complete underperformance. So that way also the sector rotation money can shift to banking.
Wow. Okay. And but more importantly, and so one is that you are fundamentally happy with this, but does this in some fashion to your mind alter the landscape for individual names, Parag?
Yeah. So basically, if this is done with the intention to attract more, foreign investors into a large bank like IDBI, it's a good thing, right? It's a good thing. And if I remember correctly, there is a separate IDBI Act. And so IDBI we can do it very quickly, but if we can do it for other PSU banks also, definitely foreign investors will be more than inclined to buy PSU banks also. Other PSU banks, like we've seen the results of Bank of Maharashtra and how they are performing, the asset quality is fantastic. So it's a great time for banks to, for government to encourage foreign investors to buy into Indian financials and make it even more stronger.
Yeah, I mean, the first port of call for most FIs as well, but in FDI route as well, we've seen that the interest in the banking space is actually very, very high. Kushbora IDBI is also a very highly traded stock. I would love to know if it is out of favor completely, or do you believe there could be some bottoming out or something?
Now that it's live, I'm going to use it as often as I can. If the team can fire the IDBI stock and then the moving averages for that, look at the distance, look at the gap that there is. When have you last heard me give a call on IDBI? My point is that itna nahi hai favor mein wo. You're absolutely right. I would prefer something like an SBI, ICICI for momentum. But RBL Bank bhi mention hua tha, it's got good momentum. There was a brilliant rally building up before the war breakout, and it's now playing catch up to that as well. So if you look at the setup for RBL also, very encouraging. I would focus on some of these names, RBI, Maharashtra Bank, Union Bank, by the way. So some of these names make the cut for me. IDBI Bank, not so much.
Okay. Just want to look at a few other spaces, because we were talking about IT. Are there any buy calls on IT and in that entire space coming in, Kush? And what Sandeep actually said on HCLTech was interesting. He wasn't as negative as one would have thought. He said it's an ER&D problem, not so much an IT services problem. So if you take out that part of it, the company is not done too badly. I don't know if there are going to be any buyers for that theory in the market today. But HCLTech and anything in the IT pack that you're tracking?
बहुत छांट के निकालना पड़ रहा है, पता है, बहुत ही
Then you have to. You must.
No. What of course वो तो काम ही है. What I meant was कि it's not. Sorry.
It's difficult to find.
It's difficult to find, and it's not that runaway rally जो हमने even to some degree अब FMCG में देख रहे हैं, वो भी नहीं है, पता है. तो कहीं ना कहीं आपको profit booking मिलेगा, कहीं ना कहीं हो सकता है कि consolidation हो जाए sideways. So the two stocks that I am now tracking and liking in this space, one is TechM. Right now, if you see, it's very close to the 200-day moving average. पिछले 4 सेशन से उसको breakout करने का कोशिश कर रहा है. HCLTech's results might not help its cause today, but otherwise, if you see, it's got good traction, good momentum. So this is there's a possibility that it might break this 1500 threshold, the 200-day moving average, and move higher from there. And the second one is Emphasis. This is very clearly above the the short-term averages of the 20 and the 50-day moving average. Volumes also fairly healthy on the long side. So I think Emphasis and TechM are two stocks that I have on my radar. On the way up for Emphasis, my targets are 2500. Once that is taken out, about 2550, and on the downside, you can keep your stop losses near the 2330 mark.
Okay, all right. So that's the view on what you should consider looking at in the IT pack. Let's go across now to Somit Sarkar to find out what the buzz is in the dealing room. Is there any chatter about IT at all based on the numbers that have already been flashing on your screen, or is it another sector that is finding talk? Somit, what are you picking up?
Well, specifically in IT, HCLTech is expected to open on with a downtick, but persistence is one counter where there are a lot of short build-up. But if you look at the earnings, they're not as bad as what the street was anticipating. So there could be a bounce when it comes to persistent. But that it would be important to track. And given the fact that HCLTech has reported not a great set of numbers, TCS is one counter where there could be some buying action given the fact that TCS earnings growth is largely similar to what HCL is. Then why should HCL trade at a premium compared to what TCS is? So that is one theory that we should keep an eye out for. Apart from that, a few cash segment stocks like Borosil Renewable and Brainbreeze, there are buy flows on the large HNI desk. Dealers are indicating that prominent large HNIs have been accumulating both this cash stocks in trade. Apart from that, there is Endastars. The buzz on the street is that there is a potential positive news flow that could come in from the company's side related to a dividend or buyback. So keep an eye out for Endastars. And lastly, when it comes to NALCO, multiple dealing rooms are recommending positional sell calls to their clients, and dealers believe that all the positives related to the higher aluminium prices is largely priced in when it comes to NALCO. So there could be some more selling pressure that could come in NALCO, is what dealers are indicating.
Okay. All right. So a lot over there to unpack as far as, what's on Sumit's radar today. But he was making the point about TCS versus HCLTech. Any views over there after the whole, because TCS sort of settled in after the first kind of hit that it faced. So
that in a way that strengthens what Sandeep was saying, that ER&D is a larger portion in HCLTech. And so my eyes will be on Infosys result and commentary. If Infosys also gives a muted guidance for the next year compared to street expectation, then definitely the entire sector is in a very, very slow growth because of the deflationary trends of AI. If Infosys delivers and gives good guidance like TCS does not give guidance, but at least the numbers were good.
Yeah.
Then it is what Sandeep is saying, that ER&D is a big issue, and that's why HCL suffered mainly because of ER&D. And plus, remember, HCL also has a product business, software product business, which seasonally is bad in this quarter.
On the earnings front, we've spoken about quite a bit already, but let's round up the list. And we've got Sharad joining in to tell you about what other stocks stand out based on Q4 numbers. Sharad?
Well, yes, Alex. First of all, a little bit of positive coming in for 360 ONE Wealth as management, and that's where we are seeing that the profit is ahead, especially because of a better carry income which was projected in this quarter. Tata Elxsi, the margin has beat the street estimates, what was there. And Sunteck Realty, both the collections and pre-sales were healthy. Collections went up almost 39% on a year-on-year basis. We can see a good action in the stock. Powerika, there was a deferred tax reversal, and that is why the PAT numbers were strong. Signed DLM, the weak execution continues ailing the company, and quarter after quarter we are seeing that impact happening. It's negative. Another stock in the small cap space, Rajratan Global Wire, higher raw material costs have impacted the PAT numbers. And if you look at Tata Investments number also on a year-on-year basis, there has been a dip of almost 30%. Central Mine Planning and Design Institute, recently listed company, Coal India's arm, operational expenses actually impacted the overall numbers, especially the PAT and EBITDA. So that's also on the negative side. So these are the important stocks which should be on your radar today.
Okay, these are actually all the companies that have posted results. I don't know, what did you make of 361 WAM?
So 361 WAM in terms of the structure, not so bad. It's had a good run, 200 moving average के आसपास struggle कर रहा है. But otherwise the structure is nice. This, Nuvama, I think these are stocks that you can still buy on declines. Momentum trade mat lo, take positional bets because they've already run up quite a bit. But certainly buy on dips. The structure is not so bad.
This is a space that you are on the
I
fence.
always like this space. Wealth management space I have always like 361.
Did you see the numbers? Did you see the numbers? Some problems this quarter, but then the outlook seems positive.
I have not seen the numbers, frankly speaking, but I would say that if there is a weakness due to that, if the weakness due to the numbers, and if that weakness is not structural, then it's a good.
They also had some acquisitions this quarter, so that could have also come in place.
BNK broking they acquired, right?
Yeah, and I think ET Money as well. They want to get that in place as well. So that could have had some impact.
Well, the ET Money acquisition was a while back, no?
Yeah.
I think it's settling now.
It's still settling on their balance sheet. So that's one to look at as well. But we haven't talked about the star of the show yesterday and whether it will continue to be or not. Nestle. Was that?
Outstanding numbers.
Yeah, huge surprise.
Outstanding numbers.
No one
Outstanding.
saw that kind of a beat on the top line.
Yeah, absolutely. It was superb numbers. And I am a FMCG lover, so I would have loved to buy. If Nestle was in my portfolio, I would be happy. But unfortunately,
too costly, right?
We can be happy for the people who hold Nestle, but I'll buy it.
Correct. No. For them, it's a good hold because it is expensive stock, but it is a day-to-day consumption item where the company is doing phenomenally well.
See, it's also positioned a little more premium than an HUL in terms of their breakup of goods.
So I think a great job done by the team, superb execution, volume growth.
Second quarter, I think second quarter under the new CEO, Manish Tiwari.
Yeah. EBITDA, so PAT growth is like 30%. EBITDA growth is like 15%.
Can you extrapolate that, Parag bhai? I think everyone is wondering.
That is why we will not buy at this price, because at 77p trailing.
I'm saying, can you extrapolate Nestle's outperformance to the rest of the space?
No. More you can say that food companies who are not affected by this LPG shortage or who have shifted to electric induction at the right time, they might see good results. For example, Britannia's of the world. But I am not saying that it will be so blowout numbers like Nestle.
Just before we talk about another accident of the day, Tyrell, what Tamanna said prompted me to think about it. In a utopian world, and not for the three of us, but for people who are investors and have portfolios, to feel happy for others while not seeing your portfolio go up.
That's actually true.
Damn difficult.
Like we can sit and be happy.
No, okay. Because we're sitting in this position where people are spending their time to come in and listen to us.
So three of us, 100%.
And every day they come in to see Parag bhai as well. So we owe it to them to give them more than just what our own experiences.
We got lucky because we have a lot of FMCG in the portfolio.
Yeah.
HUL is there.
I think that's why that question is relevant. Do you see,
no, frankly speaking,
any sort of indication of urban consumption revival, any sort of trends that you're seeing from what Nestle has posted?
I think food and urban. These are the two. That too, not food means not other categories, only this kind of confectionery, chocolates and... so I think I will give more credit to Nestle management and the entire team, the way they have executed this, rather than extrapolating it to other companies.
So a 4% increase, a 4% increase in HUL yesterday was not warranted then. Is that what you're saying?
HUL was already depressed. So it was, it wanted to go up and so it went up. It was already a depressed price.
And just thinking about food habits, right? And Nestle has a few modes, the baby products, Maggi, etc., all of that.
Kit Kats, Maggi's.
Not everybody has that, and I reckon, people like us are examples, right? We've shifted categories from pan-India listed players to regional super houses. Yeah. It's happening in chips and happening in other pockets as well. So, I don't know. Maybe for Nestle, maybe not for others. But by the way, accidents of the day, right?
Yeah, you were mentioning Tyrell.
I was mentioning Tyrell, and I wonder if either of you got a chance. Or
no, did you get a chance?
Okay, but just the numbers look terrible. And Kush, I would love for you to tell us on the charts, if it breaks down today, which is very likely will, what could happen there? Because viewers, the numbers were not great. So we know that the numbers and the guidance, etc., is not good. The question to Kush Bora is, can it correct further if it dips 3, 4, 5% in today's trade?
So the immediate support for this comes in at 315 anyway, and then beyond that about 295. So these are the two levels to watch for. If there is a breakdown from about 315 at open itself, any further pressure could actually take it to about 295, 300 odd levels also. So I'll be watching for these two levels on the downside.
Tyrell is couple of reasons why it didn't work, and we should go through some of them as well. And this is something that you track so closely, Neeraj. The margin compression, the way the margins have compressed, does it seem like a one-off, something that seems like an endemic issue, something which will not get fixed quickly? That's the sort of questions that will be asked today.
Most certainly, and also because Tyrell has a fairly large government order book, and therefore the propensity to margins to get compressed is much higher versus a Voltamp, which does only private sector. Yeah. So it is saying, I want that pricing power, I don't want to go down that route of government. Tyrell has pursued order bookings. Here the problem is that order bookings have also plunged, which is it's a bit of a double whammy, I think, for Tyrell. Won't be surprised if it corrects today. But let's wait and watch. Now, to Tamanna's question, I think she's raising a very valid point. Could this become endemic? I think the management commentary could be interesting. The management commentary, not just for this quarter, but the quarters ahead could be interesting as well. But suffice to say. Much like HCLTech, the accident of the day today.
So we've talked about a lot of stocks on the earnings front. There are more updates for you, and Varsha bringing in that list. Varsha, what's on your list today?
Well, lots of stocks are in news. Let me start with a couple of stocks which will be in focus on the back of order wins. You have PNC Infratech, wherein they've emerged as the L1 bidder for construction orders of rupees 3,483 crore. The orders have been received from NHAI, and they'll need 24 months for the execution of those orders. Then you have KNR Construction, wherein they've secured 130 crore in a settlement agreement with NHAI. Jaiswal Nesco Industries will be in focus. Board is expected to meet on April 24 to mull fundraising options. Then you have Ethos, wherein they've inaugurated a new Ethos watch boutique in Faridabad, and they're going to further expand their retail footprint. JSW Energy will be in focus as their subsidiary JSW Mahanadi Power has received 1,447 crore demand for water charges from Chhattisgarh, and company has officially challenged this in the High Court. And lastly, Infosys will be in focus. Now, this is according to media reports. Sahil Parekh is unlikely to receive third 5-year term due to superannuation norms of the company. So these are all the stocks which will be in focus as of today.
Thank you for that, Varsha. All right, pre-open session. The first ticks have come in. It's not that negative, really, as of now. It's at least on the indices, it's not that bad. Yeah, I agree. Let's look at HCLTech. Let's look at HCLTech. Let's look at Taro that we were talking about. HCLTech's 10% down. This is the first tick. Trill is the second accident of the day. Persistent System seems to be the third, 4.5% down. So there's a whole host of reactions there coming in. Eternal seeing a bit of a hit, but we'll have to wait for all of this to settle. The advance decline ratio is not half bad. What's winning, what's working? 361 actually looking pretty decent. BEML has a good order win. That's positive. EID Parry, Inox India, some of the others which are on focus. But Trill on the one hand and HCLTech on the other are going to be the pain points. And this is what we were talking about, right? What didn't work for Trill? Higher revenues did not translate into profitability growth. Margin compression took place. Your Q4 margins were at 15.14% versus 19.4%. Higher ESOP expenses and contraction in gross margins impacted the EBITDA as well. Order inflows plunged 47% year on year. Missed the FY26 guidance across key metrics. Execution at 2,500 crores versus guidance of 2,600 crores. Margins at 15.3% versus a range of 16 to 17%. Closing order book at 5,000 crores versus 8,000 crores. So, which is why you're seeing this impact on the stock price. But, let's talk about more stocks as we get into that pre-open session and see what's working, what's not. Soumit Sarkar joining in with a take on Indus Towers. Soumit, is there a case for a buyback?
Yes, most likely there is a case for a buyback, and this is because the company did not choose to give any dividend or buyback in FY25 for shareholders, and since then they have been continuously telling shareholders that they will be considering the same in the fourth quarter, and that is also one of the reasons why the stock was up 3%, because the buzz on the street is that there could be some positive news flow related to buyback or dividend. Now, why the case for buyback here? Because first, just to give you some details, usually the company pays back the entire free cash flow to shareholders, and this is as per the company's policy. And in FY26, the company is expected to generate a free cash flow of close to 3,500 crore rupees. And in FY24, when the company did return some or gave some reward to shareholders, they had chosen the buyback route. Now, this time also they might choose the buyback route because Bharti Airtel, the promoter, is not in need of any cash, and by not participating in this buyback, this actually helps Bharti Airtel to increase their stake in Indus Towers, which is their stated policy, without using any of its own cash. So it favors Bharti Airtel and it favors the mighty shareholders also, given the fact that Indus Towers will be returning cash to shareholders, and that's the reason they might choose a buyback route. Now, if you look at the last buyback that the company had done in 2024, they did a buyback of 2,640 crore. This time the buyback size could be around 3,500 crore. Share price was 425. The buyback price was 465. Upside was just 9%. This time it could be around 12%. The retail acceptance ratio in 2024 was as high as 57.5%, and overall acceptance ratio was also high on the higher side at around 10%, and this was largely because the promoter did not participate, and that would be the case this time as well. However, there are few concerns that might stop the company from not doing a buyback. Firstly, there are some site renewal risks bunched up over the second half of 2026 and in the first half of 2027. So that could be one reason. There is elevated capital expenditure plans of the company on the maintenance side as well. And if you look at Vodafone Idea's tendency, the growth has been slower, and there is a possibility that Jio's tendency might also migrate to their own private listed tower company. And if you look at the analyst view right now, 44% of the analysts tracking the company have a buy rating. Consensus target price suggests an upside of just 8%. Highest target price suggests an upside of 35%, while the lowest target price is suggesting a downtick of around 17% from the current levels. And if you look at the valuations, it's trading much above compared to its 5-year average P, which stood at around 11.7, while the 12-month forward valuation stands at close to 14.3 times. So on the valuation front and analyst front, not much of an upside seeing. Buyback is the only potential trigger that could come in for Industars, and that could also be one of the reasons why the stock was gaining in trade yesterday.
Okay, thank you for that deep dive there, Sumit Sarkar. There, Indus Towers completely flat as of now. What's moving? BEML. And we, should look at this more closely. 590 crore order from the Defence Ministry. That's about 3.5% up. CE Info also perking up after quite a bit. Pfizer, Blue Jet Health, some of the other winners today. So a smattering, I would say, between defence. If I had to look at it, some movement in pharma, nothing major happening, and markets also pretty range bound. I want to just come to you, Kush, about what you expect to see in terms of overall market view. You're about 117 points down and the pre-open session is still on. You think that we will open further gap down and you will actually get that buy on dip, wala dip to buy, which you've been talking about, because you need that significant kind of reason to come in?
So I'm glad you brought this up, because we've already spoken about the index. There is something else that I want to highlight. I briefly mentioned it in the start. In my study, at least yesterday, day before, what's coming across is that a lot of stocks are coming to resistance levels and are not able to cross it. The volumes aren't significant enough to push them over the edge. A host of stocks which have run up are already at overheated territories, and something that we spoke of, a lot of stocks are starting to see longer wicks, which means they hit the high point of the day, but a sharp round of profit booking comes about. And let me add, a very interesting data point that I usually like to mention, which is on the breadth of the market. On NSE 500, the number of stocks above the 20-day moving average right now is 476. While on the downside, it seems, oversold. Right now, from the texture, it just seems overbought. So there's a good possibility that some cool off, some consolidation might happen at stock level. Perhaps the action will shift. Up until yesterday, we were speaking about how forget the index, focus on stocks. Perhaps that could change a little for the next few days, where index might perhaps take that lead and stocks might cool off, see some profit booking. Not to say that there is anything majorly wrong. Near-term perspective, mild profit booking around the corner in stocks.
Okay, the number of stocks trading above that 20-day moving average, it's fair to say, because look at the kind of gains we've seen across the board in April so far. Let's go across now, though, to Sharad Dubey, who's joining us to tell you about the big brokerage call of the day, and it's Nomura that's initiated a buy on Leela Palace. What are they saying, Sharad?
Well, an interesting trend, Alex, is there, especially when it comes to the supply issues in the hotel industry in India. Now, interestingly, Nomura has come out with a report on Leela Palaces, where they have initiated a buy rating with a target price set at 510 rupees per share. Now, they are bullish on this company, and the company is a beneficiary of ultra-luxury demand with a strong diversified pipeline going ahead as well. This is regarding the projects. Now, they're expecting a high single to low double-digit RevPAR growth over FY26 to 29. This is an operational parameter which we track for hotel stocks. 580 new owned keys would be there by FY29 versus 1200 owned keys currently in the domestic market. Also, they're estimating the EBITDA CAGR to grow at 17%, and if you look at the net profit, that's expected to grow at 26% over the next 3 years.
For that, Leela Palace showing some action in the morning. I wonder if Chalet Hotels is as well. Nomura has initiated a neutral with a target price of 860 rupees for Chalet Hotels. They're saying it's a strong pipeline, but execution is key. occupancy ramp up is the key monitorable. So watch out for this one as well. Chandan Taparia joins us this morning, Head Technical and Derivatives Research at MOFSL. Chandan, very good morning to you. Let's start with the Nifty view. Do you think there's going to be an opportunity to buy today on the Nifty?
Good morning, Tamanna. Thanks for having me. So the good part is that index is now slightly above 50-day mark. If it opens negative, it might again test the 50-day mark. But from last 5 days, we are again retesting those levels. I believe the immediate structure has turned positive as Nifty started to form the high rise, high lows on the weekly chart. However, we completed almost 50% retracement of the entire down leg of 4,000 points by recovery of 2,100 points if I look at the bottom. But on immediate basis, I believe 24,200 could act as a major support. Till that holds, buy on decline could continue, and we have positional target towards 24,750 to 25,000 in the Nifty index.
All right, so that's the index view, Chandan, and very good morning to you. But what are the individual stocks that you're liking this morning?
Yeah, so stock-wise, first it is buy on Maharashtra Bank. We have seen good buying interest in most of the small banks. And the good part is the volume accumulation is clearly visible with positive price pattern. So Maharashtra Bank is one of the strongest counter which has been making high top, high bottom. I think it's trading at highest level of last 14-15 years. And clearly the high top, high bottom structure indicate the fresh breakout with a decisive hold above 77. So one can buy with support of 77 for an upside target towards 85, 86. Second trading area that is from financial, that is buy on Bajaj Finance. Good consolidation from last 7-8 days. Every small decline is being bought. We believe the way price pattern is being formed with pollen flag on the daily chart, some uptick can be seen here. With support of 910, we are looking for an upside move towards 910 to 995 in Bajaj Finance.
See, that's the beauty of the way that stock markets work and the way that individual counters move. If things are looking good, then yesterday's resistance can become today's support, which in the case of Bank of Maharashtra is the case. 77 was a resistance just earlier this week.
Bang on. And we spoke of that, I think, about 2 days ago, where once it crosses the 77 mark and it's just going to fly. And mind you, yesterday someone's bought it like there's no tomorrow. The volume action on this one is phenomenal. Phenomenal, and that aided with the kind of price move. Completely agree with Chandan. 85, 89. I don't recall the exact numbers on this, but whatever levels on the upside around 85, 89, it could well hit 77 stop loss. So even with this kind of a move, the risk reward ratio is so favorable. So yes, Bank of Maharashtra makes into my list as well.
Chandan, is Nestle a buy at these levels?
Yeah, so the good part is selective FMCG counter started to witness buying interest, and I have noticed that FMCG index have witnessed good buying on monthly basis, and Nestle has really done a fantastic rally from 1160 to almost 1400 in last 4 weeks. Significant volume surge was there. I believe buying interest could continue because a decisive breakout is happening beyond 1340 marks. So I believe one can buy with support of 1345, and this time Nestle can head towards 1420 to 1450.
And then Persistent has been a strong IT name, 2% lower today. You've given this call multiple times in the past, so I'm asking you, what would you do with a Persistent if it opens 3% lower today?
I'll wait here because not much positive on IT index as of now, because if market corrects, IT will take a breather. And the only concern is that Persistent really have seen a decent recovery, but now finding some pressure at high levels. It recovered well from 4,500 to 5,600, now making lower top, lower bottom on daily chart with some profit booking decline, which indicate some cool down happen. I believe a decline may be there towards 5,100 to 5,000, and those who are looking for buying can utilize this level. So, but on immediate basis with hurdle of 5,450, it can go down towards 5,100 kind of levels.
Just about a minute to go. I will first go to Kush Bora just to have a look at whether or not any individual counters have stood out beyond what he's spoken about.
Not beyond what I've spoken about, but delivery, I would suggest, could be something that you can keep that you can keep on your radar. 484, 495 targets to reiterate. Stop loss 462.
Chandan, any stocks beyond what you've spoken about that stand out? What is the top pick?
Yes, so again, I'll focus on Maharashtra Bank. However, we discuss about the same, but conviction remain intact, so one can continue to be with Maharashtra Bank with the view that even if market corrects, this counter can do well. One can look at this, and the good part is low value counter, retail fancy stock. So definitely we can look at the name. Apart from that, I think one can look at the capital market AMC theme. So if one more pick we need to discuss, I can talk about counter like SDFC AMC, positive price pattern with support of 2750. It can head towards 2900.
Chandan, we'll talk about HDFC AMC in a bit after the markets open as well. But yes, noted, capital markets, Bank of Maharashtra can gain even if the markets fall. The markets will fall, by the way. This is the open, 0.5% lower. Nifty IT should come up on your screen very quickly. I think there should be a sharp downtick there, 2.5%, not surprised there. Market breadth is positive, which means that the mid caps and small caps are not doing as bad. It is the IT space which is the problem. Get the heat map up on the screen to notice this 3% gash on the Nifty IT. HCLTech 6% lower, and there is collateral damage there. Tech Mahindra 4%, Infosys 3%, TCS and Wipro dragged along with it. Top 5 are IT names. The broader end of the spectrum as well, IT would have taken a hit. We'll get to that in a bit. ICICI Bank down 0.5%. Some weakness in Asian Paints yet again. Indigo down about 0.5%. Nothing too dramatic though, because it is stable despite this gash on the Nifty. By the way, HCLTech is down on 7%, but the Nifty is 1/3%. Nothing dramatically lower. What is doing well? Yesterday's boy Nestle, yet another percent. Trent, 1.5%. There is strength in HUL. So FMCG is coming to the defense. Adani Enterprises, it's been a very strong stock, by the way, the last 5 days. That stock is up another 0.5%. Strength in JSW Steel, Geo Finance, Hindalco and Sun Pharma. Yes, more red than green. Only FMCG helping. But yeah, IT takes the cake. And Tamanna, I don't know what Tata is doing, but I would still say based on market cap, this is the accident of the day.
Yeah.
8% for HCL.
Because the heavyweight can do more damage. Simply put, and that's pretty much what's happening. You have the entire tech pack dragging down the markets. Think about it. If tech was not doing too badly or so badly, you might not have had a close to 100-point hit on the Nifty. Pull up the Nifty contributors and that picture actually becomes clearer. And what we're talking about, look at it. Between HCLTech, Infosys, ICICI Bank, you have some 60-odd points, pulling down on the Nifty itself out of the 115. And then, of course, you have the others over here. So 60, 65 points just coming from here. Meanwhile, Nestle, HUL managing to hold up, RIL also coming to the fore, but clearly not enough. I want to pull up India VIX for you, then I want to pull up broader markets for you, just giving you a sense of what's happening right now. This Wednesday morning, slight uptick on the India VIX, but we've been saying this for a few days now. The market is considering that no one has the appetite for more escalation in the US-Iran war. That's pretty much what the screen is saying. Sooner or later, we're going to get on with our lives and other things that are mattering. Nifty mid-cap 150 completely flat, but at least not a big dip negatively, 0.25% up on the small cap 250, which is not bad at all. Advanced decline also looking fairly decent, really, 1335 to 873. So that's showing you what the market mood is. We should look at the sectoral heat map and see what's working there. Nifty IT is going to be at the bottom. Yes, there it is, about 3.5% down on the Nifty IT. And it's not just HCLTech alone and its numbers. The AI fear is real. It's beginning to show in commentary from managements of the people who run these companies. It's beginning to show in what their growth is looking like. And that's why you have the Nifty IT looking depressed today. But look at everything else is not that bad. Nifty FMCG 1%, of course. That's Nestle's afterglow continuing today as well, I would say, which is why the MNC index is up. But let's look at specific stocks and what's happening over there. Results. Let's start with TRIL, 361 WAM, about 10% down on trail, 361 in negative territory, about 0.5% down. We had marked this as a thumbs down. There are some brokerage notes out there with the view that there will be an improvement here on, but as of today, the results saw a bit of pain. HCLTech, once again, let's see what's happening with that. Persistent, Tata Elxsi, all of them negative. I mean, that's what the numbers look like. Sign, DLM, I want to look at Suntech Realty. Suntech Realty actually had decent numbers. 8.5%, 8% up right now. Suntech Realty and the whole real estate pack has been a breather. Sign, DLM about 1.5% down, 1.5% up. because that was a decent set of numbers as well. Leela Palace, Nomura has initiated a buy. Nomura also has a take on Chalet Hotels. Let's see how both of them are doing. And both were fairly positive. Flat. PNC Infratech, I just want to pull up, and BEML. This is just the ones which have won orders. PNC Infra about 9% up. They have a construction order for 3,483 crores. Actually, the L1 on that. BEML also has a decent set of orders, about 600 crores from the Defense Ministry. So this is a smattering of it. But I would say after all of that bluster, that blockade will continue. No one is talking, to the US. This is not bad at all.
It's not bad, Tamanna, but the reaction on earnings is actually front and center for me today. And in certain pockets, and you're looking at Cyient DLM, you're looking at Tata Elxsi, both of which Tamanna mentioned, the street seems to be taking a view of, particularly for Cyient DLM, that the damage has been done. This is a stock that trades now, as I'm looking at the screen, at below 40 times, which is not cheap by any stretch of the imagination. I'm talking about trailing, whereas the 3-year average PE was 78 times. And so therefore, according to the street, perhaps FY27 looking better on the earnings front with better execution is looking positive. On the flip side, what was spoken about earlier today with regard to ER&D companies having a tough time of it is visible with Tata Elxsi and HCLTech losing about 8.5%. Tata Elxsi also losing ground, despite the fact that the rupee has actually come to the rescue to a certain extent with regard to this particular counter. But what else from the broader markets is moving? Because we've spoken about the key movers. You have Schneider Electric that's down about 2.5%. You have DOMS that is losing about 2% as well. What is working though is MMTC, which is up about 6.7%. Amara Raja Batteries up about 4%. Tata Investment is up about 3.4%. And Nestle once again at the forefront, gaining over 2%, close to 3% at this stage though. Chandan, you were talking about HDFC AMC. Let me ask you to complete that view with the market having opened. And of the list that I've spoken about with regard to the stocks that are working, Nestle India, which is up 2.8%, Adani Power, which is up 3.2%, Tata Investment and Amara Raja, as well as BEML. Let me throw that into the list as well. What's the best strategy to buy right now?
Yeah, so first of all, I want to highlight the capital market theme. I discuss about SDFC AMC and also want to focus on ICICI AMC as well. So SDFC AMC could be continue as a preferred pick with support of 2750. It can head towards 2900 level. ICICI AMC is also one name I want to add here when we are talking about capital market theme. This is one of the strongest counter, has been making high top, high bottom, set for a fresh breakout. Buy with support of 3470 for an upside target towards 3630 kind of level. Yes, Nestle has seen an amazing price pattern, however, is slightly down, but yes, the trend is intact. And the good part is the stock is continuously making high top, high bottom. It rallied by more than 10 to 12% in the last couple of days. It's still holding the gains even after the weakness of the broader market. So I believe one can even participate in Nestle at high levels. Earlier we were talking about target of 1400, even it can extend to 1500. So one can keep the trailing support of 1350 for an upside target towards 1480 to 1500 kind of levels.
Okay. Thank you so much, Chandan, for joining us today. Parag Bhai, Kush Bora, thank you so much for joining us today on the first leg of this conversation. Time for our corporate focus, and we're talking to the Brigade Group. They've announced plans with Hyatt, plans for Grand Hyatt Chennai ECR and Hyatt House Bengaluru in Devanahalli. Grand Hyatt Chennai ECR will deliver an exceptional beachfront experience, they're saying. So this is what's happened. They have an MOU with the Tamil Nadu government as well. So quite a few plans cooking there for Brigade Hotels. So we're speaking today with Manoj Agarwal, who's the COO of Brigade Hotel Ventures. Manoj, thank you so much for your time to us this morning. Can you take us through some of these strategic tie-ups and what do you think they add to your plans?
Yeah, hi, good morning. Thanks for having me here on your show. As regards the plan, we have a very strong pipeline of hotels coming up in the next 4 to 5 years. And we are very strong and very optimistic for Chennai as a market. As our latest announcement, we have signed 2 hotels with the Hyatt Group, one of which is in Chennai, which will be a large format luxury hotel with multiple dining options and a large format banquet and event spaces. This will be catering to the leisure segment as well as the large format MICE segment. And it's a beachfront resort with over 200 keys. Another hotel which we have signed with Hyatt is Hyatt House Devanahalli, which is a long format stay hotel. So these two hotels we have just signed with Hyatt, and in addition to this, we have a strong pipeline across segments and with other operating partners as well.
Manoj, the belief usually is that the hotel sector has been cyclical, and therefore it runs a 6-year cycle and then comes off, or a 5-year cycle may come off a little bit. We are technically in the 5th year of this cycle that could have started from 2021, if you will. Is the view this time different with the kind of aggressive plans that you are citing and some of your peers are citing as well?
See, historically, you're right. Hospitality used to be a cyclical industry, and the cycle used to last between 6 to 8 years. But post-COVID, we have seen a fundamental and structural change in the Indian hospitality sector. Now, with the GDP, the way it is growing and the way it is expected to grow, and the Indian economy, the way it is moving, and if you look at the room supply, the branded inventory available in India, and the declared or the planned room supply that is coming over the next 6 years, India still remains a very low penetrated branded hotel inventory market if you compare to other large economies or growing economies. So I don't think that this time the cycle is as it used to be a 5 to 6 year cycle, but it's a long-term play in the hospitality industry that we are seeing. The demand is it's outstripping the supply that is announced and that is coming up, and we are seeing a strong growth over the coming 5 to 10 years at least.
Q3 performance, for example, Manoj, I mean, it was about a 14% YOY growth. The 9-month income is up about 19%. Good, not necessarily blockbuster growth. So is that an aberration, or is that the kind of growth that you want to pursue and foresee for, let's say, FY27 as well?
See, we have continuously delivering, high double-digit growth over the last 2 to 3 years. And as I said, the demand outlook, barring a few hiccups, in the last 2-3 months because of the whole geopolitical tension and all, but the overall stabilized demand outlook remains strong, and we expect to continue to deliver our high double-digit growth scenario over the next couple of years as well.
Mr. Agarwal, what are your revenue guidelines after all of these tie-ups? Do you see revenue bumping up significantly?
See, as I said, we have a strong pipeline of hotels that we are doing. We are going from 1,600 keys that we currently operating to 3,300 plus keys over the next 4 to 5 years when these hotels start getting into operations. And of course, that will add considerably to our revenue and our overall portfolio performance as and when these hotels start coming into operations. But immediate result forecast I cannot share with you, because right now we are in a silent period. And we are
just trying to understand the timeline to go from 1,800 to 3,300 keys.
It's over next 5 years. By 2030, we will be doubling our portfolio.
Okay.
Yes.
Okay. Thank you so much, Mr. Agarwal, for speaking with us today. He's the COO of Brigade Hotel Ventures. But moving on to speak about Hindustan Copper, their Vision 2030 is a capex heavy reset. Over 7,000 crores lined up through FY30 with ore capacity targeted to jump and profits projected to scale. Before we speak to the management, Varsha joins in with more details.
Well, thank you so much for that. Key takeaways from their annual plan meet was, one is aggressive capacity expansion that the company is doing, and they're also diversifying into high growth areas, and strong PAT growth is expected, and digital and governance transformation is underway. Talking about the capex plan, total capex plan is around 7,188 crore, and heavy investment phase is expected ahead. Onto the production expansion, ore production is expected to expand from 4.21 MTPA to 12 MTPA, and milling capacity is also expected to scale around 4x. Talking about profit and dividend outlook, profit growth is expected to rise from 589 crore in FY26 to 1,568 crore by FY30, and dividend is expected at 470 crore in FY30. Then strong earning visibility is expected to scale up. Talking about lastly the diversification strategy, they are entering into critical minerals and renewable energy. So overall, the diversification strategy and the heavy capex and earnings growth is what will lead the next expansion when it comes to Hindustan Copper.
Thank you for that, Varsha. In fact, Sanjeev Kumar Singh, the CMD of Hindustan Copper, with us this morning. Mr. Singh, thank you for your time to us here at NDTV Profit. We want to know about your vision 2030, but if you can just begin by getting a sense from you on the impact you're seeing of the geopolitical disruptions for your business specifically. Has there been an addition to freight rates which has hurt? What has been the impact for you?
Thank you, ma'am, and very good morning to all the viewers. Definitely this war, Middle East Asia war, has impacted us. Our explosive costs have gone up substantially. So that is one of the aspects with which we are taking up the challenges. And as far as the production and other aspects of the mining is concerned, it is in line.
Extent of costs that have gone up, and are you able to pass these on at all?
No, ma'am. These costs have been absorbed by mine operators, basically. This is inbuilt in such a way that they have to absorb it. And presently, it is only the explosive part which has gone up by 25%.
Sir, I want to talk about the expansion that is planned and the roadmap heading towards the target that you've laid out over the course of the coming years. Can you take us through that, and specifically in this financial year, what is the kind of execution that you expect? What is the amount that you will spend, and how will you fund it?
This year, that is 26-27, you must have seen in my annual plan meet, which was held on 17th and 18th. We have targeted a capex of about 450 crores. And as far as funding is concerned, we'll be funding it with our internal accruals itself. But the next year, that is 27-28, since the capex will be most probably 3 times of this amount, we may have a mix of internal accruals and debt.
Okay. And so you will only have to raise in FY28, right?
Yeah, not before that. And that picture will be more clear in the start of the 27-28, because by that time, most of our machineries and supplies, they will be starting arriving at my mining sites.
Sir, the tendency of several managements, I wonder if it's the case with you, is to under-promise and over-deliver. So I wonder if that is the case for both your volume and price assumptions for this financial year.
These prices are external factors. You know very well, dollar and LME is not in our hand. And as a planner, basically we plan it, we envisage in the coming years, we have to be on a lower side. See, you can't be optimistic as far as planning is concerned.
But having said that, I take that point, sir. But on the volume front, at least you can make a projection. So pricing, I can understand that you're being conservative and why you are. But on the volume side?
Volume is okay. I think since in these 2 years, 26, 27, 27, 28, most of the capex will be in place. So the results will start coming after that only. You must have seen there is a spike between 28, 29 and 29, 30. By that time, our shafts is Malanjkhand, which is the biggest mine, will be completed. So there is a spike. So the build-up of the production is in a gradual manner. That's why it's not on the lower side. It's a gradual build-up. In mining, you cannot have high built up or ramp up, which we call in a normal sense, is slowly, unless until the mine infrastructure is ready for the production. And once it is ready, there is a spike in production.
Sanjeev ji, good morning. Neeraj Shah here. I have two follow-up questions on the very same thing, sir.
Yeah.
Do you, by virtue of your answer, I'm guessing that the capacity expansion and the volume targets, therefore, that you've laid out are well thought of and conservative, keeping in mind execution delays as well. Would it be safe to assume that this is the bare minimum or the exact capacity numbers that you will reach at the targeted FY30 date?
Hey, number one, I'd like to clarify there should not be any delay. Tenders have been awarded by 31st March. Number one. Now, execution is in our hand. There is no issue of land or anything. So things, and we have in past also, we have seen that we have done the executions in time. So as far as delays, I don't think there should be any delay unless until the war or something external factor comes into picture. The second aspect is the ramp up, which I just mentioned, in a mining unit, any mining unit, whether it's a copper or any mining unit, it is in a gradual manner. Once the mine infrastructure is ready, then you start the producing the ore, and then there is a spike which you can see in the last 2 years. In the 5 years which we have projected, you just see our last 2 years. It is giving more amount of production of ore and also MIC both.
Okay. Sanjeev, the second question is, again, something that you mentioned, pricing. Yes, granted it is not in your hands, but I would love to know the average pricing assumption that you've taken for the numbers that you've given, particularly on the PAT side, right? You're citing it moving from 589 crores to 1568 crores. What is the copper price assumption there? And yes, you have to be conservative, but you have a strong thought, I'm sure, on what copper prices could do as well over a period of time. Are you being overly conservative here? What is the price, and are you being conservative here?
Not overly conservative. See, we have seen our averages last few years of pricing, and we have taken the range as between $9,000 to $10,000. And one thing I like to mention here, again, that it is, we are focusing on our operational efficiencies. We are not going with the LME or a rupee dollar, because I told you, there are external factors which are not in my hand. You just see my results, 9-month results, and which the results will come. We have maintained our operational efficiencies, and that is our focus. It's the focus of Hindustan Copper.
No, Mr. Singh, I agree completely, and which is admirable, and we'll talk about that. But I'm just saying, you've taken an average price. Did I hear you say 10,000 versus the current pricing, which is what, at least 30% higher, right?
Yeah. And you very well know why it is higher, because of the supply demand. I had answered your question in the last interview. So that may ease off also. And that should ease off also. Don't you expect to ease off?
We certainly hope.
All of us hope that's
only,
the case.
Only Mr. Trump knows, I think. no one else can answer that question.
We have to, as a miner, see, I'm a miner. I have to remain optimistic on this issue.
100%. What is the funding plan for the capex that you have outlined, Mr. Singh? Will there be a requirement for fundraise? How are you looking at it? Is it all internal accruals?
Definitely. See, 26-27 by internal accruals, we are pretty sure about our capital. 27-28, it will be a mix of that's internal accrual as well as debt. And we have already taken approvals from the board with respect to bonds also. So funding is already tied up.
What is the plan as far as rare earths are concerned? Is that something that you're looking at significantly? Anything that you can share with us? It's also strategically important from a national perspective right now.
Yes, from the national perspective, I'm saying, see, we are trying. We still not have any success till now. We are put our tailings in Rajasthan mines, that the K3 mines has a huge tailings of about 70 million tons. And there is a little presence of rare earth. But the thing is that we already have the reports from IBM. We have got the tests done by MECL. And I mentioned that we have drilled the tailings in Rajasthan mine. We are the first company to drill the tailings. It's very difficult because it's a loose area. And then we tested those tailings, and we have found the presence of rare earth. But the thing is that rare earth are two types, high rare earth and low rare earth. And the thing is that the processing part. So we have invited an expression of interest. We are still in a very initial stages. We have discussions with 1 or 2 Australian companies. But then things are moving, but still no idea about the processing part. We only know that in my tailings, there is a presence of rare earth. So we're trying to extract it.
Sir, just to very quick answer. Once you find it, do you have the ability to process it?
That's what I said. That's what we have invited in the tender in UI. We are trying to do it on a revenue sharing basis.
Okay.
We have invited the companies, put up the plant here, do the lab scale, pilot scale, and then move ahead. Then we'll share the revenue. So we are not going to put any capex into it.
Absolutely, sir. Absolute pleasure as always speaking to you, and thank you so much for taking the time. Wish you all the best.
Thank you. We need it.
All right. Well, let's head across straight now to the conversation with HCLTech because ultimately this is the biggest decline on the Nifty 50 right now for good reason because it's missed on several fronts. What is the management saying about the path ahead? Find out on this conversation.
My first question to you, of course, the guidance that you have now given is a wide range, 1 to 4%. Can you give us a sense on what are the variables as well as the factors which will either tick up the growth at 4% or will come down to 1%?
Yeah. Good morning. Yes, our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're at the 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue. And we have two client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's right. And when we talk about the discretionary spend, Mr. Vijay Kumar, how is that really picture developing? What are the factors which are really impacting? And the global turmoil and uncertainty that we are really seeing on the economic front as well. How much of that is impacting the discretionary demand for your space?
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that the environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that has been caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And the last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27. So I think what we are very confident and very optimistic is our ability to really grow the new services. There are 6 or 7 new areas that we are growing, and that is going to help us accelerate growth as we move forward in the medium term.
All right. So new areas that you are really growing in. But what about telecom? That has really caused a dent in the last quarter. How do you see the outlook going forward? And is it sector specific?
I think it's, I would say, client specific at this point because leadership changes, strategy changes, all of that drives a certain new strategies, and that would have its own implications on spending. I would not broad brush it across sector or across geographies. That's why I was very careful about calling out specifics rather than giving a broad brush macro as a factor in whatever happened in last quarter and also the future.
Right. Mr. Vijay Kumar, when we talk about the guidance that you have given, of course, the guidance estimate is lowered in terms of the revenue, but in terms of the EBIT margin, you have upgraded your guidance. So how does this math really play out? Where is the profitability looking to improve, and what is the reason behind that?
So actually, if you take our FY25, we were generally in the 18% plus range. And in FY26, we had guided for a slightly lower margin. And we are just getting back to that 18% at the midpoint. Because we have taken a lot of steps in the past, in the last 12 months. And all of that will help us to get to this 17.5 to 18.5 guided range.
All right. And when we talk also about the new acquisitions, it is stated that you haven't really accounted for those in your guidance. Can you share the timeline and what could be the uptake coming in once the acquisitions are completed?
Actually, the timelines are a little bit fluid because it is waiting for certain government approvals. On a full year basis, I mean, if you take 12 months post-acquisition consummation, it should give us a 1.5% increase in growth. But at this point, we are not able to put a definitive time frame when these acquisitions will close. But whenever it closes, 12 months after that, we would have delivered 1.5% incremental growth.
All right, so 1.5%, but on a yearly basis. So even if it hits you like in a 1 or 2 quarter, it can have some bit of impact in your next quarter. And that is incorporated. Is it part of the guidance that you have already stated, the band, or can it be over and above the band that you have stated in guidance?
Yeah, right now the acquisition impact is not factored in the guidance. So whenever the acquisition gets completed, we will add, and whatever subsequent quarter, we will kind of upgrade the guidance based on the acquisition.
All right. So there is likelihood that before 1 year gets over, the acquisition could be completed and the integration could be done?
Certainly, certainly.
All right. So then there is a chance that you could, even in a good year, look at outperforming the guidance that you have already stated. What is the likelihood of that?
I mean, it's very clear, right? We've given a guidance of 1 to 4, and if acquisition happens, it will get proportionately increased. And it all depends on how the next few quarters go.
Right. We are just penciling in all the factors that could be really coming in outside of your stated numbers, Mr. Vijay Kumar. Now, in terms of the AI focus, what is your sense in terms of the way your business is growing and also the overall noise that is really developing? How is HCLTech really positioned to take up this challenge?
Yeah, we have 5 strategic pillars that we are focused on. First is to proactively transform all our services by infusing AI without even waiting for clients to ask for AI-led transformation and services. So that's number one. The second is to develop differentiated IP, which helps clients scale AI adoption within large enterprises. And third is launch completely new services, AI-led services like AI engineering, physical AI, AI factory, AI-led marketing services, and a lot of IPs and platform-led revenues. That is the third pillar. And the fourth is to build on some of the partnerships like NVIDIA, OpenAI, Anthropic, and all of these partnerships. And the fifth is, of course, the people transformation. We are upskilling our teams to categorize the entire 227,000 people into AI builders, AI super users, and AI human in the loop decision makers.
Right.
And transformation is a multi-year journey, but we have a good template and we are going about it in a very structured manner. So I think these 5 pillars and 5 key strategies helps us to grow our AI revenue. We called out advanced AI revenue. It's already $620 million in annualized revenue. This is independent of this is whatever we do in service transformation, embedding services to deliver, embedding AI to deliver services, that is not excluded. That is excluded, and our advanced AI revenues are completely new revenue streams.
That's right.
That we've been talking about.
In terms of deal wins, it has been a softish quarter. What's the outlook going forward? What's the visibility?
I think we should see similar deal wins, and we think there is a little more uptick possible in the first 2 quarters from what we are seeing. Otherwise, I think the pipeline is good. It's quite broad-based, and we feel pretty confident of a good booking trajectory.
And it's also year-end new financial year is starting now. In terms of the numbers, what are we seeing in terms of the increments, hiring, as well as the attrition, or if any layoffs?
It's not due now. It will be expected in July, and we will probably talk about it in the next quarter. And attrition has been stable, and we've grown our people count by about 1.5% last year. So it will be very dependent on growth and the projects that we win and all of that.
Close to the low point of the day for HCLTech, even while the management is speaking, down about 8.8%. And, well, it's taking a bit of a hit. On the other end of the spectrum, one of the stocks that was buzzing quite a bit this morning on account of an order win, BEML. It's cooled off just a tad bit, but still trading with gains of about 2.5%. We're going to speak to the management about the securing of a 590 crore order from the Ministry of Defence and what this means for the path ahead. But before we do, let's set the context and go to Varsha to talk not just about this latest order, but how the book looks right now. Varsha?
Well, this is a major defense order that the company has won of rupees 590 crore, which involves the supply of trawl assemblies and which will boost their near-term defense pipeline execution. On to the recent order wins, they won $36.38 million Middle East earth moving equipment export order, also secured first ever overseas metro rolling stock order with this $60 million. Total international order book with this stand at around $107 million. And they've also signed joint bidding MOU with Delhi Metro Rail Corporation. Onto the order book and segment mix, current outstanding order book stand at around 16,300 crore. They're targeting to cross 20,000 crore order book in FY26. Well, 68% of order book is coming from rail and metro, which is followed by defense and mining at 25% and 7% respectively. Talking about the aggressive rail and metro expansion, they have been approved 1,500 crore debt finance Greenfield Bhopal plant, and phase 1 will add 300 car per year to current 200 to 250 capacity, and multi-year domestic opportunity size is at over 15,000 cars. Lastly, on the new growth segments, tunnel boring machines and maritime cranes are some of the new growth areas, wherein TBM development will need 2 to 2.5 years, while maritime cranes will contribute after 3 to 3.5 years. Management is expecting 5,000 crore revenue from maritime cranes in the next 5 years.
Okay, so that's a very comprehensive snapshot and perfect ahead of our conversation with Shantanu Roy, who's the CMD of BEML. Mr. Roy, hopefully we've been able to provide a good picture of all of the operations that you're currently undertaking. But I want to get into the specifics of this latest order, which is a 590 crore order from the Ministry of Defence for the supply of trawl assemblies. From the longer standpoint, how important is this order? Of course, it shows up your near-term revenue, but is it strategic in nature?
Good morning. Yes, it is strategic, and it also consolidates our position for the combat engineering segment. So trawl is, it comes from the family of demining mining equipment, which are put on the combat vehicles. The trawl is to be fitted on T-72, T-90 tanks. And we have earlier executed the track fit mine flow and we are doing quite a few other mining equipment, basically the combat engineering equipment. So it adds to the family, it adds to our, it consolidates our current portfolio. And the trawl is a very comprehensive equipment. It has a roller, it has electromagnetic device, it has a power pack of its own, it has a track width mine flow, and it will help the Indian Army to navigate the minefield areas, breaching the minefield areas.
Interesting. So when we were talking about the split of revenues, Mr. Roy, and we were talking about certain products that would come into the fore in a couple of years, and you're talking about even the maritime requirements, right, for the cranes. If you look at this and you look at the trawl assemblies, what is the kind of contribution that you anticipate it will have in the coming years?
You see, the trawl assembly, the order value is already known.
Yes.
So in future also, it may contribute, a similar number. But the real growth driver will be the rail and metro sector, as I can see. If you look at our current order book, so rail makes up around 66-67% of that. 23% comes from defense, around 5% from mining, and the silver lining is the $107 million order book that we have for international business. It also makes up for a sizable chunk. We are also aiming at further international orders, especially in the heavy earth moving segment, as well as for the metro and rail rolling stock. So that is going to be one of the major pillars which will drive the growth of BEML over the next 4 to 5 years.
Mr. Roy, a very good morning to you, and so much focus because of the defense orders. But since we're speaking about rail and metro, there were some stalled metro projects. Can you give us any update? And this was from what we saw last quarter. Can you give us any update on movements there?
I'm not aware of any stalled metro projects. Yes,
I would say delay in beginning. If I could say that technically more correctly.
I won't say there is any delay. Bangalore Metro, we have delivered around 6-7 train sets last year. It has taken off. Mumbai, this year, the bulk of the Bangalore Metro will be executed. We will start delivering the Chennai Metro. We will again start the 33 train set order for Mumbai Metro this year. Yes, some of the orders which you were expecting to secure last year, it has rolled on to the current financial year, but it is very much on track. There are some new tenders also which are out in the metro. So 26-27 should see at least 3-4 major metro orders being finalized, and which will augur well for BEML.
Fair enough. So the ones that got rolled over, any kind of details that you can give us on the extent that have been rolled over and what you expect to come through? I think Bhopal is one that you're looking at.
No, Bhopal Metro is already, it is being executed by some another company.
Okay.
The tender that is out is currently the Chennai Metro, and for Delhi, there are 2 tenders which are out for the metro rolling stock. We will also expect some more metro tenders coming out from the Mumbai area. Apart from that, some more tenders from Andhra we can expect this year. Bangalore next phase we can expect this year. So these are the metro orders, that are in the pipeline. Metro opportunities, I would rather say, which are in the pipeline. In fact, for 26-27, as I've already mentioned earlier, we have an opportunity size of around 40,000 crore, which is mainly led by 70% from the rail and metro sector, 20% from defense, and 10% will be from the mining or the heavy earth moving segment. And we will aim to get at least 50% of these orders. So let's see. Only time will tell. We are working out the strategies for achieving the stated goals.
Wow. Mr. Roy, good morning. Neeraj here. Just so I have a follow-up on just that. 2 questions on that, just that. On the rolling stock requirements, I believe in the February call, You have stated that the requirement could be about 15,000 cars, and you hope to bag 50% of that, which is 7,000 cars, or maybe 4 or 5 years, if I'm not wrong.
Yes.
Could that be a linear order bagging curve, or could it be lumpy? And will we see lumpiness in FY27 itself, or FY27 seems to be on track for a linear growth?
It's very difficult to say whether it will be linear or lumpy. So generally, it has been seen that it is always a sinusoidal curve, right? It is cyclical. So 26-27 should prove to be an exception to the earlier years that we have seen. And the same trajectory may not be there for the coming years, but yes, in totality, for the next 3 to 4 years, the numbers that you just mentioned, they are going to be finalized. That is for sure. Now, which year, how much it gets done, that only time will tell.
But FY27 should see a good number. I presume that's the takeaway that I have from your answer on the rolling stock. The second question, sir, is on the number that you mentioned, that between the three areas, you foresee an opportunity size of 40,000 crores from which you hope to bag about 50%. So circa about 20,000 crores. Now, please help me understand, sir. As I look at the numbers for the last 3-4 years, FY22 or March 2022, we were at a revenue base of 4,300 odd crores. We've closed 2025 at 4,022 crores. Trailing 12 months is 4,200 crores. So we've kind of maintained that revenue run rate, but the order booking is looking strong. When do we break out of this? Could FY27 be the year when the growth on the top line comes by, and what would be a 3-year trajectory maybe?
Let us understand, for a sustainable revenue, what is needed. As a rule, the revenue is generally 1/3 of the order book, of the executable, of the total order book, and out of which, 100% cannot be executable in 1 year, right? So as we increase our order size, what is important is that executable order book throughout the year. In the past, what we have seen is that Q1, we do 10%, Q2, 20%, Q3, 30%, Q4, 40 to 45% also. That trend has to be broken for us to break out from the earlier numbers. And in 26-27, we have that kind of cushion with us where we won't have to, run for orders. The current order book will enable us to perform equitably or almost equitably in every quarter. Because again, the rail and metro orders, when the order comes, it takes 2 years to develop a proto, and after that, the bulk production starts. So 26-27 is that year when the bulk production will happen for most of the projects. Couple of projects, the bulk production will go into the next financial year, that is 27-28. So 26-27, 27-28 currently looks much better in terms of the available orders, in terms of the executable orders that we have on hand. At the same time, it is very important to build up the order book. In order to further grow the revenue, it's very important that 26-27, we build up the order book by at least, 70% to 80% of the order book that we ended the year with. And that should help us for years beyond 28-29, beyond 27-28, 28-29, 29-30. So at the medium term and long term projection, if we talk about, then it's very important to build on the current acceleration, the current velocity that we have in the order book, and build it up to such a scale that 1/3 of that can be executed year on year.
Fair enough. Mr. Roy, just want to understand, and I know you maybe not be able to give us too many specifics, but there was a one-off provision in the last quarter which had a bit of a negative impact on your margins. Are we back to mean or back to the area before? You think margins are going to come back to where they were?
Let us see. I don't want to speculate. We are in the silent period, so we need to for another month or so. But yes, it is. I mean, we have been very open about it. That it was because of some legacy which we had to sort out. And the good thing, the important thing is that the project is back on track.
Fair enough. Just wanted to ask about your mining division as well, because we've spoken about defense, we've spoken about rail and metro, but let's talk a bit about mining and the kind of growth that you're expecting in the mining and construction segment. What are the mining order picture looking like? What is the mining order picture looking like?
Fortunately, this year, as we start, we are assured of some big ticket orders where we have already emerged as L1 during the last financial year. So this year we should look at order inflow from mining itself, at least 700 to 800 crores, plus some more orders we are expecting from the international business, from the international market. Already one such tender is out from Tunisia, which is valued at around 110 million euros. The order that we received from West Asia, that value does not include the maintenance. That contract has a provision of 5 years maintenance plus 7 years optional maintenance. So that will further add to the order value. But again, it may not be sustained. What I see is currently the mining vertical, the heavy earth moving vertical, it will grow at around 5% year on year until unless we diversify. We are making efforts to diversify into surface miner, which will be required in future. I'm not so sure about the underground mining equipment. We are yet to start work on the underground mining equipment. But what we are looking for is alternatives like the tunnel boring machine, like the maritime crane, so that this particular vertical, whatever is the downside, it may happen in the coming few years, it can be taken care of by these alternatives, by these diversification strategies.
Thank you for joining us today and answering all of our questions, Mr. Roy. That's the management of BEML. Stock in focus because of a 590 crore order from the Defence Ministry, but there's so much more going on with this company. It's in rail and metro, it's in mining and construction, and we've talked extensively about all of those businesses. All right, let's shift focus to the real estate sector. JM Financial says India's real estate market is seeing a clear shift towards premiumization, even as volumes show early signs of fatigue. We're going to be speaking to Sumit Kumar, who has authored a report for JM Financial Institutional. He analyzes the space for them. But before we get to that conversation, Mahima joining in to set up.
Right. So, Tamanna, overall, the report, of course, talks about how overall demand is shifting towards premiumization with fewer units but higher ticket sizes. What it also mentions is that the mid-income demand remains resilient, whereas affordable housing is structurally still weak. Supply has started to kind of outpace sales, indicating early signs of build-up as well. Prices have seen a strong growth, 60% since 2020, but remain moderate over a longer cycle. Sector has seen a massive consolidation. Redevelopment is something which is emerging as a key supply driver, especially in areas in Mumbai. Senior living remains as a niche segment with limited scalability, and near-term demand may see volume softness, but value resilience will be there due to premiumization. Now, FY26, if we talk about how trends have been where real estate space is concerned, it ended on a somber note as housing sales sort of decreased by around 7%. Launches were, however, by value did surge by around 31%. Unsold inventory increased to a 20-month high, and average prices, unit sizes as well as ticket sizes rose year-on-year basis across most major cities in March 26. Now, valuations of real estate companies have corrected. And this is on account of falling housing volumes amid the kind of deteriorating affordability that's there. So I think it's important to understand as to the way we've seen correction in the entire sector, and now that valuations have corrected, what is the outlook going forward? So this is the overall view of what's happening in the real estate space.
Thanks for that, Mahima. Let's get in Sumit Kumar from JM Financial Institutional Equities. Sumit, good having you. Thanks for taking the time out. What's the central prognosis? Do you reckon that we are at peaking out of the cycle, or is it difficult to say that right now?
So hi, good morning, and thanks for the opportunity. I think we are near to a peak, you can say, because the sector has been consolidating for the last 2 years. if you look at the volumes that the top 7 cities have recorded in FY25 and 26, that has been in a range of 650 to 675 million square feet. So I think this sector is consolidating a bit. My guess is probably we'll see a similar kind of a trend for the next 1.5, 2 years. And then probably based on how the macro look like for the economy, I think that would be the opportune time to take a call on where the sector is going. But for the next let's say 15 to 24 months, I think the trend should continue where volume should be more or less flat, and there should be a stable sustained price increase driven by improving mix, because we've seen the preference for branded premium homes, and that trend should continue, as well as certain price hikes that developers will have to take to cover rising costs because of the West Asia conflict.
Sumit, very good morning to you. Just trying to understand that, are you seeing a divergence in residential and commercial in terms of volume growth as well as pricing?
So yeah, I mean, there are two different asset classes move very differently. The monitorables or the KPIs are also quite different. I think if I look at office, the demand is driven by enterprise demand. Commercial real estate, 60% of the leasing happens through the services sector. A lot of that demand is led through GCC. So they have done well post-COVID. Once the work from home phenomena faded out and people were back to office, we have seen gross absorption and net absorption at a pan-India level growing at 18-20%. This year it was a record year with about 55 million square feet of net absorption, about 75-80 million square feet of gross absorption. So and you have seen the re-rating in the REIT portfolios as occupancies improved and the numbers improved. The rate cycle also helped. So the re-rating for the REIT portfolios have already happened. From here on, the growth will depend on the growth and obviously the view on the risk-free rates or the benchmark rates. On the residential side, obviously we are at a stage where the income effect and the wealth effect hasn't been that great to really have a very constructive view on how the volume growth will be for us. So a bit of a divergence, but yeah, both move differently anyways.
Got it. Okay. Well, out of time completely on this segment, but Sumit, great having you for this brief perspective. Thank you for taking the time out and being with us today.
Thank you.
Time for a very short break. Back with a big market voice, Hartmut Issel of UBS Wealth Johnson. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है
Real was always her rebellion. Sania Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise.
back with India Market Open right here on NDTV Profit. Now, we know that the persisting Iran conflict, or at least the uncertainty around this, could bring in a GDP slowdown while inflation pressures already higher than expected. And against this backdrop, UBS has downgraded Indian equities to a neutral rating as well. Well, the question to Hartmut Issel, who is Head of Equity and Credit APAC and Chief Investment Officer at UBS Wealth, is how does he see the near term because of all the developments that have happened? And Hartmut, thank you so much for joining in. And usually we love doing long-term conversations with you, but these days the near term has become more important, simply because it's very difficult to crystallize thoughts in such an uncertain environment. And Hartmut, we thought in the morning when we were talking about it, that what has happened overnight with this extension of the ceasefire is effectively only increasing the uncertainty. Would that be a fair assessment?
I wouldn't go that far. Right? The way we can think about it, and also the reason why we have said as a house, now this is a temporary conflict, is look, 6 months down, slightly more than 6 months down the road, there's a midterm election in the US. But even if you look at it from an Iranian point of view, eventually you need to also have exports on the oil side. So high oil prices is not enough. You also need to be able to ship them out, etc. So I would still argue that before long, or more of a temporary situation where both sides come together and ultimately find something. This is what we have also seen a couple of weeks now. So I would still not assume, end of the year, we're still meeting again, and then we still have that conflict going on. It should be finished before that.
Hi, Tamanna here. That's, one of the most optimistic takes I've heard so far. I just want to come back to you in a bit more detail on that. What are the signs you're seeing that energy or the appetite to fight more is flagging on both sides? And is that something that maybe a lot of asset classes are penciling in?
Yeah, and we see more and more countries chiming in, both here in the region, in APEC, and of course the Europeans. We also know that, sitting together and seeing, okay, what can we do when all of this is settled? So I would say there's some moves. Yes, of course, we would all prefer if everything had been settled by now, but we can, on the other hand, also not say nothing has moved since this all started. So, I mean, there are moves in this direction, and especially if, as I mentioned before, we think about the incentives of different governments, not too many governments, in my view, that have an incentive to keep this on for 6, 9, or even 12 months.
What's the kind of timeline you see this wrapping up by? You talked about the midterm elections. Is that the sort of outward mark before which you are estimating this wraps up?
I would say a couple of weeks, before everything is completely officially settled, could happen, right? But even here, I wouldn't say normally, right? Should we say 4, 6 months from here? Right? Only then we're ending things. Normally, you would expect it to happen a bit earlier and coming to the midterm election, right? Because you also want to give the voters something to think about, not only in September or October, but probably before that. So I would argue maybe a couple of weeks more is possible, but more for the shorter term.
Hartmut, you are effectively saying that the US will decide when to close it, and Iran will be happy to play the game if the decision is in their favor, and you giving it an outer limit of 2 weeks odd. Would that be a fair summation?
Look, I cannot pinpoint it on exactly.
Yeah, agree.
Sure, but what we have seen, if we compare it with the first day, when all of this started to happen, when we see developments from different countries being in place, and then, but in terms of incentives, I wouldn't say only one has the incentive and one decides. They have to come together, certainly, and eventually everybody has to agree. But incentive-wise, again, I don't see why any of the sides really has an interest to say, 6 months, 12 months from now, we're still at it.
Which is a very, very fair point. But therefore, the question then is that if this comes to a resolution, let me not qualify it with adjectives, it comes to a resolution which the world accepts as a resolution, is there juice in equity markets, for example, in India, or could the damage from higher crude prices weigh in on valuations and foreign interest?
Yes. Two things, right? The oil prices, of course, they will not come down a lot immediately. So every inventory has to be filled up, etc. But then, as we know, financial markets, of course, then they will say, okay, once we really everything is clear, we have a solution. They will not necessarily wait for all of this to priced in. So what I would argue is, if we start with the US, for example, yes, we do towards the end of the year, we do see upside also for several other equity markets. Coming to India, some upside, I think, is also possible. More coming from the earnings side. I mean, if you look at the earnings season, it more or less plays out the way we had thought, i.e. that we're accelerating a bit the earnings growth, which came from a low base in the last fiscal year, where we are thinking a little bit sharper this time is, yeah, but what about the valuations of the market, right? That's always the other side. And here, of course, with higher oil prices, or energy prices, I should say, it's not only oil, especially for India, right? Gas prices also play a role, etc. And of course, what the government tries to do, like many governments in our region, right, is to try to help, as one would expect the government to do it. But of course, that goes in the fiscal side, and that gives, for example, on the 10-year also for India, right, that doesn't necessarily give us comfort that the 10-year yields will gonna come down a lot, which you need for higher valuations. So we see, if I mix the earnings and the valuation side in, bit upside for, let's say, the Nifty, for example, possible for India, but will it be the usual that we see, perhaps double digits? That's a bit hard to argue right now.
Do you have a Nifty figure in mind for end of the year after everything that's happened, Hartmut? And do you see any resilience, pockets of resilience in the Indian equity landscape?
Yes, maybe let me start with the resilience. What I like a lot, and we have mentioned this also to our investors for quite some time, is the biggest sector, so certainly the Nifty, so financials, or especially banks, it is coming. We had two drivers in place already. I mean, the loan growth was already double digit, and it stays that way. Asset quality is no longer an issue, but hasn't been for a while. So the third driver, which is also important, but is of course the interest margins that we're seeing. And if I look at just the last couple of days for the big banks now, yeah, slowly but surely they're certainly not coming down anymore. They seem to start to go up a little bit. This is also a trend I would expect for the next couple of quarters. So all three drivers here for the banking side, for example, are in place, and this would certainly be helpful. It's a bit like we expected.
Got it. Hartmut, just a follow-up to an earlier question about foreign interest for Asian markets, which got impacted by energy, and it happened across, right? Korea, Japan, China, India, etc. The conversation at the start of 2026 was that when the AI trade were to reverse, India would benefit simply because Korea, etc. have outperformed Indian markets so much. Do you reckon that once this conflict ebbs and a couple of months go, could foreign interests come meaningfully to India because valuations have been a bit more reasonable and there has been a massive bout of underperformance versus markets like Korea?
I would expect some of that. If I put the three driver that I see for our regions here, let's say APAC in general, right? Certainly there is AI, because we have three markets in the north that do this: China, Korea, Taiwan. Then we have what we call value up, which is a completely different driver. Japan has started it now. Markets like Singapore, some others also following it. And then I would put them in the category, rebounding laggards, I would call them. It's markets like India, for example, also Indonesia, where the earnings growth wasn't that strong, at least still positive in India. And in Indonesia, it was actually outright negative last year. But they're coming back. That's what I mentioned before. Right? Earnings growth in India seems to me it's starting to reaccelerate to some extent. So even if it's not an AI market, which is true, as long as that happens, and I think that should continue, I would be surprised if there were no interest at all on the foreign side once all this is over. Of course, India is seen as a stock market a bit more vulnerable to the energy side, fair enough. But then again, our belief is that it shouldn't take that much longer for these things to be settled. And then why wouldn't there be some interest there too?
Because you spoke about financials, the other end of the spectrum right now is IT. And there is a bit of a debate on whether there is light at the end of the tunnel for Indian IT companies. Wondering what you make of it. I know there is no AI trade in the Indian landscape right now, but will Indian IT companies actually survive that shift?
That's interesting. Also, if we look a bit global, software stocks, IT services stocks, it's not just the India stocks, right? It's anybody who, and traveling as well, right? So we had a couple of sectors where we see they came down, where I think the market also went or took it a bit too far. And we see in the last couple of months already, we see the end clients also for the Indian IT service companies saying, look, we're a regulated, heavily regulated corporation or industry, right? And we want to tailor something. Yes, if I get a language model, that's great. Many of us use these, or many also of the, pretty much all of the companies use them, but you need something tailor-made, right, to propose your value propositions. You are regulated. You cannot just only solve that with a language model, and therefore, and you have legacy systems in the back end, so somebody needs to integrate them, and more occurs to me, who will integrate them? The same companies have always integrated them.
Yeah. Okay, that's an interesting way of looking at it. Hartmut, thank you so much for speaking with us. As Hartmut Issel, Head of Equity and Credit APAC and Chief Investment Officer at UBS Wealth Management. Meanwhile, markets taken a dive for the worse. The Nifty down nearly 200 points, and you can blame the IT pack for it. If you pull up the Nifty IT, interestingly, there was an analyst on the show today, Neeraj, who came and said that Nifty IT will give you 13 to 14% returns as an index in the next few months. Well, if you're looking for lows, here they are, about 3.5% down on the Nifty IT. Painful over there. ABB India, those lines on your screen, ABB India is in focus after the India order inflow details are out. Sharp spike over there. These are commentary these are comments coming from the global team. ABB Global says the India order inflow in the first quarter of calendar year 26 has grown 26% year on year. Analyst estimates for order inflow growth was 7 to 9%, so far above. ABB will be investing approximately $75 million in Indian manufacturing and R&D. So some commentary from the global the entity, ABB Global, which has got the ABB India stock up and about. But let's talk about Trent. Big expectations from its Q4 numbers. We saw that at the opening session as well, right when markets opened. All of that has cooled off now, along with the market mood. But Mahima joining in to tell us what the street is expecting from Trent.
Right, Tamana. So, when we saw Q4 business update coming in, we saw that spike coming in the counter as well. And this is on account of the revenue growth coming in at 20% versus that of how it's done in last 2 quarters of 17% and 15% respectively. Plus, the store additions came in on a very strong footing. And that's why, the stock did see an uptick when the Q4 business update came in. Now, in terms of where estimates go, EBITDA is expected to see an uptick of around 22%. Margins might see a slight uptick at that 16.5% mark versus that of 15.9 earlier, and profit might see a growth of around 7% as per Bloomberg estimates. What you can expect from the earnings coming in, revenue growth better as compared to the last 2 quarters. Strong store additions, they've already announced that, but overall average revenue per square foot might see a reduction on account of the expansion, aggressive expansion that they're doing in terms of store additions. Citi has maintained cautious stance due to competition and store cannibalization. Morgan Stanley expects Q4 standalone EBITDA margin to improve by around 100 basis points, and Macquarie believes that same-store sales growth momentum will improve going forward as well. What to watch out for? I think stable like-for-like growth is something that we'll be watching out for, and improving throughput in the new stores is also something that we'll be looking at. Throughput ramp up of new stores and commentary coming in on that front, and sustainability of store addition moment also going forward. So this is the overall view of what you can expect from Trent earnings that will come today, probably post-market hours.
All right, we'll keep an eye on that. Thank you for that, Mahima. That's all the time we have really on India Market Open this morning. It's been quite an action-packed show, but from Neeraj, I and the team that put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एनवी सर से लाइव एनडीटीवी युवा पर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock.
You're watching NDTV Profit. I'm Mahima Bachajani and with me is Somit Sarkar. Before we take all your stock related questions, by the way, for all your stock related questions, you can either give us a call or send us a WhatsApp on the numbers that are flashing on your screen up there. But before we start doing that, let's take a quick look as to how the markets are doing. Let's try to pull up the Nifty 50. The Nifty 50 right now is down by about 200 odd points, largely dragged by the Nifty IT index. We're seeing the downtick coming in largely on account of HCLTech. You have your bank Nifty also, which is seeing a downtick of around 0.5 odd %, hovering around the 57,100 odd levels. Let's try to pull up the Nifty 50 heat map to see as to what counters are contributing to that pressure coming in. HCLTech now down by about 9.6%. So all your IT names, Tech Mahindra, Infosys, TCS, down in that range of 1 to 9%. And you have some other banking names, ICICI Bank, which is also seeing a downtick of around 1.5%, followed by Shriram Finance, also seeing a downtick of around 1.5 odd %. But on the flip side, you have Nestle still upholding the gains that it saw yesterday, closed 8% higher. Today also seeing an uptick of around 2.8%. Tata Consumer also up 2.5%. HUL also up 2%. So all your FMCG names ahead of their numbers coming in are seeing gains of about 2% each. NTPC, Tata Motors, Coal India are some of the other names that are doing fairly well in trade right now. Let's try to pull up the sectoral heat map and see as to what that screen is looking like. You have, of course, Nifty IT tanking the most, almost 3.7%, followed by Nifty Bank, which is also down by about 0.4 odd %. But on the flip side, you have Defense, FMCG, Energy, Realty, which are doing fairly well. Nifty Energy gaining the most, up 1% for the counter. Let's try to pull up the broader end of spectrum as well. The mid cap 150 and the small cap 250. The mid cap 150 is largely flat, but the small cap 250 is seeing gains of about 0.4 odd %. So not in tandem with what the benchmarks are doing right now. Quickly, the BSE 500 before I start taking all your stock related queries. The BSE 500 as to how stocks are faring there. Suntech Realty seeing gains for almost 10 odd %, and this is on the back of the numbers coming in. ITI, PNC Infra, ABB ABB India, just a while ago, ABB global numbers, global commentary came in, and on the back of that, the stock has seen a sharp spike. HCLTech, 361 ma'am, Tata Elxsi, Tech Mahindra, some of the other names that are down in trade today. But with that, let's also welcome in our guest for the day, Mahesh Ojha, VP Research Business Development at KC Securities, and Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining us now. Welcome to both of you, and a very good morning to the both of you. Mahesh, the first question that we have today is, and anybody who's holding HCLTech right now would want to know as to what should they do with their holdings. We don't have the name of the viewer, but overall your view, considering how the earnings have fared, what should one do who has HCLTech in their portfolio?
Good morning. So I think numbers are below estimate, so market reacted sharply. So I think valuation-wise, if you're looking from some upside can come, but yes, if it is a very disappointed number, so we have seen sharp reaction on HCLTech. But yes, from these levels, some upside can come slowly. After that, what we can review. Levels are attractive, but we are not much bullish on HCLTech. So message estimates, so any upside, then investors should try to exit from the counter.
Okay, all right. The next one is coming in on Suzlon. Sanjay from Bengaluru says that he's holding 3,114 odd shares at levels of 41. Says that he wants a short-term view on this one, considering 6 months of time horizon. Vaishali, your view on the charts for Suzlon?
Hi, very good morning. I think Suzlon is in a very strong uptrend. Near-term resistance we do see at 54 levels. So I think if 6 months is the horizon, I think he should continue holding with 48 as a stop loss. And once we see this stock moving above 55 levels, this can go towards 62. So I think hold and buy in dips, 47, 48 should be the support level.
Okay, the next one is coming on Zentech. Ramaya, who's writing us from Nellore, is asking about Zentech. She's got 145 shares bought at the levels of 1430. She's sitting on profits of over 47,000 rupees. Wants to know from a 2 years time horizon, what should be the target price that she could expect on something like a Zentech? Mahesh, I know target price for the next 2 years would be a difficult call, but overall your view on Zentech?
I think that largely company is doing good. So from a order perspective, from education perspective, I think company is doing good. We have seen lower level also, but I think from a 2 year horizon, if anyone holding, then I think they can hold the same, and easily we can see 15 to 20% upside moment in 1 year horizon. After that word, we can review on the same. So I think still 15 to 20% upside we can see in 1 year horizon. After that word, stock can be reviewed as per the quarter numbers.
Okay, all right. So that's the view coming in on Zentech. The next one that we have is on coming in on. In fact, this is a very broad-ended question that Puneet Saxena from Ghaziabad is asking. Says that he wants a suggestion from you, Vaishali, of 3 to 4 stocks that he can safely go ahead and invest 8 lakh rupees and with a minimum gain of 10% in the next 1 month. So the requirement is really wide and the expectations are really high, considering, with consolidation happening in the markets right now. But will you be able to give some stocks that you are tracking right now that could possibly give a good return in the next 1 month?
Yeah, I won't promise the time duration, but I do feel that there are quite a few stocks as far as, especially if we talk about healthcare section. So example, Fortis, we do like Fortis at these levels. Currently, it is at 930. So I would say buy this stock and accumulate with 880 as support. And in times to come, you can see a target of 1100. So that would be one of the stocks. The other stock, which I do like is Steel Authority of India, because overall, as we have seen that, yes, there is a good strength in whole of metal sector, and Steel Authority has given a breakout. So I would say accumulate this stock with 165 as support and look for a target of 200, 210. And the third one, which I would look, of course, look at the power sector. Overall, power sector is really buzzing. So Tata Power is one of the stocks, and 420 would be the support, and one can look at a target of 520. So I don't promise the time period, but yes, these are the stocks which look good to me. These are the targets that I'm looking at. So don't have a stipulated time period, but buy these stocks for a positional target.
Got it. Okay, so that's the view coming in on Tata Power. The next query that we have is coming in, and this is on. Okay, we've taken Suzlon already. This is coming on Nugent Software. Ambika from Chennai is holding 100 shares at the levels of 442. From a long-term perspective, Mahesh, your view on Nugent Software?
I think stock has beaten down largely in a few months. So I think some upside can come up to 540, 560. These range could come easily. So I think they can hold further for a medium to longer term. I think 6 to 9 months at low range. At least they should keep in mind. So for 560 level can come for keeping in mind for a target base.
Okay, all right. So that's the view coming in on Nugent Software. But I think Persistent System is the other one which is in focus today on the back of its Q4 numbers coming in. I think the overall, let's try to pull up the stock is down about 4%. Numbers largely in line with what the street was estimating. But I think a broad-based growth across sector did happen, but margins was something which was an area of concern. And I think that is why we're seeing a downtick of around 4% on the stock coming in. Revenue saw an uptick of around 7.4%. But, my colleague Neeraj Shah spoke to Sandeep Kalra, who's the CEO at Persistent System, listening to that conversation.
Sandeep, the benchmarks continue, but these are interesting times because not only it's a confluence of AI-led disruption, if I can call it that, but also geopolitics playing havoc with corporate outlook on business. How do you sum up your quarter and the year gone by, and what do client conversations suggest about what could be in store in the very near term? Because that is the piece which is disrupted.
Yeah. So I'll summarize the quarter and the year, and then I'll come to the questions you asked. So as you rightly pointed out, the Q4 for us came in with a healthy 3.2% quarter on quarter, 16.2% year on year growth. And in rupee terms, this was 7.4% quarter on quarter, 25% year on year. Interestingly, this was the year end as well. So I'll just summarize the year because that gives a slightly longer view to things. So for us, FY26 was another consistent year of execution. Now, in terms of the growth, we delivered $1.65 billion in annual revenue, growing at about 17.4% year on year. Now, this is the 24th sequential quarter for us for growth, and this is 3% or more 24 sequential quarters. So that is something we are very proud of. In terms of the profitability, the EBIT for the year came in at 15.6%, and this is a 31% plus growth in absolute terms over FY25. Similarly, the PAT came in at 12.6%, a growth of 33.2%. Now, for the full year, the order book came in at $2.4 billion in total contract value. Annual contract value of this is $1.8 billion. So this kind of puts us in a decent place as far as the next year is concerned. In terms of the macroeconomic situation, look, this war, everyone hopes from a humanitarian perspective and overall business perspective also. We all hope this comes to an end soon. We'll see where it goes. Hopefully, that should come somewhere to a logical conclusion. Obviously, there is inflationary impact of this globally. So far, the customer side of it, the more impact is on the AI side. That is a bigger discussion than the war. And in our mind, the next several years are going to be about service providers who build capability. It is not going to be about the best profitability or the cost side of it. It's going to be the best capability and moving up the value chain. And that's where we are focused. So I'll take a pause.
Okay, and I have some follow-ups there, but I want to read out a line that was there in one of the brokerage notes that I read this morning, that management reiterated their $2 billion run rate target by Q4 FY27, though appeared slightly less confident about strong growth in FY27. Did they read your words on the con call correctly?
So look, everyone has a right to read the body language, whatever else to this thing. All we can say is we have had 24 sequential quarters of growth. Those 24 sequential quarters of growth have come through good macro, bad macro, COVID, no COVID. We went public in 2010. From 2010 till now, our CAGR, compounded annual growth rate, is 17.3%. So if that gives anyone any confidence, look, future no one can predict. We don't give guidance. Our aspiration is the $2 billion. We are on that trajectory. Let the time pan by.
Okay. What within vertical, Sandeep, do you reckon continues to stay strong? I believe BFSI is a large part there, but is there some insight that you can give on the verticals?
So see, again, this is company to company dynamics for each one of us. Now, if we look at it from our perspective, BFSI followed by healthcare life sciences followed by tech seems to be the pecking order in the coming several quarters. And the reason for this is, despite the capability build being good in all of these, the technology segment is the one that is the most prone to adopting the AI part because they are the producers of AI. They are also not a regulated industry like healthcare life sciences or banking financial services. So that is where we will see good growth, but that will also have a good amount of compression in terms of effort. And so the story out there is going to be, while we are growing in volume in terms of the customers, the effort will shrink. Automation and AI percolation will be the highest, followed by the other segments. So that's the story, and we have pretty good customers in each of these segments. So from the last year gone by as well, if you look at it, the pecking order for our company was banking financial services, full year growth at about 28.4%, high-tech emerging vertical 13.8%, healthcare life sciences by about 10.1%. So that's the way we are looking at it.
Right, so that was the management, of course, of Persistent System, talking about what lies ahead of the company. But let's take a quick look as to how the next. In fact, let's take the next query, which is coming in from Naresh Kwalia, who's asking about Vedanta. Now, his question is that whether he should go ahead and buy Vedanta today or wait till the demerger happens and buy it after that. Mahesh, I'll come to you on this one because he's a long-term investor. What is your view on how should one proceed with Vedanta right now?
I think if anyone want to take advantage of demerger, then they could go ahead and buy the same. Still some room in the Vedanta, so they can buy on these levels. Still some room from my perspective that 880, 890 range could come overall after demerger. So I think it's an opportunity for grab the Vedanta in these levels.
Right, so that's the view coming in on Vedanta, but time to look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, I think IT is the one which is weighing down.
Exactly, and most of the sectors are actually in a very tight range, and we see the IT pack is giving a big drag to all the major indices. And look at the names. HCLTech is down 9%, Tech Mahindra down 5%, Infosys, TCS, all of them seeing selling pressure. Even ICICI Bank, if you look at it, that's also seeing a little bit of profit booking. What's working? We have some consumption names, and Reliance is there, which is in the green as well. But majority of the banking and most of the names are in the red. Of course, the geopolitical tensions which are there, that's also developing, and that's what we are seeing. But after a 3-day rally, we are seeing some profit booking in the markets, and maybe a technical pause will be there at play. The VIX also jumping up. But let's just have a look at the key long build-up stocks, which should be in your radar. Then this includes Godrej, Philips and Nestle, even though it's not very much convincing, but yes, Nestle is up more than 3% on the back of brokerage upgrades after a strong set of quarterly numbers. Let's look at the short covering candidates, and we'll come to that. Short build-up is a concern here. HCLTech is down 9%. Very weak set of numbers coming in, and that's also dragging the other IT companies as well. Tata Elxsi numbers were decent, but we are seeing a sell-off here. Long unwinding for ICICI Pru and Persistent Systems here. Nothing much to look about. Almost 50 to 60% of this market is in the red in the F&O space, but Adani Group stocks are doing really well. We had pointed out a positive news flow also earlier in the day. Now we see Adani Power, the stock is up 4%, and even Adani Energy, that stock is up 2% as well. So most of the Adani Group stocks are doing well in trade despite the markets being on the other side. So these are the important stocks which should be in your radar, and that's all in the F&O space.
All right, Chad, thank you so much for getting us those details with regards to where the F&O space goes. But we've Pradeep waiting by patiently. Pradeep, very good morning to you. What's your question about?
Yeah, good morning. Thanks for taking the query. It is regarding PNB Housing. I have bought PNB Housing at 932, 47 shares.
Okay.
What is the upside look like for a shorter term?
Okay, Pradeep, got your question. I'll take this up with Vaishali then. Vaishali, what are the charts indicating for PNB Housing? He's sitting on mere profits of around 2,000 rupees right now.
So, well, if it's a short-term view, then 1010 is the near-term resistance. So, if that is what you're looking at, then one should book profit near 1010. But if it is for a positional trade, then hold on. Let's see if the stock moves past 1010. Then I think it's ready for a further higher trajectory up to 1100 and higher. So, this is the way you can look into your stock and keep a trailing stop loss.
The next one is again a caller query coming in from Bangalore. Anita, you can go ahead and ask your query.
Yeah. Hi, ma'am. Good afternoon to everyone. So I'm having the transformers and rectifier shares of 300 rupees in 1,000 quantity. So what is the long-term and short-term view on this counter?
Okay, I'll go across to. I'll take the short-term view first. So let's go across to Vaishali and understand the view on transformers and rectifiers.
Well, so transformer and rectifier, I think the results were not great and we have seen a bit of a retracement. But having said that, I think continue holding with the stop loss of 280 because we are seeing some strength. I mean, stock, the worst seems to be over. So as long as 280 levels are held on and we see a new round of momentum setting in, this can go towards 380. So this is the way I would look at the stock. But short term, absolutely short term, then well, keep a stop loss of 290.
Okay, all right. So that's the view coming in on transformers and rectifiers. In fact, the downtick in the counter that we're seeing today is on account of miss in terms of execution when it comes to FY26 guidance, and that's why the stock is taking a knock. But the next question that we have is coming in from AK Bhalla, who's writing us from Jalandhar, asking about SW Solar. He says he's purchased this counter at 184 rupees, 2,000 shares a few days back. Wants to know if he can continue to hold or should he sell and book out, considering that he's seeing profits coming in on this one. Vaishali, he's a short-term investor, so your view on the charts for SW Solar, it's been buzzing since the huge order win it got.
So it's been in a very long consolidation since a very long time.
Yeah.
So I would say just continue holding. 205 should act as a stop loss. And if by chance the stock moves above 240, 240 is the near-term resistance. So if we see the stock moving above 240, then I think it would gain further strength and it can go towards 280, 300. So I think risk-reward ratio at this level is very favorable. Continue holding.
Query is coming in from Sudhir from Bangalore, and he wants to know whether is it a right time to enter ICICI Bank at current levels. Mahesh, any view on ICICI Bank? Should Sudhir buy at current price?
Definitely, they can go ahead and buy the ICICI Bank because the numbers are very pretty. And in banking sector, if you're looking from a peer comparison, then ICICI is outperforming. So from my perspective, in medium to longer term, ICICI would be preferred. And if you're holding for a longer term, 1,650, 1,700 level can be achievable. Bank really doing good in NIM, in NPA, and all the parameters. So my perspective, hold from medium to longer term perspective.
All right, so that's the view coming on ICICI Bank. I think we've got Prashant who's calling us from Bengaluru. Prashant, a very good morning to you. What's your query about?
Good morning, madam. Thanks for taking my call. So basically, I hold 70 quantity of Tata Motors shares. Now it is split to commercial vehicles and passenger vehicles. I bought it 5 years ago at 136 and 162 rupees. Now, should I hold these for further profits or should I book profits?
Your question is valid, Prashant, and you've been a patient investor. So, Mahesh, your view on Tata Motors overall, what should Prashant do? Should he book out?
If you're looking from a Tata Motor perspective, I think limited upside is there. So from a long-term investor, I would suggest partially profit book on these levels, and rest can be hold. Because largely, if you're looking 15 to 20% upside can come slowly, gradually. That will take some more time. So from my perspective, partially profit booking is advisable.
Okay, so that's the view coming on Tata Motors. But Mahesh, as Vaishali, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one is coming in on MTAR. Chandrasekhar from Bengaluru wants to know whether making an entry right now makes sense from a long-term perspective or not. Mahesh, your view?
The stock has done really pretty well in a shorter term time. So I think wait and watch. If any downside, handsome downside, then they can enter.
Next query is from Arvind, and he wants to know whether should he continue to hold Canara Bank or not for the next 1 year. Mahesh, any view?
They can hold the same.
Welspun Corp bought 100 shares at the levels of 570. Right time to book profits. Vaishali on the charts.
Continue holding with the trading stop loss.
Chandan Jain from Karnataka is holding few shares of Tata Consumer. He's saying that the stock has not been performing for the last 2 years. Should he hold for short term, Vaishali?
Hold. FMCG is taking momentum.
Eicher Motors or Hero MotoCorp, which one is a better bet to invest right now from a long-term perspective of 5 years? Mahesh, your view?
I think Hero MotoCorp can be preferred.
Harsha from Andhra Pradesh bought 22 shares of Policy Bazaar at a price of 1,750. He wants to know whether should he continue to hold or sell. Mahesh, any view?
There is a longer term view, they can hold the same.
Bajaj Finance from a slightly long-term perspective. Vaishali, what are the charts indicating? Is it a good buy? Guneet from Mumbai wants to know.
Accumulate would be a better strategy.
Right. GK from Bangalore is holding few shares of GE Shipping. Now for the next 3 to 5 years, should he continue to hold this, Mahesh?
Yes, definitely they can hold the same.
Hindustan Copper 180 shares bought at the levels of 315. Venkat Ramani wants to know if she can continue to hold this for the next 12 months. Vaishali on the charts.
Hold.
Arun bought few shares of Laurus Lab at a price of 648. He wants to know whether is it the right time to book profits, Mahesh?
Partial profit booking advisable.
Anant Raj, buying at the current price makes sense from a long-term perspective. Keshav from Chennai wants to know. 2 years is time horizon. Mahesh?
Definitely they can hold the same from 2-year perspective. Stock can do well.
Bharat from Andhra Pradesh is holding 2,000 shares of PNC Infra at a price of 228. Should he continue to hold or sell? Vaishali?
Hold with the stop loss of 200.
Okay, HDFC Bank bought 1,800 shares at the levels of 778. Our viewer wants to know whether they can continue to hold from a long-term perspective. Mahesh?
Can hold the same. Numbers are steady and some upside is there. So from a longer term perspective, hold.
Ashok from Andhra Pradesh has few shares of CG Power bought at a price of 690. He wants to know the short-term target on this. Vaishali?
850 is the short-term target.
Deepak Fertilizers, the target for the next 2 months. Jose from Kerala wants to know about this one. Vaishali?
Deepak Fertilizers currently 1258, near-term resistance 1300. If it crosses, look for target 1350.
Sudhir Reddy from Bangalore has 10,000 shares of Shipping Corporation of India bought at a price of 319. Should he continue to hold this, Mahesh?
I think they can hold the same.
Emcure Pharma, from a short-term perspective, V. Murli from Bengaluru wants to know if you can continue to hold. His buying price is 1618. Vaishali, your view on the charts?
So Emcure Pharma, 1600, 1580 should be the stop loss and hold for a target of 1700.
Sugunakar is holding 42 shares of Voltam Transformers bought at a price of 7,200. Should he hold or book profits? Mahesh, any view?
They can hold the same. Some upside can come. 11,500, 12,000 can come.
Okay, Ola Electric is the next one. Arjun from Jaipur wants a 6 months view on this particular counter. He says whether it will be able to touch 45 in the next 6 months. Vaishali, possible?
For that, 40 needs to be crossed decisively. Then next target is 45.
Bhaskar wants to know, he's holding 300 shares of JTL Industries at a price of 62. He wants to know whether should he continue to hold or sell. Mahesh?
Okay,
partial profit booking in any upside, partial profit booking advisable.
Okay, all right. So that's the view coming in on the last counter that we talked about. But, we have Renu Baid joining us on the phone line right now. And, I think Somit has been tracking this closely.
Well, yes, ABB Global, in fact, came out with its number. And what they have shown for the India business, they are seeing a order inflow growth of 26%. Now, I believe analysts were estimating this number to be anywhere between 7 to 9%. So let's get in Renu Baid. Ma'am, is this number that the Global has reported, 26% order inflow, much better compared to what you were estimating?
Yes. So if you look, the global parent, when they report the numbers, this is in USD terms for the India region. So for ABB India listed entity, when you compare, you have to knock off any intergroup orders as well as the export orders which they win. Now, normally, the way the estimates and forecasts are done, we were expecting in INR terms close to about 7% growth in revenues, which in USD term implies flattish or just 2% growth. Street was at slightly higher, about 6% kind of growth on the order inflows. Obviously, this includes exports. What we see from the group results of 26% India region growth, this implies that overall India region in INR terms would have grown by nearly 32% for them. And this growth definitely is a big beat compared to what analysts and investors were forecasting for this quarter. Even if there is a 5-10% adjustment for intergroup order flows or order flows coming in for exports, even if we see at least 20% kind of growth in order inflow this particular quarter for ABB India, that would be anywhere between 45-47 billion rupees, which is a beat to what Street was expecting, between 40 to 42 billion.
But one thing to notice here is that on a YTD basis, the stock has already run up 48%. And among capital goods MNCs, if you look at, I believe ABB is one of the most expensive one at this moment. So is there more upside from current levels?
So point number one, ABB has always been the most expensive industrial or capital goods stock, not just now, but for the last 2 decades of coverage that I have been seeing. It has always been expensive. The recent rally in the industrials or capital goods that we have seen is in anticipation of a rebound in the industrial investments and government initiatives to drive investment sentiments back here. And that's broad-based across all companies in the sector. In specific for ABB, if we see, yes, definitely the run-up in the near term was expecting positive tail news from the group release that we saw today. In my view, the near-term upsides are fairly priced in, and I would expect the stock rather to consolidate in the near term ahead of results. Our target price also incrementally suggests that in the near term stock would be a bit weak there. So we have a target price of 71.94 on the stock. And in the near term, we think clearly heading towards results, this quarter margins would be a bit soft. Impact of commodity inflation and QC-related import content would be there in 1Q. Plus incrementally, given the way we have had headwinds on orders and decision-making on new projects, especially end of March and April, there could be further, the management commentary in terms of recovery or rebound in private sector investments could indicate some postponement on that side. So I think the near term for ABB is fairly priced, and that is also true for quite a few other industrial names that we see, including Cummins, where we think the stocks are richly priced at current levels. Struggle to see upsides there.
Right. Just lastly, wanted to understand, ABB Global in its report also made a statement that they will invest approximately $75 million in Indian manufacturing and R&D. Was that fairly known, or is this a new investment?
Yeah. So a proper press release to this extent was out back in the month of Feb itself of the $74 million investment which the group has highlighted. Close to, as in for the India listed entity, it would be about $63 million of spending coming on the manufacturing side. The rest is in the global ER&D center, which the group owns there. This 560-570 crores of capex, which ABB India would be doing in the next 12-15 months, is targeting to double up on their manufacturing capacities in UPS segment, in medium-low voltage switch gears, including GIS, in motors, including IE5 range of products there. So clearly, a meaningful step up in absolute capex numbers for ABB India. 560 crores, a big number compared to approximately 240 crores invested last year. And a lion's share of this investment is going in sectors like end markets like data centers, transportation, renewables, power. So to that extent, we think growth should be relatively strong as we look towards CY 27-28 with higher local manufacturing footprint. But in the near term, 26 will still take some time for overall market and the order flow momentum to pick up.
Well, thank you, ma'am. Thank you for joining us and giving us those insights on the ABB numbers coming in. Well, time for a short break. We'll address more of your queries post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. Viewers who are just tuning in, you can either give us a call on the number that's flashing on your screen up there, or even send your queries to us on the WhatsApp number that's flashing on your screen up there. The next question that we have is from Prashant, who's writing us from Bengaluru, asking about data patterns. He says he wants to invest around 1.5 lakh rupees from a time horizon of 2 years, wants to know the right entry price, and should he invest the entire 1.5 lakhs in one go, or should it be in staggered manner? Mahesh?
I think in a staggered manner, data pattern investment can be done on these level also. So I think some upside could come on from these level, but a stock has done pretty well. So staggered way investment is ideally advisable.
Okay, the next query is coming in from Balaji Srinivasan. He's holding 300 shares of Alembic Limited, bought at a price of 115. He wants to know whether should he hold, average or sell. Mahesh, any view on Alembic?
I think they can average on the same. After that, some upside can come, then they can review on the same.
Right, so that's the view coming on Alembic Limited. The next one that we have is on HCL Engineering. Hanumanta from Hyderabad wants to know if he can add more from a 6 months perspective. He's already bought 100 shares at the levels of 788. Vaishali, your view on the charts?
So I would say accumulation, yes, because it's showing further new round of strength. It's crossing all the hurdles of resistances. So I would say yes, buy now. Also with 780 as support, add if it goes in dip, because I think a 6 month horizon, this can go towards 950 levels.
Okay, all right. So that's the view coming in on HCL Engineering. I think we have Arvind who's calling us from Bareilly. Arvind, go ahead, ask your question.
Good afternoon, ma'am.
Good afternoon.
मैम मेरा क्वेश्चन था डोम के मेरे पास 50 शेयर्स हैं 2396 पे मैं 50 शेयर और भी एवरेज करना चाहता क्योंकि अभी किताबों वगैरह का जो इनका सीजन वगैरह है तो जुलाई में मेरे को लगता है इनके रिजल्ट्स वगैरह अच्छे आने चाहिए तो क्या मेरे को एवरेज करना सही रहेगा या क्लासिकल लेकर मतलब जुलाई में के लिए मैं 3 महीने के लिए होल्ड करना चाह रहा हूँ 1 क्वार्टर के लिए बस।
ठीक है अरविंद, आपकी क्वेरी समझ गई। मैं ये वैशाली से लूंगी। वैशाली, सीइंग द चार्ट्स, डू यू थिंक एवरेजिंग 50 शेयर्स मेक सेंस राइट नाउ?
मैम मेरा ख्याल रहेगा 2500 के ऊपर अगर ये जाता है तो ऐड करिए, बिकॉज अभी तो रेजिस्टेंस पे है। सो ऐड करिए 2500 के आसपास अगर जाता है तो फिर आपको और भी आगे मिल सकते हैं 2700 के टारगेट। तो 3 महीने का होराइजन है तो आप उस हिसाब से करिए।
Okay, all right. So that's the view coming in on DOMS. The next one that we have is on L&T. Sheshadri from Guntur says that he's holding 40 shares at the levels of 4013 for L&T. From the next 6 months perspective, what is the target price that he can expect? Vaishali, your view on the charts?
So 6 months, I think first target would be 4250. Above that, it can go towards 4600.
Okay. The next one that we have is on MRPL. This is from Sushila, who's writing us from Bellary. She's bought it at the levels of 179. 5,227 shares is what she's holding in her portfolio. Short-term targets on this one. Vaishali, this question is specifically for you.
Okay, so keep a range of 178 to 200, 210.
The next query is coming in from Satyan, and it's on Max Healthcare. He's holding this counter for the last 1 year. Average buying price is 1,040. He wants to know whether should he continue to hold this or exit and buy Fortis. Any view on this, Mahesh?
I think they can hold the same. Largely, stock is not doing good, but fundamentals are good, so they can hold the same from a medium to longer term perspective.
Right, the next one that we have is on IIFL Finance. Our viewer has bought it at the levels of 506. What should be the targets that one should be watching out for this one from a slightly long-term perspective? Vaishali, your view on the charts?
I'll just have a look 1 second.
Sure. IIFL Finance is right now trading at 469. It's down by about 1.5% trading at its day's low point. Vaishali?
Yeah, so I think short term, I would say keep a range of 450 as support and 540 would be the next target resistance.
Right. The next query is coming in from Sandeep from Bangalore. It's on Hindustan Copper. He has 500 shares at a price of 642. He wants to know whether the stock will recover back to his buying price in the next 12 months. Mahesh, any view on this?
I think stock can go up to 600 level, 580, 590. That area could be a profit booking area if anyone looking from these levels. So from my perspective, any upside they can look on the for exit.
Okay, all right. So that's the view coming in on Hindustan Copper. We've got Pradeep who's calling us from Bengaluru. Pradeep, go ahead and ask your question.
Good morning, everybody. See, I'm having 200 shares of Aeroflex.
Okay.
Bought at 149 rupees in June 2024. So I'm a long-term investor. So I wanted to know whether I should hold it for say another 1 or 2 years, or should I book profits at this stage because it has just doubled.
Okay, got your question, Pradeep. I'll take this up with Mahesh. And in fact, if I'm not wrong, we had a conversation with the management yesterday in Small Cap Bazaars. I think you'll be able to find the conversation on YouTube. Aeroflex is what we're talking about.
Yeah, right.
We did have a conversation. You'll be able to, Pradeep, catch that conversation on YouTube channel of NDTV Profit. But Mahesh, by any chance, any view on this particular counter? It's a 4,000 crore market cap company, so it's a small company, but any view on this one?
We are tracking mostly this counter from longer term period. I think stock company is doing very well. So from a longer term perspective, still if you have a 1 to 2 year horizon, then you can hold the same. Stock has done well, but company working is very good. So from my perspective, if your view is longer term, then they can hold further from these level also. We are seeing some more upside in this counter from a longer term perspective.
The next query is from Ram from Chennai. He wants to know whether is it a good time to invest in ITC Hotel. He's looking to buy around 1,000 shares. Mahesh, any view on this?
Definitely, they can buy and hold the same stock. Have a upside up to 220, 230 level from this level. So keep stop loss nearby 134 or holding with target or at least 220 level.
BSC is the other counter that Sanjay wants to know about. He's bought at the levels of 3181 and 25 shares is what he has. Wants to know if this is the right time to sell or hold. This is Sanjay is writing us from Ahmedabad. Vaishali, your view on the charts for BSC?
Well, so depending on your time horizon, so if you're a short-term trader, then yes, you may book profit. But if you're looking at a longer-term perspective, then I would say that continue holding. It's in a strong uptrend and this can go towards 4,200 levels also.
Okay, the next query is from Jeet from Kolkata. It's on Bharat Electronics. He's holding 500 shares at a price of 403. Should he add more? What are the targets for the next 2 years, Mahesh?
They can hold the same. I think 500, 520 level can be achievable in BEL at least. So from my perspective, from a longer term view, they can hold the same.
The next one is coming in on Ace Construction. Sri Kumar from Hyderabad wants to know if this is the right time to enter from a 3 months perspective. Vaishali, your view on this particular counter?
Well, I'm sorry, I don't have this chart.
Ace Construction. Mahesh, by the time... Action Construction is something that you'll have to type to kind of find the charts. But Mahesh...
Okay, I got it.
Okay, you got it? Okay, go ahead.
So Ace Construction today we are seeing a good bullish candle. I would say that 900 would act as a support. 1000 would be the near term target resistance.
Right. The next query is on Yes Bank, and it's from Thirumal from Chennai. He's holding 10,000 shares at a price of 16. Okay, he's expecting the share prices to reach 100 rupees. I believe it's not happening anytime soon. But Mahesh, what's your view on Yes Bank?
The quarter number are coming good, but yes, stock has a limited upside. So from my perspective, if you have a 2 to 3 year horizon, then you can hold the same. But you can't imagine about 100 immediately. Yes, if you are looking from 1 to 2 quarter, if doing good, then stock can touch to 26, 28 level at least. So from my perspective, hold from a longer term prospect, but not be realistic.
Okay, all right. So that's the view coming on Yes Bank. I think we've got our next caller. Majib Khan is calling us from Pune. Majib, go ahead, ask your question.
Hi, my question is I am holding 150 shares of Vedanta at 678.
Okay.
Now with the demerger news coming in, should I continue to hold or is it a good time to book profit?
Okay, I think we've already answered the fundamental aspect of Vedanta. But Vaishali, your view on the charts, do you think booking profits right now makes sense?
Well, I would say so because the stock is really run up, or else keep trading stop loss, because right now I don't see any new round of momentum setting in. I would say partial profit, yes, book.
The next query is on Samman Capital. It's from Sunny. He's holding, his buying price for Samman Capital is 142. He wants to know whether should he continue to hold this counter or not for long term. Mahesh, any view on Samman Capital?
From longer term perspective, still fundamentals are good and still stock has a valued for at least 220 levels. From my perspective, in longer term view, they can hold the same.
Okay, all right. The next question that we have is, okay, did we take Samman Capital? Okay, the next one is on Crompton Greaves Consumer Electricals, and B. Somaya from Chennai wants to know if this is the right time to buy this one from a short-term perspective. Vaishali, your view on the charts?
So short-term perspective, yes, can buy. 245 should be taken as a stop loss, and 270 to 280 would be the target.
Okay, the next query is on NSDL from Murthy from Vizag. He's holding at a price of 1100. Should he average or exit, Mahesh?
I think they should wait and watch for the same because stock has a limited upside. So from my perspective, after that, what they can do on the same.
Okay, SBI Life Insurance is the other one. Viewer has 63 shares, bought at the levels of 700 in 2019. Wants to know whether they can continue to hold this from a slightly long-term perspective. Mahesh, I'll stick with you for this one. Your view on SBI Life?
If you're holding it a longer term perspective, definitely they can hold the same. But shorter term stock is can consolidate. But in longer term, I think 2,300, 2,400 level can be achievable in SBI Life.
Vimmi from Lucknow is holding 15 shares of Hindustan Aeronautics, bought at a price of 5,000. Can she expect the share price reaching her buying price in the next 1 year, Mahesh?
Definitely, they can hold the same. We have coverage on HCL, and definitely the stock can surpass their buying price. I think stock can touch 5,600, 5,800 level in 1 year horizon. So from my perspective, hold.
Okay, we've got our next caller. I think Ajay is calling us from Mumbai. Ajay, a very good morning to you. What's your query about?
Good morning. I bought STL Networks. I wanted to know the long-term perspective. It's a data center EPC player.
Okay, I see that you've bought it at good levels, Ajay. What was the thinking behind buying it?
I got it at 26 rupees.
Okay, got it. So basically, I just want to understand as to what made you buy that at 26 levels. But good that you're sitting on profits of over ₹1 lakh. And since you want a long-term perspective, I'll take this up with Mahesh. Mahesh, any view on STL Networks?
Partial profit can be done on just any upside level, or partial can be hold. Stock is doing good on news. I think some upside can come further, but in a longer term perspective, we have to review quarter-on-quarter number and further appreciation. From the stock perspective, stock is doing good from shorter time of manner. some limited upside can be also seen in stock. So from my perspective, partial profit booking is can be done on here. Partial can be hold for further 35 level.
Vaishali, quickly your technical view on Sammaan Capital. Any targets if you could suggest for 1 year perspective?
Sure. Well, so Sammaan Capital currently at 147, right? So 1 year perspective, I would say 135 as support. A move above 160 would give you a target of 190 to 200 levels.
Okay. The next one is coming in on Tata Consumer. Chandan wants to know whether he can continue to hold this from a long-term perspective. He says he's a patient investor. He's been holding this since the past 2 years. He's bought it at the levels of 1050 and it's not done much for him, right? Mahesh, what should he do?
FMCG sector is doing good, and we can see some more upside in Tata Consumer. At least 1,280, 1,300 level can come in 6 to 9 month horizon if you're holding. So from my perspective, still have some upside in the stocks.
Okay, Tata Consumer is done. The next one is from Suman from Hyderabad. He wants to know any view from long-term perspective on Tata Elxsi. He has 27 shares, bought at a price of 5,951. Any view on this, Mahesh?
We do not have coverage on Tata Elxsi.
Okay, then any view on Amara Raja? He also has 75 shares of Amara Raja, bought at a price of 1,150. Any view on that?
Amara Raja can be hold. Still, we can see some more upside in Amara Raja from my perspective. 950, 980 level can come in shorter time. So after that, we can review the same.
Okay, all right. So that's the view coming in on Amara Raja. The next one that we have is on Apollo Microsystems. Javeri from Bengaluru is asking about this. His buying price is 118, quantity is 100. Should he book profits, Vaishali?
Apollo Microsystems 289. No, I don't think so. Keep a stop loss of 275. The stock is in a good uptrend. If the momentum continues, this can go to 320.
Okay, the next query is from Ashish from Delhi. He has 500 shares of Piramal Pharma, bought at a price of 190. Should he continue to hold this for short term? Any view, Vaishali?
Well, so this has shown signs of improvement. I think continue holding with stop loss of 145. It can show a good bounce, at least to start with 180.
Coal India is the other one. Pramod from Bengaluru wants to know if this is a good time to buy this counter from a slightly medium-term perspective. Vaishali, your view on the charts?
Well, Coal India is showing strength. I think this can go towards 480 levels. Buy right now, and even if there is a dip up to 430, can add more.
Okay. The next query is on TRIL, that is Transformers and Rectifiers. Harish from Bangalore is holding 300 shares at a price of 360. His holding period is 6 months. Vaishali, should he hold?
We spoke about this. 290 should be taken as a stop loss. If it crosses 330, you will get higher targets.
Okay, the next one that we have is on Union Bank. Can I purchase this counter from a short-term perspective is what Avijay is asking. Vaishali, your view on the charts for Union Bank?
So Union Bank, I think it's quite run up, but well, if you're an aggressive trader, 185 should be the stop loss. If the stock moves above 198, 200, you can look for a target of 210. That's the way to look at this.
Dhiraj is holding 230 shares of Coforge at a price of 1,270. Should he continue to hold or sell? Mahesh, any view?
From Coforge perspective, I think stock has a upside in the Coforge, so they can hold the same from a medium to longer term perspective. Stock largely seen some value in stocks.
Okay, so that's the view coming in on Coforge. The next one that we have is on Bharat Coking Coal. Sunil from Bengaluru is holding 2,500 shares at the levels of 42. Should he average at the current market price from a long-term perspective? Mahesh?
From average perspective, stock showing 32, 34 range, then they can average the same. From longer term perspective, still hold.
Mayur is holding 200 shares of Varun Beverages at a price of 500. Should he continue to hold this counter for long-term, Mahesh?
Definitely, Varun is doing good, and from longer term perspective, still some steam left in the stock. So I think they can hold the same with 625 to 640 range.
Okay, so that's the view coming in on Varun Beverages. Mahesh as well as Vaishali, it's time for our rapid fire round. Try to keep your answers as short as possible. The first question that we have is on Cane's Tech. Sunita from Hyderabad is bought at the levels of 5137. Good time to average, Vaishali?
Yes.
Santosh is holding 500 shares of NCC, bought at a price of 112. Is it the right time to add more, Mahesh?
They can add the same.
Bajaj Hindustan Sugar bought at the levels of 18.6. Will it be a multi-bagger in the coming years? Mahesh, any view?
I don't think the multi-bagger, but yes, some upside can come in these stocks.
Shrikant is holding few shares of Bharat BEML, Bharat Earth Movers. Vaishali, should he continue to hold this counter?
Yes.
Indian Bank, Rani from Tripur has bought 300 shares at an average price of 962. What is the target that you can expect in a month, Vaishali?
In a month, the target that one can see is 945, 950.
Govind from Jharkhand is holding 467 shares of Godrej Consumer Products, bought at a price of 1088. Should he continue to hold this, Mahesh?
Yes, definitely they can hold the same.
Nuvama Wealth Management, is this the best price to buy from long-term perspective? Mahesh, any view?
Still they can buy on the staggered way from Nuvama perspective. If any downside, then they can add further.
Satvik from Lucknow wants to know whether should he continue to hold the 380 shares of Suzlon that he has bought at a price of 41 rupees. Vaishali, any view?
Yes, continue holding.
Hindalco bought in 2024 60 shares at the levels of 541. Long-term investor, Balasubramaniam is a long-term investor. Can he continue to hold going forward? Mahesh?
Definitely, Hindalco is doing good largely. So I still some left in this stock left. So I hold from a longer term perspective.
Umesh from Bangalore is holding few shares of Reliance Industries, bought at a price of 1400. Should he continue to hold this, Mahesh?
They can hold the same.
Is this the right time and good time to buy tire stocks? Sukumar Roy from Bengaluru is asking, and if yes, which one? Mahesh, any view?
I think they should wait and watch for further for tire stocks. So after that, what JK Tire could be preferred.
Aditya from Hyderabad has bought shares of Sai Parentals at an IPO price of 362. Should he continue to hold or book profits, Mahesh?
Sorry, I couldn't get.
Sai Parentals?
I think they can hold the same.
Titan bought at the price of 3490. 15 shares is what Akash is holding from a 2-year perspective. Can he continue to hold, add more? Mahesh?
They can hold the same.
Raj is holding few shares of Seagull India, bought at a price of 380. Should he hold for the next 2 years, Mahesh?
Hold.
Can I buy Tech Mahindra at the current levels is what Amrut wants to know from a short-term perspective. Vaishali, your view on the charts for Tech Mahindra?
Avoid IT for now.
Seshadri is holding few shares of Hindustan Zinc, bought at a price of 609. Vaishali, should he book losses here or continue to hold?
Continue to hold.
Jindal Steel and Power 500 shares bought at the levels of 900. Hold, book profits from a short-term perspective. Vaishali, on the charts?
Book partial.
Biswajit from Kolkata is holding 1000 shares of CSC, bought at a price of 157. Should he book profits or continue to hold? Any targets, Vaishali?
Continue holding. Given a breakout, can look for target 195.
NMDC bought at the levels of 69 rupees. 1600 shares is what Arun from Kolkata is holding. Should I sell or hold? Mahesh, your view?
Hold.
Shrikant from Bangalore is holding few shares of South Indian Bank. Should he hold or exit, Vaishali?
Continue holding.
IRIDA for the next 6 months, what is the target price that one can expect? Gopika wants to know this one. Vaishali?
Well, it's currently, I think, 134. Can expect 160.
Srinivas from Hyderabad is holding 58 shares of JSW Energy, bought at a price of 634. Mahesh, should he continue to hold?
You can hold the same.
Trident 3000 shares bought at the levels of 27. 6 months target on this one. Ansh from Australia wants to know about this. Vaishali?
1 minute.
Trident is the counter we're talking about.
Yes, just a minute. So what's the current market price? 26.
26.
So 6 months horizon, yes. So 6 months horizon can look at a target of 30.
Okay, alright. That brings us to the end of this rapid fire round as well as Ask Profit. Mahesh as well as Vaishali, thank you so much for helping us answer all those 86 queries as part of the management interview that we had. Thank you so much, of course, for giving us all your perspective. But we are completely out of time on this edition of Ask Profit. Do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the best shows in the KYC where I get you the hottest companies, whether you should stay with the company or avoid it, or is there any inflection point. I get you all these important details about the company. But before that, as per our format, I'm going to give you some hints. Try to guess this company. It's a Hyderabad-based tech company. Of course, there are a lot of them in the small cap space, mid-cap space, but try to understand more. The second important hint is there's an EGM happening on 4th of May for a fundraise. Now, will there be an inflection point going ahead? That's the big question to be asked. The third hint I'd like to give you, the stock is up 4 times in the last 5 years. Enough of the hints. Also, recently the company acquired a company in the AI services as well. So it's expanding in AI and also looking forward for more expansion and fundraisers. And the company, of course, the sky is blue. Yes, that's also another hint. The company's name is Blue Cloud Soft Tech. Yes, this is the company which we are talking about, but the street is very much interested on the 4th of May EGM as well. But why are we calling this company right now? It's a 1500 crore market cap company in the IT, service, AI, you name it. That's what the company says. The company is planning a pref issue and a fundraise, and of course that's happening as an EGM on 4th of May. So we'll try to understand where these proceeds will happen and what mode of fundraise would be there. They are implementing a segmented business tech model. Now what does this mean? This was told in the 3rd quarter that there will be a pivot or a change in the strategy of the company. So we'll try to understand this. The AI businesses, what are the key details and the growth outlook looking like? How is the company, having a shift, from an IT company or a SaaS or a CPaaS company, how they are moving to an AI-led company, and the demand trends in the client confidence, any kind of impact which has happened on the budgets, seeing the geopolitical tensions or the AI wave which is happening in the Northern American markets, and any technical spends earmarked for AI. Remember, a lot of spending is happening for the company. At times, this spending might be a key concern for the investors as well. And the acquisition of Global Impix, this is an AI acquisition, by when these incremental benefits will start coming in. So the story revolves around fundraise, promoter stake dilution, and of course, what kind of growth strategy would be there. And to decode all that, we'll be joined in by Vinod Babu Bolikonda. He's the MD at Blue Cloud Soft Tech Solutions, where we'll try to understand regarding the growth prospects for the company, Blue Cloud Soft Tech. It seems like a tech company. AI enablement is something which the company says. Recently, first time they did a con call in the 3rd quarter also. So I'll try to get you more details about it. It's largely untracked counter. It was established in 1991 in Hyderabad, and during that time, the tech wave had also started
in that era as compared to Bengaluru. Now the enterprise solutions, we talk about it, they have AI, cloud, Internet of Things and the cyber security solutions. So it seems like it's a product company prima facie on the first initial numbers. Now the services are there in cyber security and security operations as well. So largely you can see this seems like a CPaaS provider making its way into the AI segment. Now the products are in telecom, HR consultancy, healthcare, medical, education, media and surveillance as well. So that's a pretty much a wide range of services which is there. Recently they received an AI related order from Hyderabad Police and Telangana Arogya Sri ecosystem. So a lot of domestic wins are also there, and globally if they are expanding, maybe acquisition might be a good plan. This might be an inflection point for the company, and that's where my eyes are set on. There's an EGM happening, fundraise would be via pref issue, and they're going to explain the acquisition and the expansion plans. Is it there for the previous acquisitions this fundraise is happening, or is it happening for something else? Also, there's a strategic pivot expected to happen in this meeting. So of course we have time to judge the company on that, and that is why the management is also coming to clear some doubts. AI and data center theme is also there. Two important points which I liked. They're intending to establish a dedicated AI and data center infra vertical. Also, let's move into the key acquisition plans which the company will be pulling out, and they will have streams across the segment. That's what the management has stated. This is coming from the publicly disclosed information. But it seems like a lot of announcements are coming for this counter, and it takes time for a stakeholder and even me to digest so much of it. 100% of Global Impacts, it's a US based energy and digital infra platform. That announcement has come. That's a key acquisition coming in. Why this acquisition is coming in? That's important because this will help the tech enabled infra company operations. It seems a little bit Greek, but let me try to make it easier for you. AI related service enterprise solutions is something which the company is focusing at. The deal is valued at 372 crore rupees. And of course, the concern would be coming in on how will you fund this. The strategic data center platform in Odisha will be a part of the deal, and this is something which augurs well for the company. But is the worst over for this counter? The first problem is the lack of analyst coverage. That is also a big concern if you are reading this about this company. But this is why we call companies in KYC to find, is there any alpha here? There is no exposure of DIs. That was a big question for me. But another concern for me was the FIs. Their exposure reduced by almost half in the last 2 years itself. That means the institutions are not convinced in the story. And of course, the retail participation has gone up. The timeline of benefits from these acquisition announcements, by when will it actually happen? That is something which the street needs more clarity. And further promoter stake dilution on expected pref issue. Already the promoters dilution of stake has been there last 2 years. Now again a further pressure coming in this space as well. So definitely there are some questions in the balance sheet and the working capital and the cash flow segment. But is this the worst over? That's the question I'm putting it forward to you. But another question, or I would say an answer for you, would be the KYC ratings. How do we judge a company? Of course, the holy grail of financial statements and you could say understanding them includes income statement, balance sheet, cash flow. Remember, these are the most important metrics. Rest can be, played around metrics as well. Some vanity metrics also comes in, but we get you the best metrics to make your investment decisions in KYC. Return ratios, let's see how that pans out. I've taken ROC here. Shareholding, how the movement has happened, and the street cred, kitna paisa bana. Is it in the last 5 years? Has this been a multi-bagger? Over the last 1 month, 6 months, have the returns come or not? Valuation, very interesting group of peers I have got for you, and I'll explain you that, and the outlook for the company, what happens next, and that is what everybody wants to know about this company. The first one I would like to talk about is the income statement, and largely the numbers have been strong. FY23, literally there was nothing in the P&L, but then you see the FY24 numbers, FY25 numbers, and you see largely a good growth is coming in. The margin front is around 8 to 9%. Let's like to show the Q3 numbers to show you how the momentum is there, and sequentially on a year-on-year basis also there is a decent growth coming in for this. Of course, for IT companies we generally say this, so a little bit of moderation is there. We'll try to understand the business model of how the billing and the new client budgets come in, and largely the margins have been stable at that around 8.5 to 10% odd. the company has been able to maintain this margin. So prima facie on the income statement, it does seem that it's a positive reaction coming in when it comes to the analysis. But my concern starts coming in when I start doing the balance sheet analysis, and that is where even for an IT company or service-based company, that cash levels is something which I always look out for, and it's at a very lower level. Now, two reasons for it. Company has been spending a lot. The working capital we see has been pushed to its limits. Because of that, there's a big amount of trade receivables, and that becomes my concerns. Of course, that you can't see that in the borrowings a lot, but the trade receivables is a really big number, and that was my biggest concern for that. So right now, I would still say it's a neutral rating for balance sheet going ahead. But this concern continues, and of course, if you are having problems in trade receivables, you will have problems in the cash flows. If you will have problems in the cash flows, of course, the basic finances will be questioned for any company in KYC, and this is what has happened here. It literally looks like there hasn't been major cash flows coming in, and I checked it twice, thrice from the consolidated levels also. Understood with the management, there is a high working capital requirement in this kind of a business. But if, of course, it's a CPaaS or an AI related business, will this burn continue? And there's another fundraise happening. And of course, from internal accruals, it's not going to look like that's going to happen. So will that put more pressure on the balance sheet or on the return ratios? That is something to be concerned about. That is why it's a red flag for me. And for cash flow, I'll be giving this a strong thumbs down. But let's talk about return ratio, the other ratios also to look at. And of course, there are movements happening. It's around 7% in FY23, FY24, 19, and sudden a big jump happening. Of course, the ROC numbers, there are some elements in the balance sheet because of the ROC numbers going up. But net historically also, I checked the numbers. It's largely on the higher side when we speak about the return ratios. So I'm giving a benefit of doubt in my analysis to the company. And it's going to be a strong thumbs up when it comes to the return ratios. But another concern comes from is the shareholding portion. That's roughly around 38% in March 23. That is a little bit minor stake sell-off coming in from the promoters, and there's a pref issue also happening, so there'll be more further dilution. My concern comes here. DIs haven't come yet. There is no mutual fund or PMS taking positions here. So that's a bit of concern, but of course a company's size is also around 1400-1500 crore market cap, so it might take some time, and that's my main reason is lack of analyst coverage. But FIs who had roughly 23% stake, they have reduced 13%. So that is of course a concern coming, and public it's around 48%. So definitely right now a little bit of concerns is there. So shareholding, I would be giving this a neutral rating. But let's talk about कितना कंपनी ने पैसा कमाया. Street cred पे आ जाते हैं. सबसे पहले let's talk about it. And the last 1 month the stock has been flat. 6 months it's been dismal performance, just 20% downtick coming in. And also year-to-date basis, of course we have seen a small cap, mid cap stocks coming back in the rally, but the stock hasn't participated. But yes, almost you could say the 5-year basis, the stock has given a return of almost 3.8 or 4 times in the last 5 years. So congratulations if you're holding the stock for a long time, you have made money. But for the short period of time, for 1 year basis, you have the stock has given 18% return to you. But of course, from the 52-week high level, the stock is down 50%. So to balance things out, I'm going to give this a neutral rating when it comes to the street cred. Let's talk about valuations and interesting companies I have picked up for our analysis, and let's get going. Blue Cloud is having a last 12-month P ratio of 18 times. Now let's compare that with the peers, who are there somewhat in this industry. We have Nucleus Software, that's around 16 times. But the major CPaaS players, there was a time when CPaaS companies used to trade at 50 times. That entire SaaS derating happened, and now look at that, just 14 times and 10 times of companies such as Tanla and Root Mobile. Pretty much interesting, and there is also a connecting fact between Tanla and Blue Cloud, but I'm going to explain you that in a certain time period. But net, I'll say there is a big sector derating which has happened, and of course the valuations have fallen. So it's a neutral rating, I would say, right now for Blue Cloud. But also let's talk about the outlook. EGM on May 4th for pref issue, and this is for acquisitions, expansion. That's what we'll try to understand from the management. Maybe the company is at its lowest point. There might be a slight up move. Also the incremental benefits of AIS Anywhere acquisition. The company has been very bullish about it. We heard about it in the Q3 numbers. So we try to get in more details. And also the implementing a segmented business technology model. What is this actually all about? Is this a new lingo, or is there something genuine pivot happening from the company side? That's what we'll try to understand. And also, apart from this, the focus on AI-driven solution and next-gen 5G connectivity. This is something which is very interesting for me when I speak about the 5G connectivity and the projected revenue for FY27. That's around 3,000 crore. That's what they had mentioned. So we just want to understand, are they on track for it or not, since the company has not come out with its Q4 results. Remember, it's a silent period, so a lot of numbers might not be shared, but I'll try to get you the best questions possible. So it's a positive view coming in for the outlook. But let's revise the numbers. Company ko kya number दें, क्या ratings आया है. This is very much important, and let me get you here. The concern for me is the cash flow segment because of higher trade receivables. Return ratios, income statement are doing well. Then again, a little bit of concern comes when the shareholding, that itself we see the concern starts coming in because of the big dilution from the FIs and lack of DI participation. And looking at StreetCred valuation, it's a neutral rating, but net the outlook remains strong. And 4th of May is the date. That's where we'll be focusing on the key announcements. The final rating on our analysis is largely in line, I would say, but definitely be cautious on this company unless we don't understand the entire picture of where this company stands. But net it's 4.5 out of 8. And now we'll be joined in by Vinod Babu Bolikonda. He's the MD of Blue Cloud Softtech Solutions. But there is a little bit of interesting fact about him. Of course, he has 24 years of leadership experience, but he held some good leadership position roles also, and this includes Tanla Solutions. That was the point I mentioned you, and the Brigade Group. And of course, he was an independent consultant. So somebody who knows the tricks and the trade of the industry is with us. And of course, the education coming in from Bits Pilani as well. So it's pretty much interesting to have a chat with Vinod Babu Bolikonda. Vinodji, good afternoon to you. It's always a pleasure to have you. I would just like to start with that important date, which is the 4th of May. There's an EGM happening. What will be this fundraise all about? Any kind of a number we can associate that, and where will it be used?
See, by and large, the EGM, first of all, thanks a lot for having me here, Sharath, and thanks to NDTV as well. So the fundraise which we propose for in this particular EGM is more focused on our upcoming initiatives as a part of a strategic plan that we are doing for AI, hyperscale data centers as one part of it. And then we're also key focused on the ongoing projects, in fact, which have taken a multifold of business in terms of the order book. So, which is what is being covered as a part of this acquisition and expansion plan. Acquisition we already announced about the Connectem is something which we are going to place that as a part of the EGM on May 4th, along with our results.
Right. And there was also a mention, Vinodji, regarding the implementation of segmented business technology model in the 4th quarter. Now, what does this mean? Does that mean there's a change in the business model for you, or are you adding an AI layer to your application services, which is already there for the enterprises?
Sure. If you look at it, I explained in a previous my discussion with NDTV and other channels also. So we had been an early bird in AI, especially. So we have built the AI stack. We understood right from 2022 onwards, like the drift of the technology towards AI, and most of this existing platforms, we started upgrading them to the AI level, and that's a layer that we have added on top of the existing products and new products also, which have been evolved in cybersecurity as well as in AI healthcare and other enterprise smart apps, which we have developed in this area. So majorly the healthcare digitization, industrial automation side of it, and the edge AI chip, especially the next thing that's going to happen is the edge AI, majorly. So decentralizing the AI computational power. So that is where, for our surveillance-based technology, which is what we call it as an access generating, for this, right at the camera level. So we have developed this, coming up with a semiconductor chip, which actually we developed as a part of our client contract. So initially, and subsequently the same model we started implementing over here also.
Right. Right, Mr. Vinod. That's a pretty interesting take which you have taken for both the AI and the semiconductor portion. I just wanted to understand a little bit about the incremental benefits which was there for the most recent acquisition which have been done. Of course, there is a Odisha data center angle to it as well. Just wanted to understand what kind of benefit is there, because you have almost given a $1 billion target for the investments in AI and data center. So we won't talk about the bigger picture, but I want to know the shorter picture and by when the benefits can start coming in your financials.
So we'll be seeing that benefits start coming into our financials, especially related to our AI data center initiative, which we proposed close to about $1 billion investment over a period of next 7 to 8 years. So which will start taking on our balance sheet right from 2026 onwards, but as smaller quantities. But as we move forward, by 2027, you'd be seeing a significant portion of the balance sheet would be covered with this AI data center business. So coming to the point of Odisha, now the data center that we are talking about, we have, as a part of our strategic planning, we have acquired this GeoImpex company, which is having a land bank over there. So which is a suitable and appropriate location in terms of the proposed subsea cable network is also might be coming there. So that's a place where strategically we have chosen, instead of, as we already committed, of investing this $1 billion. So this asset would be adding more value. And in fact, this has cut down an initial portion of land acquisition.
Vinodji, that's a pretty interesting take. We got a clarity on your fund usage. We got a clarity on your AI initiatives, timelines. But I want to understand in the con call, there was an FY27 revenue target of 3,000 crore or something like that. The announcement was there. What is this actually? Is this the order book? Is it the revenue? And have you met the guidance?
Sure, this is majorly an order book, which we have a pipeline of orders, which we bagged through our companies and the new acquisitions which have brought in. So the significant, they cover a significant amount of revenue projection, in fact. So along with our organic business that we have, which is already being there for a long time, and on top of it, the new businesses, whatever we have added into the blue cloud, is going to bring in this number, and we are confident in terms of achieving it.
Confident achieving it in FY27. A little bit of concerns is there for a lot of investors and new folks who have tuned in to understand your company, because of course we look at the past data also, and there is a little bit of concern in the cash flow and the balance sheet segment, and that is something as a student of finance, first question is for me is to ask that, sir, the cash levels are on the lower side, the trade receivables are very high. I saw the FY25 balance sheet. Now your working capital management for a company like yours who's spending in AI a lot, and of course there is a capital raise happening and a promoter dilution is also happening. I just want to understand, how will you manage your working capital? You're doing so much, you're spending so much, already the trade receivables are very high. So what's the mitigation here? What's looking like for FY26?
Yeah, I'll cover one liner about this cash flow issue, which is being seen from a negative context. But in fact, it is not a marginal pressure or a negative reflection of operational weakness, but it is like a timing phenomenon, I would say that. So if you look at it, in FY25, the revenue approximately was around 797 crores that we have clocked, which is now 59% above to the previous year on year. And the kind of a larger contracts that we have taken, the larger enterprise and infrastructure contracts that we have taken, and receivables has increased due to the milestone based, because in AI, the gestation period is higher in terms of building the models according to the client requirements would take a longer time. And because of that, the billing structures have also taken impact where revenue recognition precedes this cash realization. And most importantly, the cash realization has lagged the revenue recognition, which is a common feature. Majorly, you'll be finding companies like Blue Cloud, where in a growth phase of infrastructure and enterprise-related programs that we are core focused on. And the whole idea of mitigating this is tightening the receivables that we are closely tracking and ensuring that we have a collection oversight is there. And then we started renegotiating on the contractual structures in terms of making them more improved milestone-based, significant milestone-based payments, which will be realigned where the clients have positively responded back. And strong internal working capital monitoring model, which already we have. In fact, we made it a little on a higher side now. And evaluation of the working capital financial options, like whatever the smooth timing gaps that we could take in a bridge fund kind of a thing. And creating evaluation from time to time and maintaining that billing discipline is what core focused on. To make it more positive, and it would be reflected in the next quarter.
That's a very big point you have stated. The benefit of change in contracts will help the working capital in the next quarter, if I'm not wrong, right?
That's right. And clients have also positively responded based on the quality of the work that we have delivered and the kind of positioning that we have made for the products.
Right. So, of course, yes.
Confident about.
Right. So, of course, the management is confident about that. But apart from that, I just wanted to understand overall the demand trends and client confidence, be it AI or non-AI. Have these budgets been impacted because of the wave of AI which we have seen in the US markets, or a little bit of derating which is happening in the SaaS or the related SaaS services space?
We don't find, especially if you look at it, last 2 quarters, the kind of orders that we have received or, the enhancement of whatever the existing orders that we had, the scope of it. So it shows a trend. Yes, there is a slight pressure in that area, but essentially, if you look at it, this kind of trend is no more, in a near future. We don't see any kind of a stopgap for this kind of a trend. It will keep going as we move forward from here. So we see that clients are no more now fixed, still haven't come down in terms of the budget fixing up. Yes, there is a kind of an enigma that has been set on the AI front. So essentially, like more of the investments have moved on to the AI, and subsequently people started actually withdrawing from that area slightly. But again, the technology partners remains to be same, the players remains to be same, and the market requirements still haven't changed, but it is increasingly high ergonomically year on year.
Right, and of course we have understood and you have clarified a lot of the concerns which is there regarding your stock. But I want to ask you a last question on the industry specific. How is India actually gearing up for the AI industry? Will we be something like what a US does and we become a back factory for it? Or is there something new innovation coming in, especially in the AI names like your company or your peers? How is that setting up for India?
That's an excellent question, Sharath. Not only just for the Blue Cloud, but across companies, peer companies like Blue Cloud. So India is a very good pavilion, and in fact, government initiatives are also, and the policy structures that they have brought in, changes that they have brought in, and AI initiatives that have come up right from the MIT to Information Technology Ministry. So the kind of support that they are giving seems to be, India will have a different position in AI. Down the line, and especially when you look at the geopolitical situation also at various places. So that would be an advantage, in fact. So because of the sanctions or whatever the various issues, earlier we had some kind of a pressure. So in terms of the IT business as well, but now we see that now things are changing because of the geopolitical situations. People are looking at the countries like India in terms of where they can invest or rely upon for the qualitative products and AI technology.
Mr. Vinod, it's always a pleasure to talk with you, understand about the company, and the beauty about KYC is to find out the real story about a company. It's always a pleasure to have you with us, and best of luck for the future. So this is the So this is the management of Blue Cloud Softtech. Of course, the street is wanting to understand what's happened on May 4th, the AGM, where they'll be talking about their pivot in a strategic manner. And of course, there are some concerns on their trade receivables, but yes, from the next quarter onwards, that will change as well. For more interesting stories like this in KYC, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते NV सर से लाइव NDTV युवा पर। He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak.
Tepid day of trade on the Lal Street as heavyweight HDFC Bank and IT stocks drag. Sensex sheds nearly 700 points. Energy and FMCG remain resilient. IT stocks see sharp selling pressure after HCLTech's Q4 results, and weak growth guidance spark fresh worries about demand in the tech sector. Infosys persistent tech Mahindra pull the index down. ABB India in focus after global parent says India order inflow in Q1 CY26 grew 26% YOY. ABB Global to invest approximately $75 million in Indian manufacturing and R&D. Sugar stocks rally post ethanol-related government announcement. Union Minister Nitin Gadkari said that India should aim to achieve 100% ethanol blending in order to reduce import fuel dependence. Sources tell NDTV Profit that the government is considering a revision in voting right cap in banking. A higher revision from the current 26% may be on the anvil. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take a look at the market. Yes, Nifty 50 has recovered a slight bit from the low point of the trading session, but it's a weakish day of trade. From losing about 185 odd points, now it is less than 150 points. So it's a gain of about 30 points in the last few minutes of trade. A large part of this particular let-up that is being seen and a little bit of recovery could be coming in from some of the tech sectors, tech companies which had been falling in trade. But remember, a largest part in terms of the contribution for Nifty 50, 150 odd points that is lost, that is totally on account of two sectors, especially IT sector, and that is led by the disappointing results which did not meet the expectations of HCLTech company, and that has really been a drag on the IT sector, the worst performer today. And apart from that, the heavyweights in the banking space like HDFC, ICICI Bank really taking the lead, and SBI, Kotak Mahindra Bank, all weighing heavy on Nifty 50. So these two sectors really comprise of the entire 150 points that is lost on Nifty 50. But at the current moment, in the last few minutes of trade, there has been a slight bit of recovery, say about of 30 odd points. So keep that on the radar. When we talk about the sectors, well, it's the energy, defense sector, as well as some of the consumption play. Those are the sectors which are really taking a lead, but there are minor gains. On the downside, IT is a huge draw down on the overall market, over 4% down on the IT sector. Mid-cap universe, though, is outperforming the key indices today. So the mid-cap index is still positive and gaining 0.25% at the current moment. So keep an eye out on the market, and it is a weakness that is really creeping in once again. Now let's also take it through the market expert who's joining us. Dilip Bhatt is joining in with his expert take on the market. All right, we'll touch base with Dilip Bhatt in a bit. But before that, let's also take a look at the energy sector that is really gaining with 1.3%. So that's the sector to watch out for. Dilip Bhatt, the founder of Pedigree Advisory, is here. Dilip, always a pleasure to get chatting with you. What do you make of the volatility in the market where there is one good day and the other day of weakness, and especially the IT sector is a big drag today?
Good afternoon. I think the volatility is here to stay without any doubt, and we are all feeling it. We are seeing this volatility as the markets have seen a fair amount of bounce back. And I think this bounce back is what is at play at the moment in India and globally. Globally, though most of the indices have crossed their previous top, in India, it still remains to be seen whether they will cross the previous top. I'm sure they will sooner than later. But at the moment, I think the way to look as what I would say is, first you play for a bounce back, and then from the bounce back onwards, the fundamentals, both the company's fundamentals as well as the macro fundamentals will come into play. And that's where that is what will decide the trajectory and the direction of the markets.
Right. And Dilip, when we talk about the IT sector, and you've seen a fair bit of results coming in from the top 5, majority have really posted the results and the commentary as well as the guidance. What do you make of the IT sector, and how will you really play that?
Sure. I think the IT sector had definitely fallen quite a bit in anticipation of all the kinds of worries, apprehensions, all impacting their volume growth. And to a great extent, even the visibility for them. I think the depreciation of rupee has come in very handy for them to support that thing. So what was more important is not the quarterly results, but the management commentary, as you very rightly said. And management commentary is nothing which inspires all that great confidence. I think we are still talking about, at best, something which is linear, which is going to happen. And even if that happens in a growth, that will be good. But I think the growth apprehensions will still remain. In a way, as what I would say, that the IT sector, the sheen was wearing off gradually. The labor arbitrage that India had, the USP, I think that played out very well over last maybe 15, 20 years. And possibly if that is what is going to be the USP, market is not ready to really look at it in a very serious way. But the major tailwind in favor of IT sector is the conversion of free cash from EBITDA is very high. The core ROE, ROCs are still very good. So in a way, I think, as what I was just mentioning somewhere else, that the IT company may soon slip into something like what FMCG sector was, where the volume growths continued to be very tepid, very muted. But FMCG sector was very expensive. Fortunately, the tech sector is not very expensive. And with the kind of free cash flows they are giving and the dividend, that dividend and the buyback gives you a very good dividend yield. So somewhere at a particular point of time, the IT sector can become a good buy. And tactically also at some point of time, it may become a good buy. But on a longer term basis, it will play a role of a defense rather than giving you any proactive returns.
Right. Also, Dilip, when we talk about the energy sector, now energy is bifurcated into the traditional and the new age energy spaces. And of course, the benefit of the war situation and the fuel shortage has really come on the green sectors per se, which has been benefited by even the EV space and the battery space. How do you play this whole space? And in terms of valuations, in this kind of a market, do you see the investment, value picks in this particular sector and the potential for growth for a medium-term perspective?
From a tactical and strategic point of view, I think what we certainly, the renewable energy, as what you said, the green energy comes into play in a very good way, whether it is solar, whether it is wind, and everything related to that around, whether it is ethanol or something related to with the batteries or the storage of the power. I think all those things come into play in a very big way because India is very well placed as far as the solar part is concerned, and even to great extent, even the wind part. So I would say that one can focus on this sector and some of the leading names. I think, for example, you have Wari, which looks pretty good. Premier Energies looks pretty good. I think slightly away from that, insulation energy, that looks pretty good and interesting. So I would say that this sector, and even Suzlon, I would say. So what I will think about it is that this sector is something which one can play as a short term, or short to medium term also, and maybe even in the long term, because all of us have felt the pinch because of the war. And I think this sector will, investors will root for this particular sector and companies within this sector. So that's one thing which I think should do well. And along with that, I would even think something like EVs will play out very well in the times to come, maybe in the next 1.5 to 2 years. So I think this two sector, as far as the energy is concerned, energy sector is concerned, looks pretty good. At the same time, I would say something like even NTPC would also look very good because they're combined. They're having a good blend of the conventional and the non-conventional also.
So right now, Dilip, how much cash are you ascertaining in the market? Or the momentum also and the insight also from most of the market men is that the next quarter is going to be a significant drawdown because of the war situation continuing and the crude oil prices still above 80-90 levels. So how will you really play and how much cash will you ascertain? What will be your investment strategy?
So I think slightly on a top-down basis, if one were to make a very broad estimate of the Nifty EPS growth for FY27, I think it should be anywhere in the range of 11 to 13% is what our broad estimate is. We are refining that, and that is still under process. But that is also subject, that is also vulnerable to a downward revision as the quarters progress. And that's what we have seen happening in the last couple of years too, that at the beginning of the year, whatever Nifty that was estimated, that was revised downwards couple of times. So I think this time it will be no different. But more important, I think this run up to this June, July is something where I think one will get some very good opportunities to buy some of the stocks slightly on a longer term basis. And one may not necessarily expect those runaway rise and huge multi-baggers, but I think that's something which can give you a good, decent return over 15 to 18 months. So this is what we will look for in a run-up to June, July months. And most important, as what you said, that first quarter, of course, is something which nobody is expecting anything great. But as what I said, more important, is it going to also impact the couple of quarters following the June quarter is something that needs to be understood.
Right, Dilip, in fact, that's the biggest aspect to watch out for, and also not baked into the market valuations and momentum as well. But next buying opportunity can present itself after the next quarterly results. And after that, the assessment of one, a monsoon, and the second going to be the future earnings based on the war situation. Thank you so much for sharing your insights, Dilip. It's always a pleasure speaking to you.
Likewise, always a pleasure. Thank you so much.
Thank you. All right, let's shift focus on one stock which has been a cause of worry now today, post their earnings as well as the guidance, the weakish guidance, and the market is not seeing any let up when it comes to HCLTech. Very disappointed, and that is really punished by over 10% pressure really on the downward side for this IT bellwether. Now, HCLTech slips to, remember, 1 month low after the weak Q4 results. And I caught up with the management, C. Vijay Kumar, who's the CEO and MD of HCLTech, and asked him about the factors that will really aid the company's growth going forward and much more. Listen in. My first question to you, of course, the guidance that you have now given is a wide range, 1 to 4%. Can you give us a sense on what are the variables as well as the factors which will either tick up the growth at 4% or will come down to 1%?
Yeah. Good morning. Yes, our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're in a 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue. And we have two client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's right. And when we talk about the discretionary spend, Mr. Vijay Kumar, how is that really picture developing? What are the factors which are really impacting? And the global turmoil and uncertainty that we are really seeing on the economic front as well. How much of that is impacting the discretionary demand for your space?
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that has been caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And the last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27.
All right. So that was the management of HCLTech. Discussing the guidance as well as the perspective. Remember that in this particular guidance, they have not incorporated the 2 acquisitions that they made last year, which are pending approval, and that will add 1.5% of growth whenever the approvals come in, and that's outside the guidance that is already given by the company. That's one point to really note. Could be a bright spot for the next financial year. All right, brokerages stay cautious, but on HCLTech, after a weak performance and soft outlook, Citi maintains a neutral rating, cutting its target to 1,385 rupees per share and citing weak Q4 numbers as well as subdued FY27 revenue guidance that could really weigh on the stock near term. Investec also echoes the caution, flagging client-specific issues and also lingering revenue headwinds into the first quarter of FY27. While near-term sentiment remains pressured, both brokerages still see HCLTech relatively better placed versus the peers over the medium term. So that's the big word really coming in. That stock is seeing no let-up in sight, down over 10%. All right, another important company from the IT bellwether side is Infosys, will be the last one to really report its numbers on April 23rd. Here's a source-based information which we have independently confirmed. Salil Parekh is likely to get an extension of 2 years post his term ends in the next year, that is March of 2027. Now remember that Salil Parekh's second term as CEO is unlikely, which is going on, is unlikely to be extended over the third term, full term of 5 years, and only 2 years extension could be given. And Infosys board is also likely to discuss the CEO's extension along with the results on April 23rd. Now here, this particular discussion is coming in for a few specific reasons, which our sources have confirmed to us and shared the insight on. First, Infosys is looking to send a signal of stability as well as continuity by giving Salil another 2 years extension. Also, Infosys does not want to cause a leadership disruption, and an abrupt one at that, because it has been stable 2 terms with a good amount of growth for Infosys under Salil Parekh's leadership. So in a challenging time for the IT sector, they do not want to really send out a cautionary leadership disruption, and therefore want a smooth planning of succession with part extension to Salil Parekh so that the handover is going to be smooth and the business is not impacted by the change at the top brass. We did reach out to Infosys on this. There were no comments on the discussion on the CEO's tenure. All right, looking at the IT sector, and remember, it's the biggest dragger in the market today, and another set of results coming in, Persistent Systems. That stock is also seeing a huge amount of pressure in trade today. In fact, the entire IT pack is the biggest dragger, and that particular index is down over 4.5%. So Persistent Systems, that reported a largely in line set of numbers, was posted the 24th straight quarter of growth. In fact, Puneet is standing by with more details on the brokerage verdict on how the future is looking for Persistent. Tell us, Puneet.
Back of results. Now we've seen a disappointing set of numbers from HCLTech, and that's slightly having an effect on Persistent as well, because while the numbers weren't half bad, it's the sentiment that is getting hampered today across the IT pack. So for Persistent specifically, results were below estimates for some brokerages like Nuvama, but over a 3% constant currency growth is quite decent in the current environment at this point of time. The only fair bit is valuations, and that's where brokerages like Citi continue to maintain their bearish view. They've said specifically that they maintain a sell rating with a target price of 4,230. They say while Q4 was largely in line, there's a significant valuation expensive largely for Persistent system at this point of time. They've highlighted that macro uncertainty is there according to the management, but they remain confident at this point of time to drive market share gains within the business accounts. They've also highlighted that that Citi continues to be cautious at this point of time on the sector given the high competitive intensity as well as the AI impact at this point of time. Another one like Nuvama actually has mentioned a similar point of view where they feel that current growth of almost 3.4% constant currency was slightly below their own estimate of 4% constant currency growth on a quarter-on-quarter basis for revenue. But again, much higher than what the peers are reporting at this point of time. Nuvama retained a buy target price of 6,100 versus 6,000 earlier. Has also highlighted that there continues to be a persistent pressure on the industry as of now, but growth and commentary was slightly a tad soft for Persistent. So something to watch out for in FY27 because they maintained their guidance, but for now, largely seeing a rub-off effect from the other players like HCLTech.
All right. Thank you so much, Puneet, for joining in with all those details. Now, stellar quarter by Nestle has really seen bullish stance from several of the brokerages, and that stock is really smiling pretty with over 2% gain in trade at the moment. And many of the brokerages are hiking the targets amidst the sequential growth. Mahima is here with all the details. Mahima, tell us.
Right, Nisha. So, as you rightly mentioned, a lot of brokerages have kind of gone ahead and, hiked the target price for Nestle. And this is on the back of the way earnings came out yesterday, because a 500 crore beat as per what analysts were versus what the analysts were expecting. And, this was expected to happen, right? The target price hike coming in. Morgan Stanley has maintained equal weight, hiked the target price to 1461. They're saying strong beat coming in on top line and margins. Goldman Sachs has also hiked the target price to 1425, maintained the neutral stance. What they're saying is the GST cut benefits has played across categories. Rate cuts, quick commerce expansion are the key driver going forward in H1 FY27. Gross margins are likely to remain stable on account of stability in overall raw material pricing. Investec has upgraded it to hold, given a target price of 1426, says sweet momentum continues, robust operating margins on account of cost efficiencies, and await more compelling valuations and continued evidence of growth momentum before considering a further upside. Jefferies has also maintained hold with a hike the target price of 1325. They're saying that ad spends rose by 50%, signaling a growth mindset. Despite this, EBITDA margins expanded to a multi-quarter high even while gross margins contracted, and they retained hold rating just on the back of stiff valuations on this particular counter. Macquarie has also maintained neutral, hiked the target price to 1400. They say this overall, this quarter has been healthy in terms of sales growth, and this can be sustained going forward. Growth was led by GST rate cut linked grammage increases as well as rural distribution expansion, and they maintained neutral considering the limited upside at the current 63 times FY27 forward EPS. Lastly, Citi has also maintained by hiked the target price to 1675. This is the highest target price amongst all brokerages. What they're saying is that all-round beat to support premium valuations is what we've seen this quarter. Believe growth momentum is sustainable over near to medium term, supported by brand strengthening and execution. And despite 20% stock rally in the past month, expect earning trajectory to support premium valuations. I think the key takeaway is that good set of numbers, sustainable going forward as well, but valuations looking very high.
All right. Thank you so much, Mahima, for breaking that down for us. Another important stock on our radar, transformers and rectifiers, that trades under pressure after missed FY26 guidance in the Q4 results. Varsha is here with a whole lowdown on what's really not working for this particular counter? Varsha, tell us.
Well, let us start with what did not work when it comes to this quarter, that is Q4 FY26. The higher revenue did not translate into profitability growth, number one. Then you saw the margin compression. Q4 FY26 margins were 15% versus 19% last year. Higher ESOP expenses and contraction in gross margin impacted EBITDA margins, and Q4 order inflows was down 47% year on year. While what did not work for FY26 over FY25 is they missed guidance across key metrics. Execution was expected at around 2,600 crore, but they came out with sales of around 2,500 crore. So overall, lastly also, if you see the closing order book was at 5,000 crore versus expectation of 8,000 crore, and CFO turned negative at 110 crore due to working capital stress. So overall, did not meet the guidance, and Q4 number was a miss.
All right. Thank you so much, Varsha, for taking us through that. So lots of earnings, lots to digest as well. But it's an end on markets at 12. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कुछ खास होने वाला है।
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, good afternoon. You know, it's an interesting day of trade with the kind of sell-off that's coming in when it comes to IT as a sector. You know, there are individual pockets which are seeing some smart gains, but it's a very interesting setup because your volatility is also pretty high right now.
Right. Good afternoon, Hiral, for that. And yes, there was a big gap down opening as we had anticipated on the geopolitical developments which have happened. But a minor recovery the market is trying to attempt. And overall, we might see a little bit of consolidation until and unless we see something more further on the ceasefire front. Nifty Bank, let's have a look at where the action is and see what's the momentum happening. If you could just point out the Nifty Bank, it hasn't fallen much and it's about to touch its green mark, coming to its flat portions. So definitely the banks are definitely holding up nicely. But let's look at the factors right now at 12:30. Which are the important factors to look at? There is a consolidation expected in the markets as the war fatigue is dragging on. That's a big concern coming in. Also importantly, if you look at the next important trigger, that is the profit booking we are seeing in the last 3 sessions, which we had seen a good up move. So there is a technical pause chances and it's healthy for the markets also. Apart from that, looking at Nifty, there's an immediate support bounce has come from 24,350 levels. And for Nifty Bank, I've given a support resistance range ranging between 56,900 to 57,300. So we'll be focusing on that. But the broader indices are doing really well, Hiral. 3:2. The value buying in SMIDs is continuing. And that's a good momentum. If you could show the small cap and the mid cap index. The IT index is being dragged by weak HCLTech numbers, and that's where the biggest sell-off and the drag is happening. But on the other hand, there are 3 sectors you should be focusing on: power, FMCG, capital goods. All of them doing really well in the trade as well, and good strength is coming in. But apart from this, other factors also is important, and most sectors are still in a very tight range and they are looking for triggers as well. But mostly global asset classes do not have any direction. They are directionless right now. And the focus definitely comes back to the Indian market on the Q4 earnings, and 3 earnings are coming. SBI Life is down 1.5%. Trent is there, and Tech Mahindra. These are the larger names. Havells also is there, which should be in your radar. These are the earnings which should be in focus. So definitely we'll be tracking them. But Hiral, this is the entire picture coming in. It's just stock specific and earning specific is something which we are seeing in the market right now.
Absolutely, Sharad, because on the watch list, names like HCLTech, the biggest constant currency degrowth that we've seen in 20 quarters. Infosys as well, there's a CEO transition that could be on the cards tomorrow when the board will be meeting, so that's putting pressure. In fact, the entire IT pack is under pressure. Techem muted expectations. TCS, again, it's a fresh sell-off that's coming in terms of IT majors. Weak revenues reported by a Tata Elxsi as well. Moving on, ABB is a very interesting one where ABB Global has come out and said that the order inflow has grown 26% on a year-on-year basis, which is above what the street was estimating. A strong result reported by Suntech Real Estate. Websol, now you have Vijay Kedia, who has bought stake in the company, and that's the reason why that stock is up in trade. And PNC Infra did see a strong up move in yesterday's session and today as well on the back of being L1 for a 300,500 crore order. Ethos has been buzzing in trade as well on the new boutiques that they've been opening. Tarol is very interesting because, the stock has been in focus for all the good reasons, but in terms of Q4, margins have contracted and they've missed the guidance. 361, again, a weak set of numbers. Brokerages are bullish on a Nestle. Trent, a double-digit revenue growth is what the street is estimating. Tata Consumer is gaining for 6 consecutive sessions. And you have Amara Raja, ITI, both of these seeing smart volumes. Sugar stocks, again, domestic pricing that could be coming in, in terms of aid to exporters. And you have, Minister Nitin Gadkari's comments when it comes to ethanol blending, which is positive with sugar companies as well. So that's what we're watching out for. But Sharad, over to you to actually take the rapid fire with Kunal Rambia.
Thanks a lot, Hiral, for that. Good afternoon, Kunal. It's always a pleasure to have you with us. And we'll start our rapid fire segment. And the first group of stocks is the IT pack. Of course, HCLTech has been a drag, but we are seeing a good basket selling happening here. Do you think that the trend might continue going ahead, or is there any good risk-reward ratio?
Good afternoon, Sharad. Thanks for having me on the show. So yes, as we discussed earlier also for the IT sector, I think these counters have corrected too much and still they are consolidating near the lows itself. and 4 years of underperformance is giving us that comfort to hold on to it for now. So TCS is a buy from our side, and the good level to think of buying will be around 2350 to 2400, and that's the zone to watch out. If there is a further sell-off, then it's a sign of worry, but otherwise it's a comfortable zone.
It's a comfortable zone buy coming in for TCS, but another stock, Kunal, in focus is Sunteck Realty, healthy pre-sales collections, operational update coming in. Your views on it? More value buying to come?
Yeah, again, Sharad, this counter has been more or less a laggard in the last 2.5, 3 years. The strong support is at around 275 and the resistance is placed at around 500 levels. Though it has bounced from the support level, but excluding today's behavior, overall the performance has been negative. So I'll stay away from this counter for now, and I'll wait for some consolidation to happen.
Right, and Kunal, your next view on Websol. Ace investor Vijay Kedia's name also comes in the shareholding pattern. Do you see the momentum continuing, or should advise the traders or investors to, not take a position right now?
See, good volumes happened somewhere by the end of March, and now this counter is making a clear higher top, higher bottom formation on the lower time frame charts. So yes, with the stop loss of around 85, one can think of adding this counter. But just one caution: this counter generally heads for the upper or the lower circuit. In that case, one has to be careful on the risk management.
Exactly, risk management is a very important idea to talk about. PNC Infratech, that company has got 3,500 crore order, from important authorities. Your views on that? You can see a sustained up move going ahead for this?
No, I really doubt, because the overall trend on the weekly as well as the daily chart is negative. In fact, right now it's trading near the day's low. So I'll stay away from this counter unless there is a clear trend emerging from the present levels.
You're talking about PNC Infratech, right? The stock is up 7%.
Absolutely, but after making the high of 234, it's trading at 222 right now.
Okay, fair enough. Another stock is Ethos. So of course, expansion plan, the news flows is coming in. But Kunal, just wanted to get your views on Ethos. Is there any important levels to track here?
Absolutely. On the weekly chart, in last 2 years, this counter has consistently made bottoms near 2150 to 2200, and the resistance is at around 3200. It's a range bound trade. It's a clear thumbs up on this counter. Keep the stop loss of 2400, and one can keep the target of 3200 for the midterm to come.
Kunal, your views on 361 Wealth Asset Management. Of course, the numbers had come out. Is there any sort of breakout levels to look at right now?
No, this is a clear avoid again, because the overall this counter has not done much, and even on the daily chart it's showing negative trend as of now. So it's an avoid.
Right, it's an avoid. Next stock, Nestle. Strong set of numbers in last trading session. Today also doing well on back of broking upgrades. Your views on that?
See, these are the counters which have never shown any negative trend as such, and now it's trading near the fresh high, all-time high. In fact, it gave a fresh breakout of 1390 in today's session itself. So yeah, it's a clear buy, but at these elevated levels, risk reward ratio for the fresh entry is negative. So wait for some kind of correction to think of buying. Good support can be 1325 to 1330.
Right.
And that can be the good level to think of buying.
Kunal, another FMCG company I would like to talk about, that's Tata Consumer. Just even if you pit it against Nestle, any value emerging here, or your stance will remain the same?
No, it's absolutely the same. Excluding today's behavior, the counter was absolutely in the trend, but today's up move is massive, and again offering unfavorable risk reward ratio. The breakout is now placed at 1230. So one can think of buying either about 1230 or think of buying near 1150. That can be a good level to watch out for.
Right, and ITI, that stock has also been gaining in the Nifty 500 index last time I checked. Your views on that? Good to do some profit booking, or there's some sustained up move from here?
So since 2023, this counter is in sideways consolidation. Support is at around 250, and the consistent resistance this counter faced is at around 350. So yeah, it's a buy as of now. Stop loss can be 275, and the short-term target can be 350. But definitely, it's a range-bound counter, so take an exit near 350.
All right, that's rapid fire for you. Over to you, Hiral, for the Google trends.
Thank you so much for that, because these are very interesting names that you've discussed right now with Kunal. But let's see what's actually trending on Google. I'm sure the IT pack will be making it to Google Trends as well, because everyone wants to know what's happening there. And to your surprise, it's missing. It's Nestle, Trent, Reliance Power, Tata Power, Geo Financial. These are the ones which are there. And if you talk about power companies, It's, I think, been last 6-7 trading sessions where power companies have been on Google Trends as well. Kunal, anything that you like from the power pack? Because it's been in everyone's focus area. A lot of fundamental bets are also coming in for power as a sector that could be aiding the AI rally from here on. Now, if you have to look from the charts perspective, anything that you like?
Good afternoon, Hiral. So the counter which I like the most is Geo Financial. This counter has, corrected significantly from the highs of 350 and now consolidating near 240 levels. And in fact, last 15 to 20 trading sessions, this counter is making a curve formation right near the support. So considering the stop loss of 220, one can definitely look at Geo Financial. The breakout though is pending, which is about 250, and the positional targets can be 290. So that looks favorable to me from the risk reward point of view also, and from the formations point of view also.
Okay, so that's Geo Financial Services. Kunal does not really prefer the power pack at all. But thank you so much for joining in. Always a pleasure to speak to you as well. But moving on, HCLTech, a 22-month low is what we've seen on the constant currency growth front on the back of weak Q4. In fact, the stock also has tanked in trade. Jasmeet is here to tell us what's not really worked for the IT major. The stock's seeing cuts of over nearly 11% as we speak. Jasmeet, what do you have for us?
Well, thank you for that. Here are the key reasons what might be creating an overall trouble for HCLTech and what's not working for the company. Firstly, the overall CC growth, which came in at negative 3.3%, which is lowest in last 20 quarters compared to the COVID-19 level. Apart from that, the overall FY26, we saw the overall guidance was missed by the management. The overall CC growth came in at roughly 3.9%, but the management had guided for nearly 4 to 4.5%. So we see a miss even that, despite the management had raised the overall FY26 guidance in the previous quarter. While thirdly, the overall AI deflation, the management has stated will have an impact of 2 to 3% in coming year. So that will be the reason why the company might see an overall impact in terms of the top line performance. Apart from that, the overall guidance in this quarter was quite soft. It came in at 1 to 4% range, but whereas the street was estimating a guidance of roughly 3 to 6%. While management also sees delays in the month of March, which got impacted in the Q4 and led to the overall decline in the margins, and management expects that overall delays of the client to continue in Q1 as well, so it can have a spillover, negative spillover in Q1 per se. While lastly, if you look at overall client issue, the company has 2 client issues at the moment in terms of retail and manufacturing category. So further overall commentary on that seemed negative in the overall Q4. So that's something that Street is worried about. If you look at the last aspect, the company sees low discretionary spending coming in telecom sector, and the overall telecom segment of the management is under the trouble.
Okay, thank you so much for that, Jasmeet. Let's also listen into what C. Vijay Kumar, CEO and MD of HCLTech, had to say in terms of their outlook for FY27.
Our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're in a 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue. And we have 2 client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's the management of HCLTech talking about the growth prospects of the company. And joining us now, we're having Gaurang Shah of Geopolitical Capital. Good afternoon, Gaurang. It's always a pleasure to have you. Just wanted to understand your views on HCLTech. It's been a big drag coming in for the entire IT pack.
One small correction, Sharad, it's not Geopolitical Capital, it is Geopolitical Investments. I hope you update that record. It's a kind request. And yes, thank you so much, Sharad, for having me on the show. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Sharad, are a part of our fundamental research team recommendations from a long-term point of view. Our company or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So a disclosure, HCLTech, we have a positive coverage, we have a hold. Yes, the numbers and the verbatim going into the future was a little bit shade below than what the street estimated. And historically speaking, Sharad, if you actually go to see, HCLTech has actually stood out in terms of numbers when you compare it with other large cap IT names, TCS, Infosys, Tech Mahindra. But this time around, as the management was giving a verbatim in terms of what went wrong and what is likely to stay a little bit subdued, I think possibly you might see, and that's one of the reasons why you are seeing, because IT contributes to a great extent in the Nifty, and that's one of the reasons why IT sector is pulling the markets down the way it is. Having said that, we hope that over the longer period, and our recommendation, if you eventually decide to invest in IT, is to have at least 1.5 2 year plus time horizon. Innovations that will happen will also have its impact, whether it are negative or positive. That will depend upon which way the news flows with respect to innovation is going to come through. But we maintain a positive stance on HCLTech and other large cap IT names.
Just a follow-up question, Gaurang, is on Tata Elxsi. The stock is down 5%, but the numbers were quite decent. And of course, margins beat estimates also. Your views on this, especially anything good in the mid-cap IT space or even Tata Elxsi?
So amongst the mid-cap plays, we have Coforge, we have Tata Elxsi as a disclosure. Amongst the smaller plays, we have Tata Technologies, Science Limited, KPIT Tech. And I think Tata Elxsi has been going through a rough patch, Sharad, over the last couple of quarters when it comes to earnings delivery. I think they need to get their mojo back in terms of business strategy and, of course, improvement on numbers and delivery.
Okay, so that's the entire IT pack. But let's talk about the capital goods space. You have ABB, an interesting move that we're seeing on this counter on the back of the commentary that ABB Global has come in and given with regards to India. What they've indicated is that the India order inflow in the first quarter of calendar year 2026 has grown 26% on a year-on-year basis. And the order inflow has grown 52% on a year-on-year basis in the fourth quarter of calendar year 25. Now, analysts were actually estimating for an order inflow growth around 6 to 9% in this first quarter. IFL was estimating the order inflow to grow around 7% to 4,014 odd crores. And Nuvama was expecting a 9% growth at 4,100 odd crores. The stock almost at the day's highest levels. Let's also quickly listen in to Renu Baid, what she had to say in terms of the analysis as she tracks the space pretty closely.
The global parent, when they report the numbers, this is in USD terms for the India region. So for ABB India listed entity, when you compare, you have to knock off any intergroup orders as well as the export orders which they win. Now, normally the way the estimates and forecasts are done, we were expecting in INR terms close to about 7% growth in revenues, which in USD term implies flattish or just 2% growth. Street was at slightly higher, about 6% kind of growth on the order inflows. Obviously, this includes exports. So what we see from the group results of 26% India region growth, this implies that overall India region in INR terms would have grown by nearly 32% for them. And this growth definitely is a big beat compared to what analysts and investors were forecasting for this quarter. Even if there is a 5-10% adjustment for intergroup order flows or order flows coming in for exports, even if we see at least 20% kind of growth in order inflow this particular quarter for ABB India, that would be anywhere between 45-47 billion rupees, which is a beat to what Street was expecting between 40 to 42 billion.
Okay, so that's the word coming in when you talk about ABB. Gaurang, your view when it comes to ABB, you're talking about the global commentary versus what India will look at in terms of the performance.
Hi, Hiral. Good afternoon to you as well. So, the entire capital goods engineering space looks quite attractive, again, from a long-term point of view. Be it ABB, be it Siemens, be it L&T, be it names like Vatek, Wabag, Thermax. On specific ABB, yes, we do have a positive coverage from a long-term point of view, and we maintain a positive stance. And my personal sense, Hiral, is that, these orders are now going to come in at a much faster run rate. And some of the companies are very good in terms of their experience, expertise, manpower, technology, and capabilities and capacities to execute that order book. So we remain positive on ABB and the other names that I mentioned.
From the capital goods segment, now let's move on to the earnings also. Transformer rectifiers, a very dismal set of earnings coming in and stock also tanking in trade. To give it more details, we are joined in by Varsha. Varsha, what's the entire setup looking like for this company? Why the stock is down?
Well, company did post a weak set of numbers for Q4 FY26. Let's figure out what did not work in quarter. So higher revenues did not translate into profitability. If I were to talk about margin, there was a margin compression. Q4 FY26 margin came out to be at 15% versus 19% last year. And the impact of EBITDA margin that you're seeing is because of, a contraction in gross margin and of course higher employee expenses, which led to, a disruption in margin. Q4 order inflows also was down 47% year on year. For FY26, if you see, now let's talk about what did not work for FY26. FY26 sales were expected at around 2,600 crore but came out with 2,500 crore. So there was a miss over there. Even margins were expected at around 17 to 18% but came out at 15%. So miss in margins also. A closing order book was at around 5,000 crore versus 8,000 crore expected. And if you see, CFO turned negative at around 110 crore due to working capital stress. Now they are, for FY27, they are expecting 3,200 crore. EBITDA margin guidance has been given at 15 to 17% and capex of 600 has been planned. So overall, weak set of numbers, then guidance miss is also are the key reasons why you're seeing the stock in pressure today.
Thanks a lot, Varsha, for that. But this might be first of many also, because Q4, Q1 will be impacted on higher material cost, energy prices, and a lot of guidances might be missed. Gaurang, just wanted to get your view on this transformer rectifiers. Of course, it was a darling once for the street, but definitely execution works and other macro impact is being seen in the counter.
So, Sharad, along with that, I believe, and I stand to be corrected if I'm wrong, there was some news-based negative overhang also a couple of months back, which led to a very sharp and a deep correction on the stock. If I'm not mistaken, it was at 600 or 700 odd rupees, and from there it has virtually corrected 50% or more. We don't have any specific coverage on transformers and rectifiers trial. Won't be able to give specific, but one needs to be careful, Sharad. When it comes to problems related to execution of order book, then that should ring alarm bells.
That's a key concern as well, and right now we can see the stock is down 7% also. But on the sugar space, we are seeing a good buying happening, and of course, important commentary coming in from the government, from Nitin Gadkari, that India should aim to achieve 100% in ethanol blending. 3-4 important positive reasons for the sugar stocks to rally. This, of course, includes that the domestic sugar pricing is decent enough for exports right now. There's a diversion also at play because of the elevated crude prices. And this is, I'm talking about Brazil also, which is the largest exporter of sugar. And remember, the export quota, that has also been raised for the current season as well. And largely people are wanting more ethanol diversion and also hike in the pricing as well. And all augurs well for the sugar related companies as well. And to get in more perspective, let's hear in what our Minister Nitin Gadkari had to say about this industry.
आज हमारे देश में 22 लाख करोड़ रुपए हम इसलिए खर्चा कर रहे हैं कि हम 87% हमारी एनर्जी जो है इंपोर्ट करते हैं, और इसलिए इसके अलग अलग प्रकार के आयाम हैं। पहला आयाम ये है कि क्या ये 87% एनर्जी जो हम इंपोर्ट कर रहे हैं, आज जो हमारे वर्ल्ड में जो अभी विशेष रूप से जो स्थितियां पैदा हुई, उसके कितनी अड़चनें हम सब सेव कर रहे हैं, फेस कर रहे हैं, इसका अनुभव आप सब ने लिया, उसका वर्णन करने की मुझे आवश्यकता नहीं है। और इसलिए आत्मनिर्भर बनना ये हमारे देश के हित में सबसे बड़ा उद्देश्य है।
That's 100% ethanol blending, which is very interesting. Gaurang, what do you make of the commentary that Nitin Gadkari has given in terms of ethanol blending and the impact in terms of sugar companies? Anything that you like?
So, Hiral, we used to cover, currently we don't have coverage, but we used to cover Balrampur Chini at one point of time, and that stock did outperform to a great extent, even when it comes to the peers. Currently, we don't have any specifics, so I won't be able to give you buy, sell and hold, but ethanol blending has been an issue for a pretty long period of time. And I definitely, all of us would agree with the Honorable Minister, Mr. Gadkari, that we need to bring down the dependency and create more viable means of clean and green fuel, which is available domestically and virtually realizing that Atmanirbhar dream that Honorable Prime Minister has spoken about. This will take time, but definitely the move is on. Sugar sector will do well, but unfortunately, Hiral, sugarcane prices are controlled by the government, and so is sugar prices. So that creates a little bit of problem.
Yep, controlled by the government. But thank you for that commentary in sugar. But another stock, a quick view that I would want is Nestle. Stellar quarter. A bullish stance from several brokerages as well, where target prices have been increased. Where Morgan Stanley has increased the target price to 1461. Goldman Sachs, they have a neutral and they've hiked the target price to 1425. Investec has also upgraded the stock and increased the target price. And likewise, Jefferies has hiked the target price to 1325, with the Macquarie increasing the target price to 1400. So across, you've seen the target price increase. The stock's seeing gains of around 2%. What do you make of the earnings, Gaurang?
Well, the entire FMCG pack, the only problem here, let me first address the concern. And the concern here is the outlook given by Skymet and Met Department when it comes to the rain gods. 92 to 94% deficit, a long-term average below normal. This time, these are preliminary, forecasts that has been given by Met and Skymet. If there is a situation that develops and if this unfavorable turns out to be favorable over the next couple of weeks and months, then definitely it will be a good news for FMCG pack. The reason why I say this, Hiral, is because large part of your top line numbers comes in from semi-urban and rural India.
Absolutely.
We remain positive on Nestle, Britannia, HUL, ITC, Dabur, Marico, etc.
The lot everyone is positive on. But thank you so much, Gaurang, for joining in. Always a pleasure. But completely out of time. But that is a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कुछ खास होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to...
Tepid day of trade on the Lal Street as heavyweight HDFC Bank and IT stocks drag. Sensex sheds nearly 640 points. Energy and FMCG remain resilient. And IT stocks see sharp selling pressure after HCLTech's fourth quarter results and weak growth guidance sparked fresh worries about demand in the tech sector. Infosys, persistent Tech Mahindra pulled the index down. Meanwhile, ABB India is in focus after global parent company says that India order inflow in the first quarter of calendar year 26 grew 26% on a year-on-year basis. ABB Global to invest approximately $75 million in Indian manufacturing and R&D. Sugar stocks rally post-ethanol-related government announcement. Union Minister Nitin Gadkari says that India should aim to achieve 100% ethanol blending in order to reduce import fuel dependence. Meanwhile, sources tell NDTV Profit that the government is considering a revision in voting right cap in banking. A higher revision from the current 26% may be on the anvil. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, and all while you grab lunch. But before we do that, let's take a very quick look at the markets, and it's not looking like a flattering picture at all for the markets. A rather tepid day that you're looking at, especially when it comes to the Nifty, that's down about 150 odd points thereabout. When you talk about the Sensex, that cut is actually much deeper for the Sensex. When you talk about the sectoral picture as well, it's largely IT that is dragging and financial services that's just a little bit weaker. But IT, look at that 4.5% downtick also coming in for the IT index. What's remaining resilient right now is FMCG, energy, defense, realty, media, oil and gas, and PSU banks as well, just a little bit. So those are the pockets of strength that are emerging. It's HDFC Bank that is down quite a bit, HCLTech, transformers and rectifiers, about a 7% knock coming in on that particular counter, and a bunch of your IT counters. So Tech Mahindra down about 5.5 odd percent, Coforge, Persistent, Tata Elxsi. All of those counters are trading with losses from anywhere between 5.5 to about 8% thereabout. And when you talk about the Nifty 50 picture as well, you're looking at all of those stocks, all of your IT stocks that are trading with a knock of about 3.5 to that 11% knock on HCLTech also coming in post its numbers. And when you talk about something like a JSW Steel, HDFC Life also on the back foot, what's remaining resilient right now is something like a Tata Consumer, HUL, and a little bit of strength also coming in for something like a Nestle after its numbers. Brokerages, of course, we'll be getting you the verdict as well in just a little bit. But before we do that, let's quickly take a look at the entire commodity space right now. And firstly, let's talk about oil prices that are slipping right now on the back of all of the truce optimism that you have building up right now. So as you can see on your screens, Brent very well below that $98 a barrel level, WTI as well, some weakness, about 1% knock coming in. For WTI, when you talk about gold and silver, on the flip side, it's some strength that you're really seeing emerge here as well. So there you go, about a 1.5% uptick coming in for gold and silver, about 3% thereabout. That's the kind of range that both of these commodities have also been trading with. Let's also try and get you a sense of why this is really happening and what you could be expecting going forward as well for gold as well as silver. Vandana Bharti, AVP Commodity Research, SMC Global Securities, is joining us right now. Thank you so much, Vandana, for taking time out. Pleasure speaking to you as always. First things first, I wanted to try and understand what you think about oil prices, because there is a lot of uncertainty right now. Yes, they've taken a knock from that trade optimism. But on the flip side, you do have the supply concerns that are very much lingering.
Yeah, hi. Good afternoon. Thanks for having me in the show. And very true, the supply concern is still there. There is a talk of ceasefire from US side only. Nothing came from Iran side, and only 3 shipments they have passed through Strait of Hormuz yesterday. So the number is not showing a kind of sigh of relief in the market. But yes, derivative market is reflecting some kind of relief in the prices. And because the safe haven was in crude oil prices, it is waning down. Even dollar index, it is moving down. So we are expecting a fall of around $85 kind of level in crude oil. And because of that, the buying is very much there into silver, especially in silver, because the ceasefire optimism, it is giving a hope to the silver market that the industrial production will come to the normal within few months, and demand will again in the scene. So silver is reacting more than gold prices, and we're expecting that it may touch the level of $85 kind of level in comics. And if we talk about the Indian market, because the INR, it is trading near 94, so premium will be more in the Indian market, and we're expecting silver prices to reach the level of 260,000 in this week. If we talk about gold is again up on safe haven buying. And the buying is really very strong and well built, and $4,700 is a very strong support for this commodity. From there, we have seen that the prices haven't moved up, and gold prices at MCX, again, it is moving towards the level of 1,55,600, 1,55,200 kind of level. But we should remember that the concern is still there. We are not out of woods. So the upside, whether it is gold or silver, it will be limited.
Right, no, absolutely, and that makes a lot of sense. But how do you play this from here if you're looking at fresh buys, or if you're looking for the dust to settle? How should you be looking at gold and silver if you already, are looking for fresh buys, or if you have chips on the table?
We should go with the major trend of gold and silver, and it is still up, and they are in the super trend. So for gold, if we talk about the levels, we should go for buy near 1,53,500 level. Even at CMP, we can have a target of around 1,55,000 to 55,500 with a stop loss of here 1,52,800. Silver is looking better than gold. So for silver, one can go for buy near the level of 2,50,000 for the target of 2,60,000 with the stop loss of here 2,46,500. And in midterm, we are expecting a level of 88 kind of $88 in comics. And if we talk about Indian market, it should be of 2.75 lakh, because in physical market, nothing has changed. And China, they have opted for record buying in silver physical in the month of March.
Right, no, absolutely. And Vandana, I'm going to throw a tricky question your way. When you talk about the Fed chair pick, what are you expecting on that front as well? Because that entire news flow is also top of the mind when you talk about the entire precious metals complex.
You're asking about precious metal?
No, I'm asking about the Fed chair pick, Kevin Walsh. Is that something that you're looking at in terms of it adding hawkish pressure then?
Yeah, it is there, because we are expecting a kind of rise in the month of January. Sudden, everything it has changed, and now he is giving a hawkish picture for this market. And from interest rate cut regime, now we have moved towards the interest rate hike regime, and the Fed tool rate, it is showing that in the month of say January or February, we can see a hike in interest rate, and that can put a little pressure on the gold prices, but not more than that, because in time of crisis, in every cycle, we have seen that central banks, they have gone for selling. We opted for selling, but whenever we find a suitable time, whenever we have enough cash with us, we go for buy in silver, for gold. So yes, this is not going to give much impact on the prices of gold, because we have seen a kind of 1,000, 1,200 kind of rally in the time of higher interest rate.
Yes, no, absolutely. And that makes a lot of sense in terms of how you should be looking at it historically as well. But Vandana, I wanted to try and understand where you're looking at as the bottom for prices if they fall further for oil, and where are you looking at in terms of the top line here, in terms of where it could go till? Is 120 on the cards? Is that how you're looking at it? Where is the top and the bottom?
Definitely in 2026, we have moved towards higher highs and higher lows. It is for sure. But in bear case, I'm expecting not below the level of $75, $72 in 2026, because some disruptions, some damages, it will take another 2-3 years to get recover. And if we talk about the bull case scenario, it is $100 to $105, because now the US and Iran, both of them, they are having the pressure of ceasefire, and it is a global pressure and from the bigger major economies. So yes, we are moving towards ceasefire slowly, and we have opted for that another route. But yes, 105 on higher side, on lower side it is $72 kind of level in crude oil. And basically now we are moving towards lower zone. But we shouldn't forget that we are entering into the summer peak season. Summer peak season means high demand season for crude oil, whether it is crude oil or gas prices.
No, absolutely. And that's also something that we'll be looking at. But of course, the geopolitics picture is not something that you can look away from anytime soon by the looks of it. Thank you so much, Vandana, for taking time out and joining us this afternoon. So there you go. That's what to expect when it comes to oil, gold, as well as silver. But let's also talk to you about one pocket that is sharply under pressure right now. IT stocks seeing sharp selling pressure. And that's after a weak set of numbers when you talk about HCLTech as well. And when you talk about that weak growth guidance, that is really sparking fresh worries about demand in the tech sector as well. Look at that, about 11% knock coming in for something like an HCLTech. Infosys also down about 4%. And you do have the management also going forward and trying to talk about the extension of a term as well for Salil Parekh. When you talk about Persistent Systems, that is also trading with a knock of about 5%. Let's take a closer look at the entire sector because it's the biggest drop for the IT index that you're looking at since February 12th. And when you talk about HCLTech particularly, down about 11% slipped to a one-month low as well after that weak set of numbers in the fourth quarter. In fact, Nisha Podar caught up with the management of the company, asked him about the impact of the Middle East conflict as well. Let's go across and listen in.
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that the environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that has been caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And the last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27. So I think what we are very confident and very optimistic is our ability to really grow the new services. There are 6 or 7 new areas that we are growing, and that is going to help us accelerate growth as we move forward in the medium term.
All right. So new areas that you are really growing in. But what about telecom? That has really caused a dent in the last quarter. How do you see the outlook going forward? And is it sector specific?
I think it's, I would say, client specific at this point because leadership changes, strategy changes, all of that drives a certain new strategies, and that would have its own implications on spending. I would not broad brush it across sector or across geographies. That's why I was very careful about calling out specifics rather than giving a broad brush macro as a factor in whatever happened in last quarter and also the future.
All right, and there you go. So that's the word coming in from the management of HCLTech as well. Let's take a look at the stock. Look at that 10.7% knock also coming in. And if you're just tuning in, there are 4 keywords here: weak quarter and guidance. And when you talk about the brokerage verdict as well, that's also reflecting quite the same. Brokerages are staying cautious on HCLTech after a weak set of numbers and a softer outlook. Now, when you talk about Citi, they're maintaining a neutral rating on the counter, cutting the target price to about 1,385 rupees. And they're citing weak fourth quarter numbers, subdued FY27 guidance as well that could really weigh on the stock in terms of the near term as well. They're talking about how the industry view as well remains quite bearish at this point in time. And the company still continues to be better placed medium term in the peer group. But that said, there's that bearish outlook that they have in terms of the industry. When you talk about Investec, echoing the same caution, flagging client-specific issues, lingering revenue headwinds as well going into the first quarter of FY27. While the near-term sentiment also remains pressured, both brokerages are saying that HCLTech is relatively better placed versus some of its peers. But look at that 10.7% knock also coming in on this particular counter. A bad set of numbers, a weak set of numbers, as well as softer guidance, and also brokerages being quite cautious at this point in time. But let's also talk about Persistent that reported a largely inline set of numbers. The stock, of course, is down about 5% but they still posted 24th straight quarter of growth. In fact, Puneet is standing by with some more details, not just in terms of the earnings fine print, but also the brokerage verdict.
Well, Persistent Systems is also in focus on the back of results. Now we've seen a disappointing set of numbers from HCLTech, and that's slightly having an effect on Persistent as well, because while the numbers weren't half bad, it's the sentiment that is getting hampered today across the IT pack. So for Persistent specifically, results were below estimates for some brokerages like Nuvama, but over a 3% constant currency growth is quite decent in the current environment at this point of time. The only fair bit is valuations, and that's where brokerages like Citi continue to maintain their bearish view. They've said specifically that they maintain a sell rating with a target price of 4,230. They say while Q4 was largely in line, there's a significant valuation expensive largely for Persistent System at this point of time. They've highlighted that macro uncertainty is there according to the management, but they remain confident at this point of time to drive market share gains within the business accounts. They've also highlighted that that Citi continues to be cautious at this point of time on the sector given the high competitive intensity as well as the AI impact at this point of time. Another one like Nuvama actually has mentioned a similar point of view where they feel that current growth of almost 3.4% constant currency was slightly below their own estimate of 4% constant currency growth on a quarter-on-quarter basis for revenue. But again, much higher than what the peers are reporting at this point of time. Nuvama retained a buy target price of 6,100 versus 6,000 earlier. That has also highlighted that there continues to be a persistent pressure on the industry as of now, but growth and commentary was slightly a tad soft for Persistent. So something to watch out for in FY27 because they maintained their guidance, but for now, largely seeing a rub-off effect from the other players like HCLTech.
No, absolutely, and that's quite visible with that 5% cut on those stock as well. Puneet, thank you so much for joining us with that update there. In terms of the brokerage verdict here, let's also talk about one other stock that is also sulking in trade. Something like a transformers and rectifiers, 7.5% thereabout knock coming in after missing the FY26 guidance in the fourth quarter results. In fact, Barsha is standing by in terms of a lowdown on what's really not working for the stock. Barsha.
Well, let us start with what did not work when it comes to this quarter, that is Q4 FY26. The higher revenue did not translate into profitability growth, number one. Then you saw the margin compression. Q4 FY26 margins were 15% versus 19% last year. Higher ESOP expenses and contraction in gross margin impacted EBITDA margins, and Q4 order inflows was down 47% year on year. While what did not work for FY26 over FY25 is they missed guidance across key metrics. Execution was expected at around 2,600 crore, but they came out with the sales of around 2,500 crore. So overall, lastly also, if you see the closing order book was at 5,000 crore versus expectation of 8,000 crore, and CFO turned negative at 110 crore due to working capital stress. So overall, did not meet the guidance, and Q4 number was a miss.
All right, and thank you so much, Varsha, for joining us with that update and that entire lowdown also coming in as far as something like transformers and rectifiers is concerned. Of course, you do have Nestle that is also in focus on the back of its earnings. And before we move on from the earnings verdicts as well, look at that 1.8% also uptake thereabout coming in on this particular counter. Stellar quarter is what you're looking at, and a bullish stance from several brokerages, many of them hiking targets amid that sequential growth that you've seen coming in. Mahima is standing by with that entire lowdown.
So, as you rightly mentioned, a lot of brokerages have kind of gone ahead and, hiked the target price for Nestle. And this is on the back of the way earnings came out yesterday, because a 500 crore beat as per what analysts were versus what the analysts were expecting. And, this was expected to happen, right? The target price hike coming in. Morgan Stanley has maintained equal weight, hiked the target price to 1461. They're saying strong beat coming in on top line and margins. Goldman Sachs has also hiked the target price to 1425, maintained the neutral stance. What they're saying is the GST cut benefit benefits has played across categories. Rate cuts, quick commerce expansion are the key driver going forward in H1 FY27. Gross margins are likely to remain stable on account of stability in overall raw material pricing. Investec has upgraded it to hold, given a target price of 14.26, says sweet momentum continues, robust operating margins on account of cost efficiencies, and await more compelling valuations and continued evidence of growth momentum before considering a further upside. Jefferies has also maintained hold with a hike the target price of 13.25. They're saying that ad spends rose by 50%, signaling a growth mindset. Despite this, EBITDA margins expanded to a multi-quarter high even while gross margins contracted, and they retained hold rating just on the back of stiff valuations on this particular counter. Macquarie has also maintained neutral, hiked the target price to 1400. They say this overall, this quarter has been healthy in terms of sales growth, and this can be sustained going forward. Growth was led by GST rate cut linked grammage increases as well as rural distribution expansion, and they maintained neutral considering the limited upside at the current 63 times FY27 forward EPS. Lastly, Citi has also maintained by hiked the target price to 1675. This is the highest target price amongst all brokerages What they're saying is that all-round beat to support premium valuations is what we've seen this quarter. Believe growth momentum is sustainable over near to medium term, supported by brand strengthening and execution. And despite 20% stock rally in the past month, expect earning trajectory to support premium valuations. I think the key takeaway is that good set of numbers, sustainable going forward as well, but valuations looking very high.
Alright, thank you so much, Mahima, for getting us that update as well. Let's quickly take a look at some of those sugar counters as well that are buzzing away in trade. And you do have an ethanol-related government announcement that we should be listening into. And Nitin Gadkari is saying that the country should be aiming for 100% ethanol blending in petrol. And this shift could really reduce oil imports, cut emissions, as well as support farmers. Let's go across and listen into that bit of commentary.
आज हमारे देश में 22 लाख करोड़ रुपए हम इसलिए खर्चा कर रहे हैं कि हम 87% हमारी एनर्जी जो है इंपोर्ट करते हैं और इसलिए इसके अलग अलग प्रकार के आयाम हैं। पहला आयाम ये है कि क्या ये 87% एनर्जी जो हम इंपोर्ट कर रहे हैं, आज जो हमारे वर्ल्ड में जो अभी विशेष रूप से जो स्थितियां पैदा हुई, उसके कितनी अड़चनें हम सब सेव कर रहे हैं, फेस कर रहे हैं, इसका अनुभव आप सब ने लिया, उसका वर्णन करने की मुझे आवश्यकता नहीं है। और इसलिए आत्मनिर्भर बनना ये हमारे देश के हित में सबसे बड़ा उद्देश्य है।
Alright, and that's the word coming in as far as ethanol diversion is concerned. Rising urban demand, though, is reshaping how households hire domestic help, with app-based platforms also seeing a sharp surge when it comes to metro cities. In fact, Ridhima Bhatnagar takes a look.
Rise in the demand for domestic help in metro cities has led to the boom for companies which give instant maids like InstaHelp, Pronto and Snapit. The companies have been growing at a rapid pace in the number of bookings since August 2025.
If we look at bookings, Urban Company crossed 10 lakh bookings in March 2026, up from 2.9 lakh in August 2025. Snapit saw over 10 lakh bookings in March, up from 1 lakh in 2025 August. Pronto reported over 5 lakh bookings in March, up from 30,000 in August 2025. We went on ground to check the competition, demand and worker economics, as workers are core component for these platforms. The number of workers equals the number of service deliveries, and around 60 to 80% of the order value goes to the workers.
मैं 10 घंटे काम करती हूँ ना, अगर रेटिंग बोनस और अभी वो अटेंडेंस बोनस वो सब मिला के 30-35 आ जाता है, सब मिला के। और 2 छुट्टी भी करते तब भी आता है, अगर छुट्टी नहीं करे तो 40 तक भी जाता है कभी-कभी। पूरा काम करें, दिन में 7 काम हो गए तो फिर आ ही जाता है। ऐसे तो अगर 4-5 घर में भी करेंगे तो इतना पैसा तो होगा नहीं है।
इंश्योरेंस भी मिल रहा है, मतलब 2 लाख का। जो मैरिड रहेगी उनको मतलब उनके पति को और 2 बच्चे को भी मिलता है इंश्योरेंस। अगर सिंगल रहेंगे तो फिर 2 लाख का इंश्योरेंस मिलता है हमें।
While workers are getting enough salaries, with rise in competition in instant domestic help segment, companies are struggling to be profitable. Listed player urban companies InstaHelp reported adjusted EBITDA loss of Rs 61 crore in Q3 FY26. On the positive, losses per order has narrowed to Rs 381 in Q3 versus 760 in Q2 FY26. The management of urban company expects unit economics to improve further and expect the company business to break even by FY28 to FY31. Talking about the current valuation for Pronto, it stands at $100 million, and for Snabit, the current valuation is $400 to $500 million, and both the companies are not profitable as of now.
So what's the bigger picture? With rising demand for digital home services in urban areas, the truth is that this space is still evolving. And also the workers getting paid and trained at a sound rate, this is a segment which is growing. So the profitability is going to take time. So till then, the key monitorables are going to be demand, scalability of the companies, and the competition in this segment.
And with that, it's a wrap on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एनवी सर से लाइव एनडीटीवी युवा पर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volumes. So what's on the show today? Firstly, it's about the stock Rajratan Global Wires. Now, the company has reported a weak set of fourth quarter numbers. Rise in input cost and rise in higher energy cost led to this weak set of numbers, and that's the reason why the stock is down. We'll dwell into more details and what is the outlook on the stock with our fundamental guest on the show today. When it comes to Websol, that stock has been gaining because a large marquee investor, that is Vijay Kedia, has bought stake in the company in the fourth quarter. His stake has he's acquired nearly 1.02% stake. He's a prominent investor in the market, and that has led the stock gaining in trade. When it comes to Precall, that stock has been buzzing on trade, and this is largely because of the stock is in fact come back to the pre-Israel-Iran war level. Before the war, when the war had started, the stock had crashed to around 510 rupees, and since then we have seen a strong recovery coming in. What could be the reasons behind this move that we have seen in Precall is something that we'll discuss on the show today. And then there is J&G Electronics. The counter is down in trade because the street is concerned about the related businesses that the promoter entity owns, and that is one governance concern coming in when it comes to J&G Electronics, and that is one of the reasons why the counter is down. Apart from that, we'll be also speaking with the management of EPAC Prefab. The stock is down nearly 27% on a YTD basis. Going forward, what's the order book details, what are the expansion plans, and what is the opportunity in the export market is something that we'll discuss with the management on the show today. Now, if you look at the markets, the Nifty is trying to hold the 24,400 level. It's down around 165 odd points from the day's lowest point. We have recovered around 60 odd points, but not a great day for the benchmark at least. And this is largely because of the IT names that are causing the pressure. If you look at the sector indices, Nifty IT is down nearly 4.5%, and this is largely causing the pressure for the benchmark as well. On the gaining side, we have the FMCG and the energy names which have been gaining in trade. Both the indices are up anywhere between 1.1 to 1.3%. But when it comes to small cap, a strong day yet again. Varsha, what are the key stocks that have been buzzing in trade?
Yeah, so talking about some of the stocks, you have Pashupati, which is actually buzzing in trade today. Volumes are at 25 times of its 30-day average. Idea Forge, if you see, is buzzing on the back of volumes. Volumes are at 2x, but board meet is on April 30th for a declaration of their Q4 numbers. IRM Energy is also buzzing in trade. You have Forgings and Bazaar Style. All these stocks are buzzing when it comes to small cap. There you go. IRM is up almost 20% in trade. Even Forgings and Bazaar Style is also gaining when it comes to this small cap 250. While on the losers side though, you have G&G Electronics, which we will be speaking of. You have Rajratan Global Wire on the back of weak Q4 FY26 numbers. Vardhaman Poly is also one such stock which is under pressure, and Mahindra EPC is also in pressure when it comes to small cap. There you go. Vardhaman Poly is actually down 2% in trade. Mahindra EPC is down 5%. But one stock which is in focus is EPAC Prefab. A lot of triggers in this company. Company is going for a greenfield expansion also, and we would like to know about the order details and also on the greenfield project that the company is entering into. But to speak on that, we are here joined by Mr. Sanjay Singhania, who is MD and CEO at EPAC Prefab Technologies. Mr. Singhania, welcome at NDTV Profit, and always pleasure to have you. Let me start with the order book. As of Jan 2026, the order book was around 1,200 odd crores. Today, as of today, what is the order book? How much of order inflow have you added? Just wanted to have an update on the order book details.
Yeah, good afternoon. So you are correct that on 1st of January 26, we had an order book of close to 1,200 crores. And we have always maintained that the order book comfortable to us as a company is 6 to 8 months. So that gives us a clear runway of 6 to 8 months. The last quarter was very good in terms of overall performance of the company. We are yet to announce the results, but yes, it was what we wanted to do, and our order book also like in the last quarter was equally good as well as the execution. And as of 1st of April, again we have a clear runway for the next 8 months, and so yes, orders are coming in. There is no issues on the order book. Yeah.
Okay. The company had raised funds recently, and most of them was used to repay debt. I believe that has been completed, and for FY27 we could see a lower interest cost. That benefit should kick in on the profit at least for FY27.
Yes, actually, there were three buckets on which we raised the funds. So out of 300 crores, 70 crores was towards the debt repayment. So that repayment has already been done. Now our total long-term debt is less than 40 crores. And the second bucket was the GCP. So in GCP, we had around 70 crores, out of which some 17, 18 crores we paid towards the IPO expenses. So another some 55 odd crores is lying still with us in FD. So that is actually giving us, interest income. And the third part was the capex in two plants. One was the brownfield in our Mamba to Andhra Pradesh plant. So I'm very happy to tell you that, most of the construction and the equipment commissioning is over. And most likely we'll start the commercial production from that expansion from this week onwards. So that should happen very soon. And our greenfield expansion in Rajasthan plant is also well on track. We had committed to the market that the commercial production for the sandwich line that we are putting up in Rajasthan, Gilot, would be commissioned by the end of second quarter. So that is very much on track. And yes, besides this, there was one announcement which we had done in the third quarter that was regarding our setting up a plant of 50,000 tons per annum in Gujarat, Vitlapur. So there also, we have started the groundwork, and we hope to commission that plant by the end of this financial year.
Just one thing I wanted to understand, given the fact that because of the geopolitical issues, any impact or any issues that the company has faced towards delivering on export orders or towards getting raw material, any issues that the company has faced?
I won't say because of the war situation, but typically in our business, what happens is the last 2 to 3 weeks of the year and the starting 2-3 weeks are typically weak on lead generation and order booking. So very difficult to say if that is attributed to the ongoing war situation. But what has impacted our industry the most is the increase in the steel prices. The steel prices in the last quarter till date have increased by almost 28% on the HR. And similarly, a lot of other specialized steel that we use, the color coated and the GP, there also almost 25% price increase is there. So yes, that is a bigger concern to us, coupled with the ongoing war situation. We are tracking this situation very closely, and we have a feeling that till date, there is no impact of this situation on the overall capex cycle in the country. But yes, too early to predict anything.
Sir, let me just come back to the order book. I just wanted to know the bidding pipeline and also your conversion rate when it comes to the bidding of orders. So if you could give details on that.
Yeah, like our conversion typically is 12 to 15%. So like we keep on quoting for projects across the month and quarter, and then our conversion win rate is typically 12 to 15%. That is what we have maintained. And sometimes we pick up orders also on the basis of strategy and when it comes to some sunrise sectors.
The sandwich panels, when are you expecting this to have a meaningful contribution to your revenue?
From this quarter onwards, we already have an order book of about 4 lakh square meter plus from our capacity of 8 lakh square meter. So it is good for the next 4 to 5 months of production. So we have some good orders from Reliance in which we are going to use the sandwich panels. And besides, when you go for the product sales, then the overall closer to supply timeline is very small. So that doesn't come into the order book. It is typically 2 to 3 weeks. So that keeps on rolling the machine.
Right. And I understand that you're on silent period and you won't be able to comment on your FY26 numbers. But for FY27, you had given a guidance of around 20% of revenue. Are you on track?
Yes, very much on track.
With the guidance of EBITDA margins?
With the guidance of the growth, in overall growth, as well as the EBITDA margins, yes. But EBITDA margins, very difficult to predict at this time when the steel prices are quite volatile. So, we expect the steel prices to stabilize, and we are very well covered when it comes to inventory. So as far as, our coverage of inventory is concerned, we are covered for this entire first quarter. But still early days to predict the overall impact on the EBITDA.
Now, sir, given the major capital expenditure plans that you have, could you give our viewers and your investors some idea about what is the long-term growth rate one should expect from your company for FY27, FY28? What kind of revenue growth, what kind of bottom line growth investors and viewers can expect from EPAC Prefab?
So 20%, I think growth can easily be expected from the business we are into. And accordingly, we are doing our capex expansion, both greenfield as well as brownfield. We are doing our geographical expansion. So I think all these factors will help us to corner more and more share of the market. Besides this sandwich panel line which is coming up in the north, so it is helping us to get into the like little premium segment of cold storages and clean rooms. So that is again one area where we are working tirelessly to get some product sales. So that is not a project sales for us. That is mostly a product sales which comes very fast, and the like the cash flows are also pretty good in that.
Okay, so with this 20% growth, is there any scope for margin expansion as well?
Margin expansion, I think we have maintained this stand that 10.5% to 11.5% is the margin of our business, and I think more or less it will remains the same. If we have to, if we given an option, then we'll definitely try to grow the company much more than looking in for expansion at this time.
Right. And so lastly, I know that you are more towards domestic market versus export, but any target for the export contribution that you have taken for FY27 and beyond?
Yes, export market is something, I think we have not been able to do much there because we wanted to focus on the export market, but given the global situation and also the imposition of the minimum import barrier on the steel, I think that is somehow a huge barrier because we are already 12% uncompetitive as compared to China or any other country. So
thank you,
for
sir.
us, yeah.
Okay. Well, thank you, Sanjay. Thank you for joining us and giving us the way forward for EPAC Prefab. Let's also welcome in our fundamental guest, Lancelot, CIO of ValueX Wealth Connect. Lancelot, you heard the management. 20% growth is something that they're quite confident for FY27 and beyond as well. A lot of capital expenditure plan will be commissioned very soon. How are you looking at this count at the current valuations?
Good afternoon, and thank you for having me. I think, it is quite an interesting company because if you look at the return on equity, it's been above 20%, and return on capital employed has also been good. So I think the growth in this business seems to be encouraging. However, in the short term, I think because a lot of their products are coming in from derivatives of crude, like the polystyrene foams and the various things and we do not know whether the prices will continue to remain of raw materials will remain in this range or may increase, and how this will impact the demand or the customers that they are supplying these to, whether they can pass that on or they may have to absorb some portion. So it's an interesting play. One needs to probably wait and see how the next 2 quarters pan out. And I think then if they do well during this period and they're able to manage price increase issues or raw material increase issues, that will help them weather storms going forwards. And then the expansion could be an attractive expansion. So it is an interesting story at this point of time.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping in trade today. Let's bring in Sharad for more details.
Well, thanks for that. And we are seeing a little bit of consolidation, be it Sensex as well as BankX, because either sides we are seeing a good push and a pull. HUL, NTPC, Eternal, all of them doing well in trade. On the other hand, if you look at the IT pack, that's the biggest drag coming in the overall market sentiment also today. But nevertheless, the banking names, let's have a look there. And largely we see the banking names are also in the red, so no major support coming in. So it's a very stock specific market, to be honest, and Q4 earnings are in. Irida and Exide, both of them doing really well. Strong long build up in both of these counters. Is a top gainer in the F&O also. Let's also point out the key short covering candidates, and this includes Tube Investments, a new entry to the list last time since we did at 10:45, and Keynes Tech. Good buying coming towards the later half of the trading session. Let's also look at the long unwinding candidates, and this includes Persistent Systems and ICICI Pru. Remember, the IT stocks, be it the mid cap or the large caps, are seeing a good selling pressure. And lastly, I'd like to point out the short build up which is happening, and both of them are the IT names. And the HCLTech's fall, which we have seen, that has actually gone up as well. So of course now it's falling more than 10% in the trade. Tata Elxsi also with cuts of more than 5%. So these are the important stocks and themes you should be considering for the F&O setup.
Thank you, Sharad, for that. Moving on to Rajratan Global Wire, weak set of Q4 numbers. What worked against the company in the fourth quarter? Let's get in Parth with more details on the same.
Thanks a lot, Somit. So Rajratan reported its Q4 FY26 numbers yesterday. The company achieved its highest ever quarterly sales volumes and also expanded presence in newer markets like Europe and USA. The company saw its interest outflow decline despite short-term challenges, but if you have a look at the negative side, then their performance was impacted by the inflation in raw material and fuel prices. The company was able to pass on the cost to its customers, but only after a lag. So that's what impacted their numbers in the Q4. If we have a look at the numbers, then revenue saw a growth of 25% year-on-year, reaching 314 crores, but their EBITDA declined 14% year-on-year to 28 crores. Also, their EBITDA margin saw a fall of 416 basis points. So this is the place where they saw that impact of their raw material and fuel prices coming in. Their profits, however, remained flat year-on-year at around 15 crores. The company also updated about their manufacturing capacities, in which they mentioned that they have two main facilities. The first one is a facility of 72,000 tons per annum, which is located in Pithampur, India, and the second one is a capacity of 60,000 tons per annum, which is located in Thailand. They are opening another 60,000 tons per annum capacity in Chennai, out of which 30,000 tons per annum has already been done in the phase 1, and the next one is expected to be commissioned in the first quarter of FY27. So they have also given some guidance for the first quarter of FY27, in which the company is aiming for higher volumes and better capacity utilizations across their current capacity around in their current facilities. The company also plans to increase their market share in Thailand and India. So the key thing to monitor going forward will be how the company is able to manage the inflation in their raw material and fuel prices and grow their EBITDA going forward.
Okay. Lancelot, how are you looking at this counter, Rajratan Global Wire? Do you expect the issues on raw material front to continue even the first quarter?
Yes, I think, the issues with regard to raw material costs are going to continue. And this is also not only a domestic issue, it's also a global issue. So we expect to see that there could be some volatility, especially in the, in the realizations, if the company is not able to pass it on to, to the customers, the increases to the customers. And if you look at the stock, currently it's trading at almost 30 times earning. So I think it's maybe a little expensive at this point of time, but if the stock does get re-rated and, comes down in line with, its margins getting squeezed a little bit, then that could give you an opportunity to look at whether it becomes attractive, and then one can look at investing into that, into the company.
Right. Well, the next stock which is in focus is Vepsol. If you see, the stock is at 10%. Now, one of the reasons is the Vijay Kedia has entered in this stock with stake of around 1%. Now, if I want to talk about the recent news, one is MNRE has extended ALMM framework to cover solar ingots and wafers. Now, solar ingots and wafers are nothing but the raw material to manufacture solar modules and cells. Vepsol has signed MOU with Linton to explore PV ingots and wafer manufacturing in India. This move supports the backward integration across the solar value chain, and Vepsol plans to purchase ingot and wafer manufacturing equipments from Linton. And they are also considering a 2.5 gigawatt wafer line to start. Talking about their order book and demand visibility, well, order book stands at around 1,150 crore as of December 2025. And wherein 57% of order book consists of modules and rest is cells. Demand is entirely from India DCR segment. Talking about the margins, they are expecting strong margins for next 2 to 3 years, but margin fluctuations is expected within 3 to 4% range. And Q3 EBITDA margin were impacted due to higher module share, slight price softness and customer payment delay. Talking about their Andhra Pradesh expansion, they have been approved for a 4 gigawatt integrated facility. Capex at around 1600 to 1700 crore is expected, and this is an package has been approved, and incentive package has been approved, and land has been allotted. But overall, I mean, a lot of triggers are actually working in favor of this company, but entry of prominent investor Vijay Kedia into this stock has led to buzz, as in today. The stock is up almost 10%. Lancelot, what is your view on Vepsol? considering the expansion plans they have, the backward integration strategy they have, and now Vijay Kedia has entered into the stock.
So I think, if you look at the business, they are one of the leading manufacturers of solar cells and modules, which are components for the, power plants, the solar built power plants. And there is a big adoption of solar as a alternative means to power. And with that thrust, I think you should see significant growth coming in for Websol Energy. Even if you look at the last quarter results, I think the quarter results were good. Profit margins have been in the region of like 40%, but net profit has been a little on the muted side. So if you consider that, they are planning on some more capacity expansion, that definitely augurs well for the company. And even though there may be some short-term, disruptions in their pricing or in the raw materials because of the situation that's unfolding in the Middle East, I think the company still should be able to manage this difficult period. And if the prices do correct during this period, it becomes an opportunity to accumulate the stock. On a longer term basis, I think this backward integration is also going to help improving the profit margin. So that also should play well. And presently, the stock trades at about 18 times its earnings, which is not a bad time. Maybe one can wait and try to see whether you can accumulate it at a lower valuation. But otherwise, considering the growth also, it seems to be a fair value for the company at this point.
Okay. The next stock that remains in focus is Precall. Okay, Tech Mahindra numbers are out. If you look at the revenue, it stands at around 15,000 odd crore rupees as against the estimates of close to around 15,076 crore is the revenue. Estimate was close to 14,600. Profit has come in at close to 1,354 crore as against an estimate of 1,500. So miss coming in on the profit front. The revenues are much better, but this could also be because of the rupee depreciation. Lancelot, your first view on Tech Mahindra. The net profit has come in much below compared to what the street was anticipating, but a beat on the revenue front. We are still calculating the EBIT number.
I think if you first look at the numbers, seem that it is in line with what most of the other companies have also been announcing, but profit reduction has been quite steep, and that would be probably a negative surprise at this point in time. One needs to see whether they are going to continue to restructure their business more in favor of the AI-based businesses and how that is playing out. So I think at this point in time, the IT space is going to see a lot more disruption, and the results that are coming out are all showing that the sector is in for a difficult period and a period of adjustment. So I think one should be a little cautious and maybe wait for a while before looking at making fresh investments here.
Right. The dollar revenue seems to be pretty much in line with what the street was anticipating at close to around 1,625 million. And if you look at the CC growth, constant currency growth, that is also pretty much in line, 0.6%. Not much of a change on that front. So other than net profit, all the other numbers seems to be in line. The EBIT has come in at close to 2,084 crore, slight beat on compared to what the street was anticipating, and that is one of the reasons why the stock has been gaining in trade. Not gaining, in fact, recovering from the day's lowest point. It was down around 5.5%, now down just 4% in trade, largely because the EBIT number has come in better compared to what the street was anticipating. Lancelot, the EBIT number is better than what the street was anticipating. Margins have come in at close to 13.8% as against street estimates of 13.3%. So good margin recovery at least coming in. So cost cutting or cost efficiencies are playing out for Tech Mahindra, right?
Yes, it appears that they are playing out, but at the same time, I think, a lot more needs to be done because costs are going to be, the revenues are going to be uncertain going forward, as well as the pace of new orders might get hampered given this situation that is unfolding. So I think, there needs to be probably a lot more measures taken in terms of cost cutting if the profitability is to be maintained going forward.
Moving on, let's focus on Precall. That stock has seen a stellar recovery from the day's lowest point, and what could be the potential reasons behind this? Let's get in Puneet to understand more.
Well, the stock recall is back in focus after it's recovered from all its lows, and back to those levels above the 600 rupee mark, which was one pre-Israel-Iran war. So that level was back in end of February. Has crossed that level yet again. Stock has recovered almost 19% from the March low. Stock had almost a low of 510 rupees, and since then has recovered back again. But interestingly, company continues to be in focus on the back of strong quarterly results reported in quarter 3. It was a growth of almost 27%, excluding the acquisition as well. And after that, also the EBITDA margins remaining largely stable at 12.4%. Now, the company mentioned that their outperformance has also been versus the two-wheeler industry. Industry was at 12% in quarter 3, and almost just versus 8% in first half of FY26. Management has also guided for almost 15% growth in both the divisions that they operate in the next year as well. So largely continuing to see quarter 4 as a key growth number to reach that number of 15% growth. They've also highlighted in quarter 3 that following the GST rate cuts, growth momentum continued to be very strong, especially for the two-wheeler makers, where the inventory was quite low at that time. They've also mentioned that Nexperia, which had the issues regarding sourcing of certain passive components, they have gotten alternate sources right now, as mentioned, and that has also been confirmed by its customers as well, which have approved the said alternate components. And the EV pilot is looking for disc brakes is also completed. They are looking for mass scale up by quarter 2 of FY27. Some more commentary in quarter 4 will be helpful on this aspect. They've also mentioned that 500 crore capex over the next 2 to 3 years will be something for new product development. Finally, when you look at the company's market share, it's almost within the two-wheeler space of 50% market share that they have in the products that they sell. CVs, it's up 70%, and off-highway goes all the way up to 90%. So a lot to watch out for this company in quarter 4, specifically on the pass on to the commodity price hike will be something to watch.
Well, the deal wins are one of the highest ever for Tech Mahindra coming in, and that is one of the reasons why the stock has been recovering strongly from the day's lowest point. Around 3.8 billion, the highest ever deals win in FY26 is what we have seen. Q4 exit rate is also the highest in the last 3 years. It's again, margins are better. If you look at, apart from that, if you look at the other details like the LTM attrition, that stands at 12.1%. Revenue in dollar terms stands at around 1,625 million, up 0.6% on a Q-on-Q basis and up around 2.4% on constant currency terms. New deals, new deal wins, $1,073 million in the fourth quarter, but this is down around 2.1%. But overall, the numbers look much better. What Mohit Joshi, the CEO and Managing Director of Tech Mahindra, has to say is that they're accelerating their transition on the AI-led organizations, embedding AI across services and expanding their businesses. They say that highest deal wins in the recent year, including consecutive quarters exceeding $1 billion. Right, let's go across to Hiral to understand the finer details coming in from the Tech Mahindra numbers.
Thank you, Somit, for that. It's a very interesting day to see a Tech Mahindra's numbers, because the entire sector has been under pressure, but the kind of recovery that's coming in terms of the stock is what is the key highlight here. Now, the reason why we're seeing this kind of a recovery is on a couple of factors. One, your top line has been above what the street was estimating. So that is one of the aspects that we should be watching out for. Secondly, if you see in terms of the new deal wins, that's the TCV in dollar terms, that has been the highest ever that they've seen in terms of deal wins in FY26, and that is at around $3.8 billion. In terms of the EBIT margin number, if you have to look at in terms of estimates, we were expecting around 13.3, 13.4 kind of a number. That has come in above at 13.8%, which is up nearly 70 basis points on a sequential basis as well. And in terms of the Q4 exit rate, that has been the highest in 3 years. So the visibility when you're looking at getting into FY27, that is looking very strong. And if you see in terms of the constant currency growth at 0.6% on a sequential basis is pretty much in line with what the street was estimating, because we were looking at a number in a range of 0.1 to almost 0.7%. So the constant currency growth on a sequential basis has been in line with estimates. If you see in terms of the EBIT, 2,084 crores is the number. It's up around 10.2% and up 48% on a year-on-year basis, which is above because we were expecting a number of close to 1,952 crores. So it's come in as a beat on the EBIT front as well. Let's quickly look at the segmental now. The BFSI segment is the one which has led the growth. Now, the reason why this is important is because the expectation was that BFSI segment somewhere will be a downer in Q4 for IT as a sector, but that has led the growth with about 8%. Communications has seen a mild growth of around 1.8%, and it's mainly the retail and logistics segment which has faced pressure, and that's actually fallen nearly 5% in trade. So if you see in terms of the geographies, Americas and Europe, both of these regions have seen a growth of around over 7%. So that is another key aspect that we should be watching out for as well. Very quickly, if you see in terms of the commentary that Soumit was mentioning, Mohit Joshi's comments in terms of acceleration and transition to an AI-led organization probably is something that the street is also taking positively. And they've said that they are embedding AI across services and they're expanding their capabilities as well to enhance their deliveries across clients. And where is this reflected is in the deal wins, because in the recent years, including 2 consecutive quarters, they've exceeded nearly $1 billion. So they're talking about AI-led revenues as well that have come in during the quarter. And they've said that they're remaining focused on scaling and disciplining overall revenue growth, and they're on track to delivering their FY27 commitment. In addition, if you talk about the commentary from Rohit Anand, who is the CFO, what he's saying is that this actually marks an end to their stabilization phase. That's FY26 is what they called in their stabilization phase from their transformation journey. And now with the margins actually expanding for 10th consecutive quarter, in spite of the macro environment being challenging, they're in line with regards to their capital allocation strategy, and they're committed to the shareholders. They've increased the dividend by over 13%, taking the total dividend for the year to almost 51 rupees per share. So all in all, if you go to see, Americas has fallen by 80 basis points, but Europe has grown 26% on a sequential basis, and the rest of the world a growth of 24%. Soumit, clearly a good set of numbers, commentary is looking encouraging, and with the kind of TCV deal wins also that you're seeing, it's giving you some bit of visibility in terms of FY27, and the management has highlighted that the transition phase is over. I think he means is probably it's going to be the growth phase that FY27 is going to stare at.
Right. Thank you, Hiral, for that sum up. Let's go across to Sandeep Agarwal, Fund Manager of Sovelo Investment Managers. Sandeep, what is your first take coming in on the Tech Mahindra numbers? Clear beat on the EBIT front?
No, so, I think the numbers for, even if you see TCS and now Tech Mahindra, barring HCLTech, I think numbers are coming decent versus expectation, and there are multiple levers. As you know, rupee is one of the big levers, and the expectation on the sector was very low. So from that perspective, I think decent numbers, and I believe that there is too much of negativity right now on the sector, and I don't think IT services will get that much impacted because of AI. It is a 3-4% deflationary impact only annually for 4-5 years, and against that, if you grow at 10% also, you will see 5-6% dollar growth and rupee benefit. So it is a 13-14% EPS story, and from that perspective, all these stocks are quite reasonably priced, or I would say now a little undervalued.
Okay, when it comes to deal wins, quite a strong commentary coming in from the management. The exit rate is also quite encouraging. Do you expect similar momentum to carry on even going forward?
No, so I think as they mentioned that FY26 was the year of stabilization, and remember that barring ER&D, there is no problem I think in any of the other verticals. So whichever company has a ER&D exposure, those are the places where we need to be careful. Otherwise, I think the order book and everything for most of the players will be good. If you see TCS also, the order book was quite strong at $12 billion. Now, and these are, remember that just one and a half months back, people were saying that IT services will decline by 20-30%. I think against that, if you are growing at 5% also annually, I think it is a big positive swing. That is the way we look at it.
Few quarters back, Tech Mahindra was considered as a dark horse and a turnaround play. Do you still see that as a play coming in for Tech Mahindra, or that has already played out?
So, commenting on specific story is very tough, but let me put it this way that, large part of positives are definitely have played out and they have done a good work. Now, incrementally, it will also be at par with other stocks in terms of, what kind of upside you get. So basically, I think that re-rating is over. Now it will be fundamental driven.
Okay, thank you, Sandeep. Thank you for joining us and giving us your perspective on Tech Mahindra. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup.
Welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vachharani, and for viewers who are tuning in, you can send us all your stock-related queries on the numbers that are flashing on your screen up there. You can either call us or give us a WhatsApp ping. Right now, with regards to where the markets go, the Nifty 50 is down by about 0.6%, 147 points for loss is what we're seeing below the 24,500 levels. Nifty IT being the biggest drag, down 3.4%. The Nifty Bank also seeing a downtick of around 0.1%, but recovered from its day's low point for the Nifty Bank. Let's try to pull up the Nifty 50 heat map quickly and see as to how things have changed there. Most IT names are the laggards, of course. HCLTech now down almost 10%, followed by Infosys, TCS as well as M&M. But on the flip side, you have counters like Tata Consumer, HUL from the FMCG pack doing fairly well. NTPC, Hindalco, Tata Motors, Geo Financial also doing fairly well. Let's see the broader markets as well, the mid-cap 150 and the small-cap 250. And see as to how they are faring in trade right now. Mid-cap 150 is up by about 0.3%, so recovered a lot from its day's low point. And the small-cap 250 is almost up by about 1%, so doing much better as compared to where the benchmarks go. And both of these, almost trading at its day's high point. So that's in regards to where the markets go. Let's start taking your stock-related queries quickly. And to answer those, we're joined by Girish Sodani, the co-founder at Ensure Capital, and Rahul Sharma, Director and Head of Technical Derivatives Research at JM Financial, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start by taking the first question, which is coming in on RVNL. Aditya Kiran wants to know the target price for this one. He's bought it today at the levels of 302. So I believe that he's a short-term investor. So Rahul, I'll take the first question up with you. RVNL, what is the target that you're seeing from a short-term perspective?
Yes, the setup looks good, and it's on the process of filling the gap. The target is coming around at 314, so one can stay invested in the same with the stop loss placed at 300.
Okay. For viewers who are tuning in, you can also give us a call on the number that will be flashing on your screen up there. Just as a gentle reminder. Moving on to the next question, which is coming in from Ekambara, who's writing us from Hyderabad, asking about Anantraj. He's bought it at the levels of 58. He's got 50 odd shares. Says that whether he can go ahead, book the loss right now, and buy Infosys at the current price levels. Girish, would you recommend that, considering the wave, a constant negative wave that we're seeing in the IT pack?
So for the longer period of time, yes, it's a good opportunity to buy this particular counter at current levels, because we talk about the business generations models. The company's growth are going to be next 15 to 17% CAGR annual expectations, and the order and the retention values are very strong. So the Infosys is a better bet for the longer period, obviously for the 1.5 year.
Okay, all right. The next question that we have is coming in from Mahesh, who is writing us from Andhra Pradesh, asking about L&T. He's bought it at an average price of 4398. Says it's currently trading lower. And what is the long-term outlook for this particular counter? Girish, I'll stick with you for this one. Your view on L&T?
For the longer period of time, I think L&T is a very good fundamental stocks. Obviously, the fundamental terms means the strong order books we are just looking out, as well as the stocks is currently in a very good levels. I think they can be accumulated at the level of around 3,900 to 4,000 level for the longer period. Obviously, 1.5 year time frame. Obviously, the infrastructure and the L&T finance updates are going to be releases that will be a little bit boost, particularly to this particular counter, and the deals are still in the pending on the pipelines.
Okay, all right. So that's the view coming on L&T. The next one is on Bajaj Housing Finance. Our viewer Murthy from Kakinada has bought it at the levels of 100 rupees, and 1500 is the quantity that he has. Wants to know if he can continue to hold this from a slightly long-term perspective. Rahul, your view on the charts on Bajaj Housing?
Yeah, so the stock has definitely reversed from the multi-week sell-off that was into. In fact, it's now trading above its short-term moving averages. So the next probable target for the stock is placed at 103, 104, above which I think the stock could head significantly higher if this resistance is navigated successfully. So advice to hold on to the positions, maybe have a trailing stop loss placed at 86 and 105, 104 as the first target going from here.
IEX is the other one that Saidranath from Hyderabad is asking about. He's purchased at the levels of 155 2 years back from a long-term perspective. Wants to know if he can continue to hold the counter or not. Girish, what would you recommend on IEX?
So for IEX, if the counters, if the investors views more than like 2 to 3 years time frame, because this particular sector is not yet matured, and this completely depend on the government policies, what they are working into the platforms belongs to the energy exchanges. So if you don't have that particular view on the holding this next 2 to 3 years, then hold it, else just avoid and sell this particular counter.
Okay, all right. We've got our first caller for this edition of Ask Profit. Anjali, I think, is calling us from Vijayawada. Anjali, a very good afternoon to you. What's your query about?
Very good afternoon, ma'am. And yeah, ma'am, I'm having PG Electroplast of 540 average of 200 quantity.
Okay.
What is the long-term and short-term view on this? If any buy on dips, shall I buy, or what is the target for short-term and long-term?
Anjali,
because the stock has fallen much.
Got it. Anjali, when you bought this counter, was it the charts that you saw, or was it the fundamentals that you saw?
The charts, ma'am.
The charts. Okay. Then from a short-term perspective, I'll get you a view from Rahul. Rahul, PG Electroplast is the counter. She's sitting on mild profits of around 8,000 rupees. Should she continue to hold, maybe average? What's the view like?
Yes, can continue to hold for upward targets of 600 and 630. The trend is quite up, and have a trailing stop loss in place at 538.
Okay, all right. So that's the view coming in on PG Electroplast. The next one is on Hindustan Copper. Our viewer Vijay from Dubai bought it at the levels of 613, so at the highest levels almost. And he's holding 173 shares. Says he's sitting on a loss of around 10,000 odd rupees. Wants to know
If that is, there's a possibility of recovering these losses from a long-term perspective. Girish, your view on Hindustan Copper, will it bounce back soon to those levels?
Yes, for the longer period, obviously, if you're planning to hold for the next 2 to 3 quarters or a year time frame, the strong upside will be looking out. Like for the revenue, obviously, we are just expecting that the revenue will be increased by the 100% annual CAGR. Expectations for the margins were also going to be increased by 30%. And obviously, there's a strategic expansions as well as the merchant acquisitions are going on in this counter. So just hold this counter for the 1.5 year time.
Okay, we've got Sudhir on the phone line with us. Sudhir, go ahead, ask your question.
Good afternoon, all. See, I've got HCLTech at around 1350-55 numbers.
Okay.
Whether I can accumulate further for the next 1.5 years?
Got it. Sudhir, and your point is valid, right? Today the stock is taking a knock of 10.5% on the back of the way it's posted its earnings. But Girish, your overall view on the earnings front and whether he can accumulate more at the current levels considering it's seen a knock today?
So it's about the HCLTech. So just expecting that the IT segments are completely in a very strong positions right now. So just good buy for the next 1.5 year time frame. So if we talk about the fundamental terms, yes, the net profit are going to be increases by the 4.5%. And it's a decent one because currently what the market scenarios as well as the geographical tensions are there. So I think the IT is a very strong bet for the at least 2 years time. So HCLTech is a good friends and the good positions as of now.
Okay, all right, so that's the view coming on HCLTech. Girish as well as Rahul, it's time for our rapid fire round. Try to keep your answers as short as possible. The first one is on Pine Labs. Archana from Mumbai wants to know if this is the right time to enter. Girish, your view?
Can enter in this counter for the 1.5 years.
Okay, Amara Raja is the other one. Satyan wants to know whether he can stay invested into this counter or not. He's bought it a year ago. The stock, of course, is trading higher today. Girish, from a long-term perspective, what's the view?
For the longer perspectives, yes, but my suggestion is to just book some of the partial profits at the level of 975 to 1000 levels.
Okay, Data Patterns is the other one. Our viewer wants to know the correct entry price from a slightly long-term perspective. Rahul, your view on this one?
The stock has broken out today, can be bought today with today's day low stop loss and a potential upside of about 7 to 8% in the short term.
Okay, Gaudium IVF is the other one. Ahmed from Delhi is holding 200 shares at the levels of 102. A 6 months perspective. Rahul, enough data on the charts to give a perspective?
Yes, absolutely. So the stock is on the verge of a multi-month breakout above the 420 mark. So above that, one can look to add higher targets are around 480 on the upside.
Okay, GE, Vernova and TD. What's the future outlook for this one? Should I buy right now from a long-term perspective or wait? Is the viewer query coming in? Girish, your view?
Sorry, GV&D.
GE, Vernova, TND.
Okay. For the longer perspectives, yes, the persons can be accommodated, but not at the right levels. I'm just expecting that this stock can be downside for the level of 3900. So I think there's on that particular level, it's a good buy too for the next one right.
Okay, Castrol India is the other counter that Radhakrishnan from Kochi wants to know about. From a short-term perspective, is this the right levels to make an entry? Rahul, your view on the charts?
Yes, you can buy for target of 190 on the upside.
Okay, between the hotel space, between ITC Hotels and Lemon Tree, which one should Shankar from Bengaluru go ahead and buy? He says he already has 500 shares of ITC Hotels. Girish, your view?
ITC Hotel is a better one. In the terms of the key generations as well as the new hotel properties are going to be added. So I think ITC Hotel for the next 1.5 year.
Okay, it is the other one. Gopika wants a 6 months target for this particular counter. It's a top FNO trader, FNO bet today. Rahul, your view on the charts?
6 month targets would be close to around 190. Trailing stop loss can be added 125.
Okay, Apollo Tyres is the other one. Our viewer has bought 200 shares at the levels of 463. Whether to hold from a long-term perspective or exit. Girish, your view on this one?
Hold for the longer period of times as the companies are into the expansion modes and just looking out for the good numbers in the next coming quarters.
Bazaar Style has been buzzing away in trade today. Our viewer has bought it at the levels of 420. Can I hold or sell? Your view on the charts, Rahul?
Bazaar style, it's trading 12% higher today and it stays high point. Okay, hold. The next one is coming in on Suzlon. Satvik from Lucknow is bought at the levels of 41. Should I book partial profits? Rahul, Suzlon, your view on the charts? Should he book partial profits is what he's asking.
Yes, Suzlon can book partial profits and hold rest for 58 target.
Okay, Geo Finance from a long-term perspective, what's the view? Girish, our viewer has a time horizon of 5 to 10 years. He's bought 1,000 units at the levels of 284.
So it's a very good stock for the next 5 to 10 years, obviously, but can be accommodated at the level of 210 to 212 also if we get the opportunity.
Yes Bank, 5,000 shares bought at the levels of 45. A long-term perspective on this one, Girish, can our viewer continue to hold?
Yes banks, for the longer period of time, I'm not very much comfortable for the go ahead with it. I think can be accommodated to the another banks like RBL or the HCLTech.
All right, okay, Girish and Rahul, thank you so much. Helping us answer all those queries that we managed to answer in this short span of 15 odd minutes. Together in the morning show and the afternoon show combined, we answered almost 110 odd queries, viewers. So thankful for that, but completely out of time on this edition of Ask Profit. Do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Real was always her rebellion. Sania Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No hype, just sharp takes on what. No hype, just sharp takes on what.
Hi, thanks so much for joining in. You're watching India Market Close, and it's all about IT today. That is the big story, because at the benchmark level, you have cuts of about 0.7%, and you will see soon enough that it is the IT pack that is proving to be the biggest drag. But if you look at the Nifty IT and pull up the intraday chart for the Nifty IT, you will see where the big damage is. Currently off the low point of the day, and actually that has something to do with the Tech Mahindra results that came out just a short while back, and they weren't as bad as the street might have been fearing, which is why you have the index just given you just a little bit of a pop, but we're still down as much as 1,240 points at the index level. Now, when you look at the constituents, you will see that the damage for some pockets is worse than others. So pull up the Nifty IT constituents, and right at the bottom of the pack or the top of the pack, depending on how you look at it, is HCLTech with cuts of 10.5%. It was called before market started by my colleague Puneet a horror show, and that is exactly what we're on Freaky Friday, though it's still midweek. It's 10.5% down. Persistent Systems losing 5%. That is a set of numbers also that was parsed by the street. They came out with those numbers, and we spoke with the management as well. Coforge, Infi, remember, is going to post its numbers this week, and so it's going to be on the watch list for a lot of people. It is losing as much as 3.5%. As Tamanna joins me to talk about some of this, you don't see Tech Mahindra. There you go. So Tech Mahindra is down about 3%, 3.3%. It did take a bit of a bounce, and pull up the intraday chart. So let's talk about this, right? So pull up the intraday chart for Tech Mahindra. When the numbers came out, because a few of those parameters were better than the street anticipated, you saw a spike, but it still cooled off quite a bit.
Yeah, I think that faith is sort of shaken in Nifty IT right now. But you know, Nifty IT also, and as a pack, tends to seesaw.
Yeah.
So I don't know if the last word is written yet. I mean, there was a commentary this morning that Nifty IT will give you, as an index play, 14-15% returns. I don't know if the person who made that comment this morning can still stick by it.
Because at the weightage level for the Nifty 50, you're talking about 11 percentage points or thereabouts.
Correct.
And so the damage, even though at the index level for the Nifty IT is about 4%, for the index, for the Nifty 50, was still down about 0.7%. So at least to that extent, the damage is mitigated. If you're holding an index strategy, or if you're large cap oriented, you're still not losing so much.
Not too much, but IT is turning out to be, in that sense, filled with landmines. I hope we stay on 24,400. Yeah. We managed to come back to some extent, but that's now a crucial level to watch out for. Just let's pull up the Nifty contributors if we can, and then we'll get to the broader market story, because that's really where the story is. HCLTech, Infosys, of course, Pain Point, HDFC, ICICI Bank also joining the sulk party on this side. HUL, very nice. HUL and Nestle, not enough to mitigate these losses.
Yeah.
Axis, RIL to some extent, but there it is. Not enough of the heavyweights firing today. Small cap and mid cap are relatively doing okay, because not too much of a Nifty brunt. In fact, 0.25% in the positive on the mid cap 150. And I think that's important to note, because it becomes crucial that portfolios are protected more than anything else. Nifty small cap 250 is in a parallel MCU universe right now, because they're doing fine. Advanced decline ratios is something that we should pull up right now, because it's a tale of two markets, and depends on what's in your portfolio. If you're a large investor, if you're an FII, you're probably anyway already crying looking at your portfolio. But if you've had a smattering of SMIDs and small and medium companies, you're okay. Advanced declaration is not that bad. This gap is positive right now. Sectoral heat map is also something we should look at.
And we should also look at the heat map for the Nifty 50, because that'll tell the story.
Yeah, okay. So Nifty IT, 4% down. this whole lot, the last two rows are looking bad, but energy stocks doing so well today. Defense, small cap, realty, real economy coming to the fore.
Yeah, absolutely. I was curious about that heat map for the Nifty 50 because at the bottom of the screen you will see that entire IT pack. I'm not surprised. HCLTech, Infi, Tech Mahindra, TCS, Mahindra makes it to the list. But it is also Larsen & Toubro, which is cooling off from the high point. It's gained quite considerably in the recent past. But you have Tata Consumer, again from the FMCG pack, HUL doing particularly well. And you should see Nestle and Trent also up and about in the top band, right? So it's a few of those stocks that are, the stories that emerged earlier in the week, Tamanna, are carrying through.
Completely. In fact, the recap really of what's happening in the markets. There's profit booking after 3 straight days of gains, and Nifty is still holding above 24,400. That's crucial. Broader market structure continues to remain healthy. Broader indices breadth still favorable at about 3:2. Only 5 stocks are pulling the benchmark down by about 145 points, and most of them from the IT pack. So a buy on dip strategy does continue. Value buying continues in mid and small cap names. Support levels for the Nifty, 24,400. We told you that's crucial. After that, it's 24,360, and then it's 24,265. For the Bank Nifty, it's seeing support around 57,000 to 57,200. Bank Nifty is continuing to hold around the 200 DMA. That's a major bullish sign. Momentum is stronger here than in the broader market. But let's start our conversations. Ajit Mishra, SVP Research, Religare Broking, joining in today. We're speaking also in a bit with Pashupati Advani, founder, Global Foray. But Ajit, very good afternoon to you. Should we start looking at the market today minus Nifty IT? Just remove IT from the picture. It's a fairly different picture, isn't it? How are you looking at the Nifty right now?
Yeah, good afternoon, Tamanna. So yes, you have rightly mentioned that barring IT, all the other sectors are contributing. They are just usual day for the other sectors, and in fact, some themes which were sitting on the sidelines earlier, like railways, fertilizer, they are also gaining decent traction. So the market breadth is positive. Other sectors are contributing. It's just that, Tamanna, that some reason or the other markets find the reason to correct, because we are very close to this hurdle zone of long-term moving averages, medium-term moving average around 24,600, 24,800 marks. So that's the reason why we are seeing this consolidation in the index. But as you've rightly mentioned, that the banking is holding strong. We have surpassed the key hurdles there. So despite the underperformance of IT, we are still doing comparatively better. But for any decisive uptrend, we need at least some bit of stability in the IT. And then probably the other sectors from the rate sensitive basket, like auto, which is sitting on the sidelines for quite some time, also should start participating along with some of the heavyweights like Reliance and all. So overall tone looks positive, 24,200, 24,000. That's the positional base that we have right now. And upside like 24,600, 800 is what we are eyeing as an immediate target zone. So it's a buy and dip market around the current levels. In fact, one can look for fresh long positions on the sectoral front, but for the index, one should wait for a dip.
Wait and watch at the index level. But I'm sure that there are a few individual stocks that you like in this market. What are they?
So Alex, the metal and energy space, this is something which is continuously gaining traction. And NTPC, after this marginal pause, we are seeing the next leg of the up move unfolding now. So 425 is what we are eyeing in NTPC at current levels. With stop at 395, one can go long in NTPC. Other name from the metal basket, National Aluminum, which is trading closer to its record highs post this consolidation range breakout. Here also we anticipate this prevailing momentum to continue. So with stop at 425, one can go long in National Aluminum with 455 as a positional target.
Okay, stay on with us. Ajit, going across to Jasmeet, who's in Pune, covering Tech Mahindra. Tech Mahindra had that initial bounce when the numbers came in. Q4 looked good, and then there seems to be a bit of pairing off along with what's happening with the entire pack. But Jasmeet is joining us from the Tech M headquarters in Pune. Jasmeet, you're going to get a chance to speak with the management, hear from them as well. But first, let's start at how you're looking at the numbers, and also how's the weather in Pune?
Weather is quite hot in Pune. You can see I'm sweating. But turning on to the numbers, we see good set of numbers coming in for the company. We do see a quite a lot up move in terms of the overall margin. We're expecting an uptick of 20% but 20 odd basis point, but it's up nearly 70 odd basis point. Well, that comes on the back of that strong internal project called Project 40 Well, apart from that, the CC growth has come in at 0.6 odd % versus what you were expecting, so it's pretty much in line with it. Apart from that, the interesting one is the BFSI segment, which is an uptick of nearly 8 odd %, which saw tanking back in the Q3 by nearly 6 odd %. That recovers in trade, but the communication, the biggest segment of the management, has stayed flattish in this particular quarter. If you look at all of that, this marks the second consecutive quarter by the management where they have booked deal wins over $1 billion. So all in all, the company sees its momentum positive going ahead. While for this particular year, FY26, the company marks its biggest and the highest ever deal win that they have marked so far in the year, nearly $3.8 billion, and majority of it coming from last 2 quarters. While apart from that, if you look at the key geographies, the Americas does see some kind of weakness, down about 0.8 odd %. Apart from that, the Europe and rest of the geographies are really doing well for the management. In terms of the overall management guidance, the term where they want to reach the 15% mark by the end of FY27, that's crucial to watch out for in the commentary as well of how that pans out, given they have been expanding the margins from last 10 consecutive quarters and they've reached a 13.7% mark in this quarter, and they're away hardly 130 BPS in this particular year. So further commentary on that will be something to watch out for. But the brokerage remain completely bullish on this particular counter as they see that they can achieve the 15% mark going ahead, which remains a key crucial for the management going ahead. So all in all, we do see a good set of numbers. The stock did tank today, down about 5% but recovered in trade as well. If you look at overall, HCLTech's commentary yesterday has really stung the entire Nifty IT, and we're still waiting for recovery in that.
It has. So while you're speaking as well, there's a little bit of a bounce back. Jasmeet, I love the selection of the color of your tie and your pagdi, by the way. But having said that, I do want to ask about profit. And that is where there seems to be a big miss with regard to what the street had anticipated. What has led to that, in your opinion?
Well, we were expecting a 34% jump in the profit given on the back of that low base we saw in the previous quarter. But we do see that the overall cost in the Q3, the new labor code, has seen some kind of spillover in Q4 as well. That's why the profits have come down. If we look at the profits, they're nearly up 20 odd %. While that's the only miss, but apart from that, we have seen a good performance in terms of revenue and margin. Margin being the most favorited aspect of the management, given a 20 BPS uptick to they have reached a 70 BPS uptick. But again, it still becomes a crucial of what the management sees going ahead as well.
Okay. Jasmeet, what's the one top question you're going to ask in the press conference if you get a chance?
Well, my question will be on regards to communication, how that's panning out for the company, given Accenture had reported a strong growth in the communication segment. So it's something to watch out of how it has panned out in the Q4 for the company. It has been flattish so far, but in the coming quarter, how that's turning up, because that's something cross it we do read from the Accenture's result.
Okay. All right, you better get to the shade and cool off before that press conference comes in. Thank you so much for that. Jasmeet there. Okay, just let's talk quickly about sector of the day. And while IT is definitely one sector of the day, just the center of gravity that HCLTech has become is just pulling everything down. On the other end of the spectrum, you have sugar stocks, which are absolutely zooming. Sharad joining in to tell us why.
Well, that's a pretty interesting take on the sugar space, but remember it's the summer season and everybody wants a sugarcane juice as well. Maybe there might be diversion to the ethanol side, so it's a bit sad news for that. But nevertheless, the rally, if we talk about it, ethanol related government announcement is coming in. That was the key reason for a sharp up move. Also look at the domestic sugar pricing. That number is favorable for exports right now, and this also augurs well for Brazil, which is the largest exporter for sugar. That means the diversion becomes more profitable going ahead as well. This is the key reason why earlier last month we had identified this trend in NDTV Profit regarding the up move in the sugar stocks, and now there is another impetus coming in from the government announcements. Now remember, elevated crude oil prices will make ethanol diversion attractive. That's the bottom line. Also, apart from this, there was a recent announcement on the export quota being relaxed for the incoming sugar season as well. And that is why we saw a lot of sugar stocks doing well. Now, India should be aiming to achieve 100% ethanol blending. This is the statement coming in from the government. And that is what aided the rally in the stocks today. The government is acting to reduce the import dependence. We've talked about the energy segment and, of course, the vulnerabilities which are coming in. And that was the rationale given by the government today. But apart from that, there are some key timelines also to understand how this ethanol and a fuel is going to play out. 2020 CCA advanced this target for a 20% ethanol blending, and as we go ahead, forward. In June 2021, there was a roadmap which was there for this blending, and for the uninitiated, November 2022, India achieved 10% ethanol blending, and now in the current levels, 2023, 2024, this current season, the target has been met nationwide, and that's a very important point to ponder about. And going ahead in future, the aim is for 27% ethanol blending in the fuels by 2030. So this is the entire picture for the sugar theme.
Very interesting. All right. Thanks so much, Sharad, for that. But speaking of ethanol, India is accelerating its clean fuel, or rather its blended fuel push. And you've got Union Minister Nitin Gadkari saying that the country should aim for 100% ethanol. Take a look at some of what he has said.
आज हमारे देश में 22 लाख करोड़ रुपए हम इसलिए खर्चा कर रहे हैं कि हम 87% हमारी एनर्जी जो है इंपोर्ट करते हैं, और इसलिए इसके अलग अलग प्रकार के आयाम हैं। पहला आयाम ये है कि क्या ये 87% एनर्जी जो हम इंपोर्ट कर रहे हैं, आज जो हमारे वर्ल्ड में जो अभी विशेष रूप से जो स्थितियां पैदा हुई, उसके कितनी अड़चनें हम सब सेव कर रहे हैं, फेस कर रहे हैं, इसका अनुभव आप सब ने लिया, उसका वर्णन करने की मुझे आवश्यकता नहीं है। और इसलिए आत्मनिर्भर बनना ये हमारे देश के हित में सबसे बड़ा उद्देश्य है।
So clearly this was one of the triggers why the entire sugar pack is in focus, and what is the mechanism of actually making that happen? True All Bioenergies, Vijay Nirani is joining us. He is the MD. Vijay, thank you so much for just coming in and giving us some perspective. And we've had some iterations of this conversation before. You, of course, are very gung-ho about the idea. That's what you're into, of producing this kind of bioenergy. But what is the feasibility as we see now?
So thank you so much for having me, Tamanna. It's always a pleasure being here, and especially on a day like this, when the biofuel sector is actually getting the recognition that it must. This has already been a tried, tested model, right? So we just have to get the implementation right with respect to higher blend levels. Now, if you look at Brazil is already at an average of E30 blending mandate. And if a country that is as large as Brazil can actually implement it, India can definitely do it, because we are an agrarian economy by large. And the second challenge we have is that we import close to 85 to 90% of our crude for our consumption. And you know what the Middle Eastern conflict has taken us to. So almost the real price of petrol, the real price of diesel is almost at sky levels. And thanks to the government's cushioning, we still have some breather.
Sure.
And that real cost is not passed on to us.
Yeah. Vijay, good afternoon, and thanks as always for taking the time. Alex here. We've spoken about this in the past as well, and we were talking at the time when we were debating 20% blending. Here we're talking about close to the entire fuel being ethanol. And already, well, we know this for a fact, but it is corrosive in nature. Ethanol is, right? So therefore, in a vehicle that has been running on petrol, that was designed to run on petrol, if you have practically the entire fuel shifted towards ethanol, you would have to have a change in the technology. Is that feasible right now?
So frankly, Alex, the concern that people sort of have accumulated in their minds is about the corrosiveness and maybe the engine's health getting affected is absolutely, that's a it's not even something to discuss about, because there are some rubber gaskets and sub elements which literally cost in a few thousand rupees. And whenever you send your vehicle for service, you don't even look at those line items. It's that big of a number. Let's say you compare your savings against your conventional crude-based petrol against the blended petrol that has got, let's say, E25 or E27. The savings would end up being much higher. But this is subject to the consumer getting maybe ₹1 or ₹2 cheaper blended fuel. Right now, maybe the consumer is aggrieved because he doesn't have a cost parity between blended petrol or non-blended petrol. The whole objective of the government's EBP program was so that the consumer gets a cheaper product and country gets a cleaner, indigenous product. So that is something.
So completely, on paper, it sounds like a great idea. But our job is also to figure out the how. How are we going to do this? How much time is it going to take? Is it feasible? What else could happen? I mean, that's part of the conversation, right? So let me just include Deepak Balani into the conversation. He's Director General of the Indian Sugar Mills Association. Mr. Balani, thank you for your time. We were just talking right now about the feasibility of this 100% ethanol plan. One of the reasons, of course, that sugar stocks are in focus today, is that capacity existent? What does it mean for sugar producers?
Thank you for having me in your show. See, the capacity today we have, as Vijay must have already highlighted, almost 20 billion liters we can produce, while E20 is only about taking around 11 billion. So we have an overcapacity of almost 40%. And I believe E100 is the right way to go, because that will really unlock a huge consumption pattern for the ethanol, our own indigenous fuel. So I believe capacity is not a problem, only the policy narrative on the 100% ethanol. And also we have requested if the blending beyond 20% in a calibrated way can be increased. I think that would be a very big thing for the country as well as the entire industry.
A question on supply chains then, because ethanol is not something that you can transport very easily, and as a result of which it would primarily, my understanding, please correct me if I'm wrong, the production would be concentrated in areas where you have higher production of sugar, right? And these are pockets like Maharashtra, these are pockets like Uttar Pradesh. The blending would also necessarily have to take place close to the production of ethanol. So you're not talking about meeting those higher blending targets across the country, are you?
See, basically, as you know, the government has already mandated that on every petrol pump from 1st of April, the fuel which will be dispensed will be E20. And let me tell you, the ethanol is not only from the sugar cane. We have almost 11 billion liters coming out of the grain industry, which is scattered across the country and really doesn't depend on the feedstock being in that state. So today we have the ethanol supplies within the vicinity across the country, and that's why we have been able to achieve 20%. And I believe that should not be a problem. Logistics are all sorted. I believe the policy narratives have to be clear from the government. Once they allow a higher blending and also E100, I think the industry is ready to unlock the entire potential.
Fair point. And yeah, Vijay has actually brought this point up, using multiple feedstock for this. But I want to ask, in terms of the 20 billion capacity that you currently talked about, Deepak, very quickly, how much is fed by sugarcane and how much is fed by the rest?
Almost 9 billion liters is from the sugar and almost 11 billion liters coming out of the grain.
Okay.
And around 3 billion liters goes for the industrial use. So we still have an overcapacity of around 5 to 6 billion liters.
Okay. All right. So interesting times. Gentlemen, thanks so much for joining in, for explaining the landscape. I wonder where this will go. Thanks so much for taking the time.
Thank you.
So the question is also going to be about perception and what people actually see going into their vehicles and how comfortable they're going to be doing that.
I think we should next time also get an OEM in to ask them how prepared they are. But let's welcome Pashupati Advani to the conversation. He's founder Global Foray. Mr. Advani, first of all, apologies for making you wait. We just wanted to tie up some of our conversations. This is Tamanna here. Absolute pleasure speaking to you after a while, and great to have you on the show.
So you had sweet things going, which is always good, and things that went up a lot. That went up a lot also.
Yes, we did.
The new flavor of new flavor of the week. Sweet sugar.
I think, you know how it is typically with sugar is it's a flavor for a couple of days. The actual flavor is IT, isn't it, Mr. Advani, though not so sweet?
Yeah, well, that's a challenge. And I've actually not been bullish about IT for a long time, saying that the business model has to be changed. And what's been interesting is that none of the IT companies have actually given any guidance. They've been a little bit circumspect about where they think things are going, because honestly, they don't know. Because tomorrow they get a new attack from some AI company, and that's about it. I mean, you're showing a wonderful chart that shows Oracle as a green and everything else in red. My personal belief is that Oracle at some point will get taken out. Larry Ellison has the money and he'll eventually want to sell the parent, and therefore this will attract an open offer and be taken out. So that's the only reason why Oracle is where it is. And the rest of the companies are trying to figure out what to do. And every time they start on a new business line, it seems to be hitting some AI barrier, and they're having to retreat. So it's very, very difficult for all of them. And I've not yet seen any Indian company that's able to show a product or a process that is going to get them new business. So, I'm looking.
So, okay. So
but not hopeful.
Not hopeful. Okay. So that kind of sums up the mood for IT. But there's big news coming in for Havells. And pull up the chart while we're talking about it. It's not just the earnings. And of course, stock is reacting to that. But the big news is Varun Berry joining as independent director at Havells. Mahima joining in to tell you both about the numbers and the implications of Varun Berry of Britannia, former head of Britannia, joining as independent director at Havells. Mahima.
Right, Alex. So, first let's talk about numbers, because there's a beat coming in when it comes to the cable and wire segment, which was kind of beaten down in the last 2 to 3 odd quarters, and it's shown a resilient growth of 14% this quarter, and that's why we're seeing that spike coming into that counter. Overall, net profit has also seen a good beat of almost 39 odd percent. Revenue saw growth of around 2.5%. Revenue was largely dragged by the Lloyd's consumer part, because Q4 is not the AC season as a whole, but EBITDA saw a downtick of around 3.6%. Margins, despite of the rise in key raw material for them, have remained resilient at the 10.6% mark. Overall, if we talk about the other key segments, switchgear saw growth of 6%, lighting and fixtures saw growth of around 1.5%, consumer durables saw degrowth of around 2%, and Lloyd saw degrowth of around 18.8%. Cables EBIT has also seen a growth of almost 36 odd percent, and that's where the growth, largely in the net profit number is coming from. They've also declared a 6 rupee dividend per share this quarter, and overall, I think it's most certainly a positive one coming in with regards to the announcement of Varun Berry being appointed as independent director. He stepped down from being the MD and CEO of Britannia in December 2025, and now he's joined as an independent director here. We'll have to wait and watch out for as to how his expertise from the entire FMCG space that he's gathered over the past so many years, the experience that he's gathered, that he'll be bringing in for Havells as well going forward, especially when it comes to growing in urban markets. So I think this is most certainly a positive one coming in for Havells, but Q4 numbers definitely on a strong footing.
Yeah, and doesn't hurt that Varun Berry is now there as additional independent director, so to speak, so not in any executive capacity, but of course comes with a great reputation at Britannia for a very, very long time. All right, a lot of news to break down today. Mr. Advani with us. Pashupati Advani, I'm going to speak to you about FMCG and the comeback of FMCG as a narrative, since we've been speaking about consumption broadly with Havells as well. I don't know if you've had a chance to look at Havells numbers, but just the take that we've seen on Nestle today.
Well, Nestle obviously gave fabulous results yesterday, but, just spend a minute on Havells. Anil Rai Gupta is a friend. He's running a great ship. And, I guess we all realize that selling wires and plugs is similar to selling consumer products. And you get a person who's been, I guess, 12, 13 years with Britannia. And before that, his training is at Hindustan Unilever, both stellar shops. And now get him into Havells to help them drive the next phase of growth. Hats off to Anil Rai Gupta, and, fabulous. I mean, I'm very happy that things are working out the way he wants it to. Nestle also, I mean, people are moving to branded. Private equities moved into branded over the last, 2 years. We've seen investments in Haldiram's and, all these other Indian products. And, Nestle's also turned with tea, coffee, you name it, they touch it. And people are, as our per capita income goes up, people are going to move from the unorganized sector to the branded sector. And I guess Nestle is ahead of the curve in that. So, kudos to them too.
The only question, though, and a quick follow-up to that, Mr. Advani, is the valuation and whether you'd be comfortable with where it stands right now for Nestle.
Well, to be fair, all these FMCG companies have been overvalued in that sense. They're all, 35x, 40x, whatever, numbers that are in the stratosphere, but they're all supposedly still growing and they're all part of the index. So I think that, these large ones, definitely people are very comfortable owning, because, a lot of it is based on, being in a sensible index and having a lot of index money in it. So that's like a buffer, and that keeps the PE reasonably high. If they're able to maintain their earnings, great. So far, they've been able to move along and do it. And as a result, you're seeing growth in price. I mean, increase in price. And at the
Yeah, but at 78 times trailing, one wonders about the margin of safety at this point. But your point is well made. Let me go across to my colleague Soumit Sarkar now, because he's joining in with all of the chatter from the dealing rooms. I'm very curious about what he has to say about the way that the IT index and the constituents therein have been absolutely hammered in trade today, because these are completely off compared with the expectations, right, Soumit?
Yes, the numbers were not that great and by HCLTech, and that is also putting the pressure overall when it comes to the IT index. Now, Tech Mahindra, we did see some big moves coming in, but that was also largely because some short squeeze activity did happen. A lot of short build-up was there, and then the EBIT number came in marginally above what the street was anticipating, and that could have led to this short squeeze. But after that settling in, again, the stock is down 2.5% in trade. So not much of buying activity that we are seeing, at least when it comes to the IT names. But apart from that, few other names that dealers have highlighted in trade today. Firstly is delivery. There are sell flows on the large HNI desk, and dealers are indicating that the margins for the fourth quarter specifically are expected to be on the weaker side, and hence this sell flows coming in for this counter. FMCG names are seeing strong buying action in trade. Three counters that dealers have highlighted: HUL, Varun Beverages and Patanjali. High buy flows that dealers are seeing on these three names on the FII desk. So keep an eye out for these names. For Eternal, there are buy flows on PMS desk. Renowned PMS have been accumulating this counter. They are quite bullish on Blinkit numbers is what dealers have highlighted, and hence this buy flows coming in. And lastly, when it comes to Geofinance, there are buy flows on the HNI desk. Dealers consider the Geofinance as a value buy because they believe that the current market price is not fully factoring in the upside potential from Geofinance. They believe that Reliance Industries shares that Geofinance owns, that is only valued at around 210 rupees, and the stock is trading at close to 240. So the full potential upside is not factored in at the current market price for Geofinance.
Got it. All right, Soumit, thanks so much for that. Ajit, I want to come to you on the FMCG names that Soumit mentioned. The khabar is that HUL, Varun Beverages and Patanjali are finding themselves on FII desks and buy flows are significant. How do the charts look for these counters?
So Alex, after this phase of underperformance, at least BBL definitely has done exceptionally well in the recent weeks. Means we have covered all the losses that the stock has experienced in the recent past, and we are now on the verge of initiating a next leg of the up move. So let's say if it crosses 500 levels, then probably we are set for a clear recovery phase towards 550 or maybe higher. On the other hand, HUL, I still feel that we have multiple resistances to cross. Means we are currently hovering around this zone close to around 2400, 2450 mark. So broadly 2000, 2800 is the range that the stock has been trading in from almost a couple of years now. So it seems unlikely that this move is going to be vertical. Yes, we had surprise from Nestle of late. But it seems unlikely in HUL so far, considering the hurdle around 2460, 2500 zone. So as of now, BBL looks comparatively better.
Okay. So looking at some of the other buzzers today, and Ajit, I'm going to quickly do sort of a rapid fire with you on what you like on the charts. Amara Raja, Ireda, Exide, Inox India. Let's talk about these four.
So Exide, Amaraja, exceptional move, no doubt. The volumes are very strong, and the way we have seen recovery in the stock, probably we may see a follow-up move also in the coming session. So one can definitely stay put with stop at 840, and 982,000 would be the target area. Similarly for Exide, now we are at the juncture where we have multiple hurdles around the 375, 380 zone. So we are very close to that mark. So the prudent approach is to at least book profit. In Exide and Inox Wind, we still have room for further upside. Means after this phase of underperformance, we are finally seeing stock reclaiming its 100 EMA mark. Volumes are strong. So this probably may result in recovery towards its long-term averages around 120 mark. So with stop at 100, one can continue to stay put in Inox Wind as well.
Couple of stocks that you might have missed, and I don't blame you. Irida is the counter that you might have missed. It's up 9%. Data Patterns is a stock that is up as much as 8%. These are the top gainers on the 500 as well. Would you buy into them?
Data pattern for sure, Alex, because if you see that very consistent move, stock at record highs, volumes are consistent even at the record highs level. So this clearly shows that buyers are completely under control. 3,500 is the immediate base, so that should act as a immediate stop. And potentially the stock has the potential to test 4,200, 4,400 in the near future. So the risk reward is also favorable. Irida, I feel that some of these railway counters, they are gaining traction, but we are still seeing this downtrend reversing, step by step. So it's not a very clear cut reversal, I would say. Today we have surpassed this hurdle of long-term averages. Whether we are going to sustain this area or something that we have to watch out for. So as of now, those who are stuck in railway counters, they can utilize this recovery to reduce their position.
Okay. I'm just going to quickly cut into this live press conference that you're seeing. It's a change of guard at the Godrej Group. And Pirojsha Godrej speaking right now, an important corporate event. Let's listen in.
Strong education, a lucrative career. He could have, of course, gone back to that. But he was very bold. He was very committed to his idea of making sure his entrepreneurial bug was a success. And so the story goes that he apparently looked for his next business idea by doing some market research in Chor Bazaar and going there and seeing what products he thought could be disrupted, could be added value to. And actually the first product, his next product after surgical tools was locks. And as many of you know, that has been a big success story for the Godrej Group. It's a big product line for the Godrej Enterprises Group till this date. And this image here on the left is actually of a patent from the year 1900 for locks that was approved and received by Ardesha Godrej. And this was actually something we didn't have in the group for many years. And one of my ex-colleagues found it in a bookstore in England, this patent, and kindly bought it and gifted it to me. But I think, again, this idea of being bold, of thinking big, of not allowing yourself to be set back and willing to get up and show the grit to do it all over again. We think this story of kind of starting one business, failing at that, and immediately starting another one is the best demonstration of the group's past and the idea of being bold. Another story that's of incredible importance to us actually relates to the first product on the Godrej Industries Group side of the business, which is soaps. Here again, the idea was very innovative, very entrepreneurial, and was actually born out of the last global pandemic in the around 1918, 1919. And in response to that, Ardesha thought that the best product that he could come up with was soaps, which were badly needed at the time. But all soaps in the early 1900s were made from animal fat, which was, of course, a big deterrent to absorption, particularly in a country like India with a lot of religious and cultural sensitivities about using products made from animals.
All right, so change of guard at the Godrej Group. That's Pirojsha Godrej, who will be taking over as group chairperson later on this year after Nadir Godrej turns 75.
And from leading Godrej Properties for quite a while.
Yes.
He's been at the helm of that business, but it's a significant shift in one of the oldest families and industrial houses.
Well, to his credit, Godrej Properties has gone from strength to strength as well, and a relatively newer business segment for such a storied company, which has been around for ages. I don't know, Pashupati Advani is still with us. Mr. Advani, just any commentary, as you know, we're covering, of course, this change of guard, but any commentary on how you're looking at the Godrej Group and some of the listed entities?
Well, you know, the main thing is that they've done the division at the parent generation, and now things are very clear. And appointing Pirojsha as the chairman of the group is a welcome step. And you know, I think they are very strong, very quietly strong, and you know, we're seeing it in their stock prices. I mean, they've continued to deliver decent shareholder value.
Okay, so Godrej in focus, that's a big corporate story, but the other one in focus is ABB, isn't it? Because commentary from the global business saying that India order flow in the first quarter grew at 26% and for the quarter, that's first quarter of the calendar year, and For year on year, it grew 52%. Analysts estimate order inflow growth was 7 to 9%. So it's really surprised on the upside. ABB in focus today. Just want to go to Ajit with any view he has on ABB on the charts.
The kind of recovery that we are seeing, which is almost like, vertical after this 1.5 year of consolidation corrective phase, this clearly shows that bulls are completely under control. And I won't be surprised that the stock retests its record highs, maybe in the coming weeks. So yes, you can continue to stay put. For fresh buying here, possibly a consolidation is likely, maybe, in this range of 72 to 7,500 in the near future, and 6,800 is the immediate base as of now. So with that as a stop, one can definitely look at accumulating ABB for newer record highs around 8,500 plus.
Right. On that note, gentlemen, thanks so much for joining us this afternoon. Pleasure speaking with you as always. We have to slip into a very quick break on this leg of India market close, but we are trading very close to the low point of the day. In fact, the Sensex now trading with cuts of close to 1%, and the IT index is what is really pulling that pressure on the downside. Sensex now at 78,500. The Nifty 50 is below that 24,400 mark, which was seen as very crucial. Trading ideas heading into the last leg of trade, and a lot more on the other side of this break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एनवी सर से लाइव एनडीटीवी युवा पर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
All right, welcome back. Let's just pull up the indices very quickly as we're getting into the last 20 minutes of trade. And, it's one of those days where most indices are in the red, but I don't think there's any great panic, because after the kind of run-up we've had, and if you look at the last 5 days or a week of the Nifty, we've been doing okay. This is a bit of a cool-off or a breather more than anything else. You're still about 1% up in the last few days, and for the week you're about 0.5% up. So maybe a bit of breather in that sense. In fact, let me get a view on the Nifty from Shivangi Sarda. She's analyst equity derivatives and technical at MOFSL. Dharmesh Kant also joining in this afternoon. Welcome to both of you. Shivangi, let's get your index view first.
Very good afternoon, Tamanna and Alex. Thank you for having me. We've seen that the indices have witnessed a good amount of buying in the last couple of sessions, but today there is some bit of rubber from the higher levels. Now, of course, we've seen that there is some bit of consolidation at the higher levels, but then again, the key support levels are still being respected. Till the time Nifty closes above 24,350 marks, we could expect, buy and decline to continue for the monthly expiry. Of course, a lot of volatility will be expected on account of that as well. Now, looking at the upside, if it manages to hold above 24,450 levels, then we could see an up move, to around about 24,600 marks immediately on the Nifty index.
Okay, and what individual counters are you looking at that you like? In fact, we can even talk at this stage about BTST ideas.
So individual counters, in fact, right now I'm looking at some of the banking counters. the entire banking space is holding up and is showing some bit of resilience. So Bank of Maharashtra is one stock which is kind of on my radar. We've seen Bank Nifty hold above 57,000, which will be important for the entire index. But overall, Bank of Maharashtra is looking quite positive because of the recovery and up move that we've seen here. Now, of course, follow up is quite strong here, and we are kind of expecting up move to round about 83 odd levels for Bank of Maharashtra with a support of 79 levels.
Dharmesh Kant with us this afternoon as well. Dharmesh, very good afternoon to you. And ultimately, the biggest story has to be IT. You have had TechM results, you've had Persistent Systems that came out earlier, but really the shocker was HCLTech. So what is your suggestion to those investors that may have taken an index strategy or that may have bought the dip on IT over the last couple of weeks and now seeing further cuts?
Yeah, good afternoon to you, Alex, and to all the viewers. See, we have been very clear on the IT for last 1.5 years, so any rallies need not be, bought into. And we were staying away from ITs, barring a couple of companies which were, bottoms-up approach to stock-specific companies. Results were not great. I mean, even Tech Mahindra results, people are, seeing it as a positive or it's no event result kind of a thing. But if you look at Tech Mahindra numbers, 14-15% kind of an ROE, P multiple of 28 times, 14-15% margin aspiration. In light of TCS, which has an ROE of 51, and your margins of 26, 27, I'm talking about the operating margins, and P multiple of 17 times. So the growth is totally missing from everywhere. Even the margins which they have been able to clock, this is on the backdrop of, currency tailwind which they had. So to our mind, it was a very clear, avoid if you are not shorting it. As per strategy, if somebody has bought it just in light of the currency tailwind, which is likely to play out. So now the results are self-reflective. They are very much clear that in spite of currency tailwind coming into play, there's not enough margin accretion into the play, because that's what you are playing for the IT companies. Growth is anyways, mid-single digit. So exit is the call. If you still want to be a brave heart, stay invested, but take a stop loss into place.
And just want to very quickly confirm, there is not a single IT company that you would suggest to buy, Dharmesh?
No, Alex, we have initiating coverage on Orion Pro Solutions Limited, and we are holding that. And the reason for that is that's a totally Indian domestic IT company, which is a mix of, data center, railway ticketing, and the BFSI space. So 98% of the revenue is derived from the country itself, and the order book has fallen very hard. It's twice the revenue they are doing. So we are waiting for the results. Results are due on 11th May. Then I can make a fuller comment on that. But our target price for the same company for this financial year, FY27, is 1675, which I think is doable. And they have done 20% plus kind of a CAGR for last 3 years, and which we expect is likely to continue going forward into the future.
In fact, HCLTech's management, and one of the reasons you've seen such a sharp reaction is because HCLTech's management has been pretty vocal and frank about the volatility caused by tariff uncertainties, discretionary spends, and AI as well.
Have you seen any sort of cannibalization for legacy revenues yet? And how do you see the volume to sort of offset that issue?
Yeah, I think we have talked about it. We will see a deflation in some of the existing revenue streams. And based on our portfolio, AI deflation could be 2 to 3% a year. But we have launched a lot of new AI services, which is what we call as advanced AI, which has got 5 broad category of services. One is AI factory, physical AI, semiconductor design for inferencing, then AI-led marketing services, and IP and platform. So these 5 are what largely contributes to our advanced AI revenue. And as you can see, it's grown 6 or 7% sequentially. We think this is a strong revenue stream. It should grow 25-30% year on year. This will really become a big growth driver. And we have a disproportionate emphasis among the leadership to really drive the advanced AI revenue, while of course doing all the right things like AI transformation in our existing customers to transform our traditional revenues into more AI-led operating model.
All right. If there's one pack of stocks that has been doing particularly well over the last couple of days, it is the consumption pack. And Trent back in focus for multiple reasons, expectations of a strong performance, but also the bonus announcement, right? Mahima joining in to tell you about what the street is penciling in. Expectations are pretty high.
Absolutely, Alex. We saw the Q4 business update coming in and we saw that the standalone revenue saw an uptick of around 20% plus the aggressive store expansion that took place, beating analyst estimates. Now, as per Bloomberg estimates, the EBITDA growth is expected to be at 22%, which is much higher than what it's done in the past couple of quarters. EBITDA margins seen at 16.5% versus that of 15.9% earlier. So margin uptick is also something that is on the cards, and profit might see an uptick of around 7% odd. Plus revenue growth much better as compared to what it's done in the past 2 quarters, 15 and 17% respectively, and now at 20%. Overall average revenue per square feet might reduce a tad bit by around 3% as per analyst estimates, but this is on account of the aggressive store expansion that they're doing. Citi has maintained a cautious stance considering competition and store cannibalization, but Morgan Stanley expects Q4 standalone EBITDA margin to improve by around 100 basis points, and Macquarie believes that same-store sales growth momentum from here on will continue. I think the key things to watch out for would be stable like-for-like growth and store throughput going forward, considering the store expansion for Zudio. Overall sustainability of store addition momentum is also something that we'll be watching out, plus important announcements, bonus, right issue, fundraising via right issue, as well as the dividend that they announce. All of these things will be, that will be the things that we'll be looking forward to when Trent results are announced.
The other thing is that now expectations are so high, so we'll have to wait and see how Trent really performs, but that's the big one to watch. Shivangi, Trent on the charts?
So, Tamanna, looking at Trent, we've of course seen that the entire space has seen a lot of good amount of short covering. Trent, of course, has surpassed its previous immediate hurdle zones of 4,300 odd levels. But overall, on the weekly basis, it is still trading in a downward sloping channel, and we would kind of wait and watch over here. Of course, even though we've seen that there has been a good run up, today's session is marking as a doji sort of a candle, technically speaking. So we'll watch out for this stock to hold above, 4,400 levels. And if it manages to hold above the same, then, we could see a bit of an up move towards around about 45-50 levels.
Just as we go into the last few minutes of trade, Shivangi, and I know you've given some BTST ideas, but what is on top of mind? Anything interesting you're spotting? Because especially Bank Nifty seems to have worsened in the last few minutes as well.
The stocks that I'm tracking right now is NTPC, which has seen a good amount of OI build up recently, and there has been good volumes adding up here in the last hour as well. So this is one stock which is looking quite resilient despite the market volatility. And this one is getting ready for the next move towards 420 odd levels, and we could have a support near 397 levels.
Okay. All right. We started this program by talking about it in terms of a tale of two markets. Practically, if you subdivide this, you look at the benchmark Nifty 15, it's trading very close to the low point of the day at below 24,400. And you have the broader markets that are actually looking reasonably good. The mid-cap index now trading with gains of just about 0.2% off the high point of the day. But the small-cap index trading very close to the high point, up about 1%. So the market breadth is still robust. Look at the gap between advances and declines, and you're pretty much at very close to the high point of the day. Are you surprised by this at all, Dharmesh? And are you looking at options or opportunities in the broader markets? Because while at the index level, we may have come back quite strongly in the month of April, there must still be pockets of opportunity after the drop that you saw in March.
Yeah, Alex, that's the dichotomy here. The broader market has been doing pretty well. Even today, the breadth has been quite good. And this is coming on the backdrop of Q4 numbers. And see, foreign institutional investors or, big fund houses, large houses, they don't delve directly into the broader market immediately. Since these numbers are Q4, which was supposed to be good, nothing happened out there. So people are running this. I mean, they are taking positions in anticipation of a good numbers. But the worry would be Q1 numbers for this entire space. And there, I think the input prices have gone up significantly for most of them. There has been supply disruptions, which is getting the input cost even higher. Plus, the concerns about the heat wave and everything is doing the round. So one has to be very careful. We did place, few companies from the border market like Power Mac Projects Limited, which is more into the piping and the operations and maintenance of power plants. So that has done pretty well from our initiation price. Welspun and Corporation, we have done initiating coverage at around 840, 850 levels. That has achieved our target of 1110. So there are definitely plays in the border market space which one has to look into. Recently, I think one of the safest options in the broader market could be, housing finance company. We have seen the number of PNB Housing Finance. It came out of a very strong set of numbers. Management commentary was even stronger than the numbers themselves. 18 to 20% growth they have been guiding out. We have initiating buy coverage on Aadhar Housing Finance, which I think going forward next 2 years, they will be doing 20-22% kind of AUM growth with stable ROAs in excess of 4.23%. At the same time, Pradhan Mantri Awas Yojana benefits are coming down, and that is what is helping the affordable housing segment in a big way. So you will hear good results from all of them. So if you are stock specific, there's no harm. But the secular trend which we are seeing, 1600, 1700 stocks advances, that is where I am a bit cautious about.
Okay. Now, just wanted to point out very quickly, Alex, that Brent is nudging 100. So while we all go about talking about Trent and Nestle and HCLTech, as we must, and while sort of the immediacy of what's happening geopolitically has shifted to the back, as it does sometimes. The fact is, you're 99.22 on the Brent.
This is
another
my biggest
0.75% up.
This is my biggest worry, is that Q4 and looking at these numbers, you're not going to see any of the pain that you will see in Q1, and that will, when those cows come home to roost.
Yeah, which is very quickly.
Which is soon.
It's not, and it's happening right now. So that's the only thing. Even as we celebrate a Trent and we celebrate a Nestle and a Trent, I don't know how Trent is going to respond or report, but as we celebrate a Nestle, etc., that's great. Not to take away from those points, but the real story or the real impact is going to hit only in Q1.
Yeah, and availability, ultimately you're talking about the government that has managed this entire scenario very, very well so far. But the next few weeks is going to be absolutely critical, because you have a resource that is primarily brought in. And in that context, by the way, energy transformation in this market also takes front seat. You have, even in trade today, something like an Amara Raja batteries, you have Exide that is up and about. Amara Raja, because it's talking about the possibility of a large-scale manufacturing of EV cells. In fact, let's go over to my colleague Parth, who's joining in to tell you about this report that has come through, but also the context, because we've been speaking, Parth, about Amara Raja transitioning to an EV play for some time now, haven't we?
That's right. You are absolutely right. And according to some media reports, Amara Raja is planning to start bulk EV cell production from 2027. They are starting a 2 gigawatt hour NMC plant, which is expected to start operations from the first half of 2027. Now, NMC stands for nickel, manganese and cobalt, which is basically a composite that is used to manufacture EV batteries. The company is targeting a capacity of 16 gigawatt hour, which they are expecting to ramp up over the next 10 years. If we have a look at their capex and infrastructure outlay, then they are planning a total long-term gigafactory investment plan of around 9,500 crores, they have already set up a subsidiary called Amara Raja Advanced Cell Technologies, which will be mainly focusing on the lithium segment that is again used to manufacture EV batteries. The company has already deployed a capital of 1400 crores in this subsidiary, and they will also set up another 5 gigawatt battery energy storage plant for a capex of 280 crores. So they are entering into these high growth segments. About their new energy revenues and scale economies, the company's new energy business crossed the revenue of 200 crores in the third quarter of FY26. So this milestone they have already hit, and they are planning to increase the revenues from this segment going forward. The management said that the EV cells which the company will manufacture locally will have a premium of 15% compared to the ones that are imported in India. And the company has also said that they will be able to achieve cost parity once they have scaled their capacity in the range of 8 to 10 gigawatts. About their capex estimates.
Sure. We'll come to some more of those details. And in fact, I'm sure there'll be a detailed piece by Parth on the website that you can go and read and get more on the story. Parth, thank you so much for that. So Exide in focus. Shivangi, just this whole space, actually energy is in focus today. So Amaraja, Exide, all of them buzzing. Is it now too much to look at these as plays? You think that you're going to have to wait for some of these stocks to cool off before looking at it seriously?
Absolutely. Energy stocks have actually done wonderfully well, and we've seen, they have almost spurted in today's trading session. But instead of waiting in this, I think one could look at some of the power stocks which are also buzzing and looking quite well even at these levels. We could look at, Adani Power for that matter, which has consistently moved and is giving very strong follow-up at these levels as well. So these stocks could definitely be kept on radar for a short swing.
Okay. Any bottom fishing in the IT names for, say, a short-term play, or is it an avoid, like a Persistent, an HCLTech, even a TechM?
Tamanna, the IT stocks are not very faithful, and as of now, we aren't seeing much of, follow-up here. So I would recommend a little wait and watch here. In fact, there are better sectors that one could focus on instead of the IT, which will give a huge opportunity cost.
Okay, all right. On that note, Shivangi, thanks so much for taking the time. Pleasure speaking with you.
Yeah, interesting turn of phrase. IT stocks are not very faithful. I don't know which stocks are faithful.
No, I mean, you can talk about loyalty and you can talk about holding stocks forever and ever, but then you have to at some point be pragmatic about these things.
Yeah. Well, it's a situationship with IT stocks right now to take that further. 1% down on the Nifty 50, 215, 24, 360 and moving fast. I think if you've looked at our screen and what's at the bottom, that might be a bit of a wait and see what happens, because if Iran has now seized 2 ships, saying that they broke maritime laws, is this
laws that they made, of course?
I don't know. We don't have those details. It's seized 2 ships for violation and then taken them to Iran's coast, and there America is turning back ships. So it's the high seas are now fraught with danger right now. So that's not going to be great. And we should look at Brent as well.
Also seen a closing of the gap between the advances and declines just in the last few minutes.
It's very negative. In fact, pull up the intraday for the mid cap and the small cap, because the Nifty was anyway in pain thanks to IT. So you're seeing a drop there on the Nifty mid cap 150. The small cap will also tell you that story perhaps, and so will the advanced decline. Not so much on the small cap, but the mid caps have really come off. This has also closed in to some extent, not too much going forward. But that's one to watch. I think IT is really been the downer, the mood downer of the day. Trent is something I'm looking forward to seeing.
Oh yeah, Trent is certainly going to be in focus. And speaking of IT, commentary that comes through from the Tech Mahindra results, right? And the team, we've got Jasmeet there, and he'll tell us bright and early tomorrow as well. And of course, this evening, you can stay tuned for that. The emergence of a new leader at the group level for the Godrej Group is another big story. But from a stock market standpoint, I think it's once again earnings front and center, and a few of these consumption names will be in focus tomorrow. Whether there's a recouping of the losses for the IT pack, because the tendency is to sell everything and then we'll worry about it later.
If you've paid attention to Sumit's heard on this trade, as we close off, one of the things that he's reporting is interest on FII dealer desks for FMCG. If FIIs are looking for a safe play and banks are tapped out, IT is looking not as loyal or faithful, I suppose, then will FMCG be the next port of call? The sectoral heat map will tell you what's working today, and energy stocks have been powering and firing. That's what's been exciting. Nifty Energy about 1.5% up, defense looking good. But then again, that's a very slimly populated index. There are not too many stocks there.
Yeah.
Small cap 250, 1% up is what is heartening, and Nifty IT is in a world of pain, no doubt about it.
And the other thing is the underperformance of the private sector banks. Yesterday seems to have been a little bit of a flash in the pan, but having said that, you have I think we spoke about it this morning, Tamanna, where the private sector banks, you had a delayed reaction to the earnings, where both ICICI Bank and HDFC Bank were up over 2 percentage points yesterday. Money being taken off the table today.
You know, the problem with some of those counters, Alex, is that their holdings are so varied, and some of those players look at their decisions not because of the quality of the bank or fundamentals. There's so much else.
Basket selling that takes place.
A lot of basket selling comes into play. Just the top gainers and losers before we wrap this session of India Market Close. Amara Raja, Delta Corp data patterns, that's why defense stocks are up. Rani Energy, JK Paper, KRBL, some of the winners. HCLTech, Tata Elxsi Persistent, all of them in pain. 361. All of these four stocks were actually on our watch list with exactly this take is something that I was looking at it. So we've largely seen the entire tech pack, and Infosys just along for the ride. Their results are not even out yet, but getting beaten along the way.
Yeah, so if the results turn out to be a surprise like TCS was, well, you can see it move the other way very quickly. But we're out of time on this edition of India Market Close. From Tamanna and myself and the team that put the show together, thanks so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhavna. Let's get straight into the show and see how the markets have fared today. So markets have witnessed profit booking and ended the day near day's low. Nifty 50 closes below 24,400 mark while Sensex ends 1% down. If you look at the broader market, so they have outperformed the benchmarks and manages to end in green. And looking at the sectoral picture, so it remains mixed. IT index ends as top sectoral loser, dragged by weak HCLTech numbers. Nifty Energy and Defense gain in trade. And now let's look at some key counters in focus. First up, we have Havells India. That has posted a strong bottom line performance in the March quarter with profit rising sharply despite modest revenue growth. Margins come under some pressure even as steady demand in cables and switchgears supports the overall performance. Now, segment trends remain mixed with consumer durables continuing to lag, and the board also announces a dividend of 6 rupees per share, offering some sort of cheer to the shareholders. Next counter in focus is IRDA, which is firmly in the spotlight today with stock surging over 9% intraday to a 3-month high. And this move is backed by improving fundamentals. The declining cost of funds is also aiding the margins, while asset quality has strengthened for the third straight quarter. Loan growth also remains robust, with management guiding for a healthy CAGR of around 22% over the next few years. And this is driven by strong demand for green energy financing. And as India's largest green-focused NBFC, IRDA is positioning itself well for the renewable capex cycle. Now let's look at some brokerage notes as well. So brokerage views on persistent systems remain clearly divided. Citi maintains a sell rating, flagging premium valuations despite largely inline Q4 results, and stays cautious on the sector amid competitive intensity and also AI-led disruption. Nuvama, however, is more constructive, now also retaining its buy and raising the target price even as it acknowledges a softer commentary and even slightly below estimate revenue growth. The brokerage believes that strong deal wins and capability should help growth recover in the coming quarters, keeping persistent among industry leaders. Next counter in focus is HCLTech, which is struggling to find momentum. The company posts its sharpest constant currency decline in several years as the deal delays hit growth. So the outlook also comes in softer than expected with demand weakness across key sectors. Client-specific issues and lower discretionary spending continue to weigh on the performance, while AI-led pricing pressure adds to the near-term challenges. So overall, execution hiccups and a choppy global environment keep the growth under pressure. Next counter in focus is Tech Mahindra. It has delivered a steady Q4 with margins also expanding for the 10th straight quarter, rising 70 basis points sequentially. So profit growth stood out while revenue growth remained modest with constant currency growth at just over 0.5%. The BFSI segment have led the recovery, rebounding sharply after a weak third quarter. Deal momentum stayed strong with total contract value at over $1 billion and FY26 marking the company's highest ever annual deal wins. So management remains on track to reach its 15% margin target by FY27. And US Tata Elxsi has fallen despite delivering a steady quarter with growth led by its media and communications business margins. They've improved sharply, helping the bottom line also despite modest revenue growth. So operating performance remains strong, though employee attrition ticks up slightly. Overall, better execution and cost control support the profitability even as demand conditions stay mixed. And Darrell struggles to convert higher revenues into profit as margins slip sharply in the March quarter. Rising ESOP cost, weaker gross margins, and a sharp fall in order inflows weigh on the performance of the company. Now, the full year also disappoints, with key targets missed and even cash flows turning negative, hurting the visibility. While the company lays out a growth plan for the next year, execution remains the key concern for the street. Again, let's look at some brokerage notes. So brokerages are striking a more constructive tone on Nestle, with a string of target hikes following a strong volume-led quarter. Morgan Stanley and Goldman Sachs have raised the targets, citing robust top-line growth and also stable margins. And this has been held by the GST cuts and wider reach. Investec has upgraded the stock on sustained momentum and operating efficiencies. While Jefferies and Macquarie remain cautious on valuation, Citi stands out with a buy call, saying that Nestle's all-round performance and earnings trajectory justify its premium positioning. In fact, sugar stocks rally as the government's ethanol push sweetens the outlook for the sector. Supportive policy signals, easing export rules, and firm crude prices make sugar diversion to ethanol more attractive. Higher ethanol demand and better pricing improve the margins for mills, while global factors, including Brazil's ethanol shift, add to the optimism. And Infosys may extend CEO Salil Parikh's term by 2 years as the board looks to ensure leadership continuity. Now, the current tenure ends next year, and the move is seen as a stabilizing step amid industry disruption and rapid shifts, driven by AI. So the discussion comes alongside succession planning as Infosys navigates a challenging demand environment, and this we are gathering through our sources. Next counter in focus is ABB, which has delivered a strong surprise on the order front. Now, the company says that India order inflows grew 26% year-on-year in the first quarter of calendar year 2026. And this is sharply ahead of the street expectation, of high single-digit growth. So this follows an even stronger 52% rise in the previous quarter, also underscoring sustained demand across electrification, automation, and power segments. So with inflows consistently beating the forecast, ABB's India execution visibility continues to strengthen, reinforcing confidence in the medium-term industrial capex cycle. Next counter in focus is PNC Infratech, which is in focus after emerging as the lowest bidder for a 3,500 crore road construction project from the National Highways Authority of India. Now, the order strengthens the company's infrastructure pipeline and also improves the revenue visibility over the near to medium term. And viewers, KNR Constructions is in focus after reaching a 130 crore settlement with the National Highways Authority of India. The settlement resolves a long-pending dispute related to arbitration claims and is also expected to improve the cash flows. So the development provides near-term balance sheet relief and also helps reduce the outstanding receivables for the company. Next counter to look at is JSW Energy, which is in focus after its arm JSW Mahanadi Power has received a nearly 1,450 crore demand notice from the Chhattisgarh government over water charges. Now, the company challenges the demand in the High Court, terming it disputable. And the development adds a near-term overhang, even as JSW Energy maintains that it has a strong legal footing in the matter. Next counter to look at is BEML. So it's in focus after securing a 590 crores defense order from the Ministry of Defense, strengthening its near-term execution pipeline. The company also steps up its global presence with the fresh export wins, including its first overseas metro rolling stock order. So strategic partnerships add to visibility, while a strong and growing order book supports the outlook ahead. And Tesla has launched the long wheelbase model YL in India, expanding its electric SUV lineup. Now, the new variant comes with 3 rows and 6 seats, targeting buyers looking for more space and comfort. Now, it offers a range of around 680 kilometers on a single charge and also delivers strong performance for a premium EV. Now, despite high import duties keeping the prices elevated, Tesla is betting on rising demand for large electric SUVs in India. And viewers, Meta is taking its AI push inside the workplace. The Facebook and Instagram parent will now track employees' keystrokes and even mouse clicks using everyday work activity to train its artificial intelligence models. And the company has said that the data will be used only for AI development with safeguards to protect the sensitive content. But internally, the move has sparked unease, with some employees calling it especially as hiring freezes widen and even job openings dry up, underscoring how central AI has become to Meta's future. And viewers, Italy has confirmed its budget deficit stood at 3.1% of the GDP last year. This is according to official data released by Statistics Bureau Istat. Now, while the figure shows an improvement from the previous year, it remains just above the European Union's 3% limit. Now, the confirmation effectively ends Rome's hopes of exiting the EU's excessive deficit procedure for now, keeping fiscal oversight firmly in place. But the data was formally submitted to the European Commission as part of Italy's ongoing budget monitoring process. And viewers, UK housing data points to early signs of stabilization. Official figures show British house prices rose about 1.2% in the year to February, marking a faster pace than the previous month. At the same time, pressure in the rental market appears to be easing, with the average private rents rising 3.4% in March, and which is the slowest annual increase in 4 years. So the data suggests buyer confidence is holding up, while affordability pressures in the rental market may finally be beginning to cool. And UK financial regulators are moving to lighten the regulatory load. The Financial Conduct Authority and the Prudential Regulation Authority have confirmed changes to streamline senior manager accountability, aiming to cut compliance costs and also support economic growth. Now, regulators stress that personal responsibility for top executives will not be diluted, and the move is part of a broader government-led push to reduce the red tape, with further reforms expected as the UK, looks to balance strong oversight with competitiveness. And viewers, LG Display stepping up its push into next generation screens. The South Korean display maker says that it will invest 1.1 trillion won to build new infrastructure for organic light emitting diode displays. And this is aiming to strengthen its technological competitiveness. And the investment will be spread over more than 2 years, from April 2026 through June 2028, underscoring the company's long-term focus on OLED technology as competition intensifies across the global display market. And NASA has unveiled its newest space observatory, the Roman Space Telescope, designed to scan vast regions of the universe in search of planets beyond our solar system. Scientists say that Roman could discover tens of thousands of distant worlds, offering fresh insight into how common planets really are. So the telescope will also help probe the mysteries of dark matter and even dark energy. Now, built over more than a decade, a cost exceeding $4 billion, the mission is named after Nancy Grace Roman, widely known as the mother of Hubble. Now let's look at some national news now, viewers. West Bengal goes to polls tomorrow as the first phase of the assembly election gets underway across 152 constituencies and 16 districts. Now, nearly 1,400 candidates are in the fray in this opening round, and the Election Commission says that elaborate arrangements are in place to ensure free, fair and peaceful voting. And with over 44,000 booths across the state, women will manage thousands of polling stations. Special model and PWD-run booths have been set up, and 100% webcasting will monitor every vote, backed by extensive security deployment on the ground. And the Congress has accused West Bengal's ruling Trinamool Congress of blocking its campaign push in Kolkata, claiming permission was denied for a Rahul Gandhi rally ahead of the first phase of assembly voting. And the Lok Sabha MP was scheduled to address a public meeting on April 23rd, but the party says that local clearance did not come through despite waiting till Tuesday evening. And as a result, the event was cancelled over logistical constraints. Now, Congress leaders say that they will now seek fresh permission for a revised rally later this week. And the government has ordered a judicial commission probe into the deadly fire at a firecracker unit in Thrissur district that has claimed at least 9 lives so far. Now, the blaze broke out while workers were preparing fireworks ahead of the Thrissur Puram festival, and also officials fear the death toll could really rise as unidentified body parts were recovered from the site. So, Chief Minister Pinarayi Vijayan has announced a compensation of 14 lakh rupees for the families of those killed, and a retired High Court judge will lead the inquiry into the incident. And the Supreme Court has launched a nationwide push to fast-track consensual dispute resolution, unveiling its Samadhan Samaro 2026 initiative. Now, the program aims to encourage amicable settlement of pending cases through mediation, and even will culminate in a special Lok Adalat from August 21 to 23rd, with over 94,000 cases currently pending. And the court has said that the effort reflects its vision of participative justice and even doorstep delivery. And the parties can register over the next 4 months using both physical and virtual modes. This has been supported by a dedicated war room and also online portal. And it has been a year since the deadly terror attack in Pahalgam that claimed 26 innocent lives. The attack has left behind irreparable wounds. With a year passing since the attack, tributes have poured in, remembering the lives lived and lost to terror. The Prime Minister, remembering the innocent lives lost, said that the country would never bow to any form of terror. Now let's look at some international news, viewers. The US has pressed pause but kept the pressure on. President Trump has extended the ceasefire, with Iran buying Tehran time to submit a unified proposal, even as the US naval blockade remains firmly in place. And Trump claims the blockade is costing Iran $500 million per day, and says that Tehran's military capabilities have been neutralized. Iran, for its part, insists that it won't negotiate under blockade conditions, and the decision followed a frantic day of diplomacy, with talks postponed and timelines blurred, marking the second time in 2 weeks Trump has stepped back from escalation. Meanwhile, European powers are stepping in, and with UK and France leading talks among 30 nations aimed at reopening the Strait of Hormuz. And tensions are rising again in Strait of Hormuz. At least 3 container ships were hit by gunfire on Wednesday, according to British maritime authorities, just hours after US President Donald Trump announced an extension of the fragile ceasefire with Iran. Now, the United Kingdom Maritime Trade Operations has said that 1 vessel was fired upon by Iran's Revolutionary Guard, with Iranian media reporting strikes on 2 more ships. Now, the incidents come even as the US continues its blockade of Iranian ports, and with uncertainty growing over peace talks after Vice President J.D. Vance did not travel to Pakistan as earlier expected. And El Salvador has begun a mass trial of 486 suspected members of the MS-13 gang, marking one of the largest collective prosecutions under the government's crackdown on organized crime. Now, prosecutors allege the group is responsible for more than 47,000 crimes, including murder, extortion, and arms trafficking over a 10-year period. Now, footage shows the accused appearing via video link from the prison, while the government insists that it has compelling evidence to seek maximum sentences. United Nations experts have warned that mass trials risk undermining due process and, the presumption of innocence. And viewers, the Indian women's football team has dropped 2 places to 69th in the latest FIFA rankings released yesterday. The Blue Tigresses were recently featured in the 14 FIFA Series 2026 tournament held in Kenya, where they finished the 3rd. Now, India beat Malawi by 3-2 in the 3rd placed playoff match after earlier losing 0-2 against Kenya. And viewers, that's all the time we had on Market Express, but we leave you with a special report. Rising urban demand is reshaping how households hire domestic help, with app-based platforms seeing a sharp surge in metro cities. Services like InstaHelp by Urban Company, along with newer players such as Nabbit and Pronto, have witnessed rapid growth since August 2025. Ridhima, my colleague, brings in this report.
Rise in the demand
for domestic help in metro cities has led to the boom for companies which give instant maids like InstaHelp, Pronto and Snapit. The companies have been growing at a rapid pace in the number of bookings since August 2025.
If we look at bookings, Urban Company crossed 10 lakh bookings in March 2026, up from 2.9 lakh in August 2025. Snapit saw over 10 lakh bookings in March, up from 1 lakh in 2025 August. Pronto reported over 5 lakh bookings in March, up from 30,000 in August 2025. We went on ground to check the competition, demand and worker economics, as workers are core component for these platforms. The number of workers equals the number of service deliveries, and around 60 to 80% of the order value goes to the workers.
मैं 10 घंटे काम करती हूँ ना, अगर रेटिंग बोनस और अभी वो अटेंडेंस बोनस वो सब मिला के 30-35 आ जाता है, सब मिला के। और 2 छुट्टी भी करते तब भी आता है, अगर छुट्टी नहीं करे तो 40 तक भी जाता है कभी कभी। पूरा काम करें, दिन में 7 काम हो गए तो फिर आ ही जाता है। ऐसे तो अगर 4-5 घर में भी करेंगे तो इतना पैसा तो होगा नहीं है।
इंश्योरेंस भी मिल रहा है, मतलब 2 लाख का। जो मैरिड रहेगी उनको मतलब उनके पति को और 2 बच्चे को भी मिलता है इंश्योरेंस। अगर सिंगल रहेगी तो फिर 2 लाख का इंश्योरेंस मिलता है हमें।
While workers are getting enough salaries, with rise in competition in instant domestic help segment, companies are struggling to be profitable. Listed player Urban Company's InstaHelp reported adjusted EBITDA loss of Rs 61 crore in Q3 FY26. On the positive, losses per order has narrowed to Rs 381 in Q3 versus 760 in Q2 FY26. The management of Urban Company expects unit economics to improve further and expect the company business to break even by FY28 to FY31. Talking about the current valuation for Pronto, it stands at $100 million, and for Snapit, the current valuation is $400 to $500 million, and both the companies are not profitable as of now.
So what's the bigger picture? With rising demand for digital home services in urban areas, the truth is that this space is still evolving. And also the workers getting paid and trained at a sound rate, this is a segment which is growing. So the profitability is going to take time. So till then, the key monitorables are going to be demand, scalability of the companies, and the competition in this segment.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Tepid day of trade on the Lal Street today. Nifty snaps 3-day gaining streak, ends in red today. HCLTech leads the fall. Broader markets shine today. Tech Mahindra announces in-line fourth quarter results. IT major reports a sequential increase in profit and revenue beats estimates. Sources tell NDTV Profit that the government is considering a revision in voting right cap in banking. A higher revision from the current 26% may be on the anvil. Infosys to discuss the CEO extension. Sources tell NDTV Profit that CEO Salil Parekh is likely to get a short-term extension, both to discuss the CEO tenure soon. Pirojsha Godrej, the new chairperson designate of Godrej Industries Group, unveils a new identity and vision, aims 5 lakh crores market cap by 2031 to list 2 more companies from Godrej stable. Oil prices oscillate after Trump announces ceasefire extension but keeps Hormuz blockade in place. Brent crude hovers just below $100 per barrel mark. Iran claims 2 ships attacked at Strait of Hormuz after Trump extended ceasefire till the deal is made. Iran mocks Trump, says loser can't dictate terms. One more Indian tanker, Desh Garima, carrying 97,000 tons of crude oil to arrive in Mumbai today. Tanker has safely crossed the Strait of Hormuz. MEA says government is in regular talks with Iran for the safe passage of a vessel. A year to the Pahalgam terror attack, nation remembers Pahalgam attack victims. PM pays tribute, says they will never be forgotten. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So the stock markets have snapped 3-day gaining streak to end in the red. The benchmarks, both Nifty and Sensex, settled nearly 1% lower, but the broader markets continue to hold firm, especially the small caps. Nifty IT was among the biggest sectoral laggards, with HCLTech and Infosys dragging down the Nifty. So clearly intense selling pressure was seen with regards to IT stocks. Let's get in my colleague Varsha for all the market action.
Well, Nifty snaps 3-day gaining streak, ends in red today, ends below 24,400, which is down 0.8%. HCLTech leads in fall in Nifty, down almost 11%. Broader markets ends in green, outperforming benchmark. Nifty Midcap 150 gains over 0.2%. Nifty Midcap 150 ends in green for the second day in a row. IRDA and Exide Industry are the top gainers when it comes to Nifty Midcap 150. IRDA was up 8.5%. Exide gains over 6%. A small cap 250 gains over 1%, ends in green for the second day in a row. Amara Raja leads the gain in Nifty small cap 250, which is up over 16%. Sectors end on a mixed note. Nifty Energy is the top gaining sector, up almost 1.5%, ends in green for the 12th day in a row. Adani Energy and Reliance Power the top gainers when it comes to Nifty Energy, both up over 7%. IT is the top losing sector, down almost 4%. HCLTech is the biggest loser in Nifty IT, down almost 11%. Nifty PSU Banks ends in green for the 4th day in a row. Nifty Realty, Nifty Metal, Nifty FMCG ends in green for the 2nd day in a row, while Pharma snaps 2-day losing streak. Nifty Bank, Nifty Auto snaps 3-day gaining streak.
Thank you so much, Varsha, for that market roundup. And viewers, oil prices have oscillated as uncertainty lingered over the trajectory of the US-Iran conflict. Now, while President Donald Trump extended a fragile ceasefire, he has also signaled tensions remain far from resolved. Now, international benchmark, Brent crude and US West Texas Intermediate futures have edged into positive territory today. Now, both the indices have advanced by over 1%, while Brent is trading just shy of $100 per barrel mark. WTI crude is hovering near the $90 mark. Now, this jump comes right after oil prices significantly calmed down last week. In fact, Defence Minister Rajnath Singh has established that India has been at least affected country by the situation in West Asia and addressed the German Parliamentary Standing Committee on Defence and Security in Berlin. He said that whether it is crude oil, energy or LPG, India has enough stocks even today. Let's listen in.
वेस्ट एशिया की जो स्थिति है मित्रों, मैं आप सबको बताना चाहता हूं कि दुनिया के सारे देश जितने प्रभावित हुए हैं, सर्वाधिक कम यदि कोई देश प्रभावित हुआ है तो हमारा देश भारत प्रभावित हुआ है। चाहे क्रूड ऑयल का प्रश्न हो, अन्य एनर्जी के जो सब सारी चीजें हैं उनका प्रश्न हो, एलपीजी का हो, इन सब सारी चीजों का आज भी हमारे पास स्टॉक पर्याप्त है। प्रधानमंत्री जी ने हमारे ही चेयरमैनशिप में सारे लगभग 12, 13, 14 सीनियर मिनिस्टर्स की एक कमेटी बनाई है। उसकी हर सप्ताह में बैठक करता हूं, ग्रुप ऑफ मिनिस्टर्स की मीटिंग है और उसको बराबर रिव्यू करता हूं मैं। कहीं कोई खास ऐसा बिल्कुल संकट है ही नहीं। भारत जिस तरीके से चल रहा है, आपने देखा होगा कि स्ट्रेट ऑफ हार्मुज में दुनिया के किसी देश की शिप नहीं निकल पा रही थी। यदि शिप 7-8 निकल पाई तो केवल और केवल भारत की निकल पाई। यह है भारत।
And viewers, uncertainty surrounds the next phase of US-Iran talks, with Tehran yet to respond, and Vice President J.D. Vance's planned visit to Islamabad now is on hold. But US President Donald Trump has extended the ceasefire with Iran till Iran submits proposal. Now, in his statement, Trump has attacked the Iranian government, calling them seriously fractured. He said that Iran's military is in bottom of the sea while the country is in tatters. And he announced that no attacks will be made on Iran till talks progress, but US military will remain in place. Now, even as diplomacy stays in limbo, violence continues across the region. Meanwhile, Iran claims that its second ship in the Strait of Hormuz has been attacked, and Iran has mocked Trump for extending the ceasefire by saying losing side cannot dictate terms, and Trump's announcement of ceasefire means nothing. Now, as blockade on the Strait of Hormuz remains in place, the crude oil tanker Desh Garima has arrived off the Mumbai coast. The vessel carrying approximately 97,000 metric tons of crude oil.
An oil tanker named Desh Garima, which crossed the Strait of Hormuz on 18th of April, has finally reached the shores of India. This particular tanker is currently positioned at the anchorage point of Mumbai port and will shortly arrive at Mumbai port later tonight. It is not just carrying 97,000 tons of crude oil, but has also safely brought back the 31 crew members which were on this particular ship. Now, this is the 10th ship to cross the Strait of Hormuz and bring the crucial oil back to India. But why does this particular ship become so important? That is because the date around which this particular ship crossed the Strait of Hormuz, that was the same time when there were incidents of firing that were reported on two India flagged ships carrying oil as well. Following those incidents, of course, the Indian authority was alerted, which in turn got in contact with their counterparts in Iran, who reassured the Indian authorities that the future movement of the tanks will be a safe journey. And as a result of that, one can see that the ship that has reached India today becomes a crucial development. Again, it is an important development through another perspective. That is because the status of Strait of Hormuz remains very dicey at this very moment. While some authorities and some officials from Iran state that it is open to a few countries, others claim that it is completely shut. But the fact that such a crucial tanker has finally made its way to Mumbai port is clearly an important development for India.
And viewers, how does Russia view the Middle East war and Trump's actions? Russian ambassador to India, Denis Alipov, speaks to NDTV's managing editor, Shivarur. Listen in to the part of that conversation.
There is a ceasefire that is kind of up in the air. This is a region in which Russia, India all have very important stakes and relations. How do you view the conflict as it stands right now? right before what is expected to be a second round of talks between the United States and Iran?
Well, obviously, I'm not a fortune teller, and I don't think anybody is in the position to predict how the situation would develop. Most likely, the US itself does not see and foresee the developments, but the implications obviously have been very severe for the whole world. The political implications of the aggression against her.
And viewers, we are getting to know that Trent is out with its Q4 results, and I'll just quickly take you through the numbers. So net profit stands at 455 crores versus estimate of 376 crores. Net profit is up 30%. Revenue, in fact, is up 20.2% and stands at 4,937 crores. EBITDA is up 40% at 919 crores. EBITDA margin stands at 18.6% versus 16% year on year. EBITDA is also at 919 crores versus estimate of 803 crores. So clearly there is a beat over there. But I'm being joined by Nirav Asher, Head Equity Research Analyst, Leighton Manaharlal Securities Private Limited on the phone line. So Nirav, Trent's blueprint is out. So what do you make of the numbers?
Good afternoon, and thank you for the invite. If one were to look at the numbers of Trent, then I think they've really beaten the estimates, and we've seen a 20% uptick in the revenues. The EBITDA is also up by around 40%. And I think this is a result of the expansion which has taken place at Trent. We out of the total 1,286 stores, we have an inventory of 75%, which comes from Zudio. And we've seen a majority, around 20% of the store additions of both Zudio as well as Westside have happened in this financial year, FY26, and majority of the additions have taken place in Q4. So we are likely to see an impact of that on the revenue growth. Year to date, for the first 9 months, we had a revenue growth of around 16.5%, and this time around it's come at 20%. So it's really beaten the estimates. We had EBITDA growth of 26% earlier, and now we have an EBITDA growth of around 40%. So I think it's a beat on all the counts, and I think it's quite possible that in the next quarter, we are likely to see the more impact as far as the store additions are concerned. This is very important, particularly in light of the fact that the depreciation costs have gone up substantially, and that has impacted the bottom line growth. But still, I think an all-round beat by all counts.
So there's a beat on all counts, and especially in the net profit and EBITDA space. So, what do you make of it really, and what is the highlighting factor here with Trent's Q4 results?
I think it's been a roller coaster ride as far as the company is concerned, as far as Trent is concerned. And we had a very volatile year last year where the stock had corrected. Virtually, there was a valuation reset which has happened. The stock has almost halved. And I think it's a kind of a resurgence as far as Trent is concerned. From at the end of March, we had a price of 3,400, and the stock has quickly logged gains of close to 30% after the quarterly updates. So I think we had a very strong quarterly update, and in a way we did infer that there has been a strong store addition which has taken place, and the impact of which will be visible in the next few quarters. Now, what is more important is how Trent is able to sustain the growth going forward, because there is going to be store additions which will be required in order to sustain the growth levels going forward. But nonetheless, the sentiment at this point of time seems to be positive.
Right, Nirav. Thank you so much for breaking down those numbers for our viewers, and thank you so much for being there with us on the show today.
Thank you for the invite.
Yes. And viewers, let's now cut across to the earnings briefing of Tech Mahindra, where the management is addressing the street on its Q4 performance.
During the year, our focus remained on disciplined execution, staying close to clients, and progressing our solution-led approach. Operating profit is $797 million, up 31.4% YOY, with margins expanding by about 290 basis points to 12.6%. Rohit will, of course, walk us through these numbers in more detail. Moving to our vertical performance for the year, we delivered growth of about 5.9% year-on-year in manufacturing. Growth in this vertical was led by aerospace and industrial process manufacturing, which helped us navigate a softer environment in US auto. The contribution also came from a ramp-up in European auto clients through our subsidiary. In BFSI, the vertical grew 3.7% year-on-year. Our focus on specific sub-segments like asset and wealth management, payment, and insurance platforms is yielding results. We are receiving an increasing number of analyst recognitions, with the latest being TechM's position as a leader and star performer in 2025 banking and payments by the Everest Group. Our approach in strengthening leadership coverage, investing in pertinent capabilities, and winning engagements with Forbes 2000 accounts has helped improve momentum across priority markets within BFSI. Within communications, we grew 2.6% year-on-year. This was led by stabilization and increased spend from our largest US client. Comviva also grew double-digit, adding momentum. In Europe, we saw improved stability through the year. We are focusing on ramping up deal wins as we enter FY27, benefiting from scope expansion and deeper client relationships. In retail, travel, transportation, and logistics, we grew 7.3% year-on-year. This was our highest growing vertical within the financial year. The growth was supported by a focus on key accounts, coupled with strong tailwinds in the logistics domain, driven by e-commerce expansion, automation, and warehousing and last-mile delivery optimization. TechM was awarded the retailer's favorite, underscoring the trust placed in TechM's reliable and outcome-driven transformation services at the National Retail Federation's VIP Awards. The high-tech vertical declined 2.7% year-on-year. We faced headwinds in the first half of the year, including restructuring at a semiconductor client and muted discretionary spend. In the second half, we began to see signs of stabilization across clients. We continue to watch spending across high-tech clients with continued investments in data centers, influencing their spending patterns, and we are making our efforts to partner with these clients to refine and tailor our services to their evolving spending priorities. In healthcare, revenues declined by 0.6% year-on-year. We continue to see regulatory policy-related challenges across provider and life sciences segments, resulting in muted discretionary spending. At the same time, we are seeing increased engagement with large payer clients around data and AI-led initiatives, creating a clear pathway to scale enterprise-wide adoption programs as AI adoption accelerates. From a geography standpoint, Europe delivered a strong growth of 8.9% year-on-year, aided by currency tailwinds. Within Europe, we saw encouraging traction in aerospace, industrial manufacturing, and European auto. We are seeing an active pipeline of vendor consolidation opportunities. The Americas was broadly flat overall. While comms in the Americas grew, this growth was offset by softness in US auto. Turning to our client metrics, our $50 million plus clients increased by 4 year-on-year to 29, and our 20 million plus client base expanded by 7 on a year-on-year basis to 66. This growth reflects our continued success in deepening client relationships and expanding the scope of services delivered across the portfolio, including data, AI, and consulting-led engagements. Our market positioning and investments over the last year have been centered around AI delivered right, and this posture is paying off in our client engagement metrics. Coming now to our quarterly performance, we reported revenues of $1.625 billion, up 4.9% year-on-year and 2.4% in constant currency. Manufacturing vertical grew 11.8% year-on-year, followed by high-tech and retail at 6.6% year-on-year and 6.2% year-on-year respectively. Communications grew 5.6% year-on-year, followed by healthcare at 4.7% year-on-year. During the quarter, we participated in the India National AI Mission, Our participation was structured around three strategic pillars: Indus and sovereign AI platforms, ecosystem partnerships, and stack orchestration, and applied AI across manufacturing, agriculture, education, and inclusion. We also launched an education large language model in partnership with NVIDIA with the intent of democratizing education. We are also advancing in our progress as an AI-first organization. We launched our enterprise-wide Cloud Code training program, a strategic upskilling initiative designed to strengthen our AI engineering capabilities at scale. We are enabling our associates across three strategic AI engineering platforms, Cloud Code, Devon, and Cursor, to accelerate adoption, build enterprise-scale expertise, and meet evolving client expectations. We also announced a collaboration with University College London to advance joint research and solution development in Gen AI and quantum computing. We will cover our AI strategy in more detail and progress during my presentation after the results update. The financial year also saw an improvement in the deal wins ratio. We closed the year with total deal wins of 3.794 billion, representing a 42% growth year on year. Tech Mahindra is increasingly positioned as a strategic partner to clients rather than only as an outsourcing vendor. Let me share some examples of our notable deal wins this quarter. A leading North American automotive OEM selected us as a strategic partner for application development and support across mission-critical enterprise systems. A Fortune 500 energy major chose us as the sole strategic partner to run and manage infrastructure, cloud, service desk, end-user computing, and allied services, while driving measurable efficiency across the technology estate. We were also selected by a leading global public health alliance for a managed services engagement focusing on sustaining high service quality and operational agility while enabling continuous digital innovation to drive efficiency and mission-aligned transformation. Alongside these client wins, we continue to deepen our partnerships and alliances across the ecosystem. With Microsoft, we launched an ontology-driven agentic AI platform that accelerates telecom and enterprise data modernization. Built on Microsoft Fabric and Azure AI Foundry, this solution is designed to enable explainable, auditable, and real-time AI-powered decision-making while supporting secure and governed deployment of AI agents. With NVIDIA, we partnered to introduce an industry-first AI-powered telco network operations reasoning agent. The solution is intended to help communication service providers accelerate towards level 4 and higher autonomous networks by evolving traditional network operation centers into intelligent closed-loop operations. With FICO, we partnered to help BFSI organizations accelerate value creation through AI-powered decisioning and advanced analytics. This partnership will help deliver end-to-end consulting implementation and managed services, enabling enterprises to fully realize the capabilities of the FICO platform and realize faster, measurable business outcomes. Tech Mahindra was recognized in the S&P Global Sustainability Yearbook 2026, achieving a top 1% ranking in the IT services industry, reinforcing our commitment to building a resilient and sustainable enterprise. Also reflecting our sustained brand positioning and strengthening, we advanced to the 4th position among the India-headquartered IT services firms and 9th globally in Brand Finance's IT Services 25 report. As we step into FY27, we will...
And viewers, we are getting to know from top government sources that on government's flexi fuel push, government is ready to provide higher ethanol blended fuel. And for more on this crucial update, let's go across to my colleague Danish Anand. Danish, what are you picking up from your sources?
Well, top government sources have told NDTV Profit that the government is ready with higher ethanol blending in fuel. Currently, we are seeing that there is 20% blended ethanol fuel that is available. But now the government is planning to increase the overall ethanol blending upwards of 20%. And as of now, there is a range of 85%. But very recently, the transport minister said that India is also ready to provide 100% ethanol powered vehicles. But top sources are telling us that while the OMCs have been directed to be ready to blend more ethanol in the fuel, but now the ball is in the court of the auto industry because they have to be prepared to have such vehicles with flexi fuel engines which can run on ethanol as well as ethanol blended fuel. So this is a long process that is going to happen, but the government has made it clear that they're very ready as far as ethanol blending is concerned. Sources also telling us that there is no shortage of ethanol in India, and if a higher ethanol blending is allowed, and if the auto industry and the government can come to a consensus, then this will help India as far as the overall import bill is concerned, because we are seeing that currently, because of the West Asia crisis, the crude oil prices are quite volatile, and it is impacting India's overall economy, as well as the money that we use to import such crude oil. So hence, in order to reduce the import bill, the government is giving a push to the auto industry to come out with flexi fuel engines, flexi fuel products, so that a user can have a choice what kind of a fuel that they want. But we must also not forget that a few months back, when E20 mandate was there were many users that were complaining that their cars are not giving proper average, and there is some or the other problem. But now we really have to wait and watch and see that how things transpire in the coming few days and how things change, because the users also have to be brought into confidence that even if they're using higher ethanol blended fuel, then their vehicles will not face any damage. So in the next few weeks, we can expect some or the other draft policy from the central government to come out, which can give a proper roadmap of higher ethanol blending in India.
Absolutely, Danish. Thank you so much for gathering those details there. And viewers, moving on, quick update on Infosys. Sources indicate that CEO Salil Parekh is likely to get a short-term extension, with the board expected to take this up soon. And this move is being seen as an effort to ensure stability during challenging phase, though the company has not officially commented. And now let's go across to my colleague Nisha Podar for more on what's she's picking up from her sources.
That's right. Infosys is the last of the top 5 IT companies, the IT giants, which have really posted their results for this earnings season. And on 23rd of April, Infosys is likely to also take up the matter of extension of CEO Salil Parekh as his term comes to an end in March 2027, is what we have independently verified from our direct sources. Now, sources with direct knowledge of what's really taking place in Infosys and the top leadership thinking also do tell us that Infosys wants to send out a signal of stability and also leadership continuity in a very challenging time for the tech space. And therefore, they are going to take up this particular discussion earlier so that the market, the stakeholders are aware of the continuity and no disruption at the top level, while the company needs to focus on the business as well as the AI pivot. So looking at that, sources do confirm that it is likely that a 2-year continuity could be given, an extension could be given to Salil Parekh, so that the new leadership also comes in and the succession planning is smooth without impacting the business adversely because of the top brass changes, is what we gather from sources with direct knowledge. We of course reached out to Infosys for a comment, official comment on this, and we haven't got any comment coming in on the extension of Salil Parekh as the CEO.
Thank you so much, Nisha, for getting us those details there. And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
कुछ खास होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एनवी सर से लाइव एनडीटीवी युवा पर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
partnership with NVIDIA and the others. But for now, it has been a technology demonstrator, a very strong technology demonstrator of the differentiated capabilities that we have built in AI from a Tech Mahindra perspective.
I had a question. If you can just state your name and name of the publication, please.
NDTV Profit. So my first question is with regard to the margins. We see a good expansion. We see it's been increasing from last 10 quarters. I would like to understand, you are still on the track to meet that 15% margin goal by FY27. That's my first stand. Secondly, post that, do you still plan on expanding the margin, or do you see that to stay there for some time?
I think when we spelled out our strategy in April 24, we were very focused on driving to the 15% margin. As you will recollect, it was a very steep climb from the 6.4% exit margin to 15. So for now, we are very focused on delivering the 15% plus 15% margin. Once that 15% goal has been achieved, then we will spell out a plan for the future years.
So 7?
Yes, it is very much on track.
Perfect. My second question is Mr. Rohit. I want to understand, in this particular quarter, we did know that subcontracting charges have jumped 17%, which is impacting the bottom line altogether. So how do you see the cost going forward? Because for over the year, the cost has stayed in line as per previous quarter, but in this quarter, the increase of 300 crores is impacting the overall profit. So how do you view that?
So that's part of a large deal ramp-ups that we're doing. So there's increase driven by that. And I think as we outlined previously also, that's expected. We'll continue to be at some quarters in an elevated range. That's factored in our margin trajectory. And as we get more stabilized in these deal execution, we'll ramp it down as we move forward.
Got it. Thank you. And congrats on the results.
Thank you.
The next question is from Jas Bardia from Mint. At the start of the 3-year plan in 24, you had suggested that revenue growth would be higher than the top 6 or 7 IT firms. However, revenue growth is sub 2% and not the fastest. What do you attribute this to, and do you still maintain the stance? Also, will you look at acquisitions now, considering your peers have increased spending on acquisitions in the last year or so?
Just look, when we had spelled out, you may want to go back and take a look at the April 24 plan again, because we had very clearly spelled out the peer group, right? And the peer group was our 4 larger competitors. And so we spelled out the names of those peers. And what we had said was that in FY26,
from the factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political, economic strategy and its big ramifications for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Divedi.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the best shows in the KYC where I get you the hottest companies, whether you should stay with the company or avoid it, or is there any inflection point. I get you all these important details about the company. But before that, as per our format, I'm going to give you some hints. Try to guess this company. It's a Hyderabad-based tech company. Of course, there are a lot of them in the small cap space, mid-cap space, but try to understand more. The second important hint is there's an EGM happening on 4th of May for a fundraise. Now, will there be an inflection point going ahead? That's the big question to be asked. The third hint I'd like to give you, the stock is up 4 times in the last 5 years. Enough of the hints. Also, recently the company acquired a company in the AI services as well. So it's expanding in AI and also looking forward for more expansion and fundraisers. And the company, of course, the sky is blue. Yes, that's also another hint. The company's name is Blue Cloud Soft Tech. Yes, this is the company which we are talking about, but the street is very much interested on the 4th of May EGM as well. But why are we calling this company right now? There's a 1500 crore market cap company in the IT, service, AI, you name it. That's what the company says. The company is planning a pref issue and a fundraise, and of course that's happening as an EGM on 4th of May. So we'll try to understand where these proceeds will happen and what mode of fundraise would be there. they are implementing a segmented business tech model. Now, what does this mean? This was told in the third quarter that there will be a pivot or a change in the strategy of the company. So we'll try to understand this. The AI businesses, what are the key details and the growth outlook looking like? How is the company, having a shift, from an IT company or a SaaS or a CPaaS company, how they are moving to an AI-led company, and the demand trends in the client confidence, any kind of impact which has happened on the budgets, seeing the geopolitical tensions or the AI wave which is happening in the Northern American markets, and any technical spends earmarked for AI. Remember, a lot of spending is happening for the company. At times this spending might be a key concern for the investors as well. And the acquisition of Global Impix, this is an AI acquisition, by when these incremental benefits will start coming in. So the story revolves around fundraise, promoter stake dilution, and of course what kind of growth strategy would be there. And to decode all that, we'll be joined in by Vinod Babu Bolikonda. He's the MD at Blue Cloud SoftTech Solutions, where we'll try to understand regarding the growth prospects for the company Blue Cloud SoftTech. It seems like a tech company. AI enablement is something which the company says. Recently, first time they did a con call in the third quarter also. So I'll try to get you more details about it. It's largely untracked counter. It was established in 1991 in Hyderabad, and during that time the tech wave had also started in that era as compared to Bengaluru. Now the enterprise solutions, we talk about it, they have AI, cloud, Internet of Things, and the cybersecurity solutions. So it seems like it's a product company prima facie on the first initial numbers. Now the services are there in cybersecurity and security operations as well. So largely you can see this seems like a CPaaS provider making its way into the AI segment. Now the products are in telecom, HR consultancy, healthcare, medical, education, media, and surveillance as well. So that's a pretty much a wide range of services which is there. Recently they received an AI related order from Hyderabad Police and Telangana Arogyasri ecosystem. So a lot of domestic wins are also there, and globally if they are expanding, maybe acquisition might be a good plan. This might be an inflection point for the company, and that's where my eyes are set on. There's an EGM happening, fundraise would be via pref issue, and they're going to explain the acquisition and the expansion plans. Is it there for the previous acquisitions this fundraise is happening, or is it happening for something else? Also, there's a strategic pivot expected to happen in this meeting. So of course, we have time to judge the company on that, and that is why the management is also coming to clear some doubts. AI and data center theme is also there. Two important points which I liked. They're intending to establish a dedicated AI and data center infra vertical. Also, let's move into the key acquisition plans which the company will be pulling out, and they will have streams across the segment. That's what the management has stated. This is coming from their publicly disclosed information. But it seems like a lot of announcements are coming for this counter, and it takes time for a stakeholder and even me to digest so much of it. 100% of Global Impacts, it's a US based energy and digital infra platform. That announcement has come. That's a key acquisition coming in. Why this acquisition is coming in? That's important because this will help the tech enabled infra company operations. It seems a little bit Greek, but let me try to make it easier for you. AI related service enterprise solutions is something which the company is focusing at. The deal is valued at 372 crore rupees. And of course, the concern would be coming in on how will you fund this. The strategic data center platform in Odisha will be a part of the deal, and this is something which augurs well for the company. But is the worst over for this counter? The first problem is the lack of analyst coverage. That is also a big concern if you are reading this about this company. But this is why we call companies in KYC to find, is there any alpha here? There is no exposure of DIs. That was a big question for me. But another concern for me was the FIs. Their exposure reduced by almost half in the last 2 years itself. That means the institutions are not convinced in the story. And of course, the retail participation has gone up. The timeline of benefits from these acquisition announcements, by when will it actually happen? That is something which the street needs more clarity. And further promoter stake dilution on expected pref issue. Already the promoters dilution of stake has been there last 2 years. Now again a further pressure coming in this space as well. So definitely there are some questions in the balance sheet and the working capital and the cash flow segment. But is this the worst over? That's the question I'm putting it forward to you. But Another question, or I would say an answer for you, would be the KYC ratings. How do we judge a company? Of course, the holy grail of financial statements and you could say understanding them includes income statement, balance sheet, cash flow. Remember, these are the most important metrics. Rest can be, played around metrics as well. Some vanity metrics also comes in, but we get you the best metrics to make your investment decisions in KYC. Return ratios, let's see how that pans out. I've taken ROC here. Shareholding, how the movement has happened, and the street cred, kitna paisa bana? Is it in the last 5 years? Has this been a multi-bagger? Over the last 1 month, 6 months, have the returns come or not? Valuation, very interesting group of peers I have got for you, and I'll explain you that, and the outlook for the company, what happens next, and that is what everybody wants to know about this company. The first one I would like to talk about is the income statement, and largely the numbers have been strong. FY23, literally there was nothing in the P&L, but then you see the FY24 numbers, FY25 numbers, and you see largely a good growth is coming in. The margin front is around 8 to 9%. Let's like to show the Q3 numbers to show you how the momentum is there, and sequentially on a year-on-year basis also there is a decent growth coming in for this. Of course, for IT companies we generally see this, a little bit of moderation is there. We'll try to understand the business model of how the billing and the new client budgets come in, and largely the margins have been stable at that around 8.5 to 10% odd. The company has been able to maintain this margin. So prima facie on the income statement, it does seem that it's a positive reaction coming in when it comes to the analysis. But my concern starts coming in when I start doing the balance sheet analysis, and that is where even for an IT company or service-based company, that cash levels is something which I always look out for, and it's at a very lower level. Now, 2 reasons for it. Company has been spending a lot. The working capital we see has been pushed to its limits. Because of that, there's a big amount of trade receivables, and that becomes my concerns. Of course, that you can't see that in the borrowings a lot, but the trade receivables is a really big number, and that was my biggest concern for that. So right now, I would still say it's a neutral rating for balance sheet going ahead. But this concern continues, and of course, if you are having problems in trade receivables, you'll have problems in the cash flows. If you'll have problems in the cash flows, of course, the basic finances will be questioned for any company in KYC, and this is what has happened here. It literally looks like there hasn't been major cash flows coming in, and I checked it twice, thrice from the consolidated levels also. Understood with the management there is a high working capital requirement in this kind of a business, but if of course it's a CPaaS or an AI related business, will this burn continue? And there's another fundraise happening, and of course from internal accruals it's not going to look like that's going to happen. So will that put more pressure on the balance sheet or on the return ratios? That is something to be concerned about. That is why it's a red flag for me, and for cash flow I'll be giving this a strong thumbs down. But let's talk about return ratio, the other ratios also to look at, and of course there are movements happening. It's around 7% in FY23, FY24, 19, and sudden a big jump happening. Of course, the ROC numbers, there are some elements in the balance sheet because of the ROC numbers going up, but net historically also I checked the numbers, it's largely on the higher side when we speak about the return ratios. So I'm giving a benefit of doubt in my analysis to the company, and it's going to be a strong thumbs up when it comes to the return ratios. But another concern comes from is the shareholding portion. That's roughly around 38% in March 23. That is a little bit minor stake sell-off coming in from the promoters, and there's a pref issue also happening, so there'll be more further dilution. My concern comes here. DIs haven't come yet. There is no mutual fund or PMS taking positions here. So that's a bit of concern, but of course a company's size is also around 1400-1500 crore market cap, so it might take some time, and that's my main reason is lack of analyst coverage. But FIs who had roughly 23% stake, they have reduced 13%, so that is of course a concern coming, and public it's around 48%. So definitely right now a little bit of concerns is there. So shareholding, I would be giving this a neutral rating. But let's talk about कितना कंपनी ने पैसा कमाया. Street cred पे आ जाते हैं. सबसे पहले let's talk about it. And the last 1 month the stock has been flat. 6 months it's been dismal performance, just 20% downtick coming in. And also year to date basis, of course we have seen a small cap, mid cap stocks coming back in the rally, but the stock hasn't participated. But yes, almost you could say the 5-year basis, the stock has given a return of almost 3.8 or 4 times in the last 5 years. So congratulations if you're holding the stock for a long time, you have made money. But for the short period of time, for 1 year basis, you have the stock has given 18% return to you. But of course, from the 52-week high level, the stock is down 50%. So to balance things out, I'm going to give this a neutral rating when it comes to the street cred. Let's talk about valuations and interesting companies I have picked up for our analysis, and let's get going. Blue Cloud is having a last 12-month P ratio of 18 times. Now let's compare that with the peers, who are there somewhat in this industry. We have Nucleus Software, that's around 16 times. But the major CPaaS players, there was a time when CPaaS companies used to trade at 50 times. That entire SaaS derating happened, and now look at that, just 14 times and 10 times of companies such as Tanla and Root Mobile. Pretty much interesting. And there is also a connecting fact between Tanla and Blue Cloud, but I'm going to explain you that in a certain time period. But net, I'll say there is a big sector derating which has happened, and of course the valuations have fallen. So it's a neutral rating, I would say, right now for Blue Cloud. But also let's talk about the outlook. EGM on May 4th for pref issue, and this is for acquisitions expansion. That's what we'll try to understand from the management. Maybe the company is at its lowest point. There might be a slight up move. Also the incremental benefits of AIS Anywhere acquisition. The company has been very bullish about it. We heard about it in the Q3 numbers. So we try to get in more details. And also the implementing a segmented business technology model. What is this actually all about? Is this a new lingo, or is there something genuine pivot happening from the company side? That's what we'll try to understand. And also, apart from this, the focus on AI-driven solution and next-gen 5G connectivity. This is something which is very interesting for me when I speak about the 5G connectivity and the projected revenue for FY27. That's around 3,000 crore. That's what they had mentioned. So we just want to understand, are they on track for it or not, since the company has not come out with its Q4 results. Remember, it's a silent period, so a lot of numbers might not be shared, but I'll try to get you the best questions possible. So it's a positive view coming in for the outlook. But let's revise the numbers. Company ko kya number dein, kya ratings aaya hai. This is very much important, and let me get you here. The concern for me is the cash flow segment because of higher trade receivables. Return ratios, income statement are doing well. Then again, a little bit of concern comes when the shareholding, that itself we see the concern starts coming in because of the big dilution from the FIs and lack of DI participation. And looking at street cred valuation, it's a neutral rating, but net the outlook remains strong. And 4th of May is the date. That's where we'll be focusing on the key announcements. The final rating on our analysis is largely in line, I would say, but definitely be cautious on this company until we don't understand the entire picture of where this company stands. But net it's 4.5 out of 8. And now we'll be joined in by Vinod Babu Bolikonda. He's the MD of Blue Cloud Softtech Solutions. But there is a little bit of interesting fact about him. Of course, he has 24 years of leadership experience, but he held some good leadership position roles also, and this includes Tanla Solutions. That was the point I mentioned you, and the Brigade Group. And of course, he was an independent consultant. So somebody who knows the tricks and the trade of the industry is with us. And of course, the education coming in from Bits Pilani as well. So it's pretty much interesting to have a chat with Vinod Babu Bolikonda. Vinodji, good afternoon to you. It's always a pleasure to have you. I would just like to start with that important date, which is the 4th of May. There's an EGM happening. What will be this fundraise all about? Any kind of a number we can associate that, and where will it be used?
See, by and large, the EGM, first of all, thanks a lot for having me here, Sharath, and thanks to NDTV as well. So the fundraise which we propose for in this particular EGM is more focused on our upcoming initiatives as a part of a strategic plan that we are doing for AI, hyperscale data centers as one part of it. And then we're also key focused on the ongoing projects, in fact, which have taken a multifold of business in terms of, the order book. So, which is what is being covered as a part of this acquisition and expansion plan. Acquisition we have already announced about the ConnectM is something which we are going to place that as a part of the EGM on May 4th, along with our results.
Right. And there was also a mention, Vinodji, regarding the implementation of segmented business technology model in the fourth quarter. Now, what does this mean? Does that mean there's a change in the business model for you? Or are you adding an AI layer to your application services, which is already there for the enterprises?
So if you look at it, I explained in a previous my discussion with NDTV and other channels also. So we had been an early bird in AI especially. So we have built the AI stack. We understood right from 2022 onwards, like the drift of the technology towards AI, and most of this existing platforms, we started upgrading them to the AI level, and that's a layer that we have added on top of the existing products and new products also, which have been evolved in cybersecurity as well as in AI healthcare and other enterprise smart apps, which we have developed in this area. So majorly the healthcare digitization, industrial automation side of it, and the edge AI chip, especially. The next thing that's going to happen is the edge AI majorly. So decentralizing the AI computational power. So that is where, for our surveillance-based technology, which is what we call it as an access genie, for this right at the camera level. So we have developed this, coming up with a semiconductor chip, which actually we developed as a part of our client contract. So initially, and subsequently the same model we started implementing over here also.
Right. Right, Mr. Vinod. That's a pretty interesting take which you have taken for both the AI and the semiconductor portion. I just wanted to understand a little bit about the incremental benefits which was there for the most recent acquisition which have been done. Of course, there is a Odisha data center angle to it as well. Just wanted to understand what kind of benefit is there, because you have almost given a $1 billion target for the investments in AI and data center. So we won't talk about the bigger picture, but I want to know the shorter picture and by when the benefits can start coming in your financials.
So we'd be seeing that benefits start coming into our financials, especially related to our AI data center initiative, which we proposed close to about $1 billion investment over a period of next 7 to 8 years. So which will start ticking on our balance sheet right from 2026 onwards, but as smaller quantities. But as we move forward, by 2027, you'd be seeing a significant portion of the balance sheet would be covered with this AI data center business. So coming to the point of Odisha, now the data center that we are talking about, we have, as a part of our strategic planning, we have acquired this GeoImpex company, which is having a land bank over there. So which is a suitable and appropriate location in terms of the proposed subsea cable network is also might be coming there. So that's a place where strategically we have chosen, instead of, as we already committed, of investing this $1 billion. So this asset would be adding more value. And in fact, this has, cut down an initial portion of land acquisition.
Vinodji, that's a pretty interesting take. We got a clarity on your fund usage. We got a clarity on your AI initiatives, timelines. But I want to understand in the con call, there was an FY27 revenue target of 3,000 crore or something like that. The announcement was there. What is this actually? Is this the order book? Is it the revenue? And have you met the guidance?
Sure, this is majorly an order book, which we have a pipeline of orders, which we bagged through our companies and the new acquisitions which have brought in. So the significant, they cover a significant amount of revenue projection, in fact. So along with our organic business that we have, which is already being there for a long time, and on top of it, the new businesses, whatever we have added into the Blue Cloud, is going to bring in this number, and we are confident in terms of achieving it.
Confident achieving it in FY27. A little bit of concerns is there for a lot of investors and new folks who have tuned in to understand your company, because of course we look at the past data also, and there is a little bit of concern in the cash flow and the balance sheet segment, and that is something as a student of finance, first question is for me is to ask that, sir, the cash levels are on the lower side, the trade receivables are very high. I saw the FY25 balance sheet. Now your working capital management for a company like yours who is spending in AI a lot, and of course there is a capital raise happening and a promoter dilution is also happening. I just want to understand, how will you manage your working capital? You're doing so much, you're spending so much, already the trade receivables are very high. So what's the mitigation here? What's looking like for FY26?
Yeah, I'll cover one liner about this cash flow issue, which is being seen from a negative context. But in fact, it is not a marginal pressure or a negative reflection of operational weakness, but it is like a timing phenomenon, I would say that. So if you look at it, in FY25, the revenue approximately was around 797 crores that we have clocked, which is now 59% above to the previous year on year. And the kind of a larger contracts that we have taken, the larger enterprise and infrastructure contracts that we have taken, and receivables has increased due to the milestone based, because in AI, the gestation period is higher in terms of building the models according to the client requirements would take a longer time. And because of that, the billing structures have also taken impact, where revenue recognition precedes this cash realization. And most importantly, the cash realization has lagged the revenue recognition, which is a common feature. Majorly, you'll be finding companies like Blue Cloud, where in a growth phase of infrastructure and enterprise-related programs that we are core focused on. And the whole idea of mitigating this is tightening the receivables that we are closely tracking and ensuring that we have a collection oversight is there. And then we started renegotiating on the contractual structures in terms of making them more on improved milestone-based, significant milestone-based payments, which will be realigned, where the clients have positively responded back. And strong internal, working capital monitoring model, which already we have. In fact, we made it a little on a higher side now. And evaluation of the working capital financial options, like whatever the smooth timing gaps that we could take in a bridge fund kind of a thing. And creating evaluation from time to time and maintaining that billing discipline is what core focused on, to make it more positive, and it would be reflected in the next quarter.
That's a very big point. The benefit.
कुछ बड़ा होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. A couple of weeks in the market can make all the difference, particularly when the market is either going up or down very sharply. So if the month of March was something that you would like to forget in 2026, your portfolio certainly did not look good at the end of it. As we're standing on the 22nd of April, it is looking significantly better because of what has happened in April. Let's take a look at the broader market funds though and see whether that gain has been experienced there as well. Sharad Tandon of Invest at Ease is joining me today. Sharad, thanks so much for taking the time. And let me ask you this. In the 22 days of April, we've seen a sizable comeback across the board. But how have broader market funds done?
So, Alex, thank you for having me here. And just to give you a sense in terms of first indices, both small and Nifty 150 and Nifty 250 small index have gained around 12 to 13 percentage point in last, say, 15 days, 21 days sort of thing. While broader index, broader market funds like any small cap or mid cap fund on an average category has delivered 9 to 10% return. And returns vary from 7% on the lower side to around 15% on the higher side. So net, if you are in quartile 1, quartile 2 sort of funds, they have practically captured all the upside given from the, say, 25th, 26th of March, the bottom of it.
Who are the ones that have stood at the top of that list though, Sharad, from what you've seen?
Few funds. So now we need to be cautious on this because there were few small cap funds which are launched in the last 2-3 months, like Abacus and Grow, and they had certain cash. So their performing in the last 14 days would be slightly underperforming, but when it was falling, it was better. But broadly, funds like DSP, small cap, consistent performer. Your funds like Bandhan, small cap, again a second consistent performer. Sundaram, mid cap. Your Sundaram is small cap also. And last 14 days upside performer, Abacus and Grow is treat to watch.
Yeah, it is a treat to watch, and that is the advantage of launching just before the market goes up, right? And so as a result of which, if I look at the last 1 year as well, there are a lot of relatively newer entrants. If I look at perhaps Invesco, or if I look at, of course, Bandhan is pretty old, but not the usual suspects in the top rank. Is that why?
No, that is one reason, but the other reason is, say, the usual suspects which we are referring to, say, funds like, say, Axis, Nippon, which have got a larger AU. For them to maneuver the portfolio is slightly tricky, either one side upway or downway, because their tail is too long. While the funds which are smaller corpus or say mid-sized corpuses make far more nimble-footed fund managers has that luxury to churn it around at a click of a button.
So let me ask you this before we get any further. When you say the tail is long, obviously you're not talking about an animal. So can you describe from the perspective of a portfolio, what does this mean?
So normally when we enter a fund, mutual fund scheme anyhow, our assumption is around 40 to 50 sort of portfolio will be there, unless until the focus, which is around 25 to 30 stocks. But generally the larger funds, say for example, in this case, Nippon is small cap, will have more than 80, 90 stocks.
No, it has 200 plus.
I'm just saying I didn't want people to get scared on it. We are practically buying whole of the small cap basket as such.
Yeah, because their differentiation is how much they give in terms of weightage to each of those constituents. And so that is a separate strategy.
Now, the other funds like say even Axis or Prudential or say Birla, which is a sizable corpus, or SDFC, typically 50 to 100 stocks is where it is. So your end stocks are typically less than a percentage point. So advantage is when markets fall, these funds typically tend to fall less because they have got that cushion of the more diversification in that sense. But when market moves up, and especially when the micro caps and the small cap go up slightly vertically, or a smallish mid cap go vertically up, their performance will be slightly under par compared to a newer fund or a smaller fund corpus.
Got it. Let me ask you this, and we'll get into the tail and what incremental investment should be in your opinion. But before we do, let's look at the last 1, 3 and 5 years, right? So if you look at the last 1 and 3 years, what does the ranking tell you, and what are the schemes that have stood out both in terms of top gainers in the top quartile and those that are at the bottom of the pack?
So, Alex, if you look at 1 year performance as a category, most of the funds average, because we track around 25 to 28 funds on the small cap category, around 6 to 7 percentage point is a positive return, even for lump sum. While if you look at 3 years, it will be 18% plus. 5 year, again, it will be slightly exaggerated in terms of closer to 25, 26 percentage points. Predominantly because 5 years we are tracking close just after COVID and onwards. So if you look at the COVID low, which was somewhere around 1st, 2nd April of 2020 to now, it's 6 years flat. And if you can calculate 5 years, that upside of 40%, 50% annualized return post-COVID also will be there in small and mid cap. So it's slightly diversified in terms of dispersion. So there are funds which have given you, say, in last 1 year also 11% return. There are funds which are given you negative returns also. So top of the charts, again, Bandhan stands out, DSP stands out, Franklin is smaller companies, Investco stands out, your Motilal has done well in 1 year. Bottom, I think last out the 28, 29 schemes I track, the last was Tata in terms of performance on 1 year, and similar stories on 3 year also. The performance remains same. The 5 year story changes because funds like Nippon and all also get into that, because lot of these funds were of the 28 have less than 5 year sort of track record. So that's where the space of, so we track 28, around 6 of them don't even have 5 year track record. So that's why the subset becomes 22, and out of that 22, top 3, 4 will be your Nippon, Axis, Bandhan, Investco, Motilal. Those will be top 5 of them.
Okay. What about this, right? So the reason why I want to talk about 5 years is I wanted to try and capture how much damage the last 2 years have done. So if a lot of small cap, or rather a lot of portfolios have an overweight on small caps, and this is simply the fact, because of the experience that you just described after COVID-19 and up to 2024, they have equally underperformed from 2024 to now, relatively speaking. So how much has gotten shaved off because of the last couple of years?
So Alex, we can track individual funds, but I think just to start with, let's look at the exact number on the index itself. Say Nifty 250 small cap was around 3,135 on 3rd of April 2020. That was bottom of the market at that point of time. Today, just pre-war, it was close to 16,500 odd. So it's done practically what? 5.5, 6 times the money in flat 6 years. Last 14, 15 days have shaved off that, say, 6 times the money has become 5.25 times the money. So shaved off that additional abnormal return to some extent. But still 5 year returns on a small cap or a Nifty mid cap will be closer to 20, but more often than not, most of the top quartile funds will have higher than 20% annualized.
Got it. Okay, so I want to also talk about what happens now. And Is this the longest protracted slowdown, relatively speaking? I doubt it is, because there have been periods of time, even before COVID-19, where there was a long time when mid-cap and small-cap funds were underperforming, and which is why everyone was screaming to the rafters at some point to say that this is the time that you need to start investing in small-cap.
So, with my memory to if job, say, let's start from 2000 onwards. So 2000 to 2003 post.com was a slightly lull period, negative returns, including say flagship funds like SDFC FlexiCap, which is not a broader market fund. Drawdown was more than 50%. If you look at subprime scenario 2008 till 2011, again that same scenario played out. 2013 to 14 was smallish period of testing people, but not that protracted downside in terms of 2016, 2018 was again the same period of 24 months where the first time 2 year consecutively financial year, the small cap index was giving negative return. And that was a time when people were talking from top of the rooftop, please invest in small cap, mid cap, because that's a place to be. And people made abnormal return just pre-COVID, and people who sustained that COVID 4, 5, 6 weeks of from peak to bottom, that movement, say from Feb till April onwards or May onwards, have reaped their benefits till now.
You know, the difference of what we experienced during COVID-19 and now is that there was a very sharp, sudden fall, and the bounce back was equally sharp, which we have not yet seen. It's been a time-wise correction broadly, and yes, there's been a drop and a bounce back, which we've seen in April, right? But having said that, what should the strategy be right now, Sharad? Are people saying, in fact, I've heard this from a lot of fund managers saying that incrementally now it's the time to start looking at broader markets. But do you think that that's the case?
So, Alex, you know me, and I've been always proponent of having portfolio bias towards mid and small cap. But fortunately now, a lot of larger fund houses like Prudential, Bandhan have gone on record and made that open comment, this time to buy small caps. And reason is very simple. The P of the small cap and Nifty mid cap has corrected by more than 30-40% from its peak. While time correction of last 18-24 months has helped that correction to a larger extent. But generally, and these are broad markers, everyone or the advisor, fund manager will have their own broad markers. The way I look at it, like Nifty, you track a dividend yield of closer to 2 as a sort of benchmark where market bounces back. In Nifty, mid cap and small cap for us as a company, what has helped us is in last 10-15 years is the moment Nifty 150 mid-cap stocks dividend yield falls closer to 1% or below, we have seen more often than not that's practically bottom. It's again a time period of 1 month, 2 months, but it bounces back. Small cap again same. Now, if you look at the current time frame dividend yield, and dividend yield, why I'm saying it's a trailing return, it's not a forward-looking PE sort of calculation. So today, dividend yield of Nifty 150 or Nifty 250 small cap is around 0.6 to 0.7, well below the median. And whenever that happens, there is abnormal return in the small cap and mid cap basket per se in a smallest time frame going forward. And you can reverse that theory when the dividend yield was higher, closer to 1.3, 1.6 for Nifty small cap and mid cap respectively. That was a time period when more often than not the market in that basket corrects. So that's the sort of marker I have. Liquidity is the other one.
Okay, so the question though, Sharad, is should you invest at this stage? And there are a few fund houses that are coming out and saying that this is now the time that you should go out and put money incrementally to work in the broader markets.
Yeah, Alex, and we also believe the same, predominantly because of two reasons. One is there is a time correction that is too prolonged. Second is the liquidity crisis is not playing out the way it is. The third is if you believe Indian economy is going to do well, the most of the smallish and mid cap are this category of people where the new Gen Z, and that's why if you look at the reflection of Nifty internet index and the Nifty new age consumption index, that's where those sort of stocks will do well, and they are typically falling into a small and mid cap bucket.
Okay, so incrementally you should consider investing. Sharad, let me ask you this as well. We established why you don't necessarily like schemes in the broader markets with long tails. And so let me ask you what you like, and this is not a recommendation, but what are the schemes that you like in mid cap and small cap?
So, Alex, 2-3 consistent performance, which makes sense. Something like your DSP and Bandhan continue to be our favorite. The other few funds which you should keep in the watch list is something like, and people will remember Sunil Singhania from his days in Nippon, its own company now, Abacus has launched the small cap fund, a new recently added, and they are holding some cash there because they are still in the process of deploying. It might make sense at this point of time when they're creating a portfolio. Or another one of the fund manager which we like is Anupam Tiwari in Grow, who used to be the Axis small cap fund manager in 2016 till 2021 when it was on peak of the chart. He is running a portfolio for Grow Mutual Fund, a small and multi-cap as a CIO. And we like those portfolios in the small cap basket predominantly because he's got those largish small cap rather than the micro caps of the world. DSP we like predominantly for two things. One is it's true to its label. DSP is probably the only fund in the industry with zero large cap. 52% is a pure small cap, and then rest is something like what used to be the erstwhile micro cap stocks. So small is a small cap, and they have performed well. Motilal Oswal we like, but we have kept them under watch because of the recent last 4-5 sort of overkill on a particular stock portfolio, stock being there in the portfolio in terms of weightage. But performance-wise, that also is the fund which you should keep an eye on.
Okay, all right. So that's a short list that you should pay attention to. Sharad, thanks so much for taking the time. Pleasure speaking with you.
Thanks, Atan, Alex.
You've probably been looking at the equity markets pretty closely over the course of this conflict, and who would blame you? But have you looked at the debt markets? And have you looked at your fixed income portfolio? Have you looked at your hybrid mutual funds? Because what has happened over the course of March and April so far is that bond yields have gone up sharply and they've come down sharply. So any damage that was done in March has actually, to a certain extent, gotten reversed in the month of April so far. How are fund managers looking at the current scenario, and how are they looking at fixed income strategy? I've got Akhil Mittal, Senior Fund Manager, Fixed Income at Tata Mutual Fund, joining me right now to answer some of those questions. Akhil, thanks so much for taking the time. And let me ask you this. In your dynamic bond fund, which is aimed at utilizing duration, multiple durations, and can have any varying strategies there, what is the kind of approach that you're currently taking to building portfolio?
Okay, so we do not have a dynamic bond fund per se in the nomenclature, but we do manage our long duration funds very actively in line with, you can say, how dynamic bond funds are managed. For example, my gilt fund, right? So while making the strategy or while analyzing what is the background, of course, we all know the global issues, the geopolitical conflicts, and the impact of that, the same on the asset prices. That being aside, the bottom line is we have very strong and stable macros, basis which we have had supportive monetary policy. We have had a disciplined fiscal approach. We have had our current account deficit, our GDP growth numbers well in place. Currency movement has been not so great. Other than that, if you see the spreads where the yield curve is, it's actually a very cheaply priced asset as of now. Given all this scenario, we have been running higher duration. While getting into the conflict also, we were slightly higher on duration. Basic premise was that, things are in favor and policy over a period of time will ensure that yields come down. Two things which did not augur well in the Q4 of FY26. One was demand supply of government securities, and secondly, the conflict as it came in. But as you mentioned, immediately, if I see last 10 days of April, the softening of geopolitical crisis and the news thereabout led to a sharp fall in yields. Our basic sense is that RBI or Monetary Policy Committee will continue to remain supportive as long as macros are in place, and we do not feel macros are going out of the expected zone. So that is one.
So the damage that was done, on long bond funds in the month of March, has that been mitigated or erased in April?
Largely yes. So if I have to say on a absolute return basis, I think from where we started in March, we are round about there in terms of prices.
Okay. And if you're talking about your hybrid funds, which a lot of people are investing in, Akhil, in lieu of an earlier allocation towards debt because of the way that taxation is done now, what is the kind of strategy that you're using in some of those hybrid funds?
So in hybrid funds, we use a strategy of shifting or managing duration as per underlying view on rate cycle, and at the same time maintaining accruals such that the stability of earning and accruals remain steady. In the current cycle, what we have done in our hybrid funds, we have increased the duration across all our hybrid funds largely through long dated GSEC. And on the accrual part, given that the spreads currently are pretty high, if I have to say a CD over a repo, a 1-year CD over repo rate, or a 2-year corporate bond over repo rate, they are trading at very attractive levels. So we have increased both accruals and duration such that the chasing of returns is not necessary at turn of every event or every cycle. The higher accrual and the higher duration itself will take care of the upcoming cycle or the upcoming period once things stabilize.
Can you explain this in the context of the market possibly looking at the potential of rates going up sooner rather than later? And we're not only talking about monetary policy here in India, Akhil, we're talking about the possibility that the Fed sooner rather than later will have to react to inflation in the US, which was anyway heading higher because of tariff-related cost increases. But because of the war and everything that's happened to supply chains, there are going to be inflation knocks, right? So there could be an uptick in the interest rates in several major economies, and India will have to follow eventually, because you will see that pass through on inflation, even though we've not seen fuel prices go up yet. So isn't there a threat to having a longer duration if interest rates are to go up?
Well, our assessment on that part is we do not anticipate major economies to get into a hiking cycle or a secular hiking cycle anytime soon. As far as US is concerned, I don't think they are going to see a rate hike for this calendar year. UK might be at the sidelines, do a 25-50 basis rate hike later this year. But if a hiking cycle has to happen, it will most likely be in emerging economies, the smaller and emerging economies, and not really into the larger DMs. While the inflation shock can come if energy prices continue to surprise on the higher side or there is an escalation of war. But that's then. We haven't seen too many geopolitical disruptions over the last 3-4 years actually resulting in inflation like they used to do, let's say, 2 decades ago, right? We have seen Ukraine, Russia. We saw tensions between Israel and Gaza earlier than this war, but we didn't really see energy prices shooting up because over the last 10-15 years, the entire ecosystem of energy supply chain and the prices thereabouts have kind of reached an efficient equilibrium where both the suppliers and the consumers are economically well off and not really, at the cost of one. So I think our premise is that the entire ecosystem will ensure that energy prices do not go to a level where either the demand is destructed or the prices reach a level that, are unsustainable. However, being geopolitics and being events in nature, we are keeping a very close watch upon, but that's not our base case as of now.
So the base case is that there won't be a hike in 2026 here in India either?
Correct. I do not see a rate hike in India at least for a year and a half.
For a year and a half. So therefore that lower for longer or rather a prolonged pause which has been more or less the expectation for a large part of the market before the conflict continues for you.
Yes, correct. And actually it's not needed. You would need a rate hike only when asset prices are either heated up to an extent which it starts having a negative impact on your economy as a large. As long as macros are in place, any emerging economy would rather have supportive policy than have restrictive policies.
Sure. So then from that perspective, the spike in yields provided an opportunity, which is why you've gotten into a long duration per se and completely supported by your thesis. Would that also mean that on the fringes, you don't need to take credit risk? Because I've also heard a few people describe that there are ample opportunities in the credit market right now. And prior to the conflict, people were looking to add a little bit of a cushion to their returns in fixed income strategies by adding a little bit of credit on the margins.
Absolutely. So there has been a significant addition to the credit universe, if I have to say, on a market basis. We've seen lots of new issuers coming in, lots of new structures coming in. And what's happened on the better side for buyers is that the yields or the spreads continue to remain elevated. And hence, as you said, these higher accruals cushioned the portfolios. Again, as of it did see a little bit of absence or thinly traded markets over last 1 month. But other than that, I see as soon as things stabilize or they are going towards stability, the credit papers or the availability of credit is high. And on the credit risk part, we are at a situation where the credit risk, if I have to say upgrade downgrade ratio, of credit, it is at a decade best. If I see the NPAs of banking system, they are as good as they get. We are not seeing any additional leakages. So on the credit risk side, if I have to say granularly, it's as good as it gets. However, one should pick and choose credit as per their own portfolio appetite because it also gets a little bit of illiquidity. But yes, largely mutual funds did look to add credits or better accrual papers prior to this conflict. And I think once this things, the current event stabilizes, you will see that trend continuing.
The tendency, Akhil, when we're talking about debt and fixed income is to get a little technical, and it just happens that way. Hopefully my viewers have understood a large part of what we have spoken about, and I'm sure there are a lot of them that are significantly better placed at understanding than I am. But you've done a great job explaining how your thesis works and what the scenario looks like from this point on. Thanks so much for taking the time.
Thank you.
Like I said, these things tend to get a little bit technical, but having said that, if you've got questions for us, based on anything that we've spoken about, I'd encourage you to write to us on our comment section and we'll pick it up in future episodes. Thanks so much for watching. This is NDTV Profit.
कुछ बड़ा होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एलवी सर से लाइव एनडीटीवी युवा पर।
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Right. Could you just give us a few sort of features that have come in since the Act was passed last August, and what's been changed basis some sort of stakeholder feedback that has come in?
I think I should first clarify that we have changed nothing in the Act, and we can't. The Act stands as it is. Online money gaming is banned in the country, and those provisions are very clear. What the rules does is provide for procedural clarity on how various parts of the Act would be brought into effect, who are the relevant authorities, and how they're required to act. So the authority was constituted under the Act. The composition of the authority was to be determined under the rules. That has been indicated as to who would be the chairman and who are the members of the authority. So that has been clarified. Thereafter, how the authority itself will function, how they will make a determination. I think it's important to point out here that neither a determination nor a registration of an online social game is mandatory. It is entirely voluntary, or in specific cases where the government determines that such registration is required. And there are certain conditions under which the registration of an online social game may be required, and that is by specific notification. As of now, nothing has been notified saying these are the games which have to be notified. That's more like an enabling provision. What is intended is that in case there is a need and in case a doubt arises whether a particular game is an online money game or an online or an e-sport, then the authority, either suo motu or on the basis of a representation or on the basis of an application from the online game service provider, can make a determination whether a particular game is an online money game or not, or it's an online social game. So that determination is made on that basis. In addition, after such determination is made, again, there's no obligation to register unless the government has created that obligation or it's an e-sport, because an e-sport is required to register under the Parent Act itself. So this is the position, and then there are procedural grounds which have been prepared and which have been indicated as to what would happen if they violate conditions of the registration and so on, and how grievance mechanism will operate in this overall context. Plus, a role has been specified for the banks and financial institutions which facilitate financial transactions relating to gaming.
So there's also some sort of removal of the complex needs around the promotion of esports, certain social games as well. Could you talk to us about what's been removed to get more clarity in this?
What we have done is too important. The most significant part is we have simplified it considerably. Earlier there was multiple stages. There was a determination and then a registration and inquiries at each stage and so on. We've simplified it. There's a single stage of inquiry at the determination stage, and the obligation, and there's no direct obligation which has been created for online social games to register. They can continue to offer them unless there is an element of money gaming, in which case of course it's banned. So the idea is to make it easy for startups and others and people who provide various gaming services to function easily and operate easily without too much of difficulty. And if it's an online money game, of course it's banned and action will be taken in those cases. It is an offence under the Parent Act and it is open to being prosecuted.
Lastly, sir, in terms of monitoring how some sort of games might come up in the future, what will the Online Gaming Authority, what is exactly going to be the ambit when it comes to monitoring and the sort of implementation of this act?
See, I think we are not going to be, the monitoring of it is in the sense of, it really depends on people who come up and complain and come up and tell us that there is an issue or there is something which needs to be attended to. The basic implementation in terms of, if there are financial transactions which mimic that of an online money game, then the responsibility is really cast on the financial intermediaries and the players to make sure that they are doing something which is lawful, because permitting financing activity or permitting financial transactions which relate to an illegal activity is a problem, and that has been that's been specified in the Act itself.
Thank you. Thank you so much.
In that sense, it will be self-monitoring or self-regulating. Thank you.
Thank you.
All right, HCLTech has reported their numbers for the last quarter of FY26, and there are misses, especially on the margin front, and also the guidance has been scaled down. Let's get chatting with C. Vijay Kumar, who's the CEO and MD of HCLTech. Mr. Vijay Kumar, always a pleasure speaking to you. My first question to you, of course, the guidance that you have now given is a wide range, 1 to 4%. Can you give us a sense on what are the variables as well as the factors which will either tick up the growth at 4% or will come down to 1%?
Yeah. Good morning. Yes, our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're at the 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue, and we have two client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's right. And when we talk about the discretionary spend, Mr. Vijay Kumar, how is that really picture developing? What are the factors which are really impacting, and the global turmoil and uncertainty that we are really seeing on the economic front as well? How much of that is impacting the discretionary demand for your space?
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that the environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that is being caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27. So I think what we are very confident and very optimistic is our ability to really grow the new services. There are 6 or 7 new areas that we are growing, and that is going to help us accelerate growth as we move forward in the medium term.
All right. So new areas that you are really growing in. But what about telecom? That has really caused a dent in the last quarter. How do you see the outlook going forward? And is it sector specific?
I think it's, I would say, client specific at this point, because leadership changes, strategy changes, all of that drives a certain new strategies, and that would have its own implications on spending. I would not broad brush it across sector or across geographies. That's why I was very careful about calling out specifics rather than giving a broad brush macro as a factor in whatever happened in last quarter and also the future.
Right. So, Mr. Vijay Kumar, when we talk about the guidance that you have given, of course, the guidance estimate is lowered in terms of the revenue, but in terms of the EBIT margin, you have upgraded your guidance. So how does this math really play out? Where is the profitability looking to improve, and what is the reason behind that?
So actually, if you take our FY25, we were generally in the 18% plus range. And in FY26, we had guided for a slightly lower margin. And we are just getting back to that 18% at the midpoint. Because we have taken a lot of steps in the past, in the last 12 months. And all of that will help us to get to this 17.5 to 18.5 guided range.
All right. And when we talk also about the new acquisitions, it is stated that you haven't really accounted for those in your guidance. Can you share the timeline and what could be the uptake coming in once the acquisitions are completed?
Actually, the timelines are a little bit fluid because it is waiting for certain government approvals. On a full year basis, if you take 12 months post-acquisition consummation, it should give us a 1.5% increase in growth. But at this point, we are not able to put a definitive time frame when these acquisitions will close. But whenever it closes, 12 months after that, we would have delivered 1.5% incremental growth.
All right, so 1.5%, but on a yearly basis. So even if it hits you like in a 1 or 2 quarter, it can have some bit of impact in your next quarter. And that is incorporated. Is it part of the guidance that you have already stated, the band, or can it be over and above the band that you have stated in guidance?
Yeah, right now the acquisition impact is not factored in the guidance. So whenever the acquisition gets completed, we will add, and whatever subsequent quarter, we will kind of upgrade the guidance based on the acquisition.
All right. So there is likelihood that before 1 year gets over, the acquisition could be completed and the integration could be done?
Certainly.
All right. So then there is a chance that you could, even in a good year, look at outperforming the guidance that you have already stated. What is the likelihood of that?
It's very clear, right? We've given a guidance of 1 to 4, and if acquisition happens, it will get proportionately increased. And it all depends on how the next few quarters go.
Right. We are just penciling in all the factors that could be really coming in outside of your stated numbers, Mr. Vijay Kumar. Now, in terms of the AI focus, what is your sense in terms of the way your business is growing and also the overall noise that is really developing? How is HCLTech really positioned to take up this challenge?
Yeah, we have 5 strategic pillars that we are focused on. First is to proactively transform all our services by infusing AI without even waiting for clients to ask for AI-led transformation and services. So that's number 1. The second is to develop differentiated IP, which helps clients scale AI adoption within large enterprises. And third is launch completely new services, AI-led services like AI engineering, physical AI, AI factory, AI-led marketing services, and a lot of IPs and platform-led revenues. That is the third pillar. And the fourth is to build on some of the partnerships like NVIDIA, OpenAI, Anthropic, and all of these partnerships. And the fifth is, of course, the people transformation. We are upskilling our teams to categorize the entire 227,000 people into AI builders, AI super users, and AI human in the loop decision makers. And transformation is a multi-year journey, but we have a good template and we are going about it in a very structured manner. So I think these 5 pillars and 5 key strategies helps us to grow our AI revenue. We called out advanced AI revenue. It's already $620 million in annualized revenue. This is independent of this is whatever we do in service transformation, embedding services to deliver, embedding AI to deliver services. That is not excluded. That is excluded, and our advanced AI revenues are completely new revenue streams.
That's right.
That we're talking about.
In terms of deal wins, it has been a softish quarter. What's the outlook going forward? What's the visibility?
I think we should see similar deal wins, and we think there is a little more uptick possible in the first 2 quarters from what we are seeing. Otherwise, I think the pipeline is good. It's quite broad-based, and we feel pretty confident of a good booking trajectory.
And it's also year-end new financial year is starting now. In terms of the numbers, what are we seeing in terms of the increments, hiring, as well as the attrition, or if any layoffs?
It's not due now. It will be expected in July, and we will probably talk about it in the next quarter. And attrition has been stable, and we've grown our people count by about 1.5% last year. So it will be very dependent on growth and the projects that we win and all of that.
All right, Mr. Vijay Kumar, always a pleasure speaking to you, and all the best for the next quarter. Thank you so much.
Thank you. Have a good day.
Well, persistent numbers from persistent systems, if you will. You could argue that maybe the revenue was a bit or two lower than what the street was estimating, but the total contract value was decent. The ACV was very, very strong as well. Sandeep Kalra, CEO of the company, joins in right now to talk about maybe the quarter and the year gone by and the outlook ahead. Sandeep, the benchmarks continue. But these are interesting times because not only it's a confluence of AI-led disruption, if I can call it that, but also geopolitics playing havoc with corporate outlook on business. How do you sum up your quarter and the year gone by? And what do client conversations suggest about what could be in store in the very near term? Because that is the piece which is disrupted.
Yeah. So I'll summarize the quarter and the year, and then I'll come to the questions you asked. So as you pointed out, the Q4 for us came in with a healthy 3.2% quarter-on-quarter, 16.2% year-on-year growth. And in rupee terms, this was 7.4% quarter-on-quarter, 25% year-on-year. Interestingly, this was the year-end as well. So I'll just summarize the year because that gives a slightly longer view to things. So for us, FY26 was another consistent year of execution. Now, in terms of the growth, we delivered $1.65 billion in annual revenue, growing at about 17.4% year-on-year. Now, this is the 24th sequential quarter for us for growth, and this is 3% or more 24 sequential quarters. So that is something we are very proud of. In terms of the profitability, the EBIT for the year came in at 15.6%, and this is a 31% plus growth in absolute terms over FY25. Similarly, the PAT came in at 12.6%, a growth of 33.2%. Now, for the full year, the order book came in at $2.4 billion in total contract value. Annual contract value of this is $1.8 billion. So this kind of puts us in a decent place as far as the next year is concerned. In terms of the macroeconomic situation, look, this war, everyone hopes from a humanitarian perspective and overall business perspective also. We all hope this comes to an end soon. We'll see where it goes. Hopefully, that should come somewhere to a logical conclusion. Obviously, there is inflationary impact of this globally. So far, the customer side of it, the more impact is on the AI side. That is a bigger discussion than the war. And in our mind, the next several years are going to be about service providers who build capability. It is not going to be about the best profitability or the cost side of it. It's going to be the best capability and moving up the value chain. And that's where we are focused. So I'll take a pause.
Okay, and I have some follow-ups there, but I want to read out a line that was there in one of the brokerage notes that I read this morning, that management reiterated their $2 billion run rate target by Q4 FY27, though appeared slightly less confident about strong growth in FY27. Did they read your words on the con call correctly?
So look, everyone has a right to read the body language, whatever else to their this thing. All we can say is we have had 24 sequential quarters of growth. Those 24 sequential quarters of growth have come through good macro, bad macro, COVID, no COVID. We went public in 2010. From 2010 till now, our CAGR, compounded annual growth rate, is 17.3%. So if that gives anyone any confidence, look, future no one can predict. We don't give guidance. Our aspiration is the $2 billion. We are on that trajectory. Let the time pan by.
Okay. What within vertical, Sandeep, do you reckon continues to stay strong? I believe BFSI is a large part there, but is there some insight that you can give on the verticals?
So see, again, this is company to company dynamics for each one of us. Now, if we look at it from our perspective, BFSI followed by healthcare life sciences followed by tech seems to be the pecking order in the coming several quarters. And the reason for this is, despite the capability build being good in all of these, the technology segment is the one that is the most prone to adopting the AI part because they are the producers of AI. They are also not a regulated industry like healthcare life sciences or banking financial services. So that is where we will see good growth, but that will also have a good amount of compression in terms of effort. And so the story out there is going to be, while we are growing in volume, in terms of the customers, the effort will shrink. Automation and AI percolation will be the highest, followed by the other segments. So that's the story. And we have pretty good customers in each of these segments. So from the last year gone by as well, if you look at it, the pecking order for our company was banking financial services, full year growth at about 28.4%, high-tech emerging vertical 13.8%, healthcare life sciences by about 10.1%. So that's the way we are looking at it.
Okay. Viewers, I'm going to save a question because I have limited time with Sandeep Kalra. Remember, from what I learned, they aspire to maintain the 16 to 70% EBIT margins, but will continue to prioritize growth over margins. So I think that's the one thing. But as Sandeep Kalra said, that the larger conversation from a tech firm perspective, or maybe otherwise also, is AI and not necessarily the conflict. So I'm going to spend the next 5 minutes on that. Sandeep, you mentioned about the AI capabilities and coming up to speed for most firms. My question is this, and I would love to understand your perspective here. Will you as a company, or maybe the industry at large, but I'm asking you for Persistent, you can maybe mull over the industry as well, will there be a need to acquire AI capabilities inorganically because the time to come up to speed is less? Or do you believe a company like yours can learn and build AI capabilities over a period of time because the street is misreading the pace of the disruption that AI can cause?
It'll be a combination of both. It cannot be one or the other. So let me qualify. Right now, if you look at it, in the last week, we did what we call a AI huddle. It's our internal thing where we had 1,700 of us, learning about the latest capabilities that we have built, the tools that are there in the market, giving them a hands-on experience of how it is. And look, the Indian IT industry or Persistent, we all have a significant amount of workforce that has been there in our system for long. So even if we were to acquire some capabilities, it would always be about bringing our entire workforce up to speed. So there is going to be work on both sides. Thankfully, at Persistent, we have been building this platform-led approach for the last 2+ years. We have very good partnerships right now, whether it is the tech industry, the pharma industry, the banking financial industry. We are leading, whether it is pilots to production. We are working with a number of our customers. So it's going to be capability build. Organically is an imperative, absolutely. And then inorganically, wherever you have gaps and which you cannot fulfill yourselves and that give you a time to market advantage, that will be the case. But you cannot forego organic build.
Okay. Sandeep, most investors, large investors that I talk to, tell me that अगर कोई कर लेगा ये तो persistent कर लेगा, Sandeep कर लेगा. My question to you is this: do you believe AI could be disruptive for Persistent and therefore more need to acquire capabilities and lean on them, or do you believe there is both the time and the ability within the current IT ecosystem and Persistent systems to be able to learn it, deliver it for clients and not see a disruption? What do you think will happen?
On a lighter note, Persistent has been persistently after building capabilities, whether it was data, whether it was digital transformation, whether it was through the different times in the last several years.
But is AI different?
Yeah. So this time it is different. This time it is even more accelerated. And see, the kind of announcements we see from the Anthropics of this world, the OpenAIs of this world, they are fairly accelerating in the technology side of it. And one thing that many of your viewers may not know, we are also an enterprise software company in our own right. We had seen the trend of this, and this is thanks to our chairman who had invested in this. We had taken over products from HP, Intel, Citrix. We had a product business which was called Accelerite. So we have that DNA. Even today, our product business, the enterprise SaaS business, is roughly about $45 million. And so we know how to build products, ship products, and those are the same engineers who are building our platforms. And we are also bringing in differentiated talent from the valley, from other places, to bolt on to our existing talent, build capabilities faster. And obviously, in areas where we need to do capability-led acquisitions, we have done it in the last 6-7 years as well. And we will continue to do it. So tuck-in acquisitions, absolutely, we will do to build capabilities. And wherever selectively we need to do geography-based acquisitions, we'll do it. But capability is the name of the game for the next several years. And that's where the investment has to be.
Got it. Sandeep, both you and Anand have kind of crafted Persistent slightly differently than what an IT service firm typically could be. But I'm maybe asking you more from a IT service firm perspective, a lot more than Persistent, but still just one last question, which is that a possibility that sensitive or regulatory facing industries, which is your client base, would go a lot slower in going all AI out because there could be issues, regulatory issues or reportage issues which may be catastrophic if they are wrong, and AI is not necessarily fully tested. So could it happen that they go slow and IT service companies, if I can use that term broadly, actually assist that and therefore may not be as disruptive as is envisaged maybe?
Neeraj, paranoia is the name of the game. They say paranoid, only the paranoid survive. If that happens, look, the traditional services we are anyways good at. In the last several years, if you look at it, we have done well. And look, even other IT services companies, everyone will be well served to have the capabilities. If you have the pinnacle of the capabilities, you can always service the lower end of the pyramid. But being in denial of the wave that is coming is not the answer. Even the regulated industries will find their way. There are ways and means even today, for example, in the regulated industry, in the pharma industry, we are working with certain customers where we are developing small language models, which will be hosted in their environment, in their security, posture and everything else. And so that way there are ways and means to adopt technology within the guardrails, and this will only get accelerated as we go along.
Got it. Okay. Well, viewers, 20% earnings CAGR expected FY25 to 28, industry leading growth, about 17.5% in FY26, improving margin trajectory, robust cash flows. I guess investors got it all from Persistent thus far over the last many years. Hopefully it continues. Sandeep Kalra, thank you so much for taking the time out and being with us today. All the best for FY27.
Thank you, Neeraj. Thanks for having me.
Yeah, always a pleasure.
कुछ खास होने वाला है।
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Good evening. Welcome to The Big Question here on NDTV Profit. I'm Vikram Oza, and tonight, a seemingly technical regulatory tweak that could fundamentally alter the way that your money moves every single month. So the RBI, the Reserve Bank, has rolled out a major upgrade to its e-mandate framework for recurring digital payments, and it redraws that balance between convenience, control, and risk across India's payment ecosystem. So here's what is changing, and let me take you point by point. As far as recurring payments go, of up to 15,000 rupees, they will now go through without an OTP. So in key categories like insurance premia, mutual fund SIPs, credit card bill payments, that no OTP threshold actually rises, and it rises sharply to as high as 1 lakh rupees. Not just 15,000, but in certain cases, 1 lakh rupees as well. But there's a catch, and you could call it a safeguard. Every auto debit must be preceded by a mandatory 24-hour pre-debit alert. You have to get an alert 24 hours. This is mandated by the RBI every time it has to go through without any OTP. So it clearly spells out the merchant name, the amount, and the debit date as well. So there you would have it in front of you, this debit alert that you are supposed to get. Customers can opt out. They can, of course, pause. They can modify. They can cancel the mandate at any point. And this they can do directly from their bank app. So no merchant approvals are required. So there is no friction. Post-debit alerts are now compulsory as well. And those come along with grievance redressal details. So banks and payment players, they cannot charge customers anything to set up or run these RBI mandates according to the new framework. And RBI has now extended customer liability protection for any unauthorized transactions to recurring payments as well. So that's the addition. On paper, this is a big win. It's a big win for transparency. It's a big win for user control for consumers like you and me. But once you step back, the picture grows a little more complex than that. For consumers, when we talk about fewer OTPs, they mean smoother, the set and forget kind of payments, but also the risk that money could move out more quietly than it did before. So for India's booming subscription economy, and that includes those OTT platforms, the fitness apps, the SaaS providers, for them, revenue predictability could actually weaken because cancellations and pauses become just one tap away. For banks and card issuers, the compliance and liability burden goes up, even as the margins stay pretty capped. So all this comes at a time when trust in digital payments is already under strain. So according to RBI data, digital payment fraud has surged 11-fold from 2.6 lakh cases in the year 2021. The number of cases that you're seeing now in 2025, that has gone up to nearly 28 lakh cases. So the value of fraud has exploded from what was once 551 crores, it's gone up to 22,900 crore rupees. In fact, a local circle survey is showing that 7 out of 10 users believe that digital payment fraud is rising, with strong public demand for those alerts, for the delays, and for instant kill switches. So here's the real issue. In a system that we're talking about with the fewer OTPs, the faster auto debits, the higher limits, the question is, has the RBI struck the right balance between ease and security? Or are we setting the stage for business disruption and new consumer risks? Which is why we've asked the big question tonight, and it's up there. As we're seeing this new framework by the RBI come into play when it comes to digital payments, is this about customer control? Is it the ease of being able to make the digital payments? Or is this going to lead to that much more business chaos? That's the important question that we're asking, and we're taking that across to our panelists joining us on the big question on this debate. Let me introduce you to them. On the show this evening, Sunil Kulkarni is joining us. He's a fintech advisor and a veteran voice on India's digital payments and banking landscape. Good to have you. Sharat Chandra is also with us. He's founder of Empower Edge Ventures. He's got decades of leadership across technology, innovation, and financial services. Jaspreet Singh is also with us on the panel. He's a partner at Grant Thornton Bharat, closely tracking the regulatory change and, of course, its impact on businesses and financial institutions. And Sachin Daparia is with us, the founder and chairman of Local Circles, giving voice to consumer sentiment and, of course, public trust in digital payments. So let's get straight into the debate, gentlemen. But just I want to say at the outset that if you disagree with your co-panelists or even agree and have an additional point to make, I would suggest you just raise your hand and I'll come to you as quickly as I can. But first to you, Sunil Kulkarni, now that RBI is allowing users to pause or cancel e-mandates anytime, removing that need for OTPs up to 15,000 rupees and sometimes even higher to 1 lakh rupees in certain cases, how do you see it, especially from a system design perspective? Is this a genuine upgrade to you, or are we fundamentally changing how trust operates in these recurring digital payments?
Yeah, first of all, thank you, Vikram, for inviting me. This particular circular from RBI is a combination of all the past circular plus additional customer grievances issues. So in 2019, they started with 2,000 without an OTP. In 2021, they upgraded the 2,000 rupees to 5,000 rupees. And in 2022, they upgraded it to 15,000 rupees. So this 15,000 rupees was there earlier also. All that they have done is that they have now combined all these circular. And in between also, I would like to correct that it is not OTP. It is called now additional factor authentication, which could be through SMS. It could be through multiple methods by which you could potentially give the second authentication over and above what you are doing it. So what they have done is actually brought the customer grievance method as well as the unauthorized transaction method also in that, and to make the entire system very robust. And while we are talking about increase in fraud between 2020 and 2025, if we look at the total number of transactions that have happened in these 5 years, it is more than 11x. So in terms of actual value, the frauds have come down, but since the basic transaction volume has gone up, we suddenly see such large frauds. And in the last 24 months, bulk of the work RBI has done is also to bring fraud under control. In fact, they set up a committee for digital payments intelligent platform.
Has that worked? Has that worked?
Yeah, so it is clearly a work in progress. And compared to the total number of transactions, I would say that what has been shown here in this particular guideline is no different than what it was there before.
All right. So you're saying it's a continuation of the RBI stance on this to make digital payments that much more consumer friendly, to have the checks and balances where they are required. So the removal of OTPs is there. I mean, of course, as far as the removal is concerned, you're saying it's getting offset by the additional factor kind of, okay, that a subscriber has to give. But Sharat Chandra...
also.
Yes, it was there. It was there, accepted. But now that we are seeing this coming together of the entire framework together with the various circulars, Sharat Chandra, for subscription businesses, whether they are OTT platforms, they are the SaaS players, the gyms, etc., you know, the recurring payments, they are the predictable part of their businesses. So their cash flows is dependent on it. Does giving users the chance to do any kind of frictionless cancellation, does it turn the assured revenue into uncertain income now?
To a great extent, yes, Vikram, and thanks for having me on the show. What this new mandate has also done is, though the intent is good, but the kind of disruption and friction it brings to the businesses like SaaS players, OTT platforms, and even lending fintechs. Just look at the size of SaaS startups in India. So we have close to 2,000 funded startups, and the business which generated in FY24 was more than 15 billion. So this friction through this particular mandate can bring a lot of uncertainty into their cash flows as well, right? And this will also in turn impact investments. Let's say that they want to raise another round of capital. So this will also get impacted to a larger extent. What I would say or specifically highlight is there's certain category codes. For example, look at education for that matter. Schools 8211, where a 15,000 cap will not suffice, right? Especially in tier 1 cities like say Bangalore, Delhi, where the expense might be on the higher side.
Yes.
If someone has set up a mandate and then that person is not available to receive the OTP, that transaction won't go through, and the impact on, let's say, someone going for a tuition or a college might also get impacted. So there are different ways in which this can create a lot of friction.
Yes.
I believe industry should be given more time to respond to this.
So you're hoping that businesses are going to get a chance to respond to this. Jaspreet Singh, what do you say? You know, as far as we are saying, the 24-hour mandatory pre-debit alert, it sounds pretty consumer friendly. And I'll check with Sachin Taparia what he thinks about this. But what about you? Realistically, does the pre-debit alert empower users, or do you think does it simply remind them to cancel services that they may otherwise have retained?
So two things, right? One is I'll probably bring in a cybersecurity angle perspective first.
Certainly.
Is the fatigue piece, right? How many times will users for each of their SIPs receive OTPs or any of the EFAs, right? If users receive too many alerts, they may start ignoring them, which weakens the very safeguard with which this is being designed to protect them. But also look at some of the other risks like account takeover risks, right? If my or a user's bank account or an email or phone is compromised, then the attackers can keep regenerating recurring debits will keep flowing till the time the user notices that there is no pre-debit alert.
Yes.
Phishing and social engineering attacks will just go through the roof because I can then generate fake cancel the payment or modify this payment or verify or mandate SMSs or messages. And this would actually lead to a much more burden on the banks to look at false positives that they are being generated.
Right.
So I think we need to probably give more time to industry to react to some of these changes from a cybersecurity perspective, especially.
Fair point. Fair point. Sachin Taparia, from the consumer perspective, how good is this? I was looking at some of that data that came through our local circle. It shows that 1 in every 5 families has experienced some kind of UPI fraud or the other. And this in the last 3 years. That's what your data is saying. So when you have data that paints that picture on UPI frauds, would you say that fewer OTPs actually make users feel safer, or do you think they are more exposed to frauds when you do not need an OTP for transactions under 15,000 rupees? Though, of course, I have been corrected that it's just a replacement. But what do you make of the overall takeaway for consumers right now with all the circulars now coming together in this new framework?
So overall, Vikram, this is a very positive move. I think here what is happening, there are two issues at play here with what RBI has come out with. The first one is digital fraud, right? Which is the data that you shared, 1 in 5 experiencing a UPI fraud just in the last 3 years. From an authentication perspective, people want to authenticate transactions that are above a certain value. They want that added authentication. So a 15,000 plus, people actually want a 10,000 plus, value being authenticated through additional authentication. So I think that is something that with additional transparency, with more control given to the users, I think there's a lot of support for it.
Right.
The second big issue related to this is dark patterns. This is something that we have discussed on your show in the past.
Yes.
But both on banking apps as well as digital payment apps and other apps that many of us use regularly, like OTT and others, this is a huge issue. 97% platforms in India, even today, even after the Consumer Affairs Ministry issued a Gazette notification in 2023, still have dark patterns. Right. So, on banking apps, on digital payment apps, you have issues like subscription trap, where people feel that they bought this subscription or they were made to buy this subscription on a trial basis, and now there is no option to cancel it, right? So with what this auto debit alerts, what they do, to people is they at least give them an option. Even today, what is happening is people are ignoring their SMSs anyways. But if they want to cancel, because there is a charge of, let's say, $399 a month for an OTT platform that they don't watch, it gives them an option to be able to cancel it. And that's the beauty of,
So will this control dark patterns?
Yes, it will. So subscription trap, hidden charges, and interface interference.
Sunil Kulkarni, let me take that across to him. Do you agree this is going to control dark patterns? Is this something that you see the regulator has been able to draw the right red lines where they should be drawn? Will it work for businesses as much as we're hearing Mr. Taparia say it's going to work for consumers?
Yeah, so I think all of us remember the few years back on telecom, we used to get caller ringback tones and lot many content, and there was a subscription of 10 rupee, 15 rupee, 30 rupee, and automatic debit used to happen every month. All of us were a part of that, and a very large number of millions of subscriber times 30 rupee is a very large number for the operator. What TRAI did was they asked the customer to first confirm, and again, at the time of debit, again they wanted that to confirm. Now that they have done it for the purpose that the numbers were very large. So what I agree with him, that the affirmative debit, every time there is a 24-hour notification, and post transaction notification also will make sure that if you want to cancel it right on, you have damage control. Right now, if you don't do that, there is no damage control.
Correct. So you think this is going to help, but Sharat Chandra, if a phone is compromised, perhaps malware gets in, the auto debits can quietly go through. So in a low friction system, is there the risk, that risk window before fraud detection? Do you think that can actually widen here?
Very much. And in fact, this is where I would say to some extent RBI's guideline on unauthorized payment transactions, right? I think the cap is around 25,000 rupees.
Yes.
So that might offer some solace, but again, we will never be sure of the quantum of risk, additional payment fraud, which can be perpetrated using compromised device. So we also need to factor in that particular aspect of cybersecurity. Very much.
Jaspreet Singh, under the new framework, now banks are explicitly liable for authentication failures in the recurring payments, but they cannot charge customers for these services. You think this is shifting the operational and the financial stress squarely on to banks and the payment players?
I think this was always there, right? They are providing services and they are liable to look at fraud detection and to make sure that there are adequate cybersecurity measures in place. Right. The only thing is with this, the pattern recognition will become much, much stronger. I would know that these are the number of users where this is the number of SIPs that will go in the next 24 hours. Right. And I can then do a pattern analysis saying how many are canceling. And if the threshold 15,000 is also a very decent threshold for a lot of OTT players, SIPs, etc., this is a big enough amount. But if I have to perpetrate a fraud, I will have to be 14,999, which is not a very small amount from an SIP perspective, multiplied into number of times I do this.
Yes.
So the banks would also then have to look at these pattern recognitions, these false positives, to make sure that there is a balance between ease and use of security.
But Jaspreet, while looking at Mr. Taparia local circle survey, it shows that 40% of the fraud victims, they have clicked on payment links unknowingly. And 50% of them are saying that their UPI PIN was compromised. So does making payments simpler increase vulnerability? Is that what is going to happen, or does it underline the need for stronger digital literacy at the moment?
So stronger digital, you can never argue a case against stronger digital literacy.
That's true.
That will always be the case. But look at, I made this point around alert fatigue. Today, imagine if you ignore 5 SMSs or 5 messages, tomorrow you start getting 25. 24 hours before the transaction, during the transaction, and then post the transaction. Right? It could genuinely lead to a fatigue, and scamsters can use to trigger more messages, and inadvertently you might click on one of the wrong messages, which could lead to a compromise from a security perspective.
Sunil Kulkarni, with these higher liability exposures, you think banks could become overly cautious? Would they start blocking legitimate mandates as well, or tightening the back-end checks to protect themselves? Could that be a fallout?
Yeah. So first, I'd like to react to what Jaspreet mentioned, the links that are being mentioned. So in the last 6 months, there is also a new rule. 2 new rules have come. One on payment aggregator. This came in September 2025. And second came on current account to merchants. So please note that this particular circular that we are talking about is for merchant. Consumer to merchant payment. It is not consumer to consumer payment. If you see, bulk of the frauds that UPI frauds that we are talking about are all P2P collect frauds. Majority of them have been P2P collect fraud. So when we are talking about this particular payment, first, RBI has made the payment aggregator guideline extremely stringent for merchant KYC. If we look at that guideline, it is fairly robust guideline for merchant KYC. So that is, again, onus is on banks and regulated entity. Secondly, current account and opening and their KYC have been also, again, the purpose and all those have been made very stringent. So overall, the infrastructure which was responsible for a lot of these frauds have been made further strict in terms of compliance. And I would say that even in this case, when we talk about recurring payment without additional factor authentication, the onus will be on the banks to check whether there are patterns emerging where suddenly there are multiple transactions happening below 15,000 where there are no additional factor authentication. That's why the initial pre-24-hour debit intimation and post-transaction debit will help customer to at least know. But I agree with you that a compromised phone, that's a problem. But how many of them we can actually control is something that needs to be seen more by the Android and the Apples of the world, where they want to make sure that no spurious software is installed.
Sachin Dipare, I was also looking at that data, and it's worrying because over 50% of users who have faced UPI fraud have never filed an official complaint. So even with the stronger alerts and controls, now I wonder whether the low grievance usage could weaken the safety net that is being put in place by the RBI here.
Clearly, Vikram, there is work to be done in terms of grievance redressal for such complaints, right?
Yes.
I mean, typically what happens is in many of these cases, because there is such poor awareness, when some kind of fraud happens, people basically go walk to their local, police station. And that's where they go and try to file a complaint. And the answer that they get, based on our survey is that, "Arey, ye to online hai, ya this is digital, and therefore we can't do anything about it." Because our police stations are not sensitized to handle such complaints, basically. Right. And if you're lucky, they'll point you to the cyber, portal and all of that. So I think the solution here really is giving more control to the user, which is, you see mention of features like the kill switch and all these, pre-approvals and post the transaction, sending the user a message. I think these things will work for the user. And my expectation is that, we need to look at this not just in isolation, but also in conjunction with what TRAI is been doing, right? So sending bulk SMSs has actually become much harder than it used to be 10 years ago, right? So a fraudster being able to send an SMS to millions of mobile numbers is no longer possible. Right. So therefore, you may have those one-offs. I think one of the previous speakers talked about peer-to-peer type of fraud transactions. And yes, they could happen. But doing this at a mass scale, I think is going to become increasingly harder. So therefore, I think this model will work. And then it'll also, with all these dark patterns, getting addressed, which we hope, right? RBI has given the banks till about July 1st to fix their dark patterns. I think it's going to move us towards a more transparent control and cleaner regime in terms of digital payment transactions.
Let me ask Sharat Chandra if he agrees with you. Sharat Chandra, does the full user control improve financial discipline, or do you think it's going to make spending more impulsive, more fragmented?
I would say it's a mix of both because awareness of users or how they use these particular tools also needs to be factored in, right? If I were to pick up on what Sachin said about lower grievance redressal numbers, the post-transaction notification should also carry grievance mechanisms, right? But in many times, people are not filing redressal or not looking for those mechanisms. Is that because they do not know how to do it? Maybe language is one of the barriers, right? So this is where I think technology also has to be applied so that the new set of users can use, let's say, any language to file a complaint, right? It can be vernacular. This is where I would say some of the local startups, for example, Servam for that matter, where they're building indic models which can help some of the users to file complaint in a vernacular language. So that process also has to be made simpler for people who are using digital transactions for the first time.
Right. Of course. So Sunil Kulkarni, if I was to look at the big picture, you think the RBI has struck the right balance between convenience and control and security? Or do you think this kind of reform picture that we are seeing, the new framework coming into effect, it's only the first step in a much longer correction that we need? And if so, then what are the next steps?
Yeah, so I would say that, as I mentioned earlier, that they started with 2,000, then 5,000, and then 15,000. So it was a progressive number that 15,000 was not brought on in one shot. And secondly, in this circular, they have brought in the pre-24,000, post-24,000, and in fact, in the SMS or communication that is being sent, the customer grievances information also is given that if you have not done the transaction, please click here. So from that perspective, this is a reasonably balanced one. But again, I would say that whenever such circulars are issued, the feedback over a period of time also leads them to change or amend for better. So it is not that it is cast in stone. If they find that there is a significant amount of disruption in the complaints or frauds, etc., they would be coming up with corrections like they have done in the past.
So like you said, it's work in progress. It's work in progress by the RBI, the kind of new framework that we are looking at for e-mandate, those rules decisively tilting the system towards user control and transparency. But yes, it is a convenience. It's going to come at a cost because payments are getting faster and friction levels are falling. Now, the burden of trust and vigilance and failure management is shifting sharply onto the banks, onto the platforms, and of course, the underlying system. So this is not chaos, perhaps, that we are looking at, but it is a stress test for India's digital payments backbone, and we'll see how well we do. My thanks to Sunil Kulkarni, Sharat Chandra, Jaspreet Singh, Sachin Taparia. Thank you for joining us and adding depth to our debate this evening. And to you, our viewers, of course, is an important takeaway. Even as we're seeing the development of our digital payments system, it is important to realize that as much control as consumers get, it is also imperative to understand that it does come with higher risk as well, and the balance has to be managed really well. We'll keep tapping into this issue, but for the moment, from me, Vikram Oza, and the entire team on The Big Question, thank you for joining us. Good evening.
कुछ खास होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhavna. Let's get straight into the show and see how the markets have fared today. So markets have witnessed profit booking and ended the day near day's low. Nifty 50 closes below 24,400 mark while Sensex ends 1% down. If you look at the broader market, so they have outperformed the benchmarks and manages to end in green. And looking at the sectoral picture, so it remains mixed. IT index ends as top sectoral loser, dragged by weak HCLTech numbers. Nifty Energy and Defense gain in trade. And now let's look at some key counters in focus. First up, we have Havells India. That has posted a strong bottom line performance in the March quarter, with profit rising sharply despite modest revenue growth. Margins come under some pressure, even as steady demand in cables and switchgears supports the overall performance. Now, segment trends remain mixed, with consumer durables continuing to lag, and the board also announces a dividend of 6 rupees per share, offering some sort of cheer to the shareholders. Next counter in focus is IRDA, which is firmly in the spotlight today, with stock surging over 9% intraday to a 3-month high. And this move is backed by improving fundamentals. The declining cost of funds is also aiding the margins, while asset quality has strengthened for the third straight quarter. Loan growth also remains robust, with management guiding for a healthy CAGR of around 22% over the next few years. And this is driven by strong demand for green energy financing. And as India's largest green-focused NBFC, IRDA is positioning itself well for the renewable capex cycle. Now let's look at some brokerage notes as well. So brokerage views on persistent systems remain clearly divided. Citi maintains a sell rating, flagging premium valuations despite largely inline Q4 results, and stays cautious on the sector amid competitive intensity and also AI-led disruption. Nuvama, however, is more constructive, now also retaining its buy and raising the target price even as it acknowledges a softer commentary and even slightly below estimate revenue growth. The brokerage believes that strong deal wins and capability should help growth recover in the coming quarters, keeping persistent among industry leaders. Next counter in focus is HCLTech, which is struggling to find momentum. The company posts its sharpest constant currency decline in several years as the deal delays hit growth. So the outlook also comes in softer than expected, with demand weakness across key sectors. Client-specific issues and lower discretionary spending continue to weigh on the performance, while AI-led pricing pressure adds to the near-term challenges. So overall, execution hiccups and a choppy global environment keep the growth under pressure. Next counter in focus is Tech Mahindra. It has delivered a steady Q4 with margins also expanding for the 10th straight quarter, rising 70 basis points sequentially. So profit growth stood out while revenue growth remained modest with constant currency growth at just over 0.5%. The BFSI segment have led the recovery, rebounding sharply after a weak third quarter. Deal momentum stayed strong with total contract value at over $1 billion and FY26 marking the company's highest ever annual deal wins. So management remains on track to reach its 15% margin target by FY27. And US Tata Elxsi has fallen despite delivering a steady quarter with growth led by its media and communications business margins. They've improved sharply, helping the bottom line also despite modest revenue growth. So operating performance remains strong, though employee attrition ticks up slightly. Overall, better execution and cost control support the profitability even as demand conditions stay mixed. And Tata struggles to convert higher revenues into profit as margins slip sharply in the March quarter. Rising ESOP cost, weaker gross margins, and a sharp fall in order inflows weigh on the performance of the company. Now, the full year also disappoints with key targets missed and even cash flows turning negative, hurting the visibility. While the company lays out a growth plan for the next year, execution remains the key concern for the street. Again, let's look at some brokerage notes. So brokerages are striking a more constructive tone on Nestle with a string of target hikes following a strong volume-led quarter. Morgan Stanley and Goldman Sachs have raised the targets, citing robust top-line growth and also stable margins. And this has been held by the GST cuts and wider reach. Investec has upgraded the stock on sustained momentum and operating efficiencies. While Jefferies and Macquarie remain cautious on valuation, Citi stands out with a buy call saying that Nestle's all-round performance and earnings trajectory justify its premium positioning. In fact, sugar stocks rally as the government's ethanol push sweetens the outlook for the sector. Supportive policy signals, easing export rules, and firm crude prices make sugar diversion to ethanol more attractive. Higher ethanol demand and better pricing improve the margins for mills, while global factors, including Brazil's ethanol shift, add to the optimism. And Infosys may extend CEO Salil Parikh's term by 2 years as the board looks to ensure leadership continuity. Now, the current tenure ends next year, and the move is seen as a stabilizing step amid industry disruption and rapid shifts, driven by AI. So the discussion comes alongside succession planning as Infosys navigates a challenging demand environment, and this we are gathering through our sources. Next counter in focus is ABB, which has delivered a strong surprise on the order front. Now, the company says that India order inflows grew 26% year-on-year in the first quarter of calendar year 2026. And this is sharply ahead of the street expectation, of high single-digit growth. So this follows an even stronger 52% rise in the previous quarter, also underscoring sustained demand across electrification, automation, and power segments. So with inflows consistently beating the forecast, ABB's India execution visibility continues to strengthen, reinforcing confidence in the medium-term industrial capex cycle. Next counter in focus is PNC Infratech, which is in focus after emerging as the lowest bidder for a 3,500 crore road construction project from the National Highways Authority of India. Now, the order strengthens the company's infrastructure pipeline and also improves the revenue visibility over the near to medium term. And viewers, KNR Constructions is in focus after reaching a 130 crore settlement with the National Highways Authority of India. The settlement resolves a long pending dispute related to arbitration claims and is also expected to improve the cash flows. So the development provides near-term balance sheet relief and also helps reduce the outstanding receivables for the company. Next counter to look at is JSW Energy, which is in focus after its arm JSW Mahanadi Power has received a nearly 1,450 crore demand notice from the Chhattisgarh government over water charges. Now, the company challenges the demand in the High Court, terming it disputable. And the development adds a near-term overhang even as JSW Energy maintains that it has a strong legal footing in the matter. Next counter to look at is BEML. So it's in focus after securing a 590 crores defense order from the Ministry of Defense, strengthening its near-term execution pipeline. The company also steps up its global presence with the fresh export wins, including its first overseas metro rolling stock order. So strategic partnerships add to visibility, while a strong and growing order book supports the outlook ahead. And Tesla has launched the long wheelbase model YL in India, expanding its electric SUV lineup. Now, the new variant comes with 3 rows and 6 seats, targeting buyers looking for more space and comfort. Now, it offers a range of around 680 kilometers on a single charge and also delivers strong performance for a premium EV. Now, despite high import duties keeping the prices elevated, Tesla is betting on rising demand for large electric SUVs in India. And viewers, Meta is taking its AI push inside the workplace. The Facebook and Instagram parent will now track employees' keystrokes and even mouse clicks using everyday work activity to train its artificial intelligence models. And the company has said that the data will be used only for AI development with safeguards to protect the sensitive content. But internally, the move has sparked unease, with some employees calling it, especially as hiring freezes widen and even job openings dry up, underscoring how central AI has become to Meta's future. And viewers, Italy has confirmed its budget deficit stood at 3.1% of the GDP last year. This is according to official data released by Statistics Bureau Istat. Now, while the figure shows an improvement from the previous year, it remains just above the European Union's 3% limit. Now, the confirmation effectively ends Rome's hopes of exiting the EU's excessive deficit procedure for now, keeping fiscal oversight firmly in place. But the data was formally submitted to the European Commission as part of Italy's ongoing budget monitoring process. And viewers, UK housing data points to early signs of stabilization. Official figures show British house prices rose about 1.2% in the year to February, marking a faster pace than the previous month. At the same time, pressure in the rental market appears to be easing, with the average private rents rising 3.4% in March, and which is the slowest annual increase in 4 years. So the data suggests buyer confidence is holding up, while affordability pressures in the rental market may finally be beginning to cool. And UK financial regulators are moving to lighten the regulatory load. The Financial Conduct Authority and the Prudential Regulation Authority have confirmed changes to streamline senior manager accountability, aiming to cut compliance costs and also support economic growth. Now, regulators stress that personal responsibility for top executives will not be diluted, and the move is part of a broader government-led push to reduce the red tape, with further reforms expected as the UK, looks to balance strong oversight with competitiveness. And viewers, LG Display stepping up its push into next generation screens. The South Korean display maker says that it will invest 1.1 trillion won to build new infrastructure for organic light emitting diode displays. And this is aiming to strengthen its technological competitiveness. And the investment will be spread over more than 2 years from April 2026 through June 2028, underscoring the company's long-term focus on OLED technology as competition intensifies across the global display market. And NASA has unveiled its newest space observatory, the Roman Space Telescope, designed to scan vast regions of the universe in search of planets beyond our solar system. Scientists say that Roman could discover tens of thousands of distant worlds, offering fresh insight into how common planets really are. So the telescope will also help probe the mysteries of dark matter and even dark energy. Now built over more than a decade, a cost exceeding $4 billion, the mission is named after Nancy Grace Roman, widely known as the mother of Hubble. Now let's look at some national news now, viewers. West Bengal goes to polls tomorrow as the first phase of the assembly election gets underway across 152 constituencies and 16 districts. Now nearly 1,400 candidates are in the fray in this opening round, and the Election Commission says that elaborate arrangements are in place to ensure free, fair and peaceful voting. And with over 44,000 booths across the state, women will manage thousands of polling stations. Special model and PWD-run booths have been set up, and 100% webcasting will monitor every vote, backed by extensive security deployment on the ground. And the Congress has accused West Bengal's ruling Trinamool Congress of blocking its campaign push in Kolkata, claiming permission was denied for a Rahul Gandhi rally ahead of the first phase of assembly voting. And the Lok Sabha MP was scheduled to address a public meeting on April 23rd, but the party says that local clearance did not come through despite waiting till Tuesday evening. And as a result, the event was cancelled over logistical constraints. Now, Congress leaders say that they will now seek fresh permission for a revised rally later this week. And the Kerala government has ordered a judicial commission probe into the deadly fire at a firecracker unit in Thrissur district that has claimed at least 9 lives so far. Now, the blaze broke out while workers were preparing fireworks ahead of the Thrissur Puram festival, and also officials fear the death toll could really rise as unidentified body parts were recovered from the site. So, Chief Minister Pinarayi Vijayan has announced a compensation of 14 lakh rupees for the families of those killed, and a retired High Court judge will lead the inquiry into the incident. And the Supreme Court has launched a nationwide push to fast-track consensual dispute resolution, unveiling its Samadhan Samaro 2026 initiative. Now, the program aims to encourage amicable settlement of pending cases through mediation, and even will culminate in a special Lok Adalat from August 21 to 23rd, with over 94,000 cases currently pending. And the court has said that the effort reflects its vision of participative justice and even doorstep delivery. And the parties can register over the next 4 months using both physical and virtual modes. This has been supported by a dedicated war room and also online portal. And it has been a year since the deadly terror attack in Pahalgam that claimed 26 innocent lives. The attack has left behind irreparable wounds. With a year passing since the attack, tributes have poured in, remembering the lives lived and lost to terror. The Prime Minister, remembering the innocent lives lost, said that the country would never bow to any form of terror. Now let's look at some international news, viewers. The US has pressed pause but kept the pressure on. President Trump has extended the ceasefire, with Iran buying Tehran time to submit a unified proposal, even as the US naval blockade remains firmly in place. And Trump claims the blockade is costing Iran $500 million per day, and says that Tehran's military capabilities have been neutralized. Iran, for its part, insists that it won't negotiate under blockade conditions, and the decision followed a frantic day of diplomacy, with talks postponed and timelines blurred, marking the second time in 2 weeks Trump has stepped back from escalation. Meanwhile, European powers are stepping in, and with UK and France leading talks among 30 nations aimed at reopening the Strait of Hormuz. And tensions are rising again in Strait of Hormuz. At least 3 container ships were hit by gunfire on Wednesday, according to British maritime authorities, just hours after US President Donald Trump announced an extension of the fragile ceasefire with Iran. Now, the United Kingdom Maritime Trade Operations has said that 1 vessel was fired upon by Iran's Revolutionary Guard, with Iranian media reporting strikes on 2 more ships. Now, the incidents come even as the US continues its blockade of Iranian ports and with uncertainty growing over peace talks after Vice President J.D. Vance did not travel to Pakistan as earlier expected. And El Salvador has begun a mass trial of 486 suspected members of the MS-13 gang, marking one of the largest collective prosecutions under the government's crackdown on organized crime. Now, prosecutors allege the group is responsible for more than 47,000 crimes, including murder, extortion, and arms trafficking over a 10-year period. Now, footage shows the accused appearing via video link from the prison, while the government insists that it has compelling evidence to seek maximum sentences. United Nations experts have warned that mass trials risk undermining due process and, the presumption of innocence. And viewers, the Indian women's football team has dropped 2 places to 69th in the latest FIFA rankings released yesterday. The Blue Tigresses were recently featured in the 14 FIFA Series 2026 tournament held in Kenya, where they finished the 3rd. Now, India beat Malawi by 3-2 in the 3rd placed playoff match after earlier losing 0-2 against Kenya. And viewers, that's all the time we had on Market Express, but we leave you with a special report. Rising urban demand is reshaping how households hire domestic help, with app-based platforms seeing a sharp surge in metro cities. Services like InstaHelp by Urban Company, along with newer players such as Snabbit and Pronto, have witnessed rapid growth since August 2025. Ridhima, my colleague, brings in this report.
Rise in the demand for domestic help in metro cities has led to the boom for companies which give instant maids like InstaHelp, Pronto and Snabbit. The companies have been growing at a rapid pace in the number of bookings since August 2025.
If we look at bookings, Urban Company crossed 10 lakh bookings in March 2026, up from 2.9 lakh in August 2025. Snabbit saw over 10 lakh bookings in March, up from 1 lakh in 2025 August. Pronto reported over 5 lakh bookings in March, up from 30,000 in August 2025. We went on ground to check the competition, demand and worker economics, as workers are core component for these platforms. The number of workers equals the number of service deliveries, and around 60 to 80% of the order value goes to the workers.
मैं 10 घंटे काम करती हूँ ना, अगर रेटिंग बोनस और अभी वो अटेंडेंस बोनस वो सब मिला के 30-35 आ जाता है, सब मिला के। और 2 छुट्टी भी करते तब भी आता है, अगर छुट्टी नहीं करे तो 40 तक भी जाता है कभी कभी। पूरा काम करें, दिन में 7 काम हो गए तो फिर आ ही जाता है। ऐसे तो अगर 4-5 घर में भी करेंगे तो इतना पैसा तो होगा नहीं है।
इंश्योरेंस भी मिल रहा है, मतलब 2 लाख का। जो मैरिड रहेगी उनको मतलब उनके पति को और 2 बच्चे को भी मिलता है इंश्योरेंस। अगर सिंगल रहेगा तो फिर 2 लाख का इंश्योरेंस मिलता है हमें।
While workers are getting enough salaries, with rise in competition in instant domestic help segment, companies are struggling to be profitable. Listed player Urban Company's InstaHelp reported adjusted EBITDA loss of Rs 61 crore in Q3 FY26. On the positive, losses per order has narrowed to Rs 381 in Q3 versus 760 in Q2 FY26.